Session, and some of the car makers themselves up by more than 3%, so we'll watch those. And Boohoo, also worth looking at. This, a retailer based here in London, of course. The EBITDA number coming in much stronger than expected. Not necessarily the case with all the numbers, but we'll watch that one at the start of trade then, Guy.
Okay, here we go. Euro Stoxx 50 futures are called up by 0.2%. Let's see how we open these markets and what we actually end up delivering. London's expected to underperform a little bit, but only just a little bit. The DAX had a good day yesterday. It's still called fairly flat as well. FTSE 100 out of the gate, nothing to see here. We are basically flatlining on the FTSE this morning. The Stoxx 600 is up by, I'm being generous here, 0.1%. The FTSE's up by 0.1%. We are not expecting fireworks this morning, but after what has just happened, so many fireworks, maybe a little kind of pause this morning is what we are going to see. The IBEX is up by 0.2%. The AEX is up by 0.1%. I'm struggling to get excited here. If we think luxury is going to be under pressure, that's not the indication from the CAC, but let's see what's happening below the surface. That's the picture at the moment. Fairly quiet open, a little bit of digestion maybe underway when it comes to European equities, Tom.
Yeah, digestion, consolidation, we're starting to see that. Travel and leisure is building on the gains that it saw yesterday as a sector, one of the best performing sectors right now, up 0.6%. Industrial goods also performing relatively well, putting in gains of 0.7%. Insurance is playing that part, banks as well, up 0.3. On the downside, basic resources, you've seen some of those components a little softer in the session, for example, iron ore. So basic resources is currently down 0.9%. Autos, after a very strong session yesterday, currently down 0.4%. Tech also a little softer, just by 0.2%. We'll look at ST Micro as well as they tap at the markets for additional liquidity. But again, top of the list right now, industrials, travel and leisure, insurance and banks. Anna.
Yes, don't have a huge amount to add to that. I mean, more sectors going higher than going lower, but basic resources and autos are quite a drag today, aren't they? But industrial goods and services on the upside, along with travel and leisure. So it's quite a mixed bag for European stocks as we perhaps just consolidate, pause, take our breath, given the news flow. Let's get into a conversation then about where various assets go from here. Let's start with Gotham Samath, who is multi-asset fund manager over at M&G Investment Management, and with us on set this morning. Gotham, nice to speak to you. Thank you for coming in. Let's start with European stocks then, shall we? Because we've seen interesting call from Citi this morning about what we're going to see in the European stock space. They're talking about European stocks have potential for broadening. And we heard a story of resilience from one of our guests in the last hour about European stocks. Sometimes the narrative seems to skip Europe. So what are you thinking about European stocks at this point?
So in terms of, if you wind back to the ebbs and flows we've had in equity markets this year, they were strong out of the blocks in the first couple of months. And then we had the onset of the conflict in Iran. We had that rotation whereby, capital flowed back to the US right now. And I think where you see the resilience on the earnings side that we saw in the US, that's actually held up on the European continent as well. So when we think about some of these headline risks now going away, the Strait of Hormuz apparently opening up, you can see a capital flow back in a way that we saw in the beginning part of this year. And that relative trade between Europe and the US is well and alive.
Okay. So you see something of interest in Europe, but are we talking, when it comes to equity markets, are we talking about value in stocks as a whole, or is it all relative trades here? Because you talk in your notes about the compression of equity risk premia, and so higher bond markets yields, and I wonder what that means for stocks.
Well, equity risk premia have compressed. Equity markets are higher. Some of that in the back of earnings, but bond yields are higher as well. So the relativity between those two, especially over the last 3 months, has been quite stark. So when you take pause and you say markets at all-time highs, the opportunities in equities are very much picking between equity markets. And I think some of the EM plays that have lagged, some of the perceived losers from higher oil prices, look at places like Indonesia. Yes, we've had a bit of a bounce, still off 30% this year. Good structural growth drivers over there. So those are the kind of areas that we'd be looking for, picking and choosing relative winners within the equity market. Broad equities can be fine, valuations are okay, but I think the real opportunity is in that relativity.
So just to build on that, emerging market energy importers in the EM space, they look like an opportunity given the pressure they've been under during this conflict?
That's correct. We think so, at least from a tactical perspective. So, again, places like India, historically a darling from a growth and earnings story, sort of cast to the side in this last phase. Valuations are much improved over there, and earnings growth, both at the corporate level but also at the aggregate economy level looks pretty robust.
Is that a buy the index story for India, or do you have to be sector specific?
You can be selective over there, but we'd say right now you could buy the index.
Yeah, okay.
Is it easier to have conviction in equities than it is in bond at the moment?
It feels that way, doesn't it?
Yeah.
I mean, we are conditioned to feel like bonds are the risky asset today, but that's a function of what the valuation transition has been from 2020, really.
Yeah.
So if you look at where bond yields are today, take the US 30-year, for example, a 5% yield that's 5% per annum for the next 30 years. Where's inflation going to be? I don't know what the AI benefits are going to be from a productivity standpoint. You've got pretty good odds of beating inflation pretty handily over the next 30 years owning a US 30-year bond. So you should have more conviction in owning bonds, but we're on the sugar right now.
Yeah, certainly in equities.
Yeah.
And that's the kind of star performer. Are bond investors, though, just going, we'll take the yield? All that mass around inflation, all kind of the mass around inflation, kind of what am I going to get over the longer term? I'm ticking, my job is to do X, and I can tick that box with current bond yields. Is it as simple as that? I can just buy the whole curve, don't worry about it. That's kind of what it feels like at the moment.
You could buy the whole curve. I think there's still more opportunities in playing a normalization of yield curves. Yield curves are steep on relatively high starting rates.
Yeah.
So you could argue, put Japan to one side, special case, but real interest rates are in positive territory in most other parts of the world, and you have steep curves on top of that. So buying the long end, which is where the real fear and where most of the trauma exists, there's a reason why you have that term premium. It's because people have had a very bad experience. Yes, we can talk about debt sustainability and fiscal trajectories and the like, but it's really the experience of losing money in an asset class that have put investors to the sidelines, and I think that's a big opportunity.
Okay, let's talk about that then. In the UK context, fiscal sustainability and all of the things you just mentioned then, Gotham, I mean, where do you see value in the gilt curve then at this point, given the Bank of England story, the Strait of Hormuz, and the politics overlay?
So the UK market, I think you do actually have value across the curve. So we saw big repricing at the front end on the oil price spike. Now, the 5-year yields, well, we went from pricing in cuts to 2 hikes at one point. And what the central bank's reaction policy should be to supply shocks such as this one is unclear. And I don't think they should be hiking into a supply side shock. Certainly, it feels like they're going to be on pause this time, but the market started pricing in hikes. So that became an opportunity at the intermediate terms, the 2s to the 5s.
Are you surprised we haven't priced out those hikes more quickly, given the news over the weekend?
Well, we've been conditioned not to take announcements or headline announcements at face value. So I'm not particularly surprised that way. But I do think that a definitive announcement, there's no reason why yields shouldn't be 50 basis points lower in a couple of weeks' time, or in 6 months.
50 basis points lower in a couple of weeks' time.
Yeah, sure. That's why they were, at end of Feb.
Do you think that? I mean, there's the view from Goldman Sachs that Brent gets to about $80 a barrel in the fourth quarter, that oil gets to kind of pre-war levels by the end of July. We can debate whether or not that's a clear view, whether that's an accurate view. But if we're in that scenario by the end of July, do we get to a place where the BOE has scope to cut before the end of the year?
It's plausible that the BOE has to cut by the end of this year. It should be part of your probability distribution. It was 3 months ago, 4 months ago. So, and it could be for several reasons. Yes, the oil price is one of it, although the lagged effects of the oil price suggest that certain elements of inflation are already baked into the future.
Yeah.
But, the jobs market is very different over here than it is in the US. The underlying strength in the economy isn't as clear in the UK as it is in the US, and so it is quite plausible that we can get cuts.
Do you think Kevin Walsh can make the case that AI is deflationary?
He'll certainly try. He'll certainly try, and he's towing a very fine line, which is he wants to bring other members on side, and so he's going to have to play the game of showing that central bank independence, showing strength, but I'm sure Jackson Hole will be a good forum for him to make that case. And it's a pretty good case. I mean, if you look at prior industrial revolutions or prior technological revolutions, those productivity gains came through, and they came through pretty strong. So he can make that case.
Is there an argument, though, and we were talking about this earlier with Eric Lonergan, and in some ways I wonder whether bond markets are pricing this, whether or not you have to get a bust. So you have to get to that deflationary story, you have to have a bust in the AI trade. And is that what commodities and bond markets, to a certain extent, are pricing with yields where they are? Our yields could be a lot higher in the short term with the inflationary picture that we have, but they're not. So therefore, I'm wondering, particularly with duration, whether or not there is that kind of pricing of a bust, economic slowdown, followed by that deflationary story.
Well, I think this is where the 90s is pretty instructive. So we had that phase in the early 90s where we had a bit of an inflation scare. The Fed hiked and then was forced to cut. Inflation, I mean, growth was robust. CapEx spending and fixed investment growth was very positive, yet inflation kept surprising to the downside. That was the productivity gains coming through. So you went through a phase, and we didn't really, the bubble came right at the end of it, but we went through a phase in the mid and late 90s whereby growth was surprising to the upside, inflation was surprising to the downside. That could well happen today.
On that note, we will leave it. Nice to see you. Gautam, thank you very much. Gautam Samath, multi-asset fund manager at M&G Investment Management. Let's take a look at what the markets are telling us about all of this morning. This is what the Call 6 looks like. Quick look across Europe. LVMH is unchanged, which I think is interesting. It was a little bit more positive just a few minutes ago, but we are basically back to doing nothing on that stock. Defence stocks are up as well, which also I think is interesting. They've been underperformers recently, but you do have this narrative around Ukraine and what is obviously happening in the Gulf. ASML's not doing that much. Schneider's up a little bit. A fairly mixed picture. At an index level, we're not doing very much. Let's talk about the retail story. Let's start there with Charlie.
Good morning, guys. So, trying to parse some of these earnings that we're getting out of Boohoo. We know they had that tie-up here in the UK with Debenhams. They're up about 1% this morning, and this really is a transition story. We know that UK retail has been under pressure. There's been a lot of negative sentiment around that. But again, those numbers and some projected growth that this retailer has been talking about, giving it a little bit of a lift this morning. Let's flip and stick in that retail space and talk about Allegro. They're a digital retail space. They're up some 3%. A private equity firm has said that they're going to be selling their remaining stakes there. And that's interesting. Those stakes were coming at a bit of a discount, but this could be the market liking the fact that, a big potential seller, a big owner is finally exiting there, taking a little bit of an overhang out of the story about that Allegro stock. Let's flip and take a look at Truecaller because they had some really interesting information out this morning. They're up nearly 9%. So this is a big jump for Truecaller. They had some red flags about some of their ad inventory, and those were finally removed by one of their largest demand partners. So again, this is a story that they can tell that's giving more positivity to the stock about some of their ad inventory. And let's flip and take a look at a negative story this morning. This is that UK wealth manager Rathbones, down almost 16%. So they've been talking this morning about a £60 million hit that they could take given an FCA review into how Rathbones has been treating customers. Now, this comes at a time when the FCA has been looking into a lot of UK wealth managers, putting a lot of heavy duty on how they treat consumers. So a negative story around Rathbones, that UK wealth manager this morning.
Okay, Charlie Wells, thank you very much indeed. We have some breaking lines on Qatar's plans to restore production once the strait is reopened. So this is Bloomberg reporting that Qatar Energy, which operates the country's LNG facility in Qatar, of course, has told buyers that it expects to raise output to about 50% of capacity a month after safe passage through the strait is restored, and to roughly 80% within 2 months. That is the plan, according to our reporting.
And I think that other line is interesting as well. The remaining capacity will take years to fully restore.
So that's the
after it was damaged by Iranian missile strikes in March. So that's the 20% that is perhaps missing for quite a long time. So we are seeing that the oil price is reacting to, the gas price is reacting to this here in Europe. TTF is dropping. But that feels like interesting information.
20% is a lot. Yes, we're going to get back to 80%, and yes, that is a big step forward in terms of where we are now. But if it takes years for the other 20% to come back, like does the US
continue to fill?
So the US is bringing on a lot of trains at the moment, and there's the potential, and Javier's talked about this as well, Javier Blas talked about the potential for a sort of gas glut coming out of the United States if all these trains deliver. Maybe there is the opportunity for the US to fill that gap, but 20% out from Qatar is a lot. And it's going to be a reorientation, therefore, of the global kind of gas market in terms of how Europe is going to respond to that. Anyway, certainly one for another day. SpaceX, let's talk about that. That is a big story today. Second day yesterday was pretty amazing. We added a lot. We're back up to we're up to kind of Amazon levels. Options start trading today. We'll talk more about that story next. This is Bloomberg.
To Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
Bringing you the latest geopolitical news whenever and wherever it happens. I'm David Gura on the Salar de Uyuni in Bolivia, and this is Bloomberg.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Asia is at the forefront of some of the world's biggest stories. I'm Chevrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
What is going to be the consequence for U.S. markets?
We are seeing modest gains across European equity markets.
Take a look at how we're faring when it comes to Asian markets.
It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more.
We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
Bringing you up-to-the-minute automotive news whenever and wherever it happens. I'm Matt Miller in Detroit, and this is Bloomberg.
Welcome back. This is the opening trade. We go to Evian in France, where the G7 leaders are gathering, of course. We've seen Emmanuel Macron walking up this long, winding path outside the venue to greet, who was it going to be? Well, it's Volodymyr Zelensky. The Ukrainian leader is in attendance at this event. This is one of the items on the agenda, of course, war in Ukraine. The Europeans certainly pushing to keep this firmly on the agenda, even if other things to do with Iran and the reopening of the Strait of Hormuz are also really important. AI sovereignty, all of that part of the conversation, no doubt, as well. But here we have Emmanuel Macron welcoming Volodymyr Zelensky to the G7.
Yeah, I think it's going to be a meeting including Donald Trump fairly shortly around what is happening in Ukraine. Just as an aside, the market's going through the process of pricing in peace in the Gulf. You do wonder how the market would react to peace in Ukraine.
Seems like a long time since we've asked that question.
Yeah, but you do would that be the second kind of element to all of this? And you wonder what would happen around energy prices if that was to be the case. Anyway, that's happening on Earth. Let's talk about what is happening in outer space. SpaceX shares jumping in their second day of trading, adding to gains following the blockbuster debut that instantly vaulted this company into the ranks of the world's most valuable public companies. The company's market value is now more than 2.5 trillion, putting it amongst the top 6 largest companies in the world. I think overnight on Hyperliquid, I think it's up circa 6%. I think that takes it up to kind of Amazon levels of valuations. Take a look at the revenue line of Amazon and then take a look at the revenue line of SpaceX. Different planets. Quite different planets. Neil Campling is Bloomberg's senior strategist and is sitting next to me. So we get options today. How does that change? That gives you a lot more flexibility around how you kind of manage SpaceX in terms of a portfolio.
It does. Thus far, early days, but we've only been able to trade the actual underlying stock itself. So with the options coming to the market, then funds are able to position whichever way they want to by utilising options. Longer dated, perhaps. There's potential of looking at different kinds of options, call options, put options, but we checked this morning, and hedge funds tell us that there is literally no borrow available on the stock thus far.
So you can't short.
So you can't short the stock. There's no stock to borrow at any price at the moment. So with the options starting to trade, then at least it would enable some hedge funds or maybe funds taking positioning bets longer term on where they think the stock may go to, using options or the levered funds as well. Don't forget, we had all those ETFs that start trading yesterday and today, which may be 2x or 3x long or short the stock, but there's been no way of synthetically getting exposure using options or derivative markets. So that does change. So that may change the complexities around these kind of pretty large, obviously, valuation moves that you mentioned that we've seen since it started.
Neil, is the market view still that it's the end of the lock-up period that is the biggest risk for this stock at this point, or are there other factors that could derail the momentum that we're seeing? At least the early first couple of days.
The early. I mean, I suppose the early momentum is kind of helped in a regard to what's been talked about a lot about the retail trading and retail investors getting one share, in a little bit of skin in the game, enough maybe to buy more stock. Perhaps in terms of coming back down to fundamentals, although the company had talked a lot about long-term visions and long-term goals, the fact is we'll come back to quarterly earnings in the middle of August. And so we will be the first time to look at the fundamentals. And a reason I mention that is 2 days later becomes that first lock-up expiry window when there could be more supply on the market. And given where the stock is, you mentioned about Amazon and the valuations. Let's just go backtrack just 1 year ago when the private valuation of SpaceX was under $500 billion. And now we're looking at $2.5 trillion. So quite a substantial rise in that interim time period. So if those insiders have made lots of money on the gains in the meantime, it would be maybe sort of why wouldn't they look to lock in some of those gains?
Okay, Neil Campling, thank you very much indeed for breaking that story down for us. We'll continue, no doubt, to come back to you as we continue to monitor SpaceX, of course, and the broader market implications of that company. Now we're going to switch focus to China and what's happening on the macro front, because China's consumer spending and investment slumped to levels not seen since the pandemic, exposing the risks still facing the economy, even as it benefits from a de-escalation in tensions in the Middle East. Joining us now is Bloomberg's China economy and government editor, Alan Wong, who's standing by for us in Hong Kong. Pretty disappointing data, Alan, then, and it's really the weakness in the consumer that seems to stand out.
This is the textbook example of a K-shaped economy. We're seeing that how industrial production benefited from the global AI investment boom. And the output of those sectors did really well compared to the rest of the economy. But at the same time, you could see that the consumer are still very reluctant to open their wallets. They just simply didn't want to spend all that money, and retail sales fell for the first time since the pandemic. This is highly unusual and just speaks to how weak the sentiment in the economy is.
The housing market, then, that's another area that we've seen struggle for quite some time. We saw some of those property stocks, I think, dropping in session, but elsewhere, Chinese equity markets were quite resilient. Are markets taking this in their stride, or are they banking on some kind of stimulus coming from Chinese authorities?
Yeah, we saw some very weak data this time last month as well in the previous release of the monthly data. I think it's just that the markets have very low expectations to begin with. So when the numbers came in slightly below expected and showing a broad weakness in the economy, people weren't that surprised. But of course, as you said, with the home prices falling at a greater pace than before, I think that was a cause for concern for a lot of investors. And overall, but the overall trajectory, the familiar K-shaped story isn't going anywhere. So that's why. Maybe why investors weren't too spooked.
We're going to leave it there. Alan, great stuff. Thank you, as ever. Alan Wong in Hong Kong, our government and economy editor. I just want to take you to Evian. They've got a similar desk to us, to be honest. This is the live pictures we're getting from the room where the meeting on Ukraine is going to be taking place. There you go. They've copied us. Very similar desk.
Imagine if there were 7 anchors around this desk. What fun that would be.
Yes, that would be amazing.
Maybe that channels us into thinking about the challenges that lie ahead for the G7.
Yeah.
They've got a lot to coalesce around, and it's not always easy.
Yeah. I wonder, the round table, I think, is also means that nobody gets to sit at the head of the table.
That's probably useful.
Yes.
I wonder where Mr. Trump would like to sit.
Yes, how he positions himself around the table. They've clearly taken aesthetic inspiration, haven't they?
We need to get something in the middle of this desk, basically, the kind of...
Pastries.
I like the idea of the breakfast buffet.
Breakfast.
Sitting in the middle there.
But on the serious business of what they're going to discuss, I mean, we've seen Volodymyr Zelensky arriving, and there's George Maloney just arriving, we think. So, I mean, clearly Ukraine is going to be front and centre for this morning's session. That is one of the things that they're going to be talking about. And the Europeans really trying hard to keep that front and centre.
Can you imagine if they... But you could have... If you resolve that, like, how big a factor would that be for the markets? Is that such in the background now that you wouldn't get the same effect as you've seen with the Strait of Hormuz, but the energy story is massive around that as well.
The defence story as well.
Precisely.
Yeah.
Would that change? How much would that change? Anyway, I just think it's a really interesting kind of thought process to go through.
So George Maloney greeting other leaders in that G7 room. We will be back to that story. Coming up on the programme, we discuss the resumption of energy flows through the Strait of Hormuz. When exactly will it happen? What percentage is coming back when? We've seen a number of different forecasts out over the last 24 hours. Emily Ashford will join us from Standard Chartered next. This is Bloomberg.
Anything we do in Africa is going to be more risky than the U.S. I think the approach we want to take is, how are we being compensated for that risk? And one of those is obviously going to be a valuation question. In our minds, valuation was a lot more attractive in Africa, even if we adjust for some of those Africa risks that a lot of Western investors see. So yes, in a lot of ways, you take some of those models that, as I said, might be more asset medium or asset heavy. There might be some more inherent risks. However, if we're saying we're adding some risk because of that kind of model, but we're now solving a core problem as opposed to maybe a nice to have solution in Africa, that might actually offset it. Where if you're solving something that people really absolutely need and can't live without, in a way that then that's a lot less risky. So again, we'd encourage investors to have a less binary view. In other words, the US isn't risky, Africa is risky. That's going to lead to a lot of complications down the road.
At 9:30 a.m., the market tells you what it's really thinking.
We beat the drum to the opening bell.
With deep analysis of the forces driving the price action.
Focusing investors on what really matters.
Where the money flows, which markets are changing.
Conversations with players shaping the narrative.
Innovative growth companies gravitate to NASDAQ.
It's not just like, let's buy the Mag 7 or AI.
That's a really compelling story.
This is where your trading day begins.
And this is Open Interest.
Only on Bloomberg.
When news breaks,
A redhead across the Bloomberg terminal.
Bloomberg has you covered.
Trump's global tariffs are struck down by the U.S. Supreme Court.
For all the context and clarity you need,
There's going to be now tons of tariff headlines until midterm elections.
hear it first on Bloomberg.
Welcome back. This is the Open Trade. We're 30 minutes into today's session. The sense you get is there is a bit of a breather coming through for these markets after record highs for the European stocks yesterday. Still building on that today, up 0.2% across the benchmark. A pretty decent session over in France. The CAC 40 is up 0.3%. Meeting, of course, the G7 leaders in Evian right now. We keep across that for you. The DAX is up just 35 points. Here in the UK, the FTSE 100 is up just 0.1%. I wonder if there's any more interest under the hood, Guy.
Not much. Very even market. 290 stocks, 288 are up, 280 are down. Fairly even balance there when it comes to what is happening here. Volume's still okay. So volume was very strong yesterday. Today we're fading that a little bit, but still a decent volume session. So the market is still kind of active. A little bit more conviction, maybe, in these markets. Let's talk about where we're seeing the leaders and the laggards. Unit credit is on the move this morning, which is interesting, in as much as Germany has once again pushed back on the idea of this Commerzbank takeover. Unit credit's actually bouncing on that, which I think is fascinating. I'm not sure that's what management necessarily like to see. Defense stocks are up. There's a defense spending narrative around Ukraine, plus a broader one around Europe, which I think is interesting as well. So that's that sector are both doing well. Puma's also bouncing as well. I wonder, I'm still slightly scratching my head around the reasons for that, but we'll come back to that. Let's talk about where we're seeing the downside. ST Micro is off a little bit. I think that's the convertible that is putting out there. That probably is acting as a bit of a break on that stock. Infineon, though, more broadly in that space, is also lagging this morning. And Siegfried, I think that's a UBS downgrade this morning in that space, pharma space. Its stock is down by 3.8%, Anna.
Let's get up to date with some of the other stories we're covering this morning then, Guy, and we start with central banking. The Bank of Japan has raised its benchmark interest rate to 1%. That is the highest since 1995, and the BOJ signalled that further policy normalisation still lies ahead. The central bank also announced it will keep its bond buying steady at a monthly pace of around 2 trillion yen from April 2027. Senior technical staff from Anthropic have met with U.S. officials as the U.S. company seeks to resolve a fresh confrontation with the Trump administration. It comes days after Anthropic was told to halt foreign nationals' access to its cutting-edge Fable 5 and Mythos 5 models. Anthropic, which is preparing for an IPO, said it has complied with the U.S. directive by disabling access to the two models. Bloomberg has learned that Qatar is planning to rapidly boost LNG production once the Strait of Hormuz reopens. Qatar Energy is telling buyers that it expects to raise output to about 50% of capacity a month after safe passage is restored, and to roughly 80% of previous capacity within 2 months. Tom.
Okay, staying with energy, oil heading for its longest losing streak this year as the US-Iran deal to reopen the Strait of Hormuz boosts expectations for a revival in supply. At the Group of Seven meeting of world leaders in France, President Trump insisted the waterway would be clear by Friday. For more, we're joined by Bloomberg's Abir Abu Omar in Dubai. Abir, do we know anything else in terms of the details around the MOU? We know the two have signed it digitally, it seems. We got Qatar looking to ramp up production, but not back to pre-war levels. What stands out to you in terms of the developments as we lead up to that potential in-person signing on Friday?
Good morning, Tom. We're still waiting for the details of that MOU that are set to be released once it is officially signed later this week on Friday, as you had suggested. Now, look, we still don't have a lot of clarity on what exactly are the concessions in the interim deal, but some statements that have come out on the Strait of Hormuz, for example, suggest that there's still some divergence between both sides. So Iran is saying that it will not charge a toll for the 60-day ceasefire that will be extended once the Strait of Hormuz is opened. J.D. Vance, the vice president in the United States, says actually there's an explicit clause in the MOU that suggests it will not be tolled. So you're getting that conflict yet again leading up to this MOU being signed at the sidelines in Geneva. Meanwhile, the most important concession in all of this, the Strait of Hormuz, that according to President Trump is going to be reopened immediately upon the signing, is also seeing some difficulties. The strait is still effectively closed. A lot of analysts that we've been speaking to are saying even if it was reopened immediately on Friday, and that is still theoretical at this point, it will take weeks, if not months, for regular movement to happen in the waterway. You just mentioned Qatar, and Qatar, according to our Bloomberg scoop, is saying that it will bring back capacity to 50% upon the opening, 80% of the capacity within 2 months after the opening, Tom. So again, we're still waiting to see a lot of these details, still unclear. Meanwhile, in Israel, that still maintains its incursion in Lebanon, Prime Minister Netanyahu is facing a lot of backlash, a lot of opposition from officials in his cabinet that say they want to maintain the incursion in Lebanon. And Lebanon is a main sticking point for Iran, where it refused to go back to the negotiating table if the hostilities in the southern part of Lebanon do not cease. And so we're getting a lot of mixed signals ahead of the signing ceremony. European officials are also weighing in on the Strait of Hormuz. Giorgia Meloni saying that Italy will not be taking an active part in demining the strait, for example, until hostilities in Lebanon cease. And so a lot to watch up to in the lead up to this meeting or this signing ceremony that is supposed to take place by the end of this week.
Abir, thank you very much indeed, Abu Omar in Dubai, on what is happening in the Strait of Hormuz, or not happening. Emily Ashford, Head of Energy Research at Standard Chartered Bank, joining us now to carry on the conversation. Emily, how easy is it to value oil right now, given we don't know what the details of the MOU are, and we don't know how quickly the Strait is going to reopen?
Yeah, I think what we've seen over the past few days is an unwinding of some of the risk premium, but not a pricing in of a complete return to the status quo. So I think perhaps in terms of how do we value oil, it could be viewed as a shift from pricing in war to pricing in peace. But I think the proposed MOU and any credible path towards reopening the Strait of Hormuz reduces that tail risk probability of the absolute worst case, the extreme disruption scenario that we were so concerned about. But as your colleague mentioned, so many of the most important details remain unresolved. We still just have a framework. There's still substantial ambiguity remaining, and that formal signing is pending. And critically, some of the more complex negotiations have been effectively deferred to a later phase and not yet removed. Regional actors still create uncertainty. The implementation risk is substantial. So I think focus is shifting a little towards execution, the months of negotiation to work out finer details. And I think there's also the risk there of complications. So the next few weeks will be about whether diplomacy is actually going to deliver the physical recovery that the markets have already begun to anticipate.
Before the war, there was very little risk premium built in around all of this. What do you think that is over the medium term, a year, 2 years, going to be worth? What do I, in terms of geopolitical tension, what is the price of that for crude, for Brent?
Yeah, I'm not sure that we're going to see a return to the pre-conflict pricing. I think there will now be always an inherent risk premium attributed to Gulf barrels, to any barrel that has to transit through the Strait of Hormuz. Iran has shown how effectively it can use that mechanism to control the market and to affect not only supply but pricing. So I think there will be a level of that. That's an expectation I have as well, to see a diversification away from the concentration of barrels and a concentration of delivery routes. So I think we're going to see more pipeline capacity being built to remove that risk component. In terms of the Strait as well, if we look at it in the near term, I think we've established that it's going to take time, even with a political agreement, to get those physical flows back. We have a level of shipping confidence that's going to need to return. I'm not sure that that will be entirely removed in the long term. Safety will need to be assured. Mines may need to be cleared to allow insurance premiums to fall back towards normal levels before we start seeing operations en masse. So yeah, I think there will always be a small inherent risk premium and insurance premium attributed to transit through the Strait of Hormuz.
Emily, I wonder how much confidence you have around any assumptions you're having to make about how quickly supply does come back. We've heard from the Qataris this morning, according to our reporting, to restore half of LNG output within a month. On the crude side, Goldman Sachs, Morgan Stanley, both out with what look to be slightly different assessments of how quickly the crude supply comes back. So what level of confidence can you have around what percentage comes back in which month?
Yeah, there's a lot of assumptions being made here. I've made my own assumptions, putting on my geologist hat. But I think the path to normalization for LNG is going to be faster than crude. Qatar Energy's announcement today is quite impressive. The gas market has actually coped remarkably well with the loss of this Middle Eastern supply. It's been broadly balanced by new capacity coming on stream. We do have Asian LNG demand strong, Europe being a little behind schedule as well. So I think those Qatari molecules are certainly going to be in demand. Pivoting back towards oil, I think you can broadly categorize the supply into three main tranches. So the supply that is off stream due to logistics or just the export disruptions, shut-in wells that have limited damage or may need a little bit of intervention, and then supply with permanent reservoir or infrastructure loss. So we have expected about 30 to 40% of lost supply to be available within the first few weeks. The fastest being obviously barrels that have just been constrained by export restrictions. So that's already laden tankers or oil that's in storage at ports, or where the producing reservoirs have remained healthy and surface facilities are intact. Those could be brought back on stream rapidly. The limiting factor being export terminals and pipelines. That could rise to about 80% within a year. And then I think there's going to be a level, maybe 10 to 20%, that's going to require multi-year remediation. And on top of that, up to 10% that could be permanent loss due to reservoir degradation or just economic abandonment. So maybe a more cautious approach there into how barrels are going to slowly return to the market from that shut-in Gulf supply.
Emily, do you align with the view that with the UAE out of OPEC, that there is a scenario towards the end of this year where we actually get a supply glut on oil with the UAE ramping up production?
Yeah, I don't think we'll see a supply glut. What I do think it will be a very interesting key supply uncertainty will be how will both Saudi Arabia and the UAE react? Will they look to increase supply to make up for lost barrels? Will OPEC remain committed to its gradual unwinding of its voluntary output cuts where possible and this compensation cuts? Or will the UAE look to capitalize on its exit from OPEC to try and increase its market share? I think that's going to be one of the key uncertainties, the level of geopolitical shifts that we've seen in that space over the past few months. And then on the demand side, another key uncertainty is just going to be how quickly does demand return return? Do we stabilize at pre-conflict levels? Do we push past that? Particularly if we have a focus on not only rebuilding product supplies, so increased refinery runs, but also this demand to refill the strategic reserves. When does that begin? Does it happen when prices remain escalated, or do we expect to see some of that demand coming through perhaps in early 2027? So for me, they're the key uncertainties for the year, that the reaction of some of those ex-OPEC and OPEC producers, and just when we start seeing that demand, particularly in the US, to refill the strategic reserves.
And do you have insights, Emily, into what's happening in China, the demand story there, and to what degree does that matter? We've seen some weak data coming out of China overnight.
Yes, weak data, not surprising to see in China capitalizing on its giant strategic reserve itself to reduce its imports. That, when we start seeing a normalization in terms of China's imports and China's refinery runs, I think that's another key component of the demand part of the balance that we see for the end of the year. So again, all eyes on China data. Obviously, we're operating with a level of lag to see when that returns, but to get an idea of when that inherent level of demand, and China's demand has been critical to supporting prices for the last few years as well. So yes, China definitely still a very important component.
Emily, thanks very much. Emily Ashford, Head of Energy Research at Standard Chartered Bank, with her assessments of how things develop in the Straits of Hormuz. Coming up, the US is at odds with allies over challenges to reopen the Strait of Hormuz. We'll report live from France from the G7 meeting. These are live pictures coming to us as the G7 leaders are gathering. We see Germany, Canada, Japan, the UK represented there in that particular huddle. The leaders gathering them before this next part of their conversation at G7 level. This is Bloomberg.
Everybody has a moment where they put into action all they've practiced, where they step up to a challenge and either succeed or fail. But what are those moments for some of the world's most influential leaders?
It was a rough and tumble world, and I thought, okay, I can rise up, I can play this game, and I did play the game.
It was great, and it was depressing, and it was disappointing.
My chair at the time sat down with me and said, "Succession starts now."
I'm Francine Lacroix, an award-winning journalist. For the last 25 years, I've interviewed world leaders, bank bosses, even fashion icons. I'm often asking about the news of the moment. But I've always been curious, who are these people as leaders? Join me for the podcast version of Leaders with Francine Lacroix. I'll start your week with conversations that explore what drives the world's most influential people, how today's leaders got to where they are, where they're going next, and how they've transformed their organization in the process.
Make decisions. A poor decision is always better than no decision.
You have to have truth tellers around you, and you have to be willing to listen.
You don't want to be setting strategy in the middle of a transaction, that's for sure.
Do it for the right reasons. Don't do it because of FOMO.
We'll also learn lessons which we can apply to our work and daily lives. Tune into the podcast version of Leaders with Francine Lacroix. Listen and watch on Bloomberg Television or wherever you get your podcasts.
Key
investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Jennifer Zabasaja in the Lesotho Highlands, and this is Bloomberg.
I want to take you back to Evian in France. The G7 is underway. We've been watching the leaders gathering. They've clearly been waiting for Trump, Zelensky and Macron. They have just walked into the room in France where this meeting is going to be taking place. You're looking at that happening live. Donald Trump obviously is the center of the attention. Zelensky getting some warm words as well. This meeting is in theory about what is happening in Ukraine. It's going to be interesting to see what ultimately comes out of it. Maybe the President of the United States just deciding where he's going to sit.
I think we saw a close-up, didn't we, of his name badge.
Yeah.
So I think they all have their seats assigned, which I'm sure is sensible. So we're seeing all these leaders greeting each other then. Let's get some analysis of what is actually on the agenda here. Our chief Europe correspondent, Oliver Crook, is with us with the latest from the summit. Oliver, before we saw them all gathering here, we saw Volodymyr Zelensky being greeted by Macron. Clearly, President Trump has now arrived. The three of them seem to arrive together as if Ukraine seems to be top of mind.
Yeah, absolutely, Anna. So this is the first session of the day, and this will be a focus on Ukraine. Obviously, Zelensky is here to participate in those discussions. And really, it's the sort of re-engagement of the United States in the potential negotiations for peace in Ukraine, possible support for Ukraine. You'll remember that the United States effectively, basically walked away from all of the negotiations between Ukraine and Russia. Obviously, the United States has been largely distracted by the situation in the Middle East in recent months. We heard it from Donald Trump last night, saying effectively that the United States is going to put its attention back on the conflict in Ukraine, back on Russia and Ukraine, and try potentially to bring that to resolution. And I think for Zelensky, who now is, sitting at the table quite literally with Donald Trump and the leaders of the G7, is to try to begin this new chapter of American engagement on the situation in Ukraine on the right foot, trying to bring in Donald Trump. We should say that since the last time the United States was really engaged in this process, things have changed pretty materially for Ukraine. Ukraine has gained momentum on the battlefield. They now have this 90 billion euro loan from the EU that the Hungarians previously were blocking. So in many ways, this is in a much more improved position, to say nothing of the fact that we've had a number of different strikes within Russia that the Ukrainians have been committing, including just a few hours ago an oil refinery in Moscow. So it'll be interesting to see what the president's assessment is of that and whether or not the Europeans can get him on the Ukrainian side of this equation.
Ollie, we just saw pictures, in fact, of Chancellor Merz presenting with President Trump with a football shirt, German football shirt, with the number 47 on the back of it. So some interesting sporting diplomacy there from the German Chancellor, after, of course, he's been very, very critical of the US approach to Iran, particularly around the negotiations. So Iran will be clearly a factor as well. Friday, maybe they get that signing ceremony. To what extent is there division, or maybe they're coalescing around how to reopen the strait? What are you hearing on the ground about how the G7 is approaching the question of Iran?
Yeah, I mean, I think for them it's very difficult to even lock into a kind of narrative on what exactly is going on in Iran and the Strait, what the G7 perspective is going to be, what the G7, the European influence is going to be over all that. And I think that is going to be one of the main conversations today. I'm sure it was already addressed last night when they got to speak with President Donald Trump last evening, and they had dinner together. And today at noon, you're going to also get the Middle Eastern session that will involve the leaders of Qatar, the UAE, and the Egyptians. So potentially being able to put out more of a blueprint, more of an architecture. But I think for the Europeans, the question really is, what is in this deal? What is going to be the regime governing the Strait going forward? Of course, the Europeans had offered, help in terms of demining the Strait, but they're really going to want to have some clarity on what this actually looks like going forward before they commit to that. You've also heard from the Prime Minister of Italy, Giorgia Meloni, saying that effectively any Italian participation is contingent on getting a full deal, not just with the Iranians, but also with Lebanon. So again, things get more and more complicated as you drill down into the details of this so-called deal. There is some distance in terms of how far the Europeans think they are from the United States in terms of when this strait is going to reopen, and that may also create a real problem in terms of getting a joint communique that's really robust, particularly on the issue of Iran.
In terms of expectations around what Trump is going to deliver here, does he need the Europeans? What does he want from the Europeans? He obviously wants help, but is that required here to get the picture to improve, Ollie? I'm just wondering kind of what the diplomacy looks like. Trump normally leaves these things early, but does he need to stay to keep the Europeans kind of on board with this narrative to get to Friday, to get a positive deal in the Gulf?
I mean, I think that the Europeans have been hoping, throughout the Trump presidency and have been, very disappointed throughout that at a certain point, Trump may actually need help from the Europeans. I think in these negotiations with Iran is potentially a way in which they can offer some help. I mean, we need to set up a whole sort of monitoring framework. The Europeans have their own economic sanctions on the Iranians as well. They said that they're open in sort of relieving those if we get to these different milestones, but creating all of this architecture, all of this monitoring. And of course, the President of the United States is talking about this reconstruction fund that could be about $300 billion. The United States does not want to be seen writing any checks from the U.S. government to the Iranians. Here come the Europeans, potentially European governments, potentially European companies. So again, these are all the issues that are going to be sort of thrashed out. But of course, the Europeans seeking as ever to get a seat at the table and quite literally have one for the next few hours with the President of the United States.
Okay, Ollie, continue the coverage. Enjoying it. Thank you very much indeed. Oliver Crook, our Chief Europe Correspondent, joining us in Evian. Let's talk about kind of where we are with the market this morning. Quiet session when it comes to equities, certainly relative to the last couple of days. The highlight thus far has certainly been what has come out of Japan, where we've seen the BOJ delivering a rate hike, plus also the press conference. Skylar's here to kind of walk us through what the action looks like. Good morning.
Good morning.
As expected?
Yeah, I mean, I think largely as expected. Partly that's because you're not going to get a huge amount of new policy when you have the Bank of Japan just generally moving at this very glacial pace. What I will say is maybe it's a bit more interesting on the JGB side in terms of you had a reduction in QT. Yeah. Now, again, it's a very glacial pace in terms of you're not getting that until April 2027, but it's very much failed to cheer the market, and I think that's very representative of the issue with JGBs generally. There's not a buyer at the long end, and yes, you're getting a reduction in supply, but there's no one to come in. It's not cheering the market because the Bank of Japan still owns something like 45% of JGB's outstanding. And if that can't get people excited or happy, then I don't know why, a modest reduction kind of in 2027 would make that much of a difference.
Eric Lonergan telling us earlier, essentially we're all in hock to the Japanese bond markets right now, particularly at the long end. I mean, is there a scenario where the BOJ turns more hawkish post this decision and that starts to cap some of the sell-off they're seeing? How does this transpire from here? What are the global ramifications?
Yeah, I mean, it's an interesting one because I think if they were more aggressive on tapering QT, then in a roundabout way that could be quite reassuring for the market in terms of if you don't have the possibility that long-end yields become very disorderly, then you can continue tightening at a faster pace. And the worry for the long end in particular is, yes, it's followed terminal expectations up. And so if you have terminal expectations continuing to rise, it can certainly justify a higher yield at that long end. But also term premium has been a big consideration of that. And so if you have something insulating that, it's very positive. And the issue for the rest of the market is the Bank of Japan and JGBs has been the floor for G10 for such a long time, and that floor is rising, and it makes people more aware of the risk that you have elsewhere, especially when you have kind of flare-ups around fiscal concerns. It makes your other countries that have fiscal slippage, those bond markets, worried.
It's quite amazing that we are at multi-decade highs on Japanese yields, and that takes us to 1%. That tells us just how low they have been and what support that has provided to the global economy. Skylar, thank you very much. Skylar Montgomery-Koning from the Bloomberg Markets Live team. She reminds us that we get inflation data out of Europe tomorrow, well, out of the UK in particular. German ZEW data coming today, so that's certainly something we'll be watching, and some of that coming from energy markets. With that in mind, Jeff Curry will be with the team at 9:45 London time. That's it for the opening trade. The Pulse is next.
weekday, Bloomberg puts the spotlight on a different aspect of global finance. Flows, funds, and the forces shaping markets on ETF IQ. The future of money with Bloomberg Crypto. The players behind major transactions on Bloomberg Deals. Rates, risk, and the cost of capital on Bloomberg Real Yield. And personal finance, retirement, and wealth management on Bloomberg Money. A different topic every weekday, only on Bloomberg Television.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
It's Bloomberg Money.
This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
You're watching Bloomberg Deals.
Welcome to Bloomberg This Weekend.
This is Bloomberg Television.
Technology is embedded in every aspect of our lives, and that revolution is playing out in real time. From finance to defense tech, AI to entertainment, from the road to the stars. Bloomberg is bringing you the stories of companies and people that are pushing tech to new frontiers and the politics reshaping global tech markets. I'm Ed Ludlow, live in San Francisco, and this is Bloomberg Tech. Every weekday, only on Bloomberg Television.
President Trump insists that the Strait of Hormuz will be completely reopened by Friday, but that's met with skepticism by leaders at the G7 summit. NVIDIA joins the AI borrowing frenzy, selling $25 billion worth of bonds, while SpaceX continues to rocket. Plus, the Bank of Japan raises interest rates to their highest since 1995 and says it could keep hiking depending on the economy. Now, there is quite a lot going on. Happy Tuesday, everyone. The G7 in full swing in Evian, France. A lot of the discussions not only will be on the Strait of Hormuz, but of course we have a look at what's happening with the BOJ saying that the FX rate is important, but is not a policy target. So this is what I'm looking at for the markets. S&P futures pretty much flat. So look, yen is one we are looking at very closely, 160.23, and then Brent at 82.05. Now let's also take a look at the European markets map. Look, the rally in U.S. stocks definitely pausing. Traders waiting for the Fed policy decision under Kevin Warsh. The Bank of Japan, again, raising its benchmark rate to 1%. The Reserve Bank of Australia keeping its key interest rate unchanged. And then you can see we're seeing a little bit of green across the screen with the DAX, the CAC, and the FTSE MIB in Italy. Now, this is the other thing we're watching out for. I know it's been a big week for I don't know if I'd call them spaceys, but people that are interested in space. I would put myself in that category. SpaceX pre-market gaining some 10.5%. So for the conversations that matter and the insights you need, let's get started.
Newsmakers and market movers. This is The Pulse with Francine Lacqua.
Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London. Now, U.S. President Donald Trump has insisted that plans are on track for the Strait of Hormuz to fully reopen on Friday. But world leaders at the G7 summit in France have voiced skepticism, even as President Trump says traffic flows are already improving.
The strait is already partially opened. As you know, they're doing a little hunting for a couple of mines that they've already found. But it's essentially ships are starting to go out now. On Friday, it'll be completely opened.
Let's get straight to Ollie Crook, our Chief Europe correspondent, who's at the G7 summit in Evian. Apart from the beautiful view, Ollie, what concerns do allies actually have?
Well, I think they don't even know sort of where to begin in terms of the narrative structure of how to respond to this Iran deal, because they don't really know what's in it at the moment. And they've been talking about potentially having a role on the day after a ceasefire. We've heard it from the very beginning from Emmanuel Macron on some very practical levels, militarily, for example, demining the Strait of Hormuz. But for all of these leaders, they really need to get their handle on what this deal actually is, what the provisions of it are, and to really be satisfied with the fact that this is going to be effectively the end of the war, and they will not be in harm's way if they participate. You've also had some leaders like Giorgia Meloni, for example, who say they don't really want to participate in any of this unless there is a full deal with Iran that also includes Lebanon, which obviously brings along with it a number of different complications from the sort of Israeli side. But for the G7 leaders who are in the room right now with President Donald Trump, it's going to be really pressing him in terms of what this deal includes, what they see in terms of the provisions for the Strait of Hormuz. The Iranians have said that it's only going to be toll-free for 60 days. So a lot of it's going to be a fact-finding mission. And then we can get into the conversations where the Europeans can participate, particularly on things like sanction relief. We had heard it from the E4 European leaders of the UK, Germany, Italy, France, when this deal was first announced, saying that they could be open to reducing sanctions if they understand the sort of milestones that the Iranians are being sort of judged against. But again, there's so much distance and so much ambiguity, particularly on the issue of Iran, that I think that for many of the people and many of the people we've been speaking to, it's not clear that we're going to get a very decisive communique, particularly on the issue of Iran.
Ollie, is the path forward for Ukraine any easier?
Well, listen, this is the meeting that they're having right now. So Volodymyr Zelensky arrived here this morning. He was chatting with Emmanuel Macron before the meeting. They had their little bilateral session. And right now you have the G7 leaders, Emmanuel Macron leading that conversation with Volodymyr Zelensky in the room right now. And of course, the real question is going to be the degree of American engagement on the question of ending the war in Ukraine. We heard from President Trump last night. He said to reporters that basically now that this issue with Iran is over, in his mind, those are sort of the message he's trying to sell, that he's ready to return his attention to the war in Ukraine. For the European leaders and for Volodymyr Zelensky, who's literally getting a seat at the table right now with the President of the United States, it's going to try to get to the President to be on his side of that debate. So really, for this new chapter of American engagement on Ukraine, the question will be, can they get the United States President on side? And we should say that a number of different things have changed since the U.S. basically disengaged from the peace process. Ukraine is on much better footing from a military standpoint. They've got that 90 billion euro loan from the Europeans, coming from a much greater position of strength, to say nothing, Francine, of the strikes that the Ukrainians are committing within Russian territory. Overnight, we understand an oil refinery right near the capital of Moscow of the Russian Federation.
Ollie, thanks so much. Oliver Crook there with the very latest, of course, on what's happening in Ukraine and what's happening in the Middle East. We'll be watching very, very closely all of the G7 meetings. It's also nice to look at the body language, actually, amongst the leaders to see exactly who gets along with who and whether that gives us an indication on any pacts to come. Now, let's get more on the market reaction with Elise Badois, head of VMEA research at Citi. Elise, as always, thank you so much for joining us. There's just a lot going on with the price of oil and inflation, and it's unclear what the way forward is for the Trump administration in really negotiating with Iran, but the markets are really, taking it in their stride. What happens to inflation from now?
Well, I guess we've seen incredibly resilient European markets in the face of macro headwinds. And I suppose the peace deal, even though we're waiting for the details, signals an intention. And I think that intention is a relief for everybody watching inflation. We obviously have the Fed decision tomorrow. That signal of intention comes at a very opportune time. And obviously everyone will be watching the language, perhaps because it's the chair's first meeting. But I think, generally speaking, some form of relief in sight is what we see for inflation, even though a lot of the rhetoric will have to be unfolded as we go.
So what are you expecting from the Fed meeting? I mean, again, a lot, it's the first one we get from Chairman Kevin Warsh.
So again, perhaps more focus on the language, on the communication than the outcome itself. I think markets are pricing it, having 70% of the market is essentially expecting perhaps still a hike towards year end. However, at Citi, we're quite dovish. We have 3 cuts priced in, well, sort of in our forecast rather. And so I think, let's see what the language is tomorrow. I think that's really the focus as opposed to the decision. And when you look at other central banks, I mean, we've had the hike in Europe last week, but we're really feeling like this is coming to perhaps the end of that cycle. And with the peace deal, obviously, that creates the environment where that's possible.
So the ECB could even be one and done?
At the moment, our economists are forecasting essentially potentially looking for a cut next year, but we're not forecasting anything else yet. So maybe coming to the end of that cycle, which is obviously a positive signal for risk assets.
Okay, and we'll talk a little bit, of course, about what this means for the UK, but also AI. Elise Badois from Citi stays with us. Let's get on to AI. Actually, first, let's start with space. SpaceX jumping again this morning in pre-market trading. Shares climbing 20% yesterday. The company's market value is now more than $2.5 trillion, putting it amongst the top 6 largest companies in the world. Now, we're joined by Neil Campling, our senior strategist focused on tech. Neil, thank you for joining us. So, look, appetite for SpaceX shares, it's pretty strong. Is it going to abate at some point, or how big can the company get?
There's definitely, obviously, an element of euphoria and a halo effect at the moment. One thing to be aware of is today will mark the first day that options trading begins around the stock. So if people want to position accordingly for a longer-term scenarios in terms of whether it's a higher or lower pricing, they can do that. We spoke to some hedge funds this morning who did say that there is no stock available to borrow. So if hedge funds did want to take an aggressive position against the company, they're unable to do that yet so far. So there are some technical factors at play here, as well as the kind of the hype cycle around the stock.
I'm a little bit obsessed also with the Anthropic story. So we know that Anthropic executives met White House officials after this pretty incredible order to, stop selling its most advanced models to foreign nationals. Like, what exactly is at the heart of this, and what do we know?
I think there's two factors. One, of course, is these models are so powerful, we need to ensure that they are safe for general purpose use and not at risk being used by bad actors. The second element as well, of course, is that in the global kind of IP wars that we've had for many years, and ensuring that the US keeps hold of those technology superpowers, if you like, and those tools, you also need to make sure that you have the protections around those use cases. So I'd expect that we will likely hear that they have been able to get around some of these issues that they've had in the coding recently, because Anthropic is very quick in terms of the growth, but also in terms of the actual ecosystem and improvements to the actual underlying technology.
Okay, Neil, thank you so much. Neil Campling there with the very latest, of course, on some of the AI signals. I mean, there's also a lot of demand for NVIDIA's MON sales. Elise, overall, what is AI at the moment? I know it seems to be, it's CapEx, it's spending, it's giving U.S. consumer quite a lot of hope and impetus. Do you worry about what kind of impact it has on the economies longer term?
So I think if you look, the lens I would use is really obviously Europe. It's all the focus is on the US. But I think when I look at what it means for Europe, it's tempting to think that it's all in the US. And actually, as the story moves from, I guess, infrastructure to adoption, you have a lot of opportunities around the world, and opportunities that tends to be cheaper in other regions. So the way we tend to look at this is, is the underlying growth driver. We've seen essentially since the start of the war this huge outperformance from AI-driven countries, AI-driven sectors, really underlying, supporting the market, and it goes unabated. And we're going to keep on looking at this. I think another point I'd like to make is sort of the bottom-up perspective. And when you look at the Q1 results, we've seen more and more CEOs embracing AI and talking about it. And so as we move to execution, to adoption, we're going to see more of that in H1 results. And as we are, in the years to come, the investment will go through. I think specifically for Europe, which is the region I look at, you have an opportunity. Yes, it may be later than the US, but it's coming.
Yeah. At what level? Because I guess if you're not doing the LLMs, then it could be in the implementation. It could be in kind of, I guess the value chain proposition is different if you're sitting in Europe than in the US.
Correct. So it's different. It's impacting different markets, but I guess industrials, medtech, are sectors that can benefit. And, beyond LLMs, you have opportunities such as, I guess, such as physical AI, for example, and that's a real proposition for, I guess, the European industrial sector, which is in need of that physical AI to compensate for perhaps higher costs, higher labor costs.
Elise, I mean, when we talk a lot about Europe, there's always an underlying kind of concern about Europe because because of the proximity, I guess, to Ukraine, because some of, I guess, the valuations are a little bit different. I mean, how do you see Europe developing? Do you see it becoming more competitive in the years to come?
So I think that there are two things I'd like to flag here. First of all, Francine, this is the biggest question we get from investors. In particular, a lot of doubts, a lot of questions around the fiscal story. But actually, as we monitor the fiscal story and we look at data, we see those factories order coming through. So that fiscal story is happening slowly, but it's happening. And it's sort of almost like a tidal wave, just like AI. So I think that's the first thing I would talk about. Then secondly, geopolitics, shocks. We've seen so many shocks, essentially, since COVID. The biggest discussion I have with the C-suite, which in my role I have a lot of these discussions, is really around this resiliency. And I think a lot of the C-suite has moved from being focused on, really efficiency, I would say in the last 20 years, moving to resiliency combined with efficiency. And I think that's the opportunity for AI to come in and help with that. And we've seen so much more resilient results, even though, we had a supply chain shock, we had an oil shock, we had a rate shock. We have CFOs and CEOs that are adapting with new tools. They're becoming more agile. And I think we're seeing that in the European base. And I know it's a long-term story, but we are seeing the signs.
I mean, Germany is a different Germany than 4 years ago because of the spending plans. Has that already filtered through?
So we see some of that, as I say, through factory orders. We monitor them. I think they peaked quite, we saw a spike, particularly in March, for example. But we have to look, and we have as analysts to look at some bottom-up data and some evidence. But yes, we are seeing it coming through. That said, I want to temper everything. I mean, obviously, as we look at European equities, we forecast, the S&P 600 is at its peak. And so, we probably have a lot of that deal priced in. I think the longer-term story has to come from broadening, and it has to come from that earnings story that I'm talking about. And so we see upside of perhaps maybe 13% by mid-2027. So it's still, subdued gains.
How much do you look at currency and actually what the dollar does to kind of, help or hinder with Europe?
So what we're seeing with energy, obviously, that's going to be, and the Fed, that's going to be the question of the impact on the dollar, obviously. I guess, whether you're a dollar investor or a foreign currency investor will make a difference. But let's see on that one, because we do need, on that, I've talked about the intention and the peace deal, we need to see the execution. And that's going to be the energy and then feeding it to the dollar. So that's we need a little bit more evidence to play through in the execution for that.
Elise, thank you so much. Elise Badouader, Head of Research for EMEA Citi. Now, coming up, heading for normal, the BOJ's Deputy Governor says Japan's central bank will keep its bond buying stable from next April. We'll have plenty more on that next, and this is Bloomberg.
Business and financial news whenever and wherever it happens. I'm Michael McKee at Mount Everest, and this is Bloomberg.
It's
Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
We're at the epicenter of a global realignment on a scale not seen for decades. At the intersection between markets, economics, and geopolitics, a forum for sophisticated conversation. This is Bloomberg Surveillance.
Wednesday, the Fed decides.
America's future will truly be unlimited with Kevin at the helm.
To fulfill this mission, I will lead a reform-oriented Federal Reserve.
If the Fed chair chooses not to speak, you're basically outsourcing forward guidance to everyone else.
Trust Bloomberg to bring you the fastest coverage and exclusive analysis.
What is the worst Fed's response mechanism to inflation?
And what does it mean for the dynamics of the American fixed income market?
Tune in to Bloomberg Surveillance. The Fed decides, starting at 1:30 p.m. Eastern.
The conversations that matter, the insights you need. This is The Pulse, and I'm Francie Lacqua here in London. Now, the Bank of Japan has raised its benchmark interest rate by 0.25 percentage point to 1%. That's the highest since 1995. Now, the Deputy Governor, Uchida, says the BOJ will keep raising interest rates in line with the economy while flagging that the Middle East conflict as a risk to watch. Well, let's get more with Paul Jackson, Bloomberg's Japan economy and government editor. Paul, thank you for joining us. So the rate hike was widely expected. What's been the market reaction so far?
The market reaction has been pretty calm. The yen hasn't been waving around or falling off a cliff, so I think that's a positive sign that they got the messaging about right. Also looking at stocks in Tokyo today, we saw the Nikkei index briefly go above 70,000 for the first time. So that shows that equity investors also took this rate hike in their stride. So far so good. Also, we had the deputy governor filling in for the governor who's been hospitalized at the press briefing today. And he did a very steady job. It was a very clear voice. Gave a consistent message. The yen didn't waver, as mentioned just now, and I think he stuck to the script, the message that they will continue with interest rates, and he also talked through and explained some of these changes they've made to their bond purchase program too.
Yeah, so there's a lot of, I mean, again, it was quite extraordinary actually having the BOJ deputy governor standing in for the governor Ueda. But overall, we talk about, you know, them hitting a normalization milestone. What does that mean?
Well, it's a little bit difficult to understand this because, you know, they've still got the huge holdings of bonds and also ETFs. But if you think of scaling back your holdings with active paring back of your purchases, they've basically finished that phase with today's announcement. What they're saying is that from next April, they're going to be continuing to buy at 2 trillion yen's worth of bond buys a month. Now, that's a large amount, incredible amount, it seems. But when you think of it, before they started, they embarked on this huge stimulus program. They were buying 1.8 trillion yen of bonds every month. So in a sense, had a bit of inflation, 1.8 gets you to 2. They're going back to what was normal policy before the Corona stimulus era. So in a sense, they've got back to that point in normal policy for the Bank of Japan. Now, of course, there are other people who would argue that the Bank of Japan shouldn't be buying any bonds. But given what the holdings are at the moment, if they went down to that level, I think there would be ructions in markets. So it's in that sense that we've got a milestone today.
Paul, thank you so much. Terrific briefing on what exactly is going on with the BOJ, Paul Jackson. Look, if you look at the yen, it's definitely paired a little bit, or it paired a small advance against the dollar after the BOJ deputy governor again suggested that policymakers just won't rush into more interest rates. I'm also looking at yields on 10 and 20-year sovereign bonds. In Japan, each rising about 7 basis points. Those on other tenors also a little bit higher on the day, again on speculation that the BOJ may need to move more decisively to stem inflation. Now, consumer spending and investment in China has fallen to levels not seen since the pandemic, in a sign of growing pressure on the world's second largest economy. Now, in contrast, industrial production was better than forecast. Joining us now is Bloomberg's Balazs Pence. Balazs, thank you for joining us. So there are signs of growing divergence in China's economy. What exactly are the risks?
Yes, Francine, this is another piece of evidence for what a lot of people are calling a two-speed economy, where we have this tech sector in China that's growing really, really fast on the back of demand for a lot of AI-related products. These chip makers are doing really well, exports are doing quite well, but that's not translating to a broad-based growth in the economy. And of particular concern is the consumer economy. Demand is still quite weak, and there just seems no sign that the Chinese consumer is willing to spend, which has been a concern for the global economy ever since the pandemic. Just think about the size of the Chinese consumer economy, the consumer base, and the leverage they have on the entire global economy. If they don't start to spend, that creates an overhang for the entire global economy, and that's what's giving global policymakers some headaches.
So, Balazs, what are the options for policymakers at this point to actually help revive domestic demand?
Well, if there's one thing we learned since the pandemic is that it's very, very difficult to budge those Chinese consumers off their unwillingness to spend right now. So we are getting back into the conversation about what policymakers can do. There's a growing expectation that there will be rate cuts, potentially a triple R cut. There's growing expectation that there might be more spending that the central government can do. So there are some options that the policymakers in China do have. But as we have discovered over the past half decade, it's going to be very, very difficult to change that dynamic.
Balazs, I mean, what do people most misunderstand about China when you look at, at some of the intricacies that you're explaining? What does it all mean for investors?
Well, I think it's really interesting. We saw a reaction in the yuan today. It came off a little bit. The yuan has been really, really strong. So there is some dynamic there where the Chinese consumers do have more firepower because of the stronger yuan. We've seen that in Hong Kong in particular, and so the Chinese tourism picking up a little bit showed that. But in general, there is this reluctance among Chinese consumers to open their wallets, if you will, to spend more. They are kind of very reluctant to let go of their savings, and that's what's been really, really vexing policymakers to try to get that to change.
Balazs, thank you so much, as ever, for the terrific briefing. Balazs Pence there with the very latest on China. Now, a couple of things we're watching out for. Of course, SpaceX shares. We've been watching them all week. Well, they've surged in pre-market trading, putting the stock on track to extend a rally following its blockbuster debut last week. It's poised to build on the more than 40% gain across SpaceX's first 2 sessions as a public company. Now, the gains have lifted the market value of the rocket and AI company founded by Elon Musk above $2.5 trillion as of Monday's close, bringing it within striking distance of Amazon's nearly $2.7 trillion valuation. Coming up, an exclusive conversation with the chief executive of Ireland's biggest bank on the Irish economy, on interest rates, and much more. You don't want to miss the interview with Colin Hunt from AIB. That's coming up next, and this is Bloomberg.
wanted to say, Primer is back. We've been scouring the frontiers of science and technology to help explain the difference between the next gold rush and whatever this thing is. And in season 2, we're upping the stakes. More danger.
Now that is some high-grade uranium mineralization.
We used to have a stable climate on this Earth. Right now, we do not.
More science.
We're pushing the envelope of technology in multiple directions. Software, hardware, chemistry, physics.
The cable is like very cold.
And more CEOs that can nail the photo shoot.
Hundreds and hundreds of billions of dollars are at stake.
While the problems are economic, the solutions are too.
And yes, we will be talking about AI.
There is a lot of humanoid hype out there.
But our future doesn't run on hype. It runs on innovation. Watch season 2 on all these lovely channels.
It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more.
We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything. The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything. U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
Good morning, everyone. Welcome to The Pulse. I'm Francie Lacroix here in London, and these are your top stories. President Trump insists that the Strait of Hormuz will be completely reopened by Friday, but that's met with a little bit of skepticism by leaders at the G7 summit in France. While SpaceX shares surge pre-market, putting the stock on track to extend a rally following its blockbuster debut last week. Plus, the Bank of Japan raises interest rates to their highest since 1995 and says it could keep hiking depending on the economy. Now, Irish GDP fell 12% in the first 3 months of the year as the multinational sector shrank. Irish bank AIB has forecast that growth in Ireland is expected to slow overall this year as rising prices dampen consumer demand. Now, the outlook was published last month, weeks before the U.S. and Iran agreed to end a war that's driven up global energy prices. With us now for an exclusive conversation, I'm delighted to say, is Colin Hunt, the chief executive of AIB. Mr. Hunt, thank you for joining us. Look, I know you said last month, or AIB forecast last month, that actually there will be a slowdown because of the conflict. But with this kind of agreement in place, do you see that this forecast being revised upwards?
Well, I think last year we had an exceptionally good year. We had modified domestic demand of just a touch under 5% in Ireland in real terms, and we think it'll be a little bit above 2.5% this year. But I think it's too early to say in relation to what we're seeing overnight and what we've seen in the past number of days. We certainly, it's a very welcome truce that we've seen emerging in the Middle East. Will it lead to a durable, lasting peace? I don't know. And I also am somewhat concerned about the length of time it's going to take for us to see the supply infrastructure, critical supply infrastructure in the energy sector in the Middle East returning to where it was at the start of this year. So I wouldn't be getting overly excited at this stage about a sustained moderation in oil prices, or indeed I wouldn't be getting overexcited about a significant reduction in risks to the global economic outlook.
But what does it show us? I mean, is Ireland just too dependent on these energy price swings?
No, Ireland has been an exceptionally successful economy, really, I suppose, going back over the past 10 years. We've seen a significant increase in total employment. I'm old enough to remember when there was 1 million people at work in Ireland, and that was within the last 40 years. Today we've got 2.8 million people at work. We're way beyond the levels we had even pre-COVID. So the Irish economic model has proven to be a very resilient success, notwithstanding the fact that we're dealing with a very uncertain global environment. And we've been dealing with that uncertain global environment now for the best part of a decade. I've frequently remarked that Every generation is condemned to have to deal with one black swan event. We've had one every year. If you go back all the way to Brexit, and we had the global pandemic, we had Trump, tariffs, Liberation Day, invasion of Ukraine, and the conflict that's ongoing in the Middle East now. Well, hopefully it has come to an end.
Yeah, it's been 4 or 5 years of non-stop crisis, at least once a year, around January, February time. The ECB raised interest rates again.
Yes.
Will you be passing on those rate increases to your mortgage holders?
Oh, we never give forward indication of what we're going to do in terms of interest rate changes.
So when will you decide?
Well, we'll have an outcome meeting later on this month, an Asset Liability Committee meeting later on this month, and we'll make a decision in that context. We were very restrained on the way up. So of the official, when we went through the last phase of monetary policy tightening led by the ECB, we passed on about 45% of the tightening to our mortgage customers. We're very conscious of the need to play our role in ensuring that the Irish economy remained resilient.
So what does it depend on? I mean, if we have a resolution of the conflict, or at least a memorandum of understanding that things, quieten down, and we could look at the ECB potentially cut interest rates, is that when you decide to actually just hold it out for 6 months to see what happens?
Well, let's wait and see what happens. Obviously, we've had, I'm not going to prejudge the decision of my colleagues in relation to where interest rates should be set later on this month. But let's wait and see what happens. I think the President of the ECB made it very clear that they are not in any way pre-committed to any more moves. I think they were somewhat pre-committed to the 25 basis point move we had last week, and that was sort of very, very well heralded. Market is speculation we're going to see another quarter, maybe 2 quarters between now and the end of the year. But she has made it clear we are not pre-committed to a particular path. And I think it's going to be very, very data dependent. Let's wait and see, do we have the early signs of a sustained fall in inflation pressures, particularly in core inflation across the European Union, because they have a singular policy objective, as we all know, it's 2%. It's currently running at 3.2. They have a job to do.
Talk to me a little bit about AI. So how's the bank, your bank adopting to AI, and what does it mean for future job hires?
Well, the good news is that we are maintaining our graduate recruitment levels where they were before the introduction of AI, before the AI revolution. Because I firmly believe that if we are going to develop a pool of talent to lead the bank in the future, we get them from graduate cohorts. And it's really important that we don't take away the bottom rung of the career ladder. So we're very committed to maintaining our graduate recruitment level at the level it was in previous years. In terms
Do you think a lot of companies are doing that in Ireland?
I think, well, it isn't only exclusive to Ireland. It's happening right the way across professional services. It's happening in consulting. It's happening in law firms as well. But we're very committed to maintaining our current graduate recruitment levels. And I'm very proud of the fact that for 7 years in a row, as voted by graduates, we've been the most popular recruiter in financial services in Ireland. I'm very proud of that, particularly when it comes from the graduates themselves. But in terms of overall AI, my view on this is that we just don't know where the technology is going to take us. But I think that we need to respond to what is the early stages of industrial revolution by being extraordinarily agile. We're still in the foothills of this revolution, in my view. It's going to utterly transform the world. I just don't know where the technology is going to take us. So it's more important than ever that we remain agile. From our own perspective, we've increased our investment to 400 million a year. Okay. And we have invested very heavily in cyber defense. That's the number one priority for us. Our customers engage most of the time with us using our mobile technology. We have 99.9% service availability. We've got to maintain that for our customers. But we're also looking at deploying AI internally in terms of our legal department, internal legal communications, in terms of our HR department. And we have an agent in our call centres who has handled more than 2 million calls now since the start of last year. And she's doing it with very high net promoter scores from our customers.
That's very impressive. Now, Meta has, of course, cut jobs. And I think a lot of those jobs also came from Ireland, about 20%, because of their big hub. Do you worry about Ireland being over-reliant on tech jobs that will actually change and shift?
Well, Ireland as an anchor for for global technology in a European context has been a huge boon to the Irish economy the past number of years. We've seen it not only in terms of employment, but we've seen it also in terms of the fiscal position. Very, very strong corporation tax receipts being generated by that part of the economy. We are going through a period clearly of labour market loosening in the tech sector. We're seeing it in two ways. One was the announcement that we've had from Meta of job cuts. I suspect we're going to see more of that. And we're seeing it reflected in wage inflation. So overall wage inflation in Ireland running at about 4% in nominal terms, but in the tech sector, which would have been quite high, back to sort of mid 1% at this stage. So the impact is being felt, but will Ireland remain a key hub for Europe, for tech in Europe? Yes.
Talk to me about the EU presidency, which Ireland takes over, of course, in July. What does that mean for regulatory change? What do you want to see happen?
Well, Ireland is going to be taking over the presidency for the 8th time, and it's a really big deal for a small country, and the government has laid out a very, very ambitious agenda, including simplification and also including advancing the cause of the single market. So I'm all for simplification.
Yeah. Private credit, how exposed are you to it?
We're not exposed, and no intention of becoming exposed.
Well, that makes everyone's life easy. Thank you so much, Colin Hunt, for joining us today. We had a good conversation on Ireland, tech, AI, and we even touched on private credit. That was Colin Hunt, the chief executive of the AIB Bank. Now, over the past few months, we've had numerous reports that artificial intelligence is reshaping the jobs market, threatening to make junior roles obsolete. But is a job apocalypse, I can't say it, but you know what I mean, a job apocalypse, really underway, where our employers using AI as an excuse to make layoffs? Well, Bloomberg Economics has been looking at the data for the UK, and Anna Andrade from the team joins us now. And always a pleasure. So what does the data show us?
Hi, good morning. So yeah, jobs data is one of the best data sets that economists have to measure the early signs of technological change. And actually what we've done is we've looked at both online job vacancies in the UK, that we have very granular data for more than 400 different types of jobs. We've also looked at payrolls. And the picture that emerges there fails to support the case that there's a significant impact of AI on the labor market. So going a bit more into the specifics, what we see is that on online job vacancies, it's true that it's been those occupations that are more exposed to AI that since the release of ChatGPT have seen the biggest drops in labor demand. But once you place this into broader context, then you look at what has happened prior to that. So you see, it's not the start of a new trend. It was happening even before the release of ChatGPT. Right. And I think more interesting, once you look at zoom into the last 2 years, when the jobs market in the UK was really cooling, that link doesn't hold. So what it shows is that it's not really a sustained trend and doesn't explain the weakness in the jobs market. And once you move to payrolls, the picture is broadly the same. There's not really a correlation between exposure and job losses. If anything, there's actually an increase in workers that are more exposed in the payrolls data. That's our finding.
So, and is it fair to say that the impact is more significant, I guess, in certain other sectors, but not the whole economy?
I think even in those top 25% more exposed sectors, you're failing to see a clear, strong impact. That's not to say, obviously, that there's not some job occupations, some tasks that obviously are already being disrupted by AI. What we also know is that we can compare with usage data. Actually, Anthropic has put out its own measure of exposure, but usage exposure based on how its users are using Claude, for which tasks and for how long. And what that shows you as well is that actually usage remains a very small fraction of what's theoretically possible. So that chimes with our findings on the jobs data.
So could it come later? Is this a question of timeline, or just the impact where, you know, overexposed or over-indexed to a lot of change?
Yeah, no, definitely. And I mean, we're clear about this in our note. We're not saying that AI is not going to be transformational. I think AI has the characteristics of what economists like to call the next general purpose technology, which can have very far-reaching implications for the economy. I think there's two schools of thought right here. One is that this disruption is going to happen fast. In a 5-year horizon, you're going to see it in the jobs data, in productivity gains. There's a lot of money riding on it, on the markets. I guess what we're sort of trying to push for a bit by looking at the data, and this is what we see so far, is that it might not be that sort of revolutionary change. We might just see more of an incremental pace of adoption, showing up incrementally on productivity gains, on the jobs market. That doesn't mean that the impact on the final level of GDP won't be the same. It just means that it won't be as visible in the data. So we're pushing more for right now, so far, from what we see, it seems like it's heading that way.
Thanks so much, Anna Andrade there from Bloomberg Economics. Coming up, oil heads for its longest losing streak this year. We'll discuss all of the outlook with Jeff Curry. That's coming up next, and this is Bloomberg.
At 9:30 a.m., the market tells you what it's really thinking.
We beat the drum to the opening bell.
With deep analysis of the forces driving the price action.
Focusing investors on what really matters.
Where the money flows, which markets are changing.
Conversations with players shaping the narrative.
Innovative growth companies gravitate to NASDAQ.
It's not just like, let's buy the Mag 7 or AI. That's a really compelling story.
This is where your trading day begins.
And this is Open Interest.
Only on Bloomberg.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Welcome back, everyone. The conversations that matter, the insights you need. This is The Pulse, and I'm Francine Lacqua here in London. Now, oil is headed for its longest losing streak this year. That's as the U.S.-Iran deal to reopen the Strait of Hormuz has boosted expectations for a revival in supply. Well, oil's drop to the lowest since early March has erased most of the gains seen during the conflict. So lots and lots and lots to discuss with Jeff Curry, Executive Co-Chair at Abax Partners, who joins us now. Jeff, I'm so excited to speak to you today because I have 1,000,001 questions about what exactly happens next. So what's going to happen if the Iran-U.S. deal actually goes through?
I think the main implication is it was extremely challenging to get to this ceasefire. Maintaining it is going to be even more challenging, which means the uncertainty remains quite high. This is reflected in the actions of physical players. Nobody's changing their behavior on it. I think that is really the important conclusion here. Whether it's Maersk or Mitsui, they're not going to bring ships in there because it may create a near-term solution because you're going to flush all that oil that's trapped in the Gulf out. But the longer term, and by the way, it's about 60 million barrels. It'll cover 10 days of inventory. But after that, you really have to question, what is the long-term solution here? And nobody right now has an answer for that.
So are you telling me that actually the price of oil fell too much? Or is it too optimistic?
By the way, I think it's falling for real reasons. And the real reasons is that people are destocking. The uncertainty, whether it's financial positions, people go, I can't hold risk in this market anymore. It's the policy uncertainty is too high, and as a result, open interest is collapsing in the overall positions. If you look at VAR, value at risk, that's in the oil market today, we're dropping to some of the lowest levels seen, which means people aren't holding positions. But it's not just the financial guys. The physical people are doing the same. Did you see the German heating oil numbers? They're not restocking. They're not restocking because they believe the uncertainty is going to lead to a lower price tomorrow. Why am I in this market today? I can buy cheaper tomorrow.
Okay, so I mean, you touched on this. First of all, how quickly will flows through the Strait of Hormuz return to normal? Do we have an answer for that?
The answer is it's going to take months and not until the end of the year. Let's say the ceasefire, it works as planned on Friday. It would be probably by the end of the year you could even begin to talk about a resumption to normality. Yeah. And the idea, though, is you'd have that flush of the 60 million barrels that are caught inside come out. Maybe it's 60-plus million barrels. And if you're drawing on average 6 million barrels per day right now, that means you would cover 6 days or 10 days of inventory draws. After that, you still have the other problem. So before we can answer anything, you got to answer, how do you get the ships to want to go back into the Gulf? We have not answered that problem yet. So again, I say it's a near-term solution as you flush it, but longer term, you don't have a problem.
So how quickly then can Gulf producers actually restore productions?
The Saudi can do it the quickest because they recycle their oil, their fields at a very high frequency. They can do it almost like that. The Emiratis can do it rather quickly. When you get to Kuwait, Iraq, Bahrain, Qatar, we're talking months, if not years. Like Qatar, like the LNG facility. I mean, you took a big hit. Yeah. So all of this is going to take months to recover. And people say we've never seen this before. Hey, wait, yes, we've saw it in COVID. Remember, you shut 10 million barrels per day of production. The U.S., it took 2 to 3 years to get back to normal. And it took many of these countries years to get back to normal.
Yeah, but logistically, this is different, right? I mean, have we ever seen a case in point like this?
Were you shut wells?
Attacks? Well, were you shut because they've been attacked?
Oh, yes. So take the Iranian Revolution in 79. You shut those wells immediately. Well, we've seen this over and over. People go, oh, well, these were all different. We don't know if they're different or not. All we do know is when you shut them, you don't turn them back on immediately. And the most recent example using modern technology was COVID. Right. You shut them for the same reason.
But these are shut and damaged, or just shut?
They're shut, but you damage them. Think about COVID. You shut those relatively, in a very similar type of fashion, and it took a very long time to get them back up and running again because you got to restore pressure. Some of them have to be re-drilled. In fact, yesterday you look at the drillers rallied. Why? Because you're going to have to go back in there and re-drill those wells. But I think another important point here is the markets are treating this very differently than the way the physical markets are, or the operators are treating it. The financial markets are saying this is a done deal.
And how long? And you've touched on this, but when you look at the lost inventories, how far away are we from replenishing those? It just feels like there's market hope that it can be done like this.
Oh no, it can't be.
But we're talking this is months.
We're talking a billion plus a billion barrels of oil that has already been lost that needs to be replenished. Some of it in strategic reserves, some of it in commercial inventories. You got to restart all of this. Again, go back to look at where we have tertiary inventories. Tertiary inventories are not the ones held by the wholesalers or the big producers. They're the ones held by consumers. That's what tertiary means. The German heating oil stocks, where we can see what people hold in their own tanks. I challenge everybody to go look at a picture of that. They keep going down. Why? Because those consumers think they're going to buy heating oil tomorrow at a cheaper price, and they keep delaying that. Whether it's people driving, doing, in fact, I think it was Walmart or Costco in the U.S. said they're buying 10 gallons less than what they were before on each purchase. Why? Because they're running their stocks down on their cars waiting for the drop in price. So we have this destocking going on across the world right now because everybody anticipates, hey, we're going to get lower prices, then I'm going to buy, which means there's pent-up demand. It's the opposite here. Then, there was no precautionary inventories held. There was at the beginning. That's what ran us up to, let's say, 110, 120. But now we're doing the opposite. We're draining those precautionary inventories, expecting the supply to come.
Okay, jet fuel. I mean, because I'm going to get calls from sisters and family saying, can people still go on holiday? This was the big concern a couple of weeks. I don't see much having been changed.
No, nothing has. Nothing. I mean, if you really think about like in Europe, where they go, oh, we got so much comfort. They got comfort because they were getting this all from the U.S. Because the U.S. was exporting 2 million barrels per day more since it started, with most of it going to Europe, but all of that coming out of storage. It was never a sustainable solution to begin with.
Do you worry about the summer?
I'm worrying about all of these markets. We're going to get a reprieve, and I think the market's already tried to price that in, of that flush out. Assuming we get a signed deal on Friday, you'd flush that. And by the way, of that leakage that's happened, it was roughly about 120, maybe some people put it 150 million barrels. 40% of that leaked out. That's where you get to these numbers.
Jeff, what's the biggest lesson you've learned from this crisis?
That the abundance illusion, I call it the abundance illusion. And when you think about what Jimmy Carter said in February 1977, he went on TV and he warned about the physical scarcity. And what happened, we know he ended up losing his presidency, but he introduced the idea of energy transition, and he basically warned people they need to change their behavior. Every politician from that point forward learned, never identify the scarcity ever again. Create the illusion of abundance. And whether if it's releasing SPRs, talking this market down, George Bush Sr. did it, Clinton did it, all the way through to Trump. Every single president since that time period have done that. And the question that they use is they use that SPR to bridge the gap. And we're getting to the point that gap, the ability to bridge it, we're down into the weeks. And hence why I think we're witnessing the question about a sustainable deal or not is get a deal in, get it out to bridge that gap. But the main lesson I've learned is the abundance illusion, and it is a really important policy tool. Yeah. But the question is, how long will it last?
I mean, I was going to ask, does anything change on the back of this? Or, are there lasting or permanent after effects of the crisis?
Oh, absolutely. And I think it's going to be, we're going to go back to what the energy transit, when Jimmy Carter announced the energy transition in 1977, had nothing to do with the environment. It had everything to do with energy security. We're going back to that world of energy security, and people are going to diversify. Will they just be completely, places like Korea and Japan completely dependent upon the Gulf? No, they're going to be diversifying their supply source. Think about when we came out of the financial crisis, what did we learn? You wanted to diversify your counter risk. We had bilateral agreements before. It's going to be the same here. We're going to see diversification. And when we think about what energy transition was all about, transitioning yourself away from one source of energy, i.e. it was oil at the time, to multiple sources. Things like, and this is the new dual order that we argued a year ago, which is have a little bit of, oil, gas, wind, solar, uranium, have the whole gambit there. Now, the benefit of the ones that are the safest is that they decarbonize things like wind, solar, and uranium, because we all have that and they're easy to do. But I think the key message here and what people are going to do is go back to the original diversification of energy sources, whether if it's suppliers or energy types.
But Jeff, I mean, a lot of the LNG, for example, from the U.S. is already being bought by Asian nations. So what does someone like China do?
China, I would argue, they exemplify the new dual order. In fact, I wrote a piece recently arguing that the only group that ever heeded Carter's advice coming out of that famous, it was a sweater speech he gave where he said, we have a crisis coming, you need to diversify and do energy transition. The Chinese heeded that. The West learned the mistake of his politics of there, but the Chinese actually have 2 million barrels per day of flex. You look at the charging of the EVs, they're up 56%. Yeah, people are going to go, wait, that's all coal. Yeah, I give it. So from an environmental perspective, it's not a good. They've ran those coal mines to the point they're giving up at this point right now. Yeah. Thermal coal generation is up 160%, but they invested in the EVs and they have that optionality. That electrification optionality is absolutely critical, and we just watched how it benefited China in this type of a crisis. By the way, this crisis, we haven't got through the end of this thing. So to say we can assess, do a anatomy of what's happened, I think is still open. But I think the key point here is China, with that optionality from electrification, is in a very strong position.
Jeff, always good to speak to you.
Great,
Thank you so
thanks
much
for having
joining
me.
us. Jeff Curry, their executive co-chair at ABAX. ABAX Markets, some rebranding, your new shop. Tomorrow we'll be at Viva Tech in Paris. So these are just some of the guests that we'll be speaking to. Tanuja Randeri, the Vice President of Amazon Web Services, joins me on the pulse. That's at 9:15 a.m. UK time tomorrow from Paris. We're actually from Versailles. Up next, it's Bloomberg Brief, and this is Bloomberg.
What is going to be the consequence for U.S. markets? We are seeing modest gains across European equity markets.
take a look at how we're faring when it comes to Asian markets.
As an exchange, what can you do to make it more attractive to be a publicly traded company?
Talk to our customers. We spend a lot of time with our listed companies, listening to their concerns, particularly the offices of the CFO, head of IR, listening to their pain points, general counsels as well, and then act as an advocacy group for those companies to really focus on structured reform to allow a company to tell their story in the most efficient way possible and reward them for the good disclosures that they are making in the market.
Is there any sort of financial innovation that you could drive to get more companies to list? Tokenization has come up.
Well, we did announce our tokenization initiative earlier this year. We already built the technology, we've already done a variety of proof of concepts. It allows for instantaneous settlement, 24/7 trading. It importantly allows for the rights associated with a share to move into that electronic form, but is going to be a platform that runs in parallel to our more traditional exchanges.
Every weekday, Bloomberg puts the spotlight on a different aspect of global finance. Flows, funds, and the forces shaping markets on ETF IQ. The future of money with Bloomberg Crypto. The players behind major transactions on Bloomberg Deals. Rates, risk, and the cost of capital on Bloomberg Real Yield. And personal finance, retirement, and wealth management on Bloomberg Money. A different topic every weekday, only on Bloomberg Television.
When news breaks,
A redhead across the Bloomberg terminal.
Bloomberg has you covered.
Trump's global tariffs are struck down by the U.S. Supreme Court.
For all the context and clarity you need.
There's going to be now tons of tariff headlines until midterm elections.
Hear it first on Bloomberg.
It's 5 a.m. in New York City, 10 a.m. in London. Good morning, I'm Bonnie Quinn with your Bloomberg Brief. Let's get you set up for the day. Oil on track for its longest losing streak this year as the U.S. and Iran reach an interim deal to reopen the Strait of Hormuz. The Bank of Japan raises interest rates to the highest since 1995 and keeps the door open for more hikes. And stock futures wavering now as Fed Chair Kevin Warsh's first FOMC meeting is set to kick off. It's been a big few hours across Asia. Let's get a check now on how markets have been reacting to the BOJ hike. Here's Winnie Su for the latest. Winnie.
Yeah, good morning, Bonnie. Just as you mentioned, it's been such a busy day for us. Now, for the MSCI Asia, we did see stocks rising for a third day. A bit of a slowdown in the momentum, but investors are still assessing those impact from this upcoming deal between the U.S. and Iran. Now, the biggest drag today is in Chinese stocks listed in Hong Kong after China's retail sales see its first contraction since COVID, and that the numbers were down about 0.2%. 0.6% and also missing estimates. Now, the RBA, in fact, held rates steady, but you flip the board and take a look at what's going on in the Japanese asset, because as you just pointed out, the Bank of Japan raised rates by 25 basis points to 1%, and the bank also said that they will keep the monthly bond purchase steady from next year in April. We saw a bit of a relief rally in stocks, and also the yen paired a bit of an earlier gains while bonds extended losses.
Interesting. Still above 160, though. Winnie will be keeping an eye. Thank you to Winnie Su there. Now to London for a look at Europe with Justina Lee. Justina.
Good morning, Bonnie. Now, today we're seeing a bit of a continuation of the moves yesterday with stocks and bonds both up. Now, if we kind of look at UK 10-year gilt yields, for instance, that is down 2 basis points ahead of the CPI tomorrow and, of course, the BOE rate decision coming on Thursday. Now, when it comes to the stock market, the Stoxx Euro 600 is up quite a bit today, and like yesterday, still led by some of the more cyclical sectors, but just a different set of high performers today, such as the industrial sub-index and also some of the banking names. Now, if we flip the board here, I think a big question right now, potentially with the cloud of the energy squeeze no longer hanging over Europe, are investors going to rotate back into Europe, kind of given that European stocks have been lagging year to date without some of those like red hot AI names? And I think that is the question here that a lot of investors will be asking, Bonnie.
Here too, Justina. Thank you. That's Justina Lee in London. Well, of course, we're getting a tailwind from oil declining. So Brent in December trading at $78 a barrel now. That's still around 10-15% above where we were at the beginning of the war. Nevertheless, it is giving equities that push. So were all of those AI and semiconductor stocks. In fact, the SOX index, the Philly Semiconductor Index, up at a record yesterday, as was the equal-weighted S&P index. Cap-weighted is just below that, but just for your information, nearly 2/3 of the components in the S&P 500 are trading above their highest daily moving averages. So it really is a rally that's broadening out. Now, we might be seeing a little bit of a pause today, a little too early to tell, but so far the numbers that are on the screen are green. So futures on the NASDAQ 100 and Russell 2000 pointing higher once again today. As for bonds, we haven't moved too much. The 2-year yield still at 404.74, just below 405, down about a basis point. The 10-year 444, and that 30-year yield holding steady there, well below that 502 mark that we hit last week. Of course, all eyes will be on Kevin Warsh, his communication style, what he says, and what we're going to hear about the path forward on rates. Next, though, let's get to some individual market movers now. For that, we'll go back over to London and Chloe Melly. Chloe.
Good morning, Bonnie. SpaceX shares are jumping this morning, up about 10% in pre-market trading, extending the rally that we've seen over the last few days since the company's blockbuster debut on Friday. And so that means that SpaceX is now closing in on Amazon's $2.7 trillion valuation. So that's definitely going to be something to watch out for. Moving on to another mover that is in the green this morning, and that is Qualcomm, which is reacting to the information reporting that there might be a deal in the works for Tenstorin, which is a startup that builds computers for AI, and the price is said to be between $8 and $10 billion. Nothing has been confirmed yet, but news of this potential deal that is boosting those shares this morning. And finally, let's go over to Dave & Buster's, which has missed analyst estimates on revenue, and that is dragging down those shares this morning, really pointing to this weaker consumer confidence and consumer spending that is affecting some of those names in the restaurant and entertainment business. And it seems that Dave & Buster's is feeling that hit this morning.
All right, Chloe, thank you so much. Chloe Melly there. We'll be back later in the hour. Also coming up this hour, we're going to get a check on the yen and the dollar with Jane Foley of Rabobank. Oil headed for its longest losing streak this year as the US-Iran deal to reopen the Strait of Hormuz reshapes the global supply outlook. For more, we're joined by Bloomberg's Abir Abu Omar in Dubai. So, Abir, amid all the caution over the lack of details, optimism from Wall Street banks that exports could return to pre-war levels quite rapidly is very obvious. What is driving this confidence?
Well, a slew of positive news, Vonnie, that we've been getting over the past couple of days or so upon the signing of this MOU that is supposed to take place this Friday, probably in Switzerland. What we know is that President Trump said the Strait of Hormuz would immediately open. Now, just a few caveats to bear in mind here. Despite what President Trump had said, and if the Strait of Hormuz does in fact open on Friday, we still are waiting for a period of weeks, if not months, for shipments and those crude exports to go back to pre-war levels. Now, we had a Bloomberg scoop earlier in the day from Qatar saying that its LNG shipments through the Strait of Hormuz would be at 50% capacity within a month of the strait reopening, and it would be at 80% capacity within 2 months of the strait reopening. So you're seeing exporters in the GCC trying to rapidly get those missing shipments through the line. But look, a lot of details still unclear in this MOU that is going to take place later this week. A trickle of details coming through. For example, we know from the foreign minister of Iran, Abbas Araghchi, who said earlier today that Lebanon is gonna be an inseparable part of this MOU. So Iran has made Lebanon a major sticking point for it to come to the table and actually go through negotiations. Now, what we know from our own sources is that Lebanon was not not part of this MOU. We still don't know for sure. President Trump himself said that he needs to sort out this Lebanon issue. When he says this Lebanon issue, he means Israel's incursion in Lebanon that we spoke about multiple times over the past couple of months, the deepest incursion in 25 years. Israel and officials in Prime Minister Netanyahu's cabinet maintain the fact that they need to keep this incursion in Lebanon. So a lot of details and concessions in that MOU unclear. We still await the signing ceremony taking place by the end of this week on the sidelines of the G7 meeting, Vani.
Absolutely. Abir, thank you so much. That's Bloomberg's Abir Abu Omar, and that's exactly where we're going to go now. G7 leaders also focusing on Ukraine and, of course, the Middle East. Bloomberg's Oliver Cook live from the summit in Evian, France. Oliver, what are officials and leaders saying on the sidelines?
Yeah, so really the main focus for this summit has obviously been the war in Iran, the economic fallout therefrom, and of course the ceasefire that was announced just really at the very dawn of this summit, and President Trump coming in. You had him speaking yesterday beside Emmanuel Macron. You really got the sense that the President of the United States was really trying to sell this deal, right? Sell it to the world and talk to everybody through what he said is a sort of breakthrough deal, is the beginning of the end of the war. You'll have the Straits of Hormuz open by Friday. From the European side, despite the fact that obviously there's a big sigh of relief and there's a lot of sort of welcome to the end of the sort of most kinetic part of this war, there are a ton of questions that still remain, not least of which what the sort of next day looks like in the Strait of Hormuz. They're very skeptical that you're going to get sort of full flow of traffic through the Strait before Friday. There has been a lot of talk on the European side to helping out militarily, particularly with the demining of the Strait of Hormuz. They say they can really only do that once the peace agreement is quite clear in their minds, and it is not clear in their minds right now. You also have another complication. The leader of Italy, the Prime Minister Giorgia Meloni, for example, says she will not be involved until there is a full agreement, not just with Iran, but also with Lebanon. So these are just some of the issues. We should say there are also financial sanctions from the European side. Of course, the United States is trying to potentially remove some of these sanctions as there are sort of milestones within this deal. So all of these sort of details still need to be clarified for the Europeans to sort of join on board. And we should say that today at noon here, there will be the Middle Eastern session. That will begin. It will also be joined by the leaders of Qatar, the UAE, and Egypt. Obviously, they're going to be very active participants in sort of what the regime looks like geopolitically in the region going forward. But we should say, given the ambiguity around Iran, given the difficulty there is to try to get a sort of aligned position because they can't see things very clearly, I think it's very unlikely, that's what we're hearing from our sources, that there's going to be a very clear joint communique on Iran.
Yeah, absolutely. Well, that meeting's starting in less than an hour then, Oliver. Thank you so much. Oliver Crook there in France. Inflation concerns persist, even as an interim deal set to reopen the Strait of Hormuz Friday. Joining us now is Bloomberg's Ven Ram. So, Ven, very unusual things happening in the markets. We have oil plummeting, and at the same time, the bond market doesn't seem to be following that move, I guess because of all the central bank action this week. Why aren't the bond markets reacting to this oil drop?
Morning, Moni. I think it's not entirely fair to say that the bond markets haven't reacted. I think we've seen a 10 to 15 basis point move in European bonds, for instance. German bonds have fallen 10 basis points. The comparable gilts have fallen 15 basis points. So I think the reaction, but you're absolutely right, the reaction has been rather mild. And that is because traders think that, inflation is going to persist for longer, higher for longer, because the damage done from the higher oil prices from the end of February through last week has left enough damage, has wreaked enough damage on the major global economies that, inflation is going to be higher for longer. Even with the drop in oil prices, Bonnie, I think that, it's key to bear in mind that Brent crude is about 12 to 13% higher than what it was just immediately heading into the war. And I think that fact isn't lost on bond traders. And if you look at the pricing for ECB, the markets are thinking the ECB will have to raise rates at least once more in the remainder of the year. And they're also thinking the BOE will also have no choice but to raise rates at least once in the remainder of the year.
Ven, I have to ask you, it's been 31 years. Did you ever think we were going to see the Bank of Japan benchmark rate at 1% and potentially going higher, although apparently nobody voted for a 50 basis point move this time round?
Well, that is the big disappointment. That's one of the reasons why you're seeing the yen not really rallying, not getting any traction from the BOJ's decision. The BOJ said in the post-meeting press conference that they can't estimate the neutral rate with any precision, and therefore they will be essentially going slow because they're going to assess the impact of the rate hikes on the economy. That means that, given that, these things work with a lag, it means a 3 to 6 month gap between one move and another. And that glacial pace of increase is just not going to cut it. Yes, interest rates are at a 31-year high, but what are they in relation to inflation? That's what matters. And, the BOJ's estimate of the neutral rate is going to be somewhere 1.5% to 2%, depending on where your inflation metrics fall. So I think that the BOJ still has a long way to go, really, here.
Quick question about the balance sheet, because obviously the BOJ trying to normalize that, and they say that they're going to, have it pretty normal by April of next year. Is that something similar to what we might hear from the Fed this week, for example? Maybe, obviously not as quickly, but the Fed will be wanting to try to normalize under Kevin Warsh too, right?
Yeah, absolutely. I think that Kevin Warsh has been particularly keen to shrink the balance sheet, which they should. If you look at the growth in balance sheet, in the Fed's balance sheet vis-a-vis the other major central banks, it's exploded since the global financial crisis, and that has to come off. It's not in line with nominal GDP growth, so it's hugely overstated the balance sheet. So I think that there is a legitimate case to wean the central banks off the balance sheet growth that we have seen in recent years.
Ben, thank you so much. Fantastic context there from Bloomberg MLive's Ben Ram. Now to other top stories trending on the terminal this morning. China's economy stalls. Consumer spending and investments in May fell to levels not seen since the pandemic. Industrial production did climb 4.5%. That was driven by a boom in exports and tech-related industries. More central banks than ever are looking to boost their gold reserves. A World Gold Council survey found 45% of 74 banks polled said they will be buying more of the precious metal. Gold prices have more than doubled over the past 3 years, driven by a sharp acceleration in central bank buying. BlackRock is eliminating about 200 employees, about 1% of its workforce. This is the fourth time in around 18 months the world's largest asset manager has cut jobs. Bloomberg sources say this latest round spans job and investment, operations and technology, also private financing. A spokesperson for BlackRock says the cuts are, quote, the ordinary discipline of a continuously evolving organization. Coming up, Anthropic looking to lift the ban on its most advanced AI models. More on the AI giant's talks with the Trump administration next. This is Bloomberg.
Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything. From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Stephen Engel at Japan's Akasaka Palace in Tokyo, and this is Bloomberg.
It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more. We're risk on.
I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything. Wednesday, the Fed decides.
America's future will truly be unlimited with Kevin at the helm.
To fulfill this mission, I will lead a reform-oriented Federal Reserve.
If the Fed chair chooses not to speak, you're basically outsourcing forward guidance to everyone else.
Trust Bloomberg to bring you the fastest coverage and exclusive analysis.
What is the worst Fed's response mechanism to inflation?
And what does it mean for the dynamics of the American fixed income market?
Tune in to Bloomberg Surveillance. The Fed decides, starting at 1:30 p.m. Eastern.
Bloomberg Brief. I'm Bonnie Quinn in New York. Anthropic looking to lift the Trump administration's ban on its most advanced AI models. Bloomberg learning that the firm's senior technical staff met with White House officials Monday to discuss security concerns. For more, Matt Bloxham of Bloomberg Intelligence joins us now. Matt, does the company try to reassure the Trump administration that it can fix these problems, that it can, put in new guardrails, or does it just say, look, everybody else is doing it, why can't we?
I think it's more the latter, that they need to convince the administration that they can either fix the guardrails they've put in place or implement new ones to reassure the administration that this is a quote-unquote safe model to be accessible to anybody beyond being a U.S. national. And I think it highlights the pace of development we're seeing in AI foundational models right now, and the sophistication, particularly of Mythos, but also this Fable 5 model, which is kind of really the focus. And so obviously it's really spooked a lot of people, both in the commercial world and also in the kind of government world, that we're at a point now where some of the threats from what you can do with these AI models and their capabilities are really kind of raising additional questions, and that perhaps you can't be so reliant on US-sourced models anymore, and that it's going to accelerate potentially the development of sovereign AI models across the world.
Yes, and when these models are out there, you have to ask yourself who is using them, and do I need to change that? Let me ask you about an FT report. It's saying that OpenAI's losses have soared 8-fold. It spent more than $34 billion on research, marketing, and other costs in 2025. Annualized revenue was $20 billion. Is this sustainable, this kind of spending then?
I think in the short term it is, yes, because there's just so much money pouring into the AI market, and I think investors understand that to kind of grow into the midterm revenues, the company's talking about a $200 billion plus revenue run rate by 2030, that you need to continue to invest in the infrastructure to create that revenue opportunity. So, I wouldn't be surprised if, when, assuming that they do follow through with the kind of public listing plan, that the kind of projections we're looking at anticipate deeper losses, certainly deeper cash outflow in the coming years as they kind of build out that infrastructure.
Matt, another prong in this story is companies going to market, right? And yesterday it was NVIDIA's turn for the first time, raising debt. Now, I thought one of the things investors liked about NVIDIA was that it wasn't encumbered by debt. Are they doing the right thing?
Yeah, I think they're kind of tapping into, this broad capital markets enthusiasm for the AI trade right now, which has definitely been helped by the SpaceX IPO. They're raising $25 billion, oversubscribed over 3 times, and we've seen every other major US tech company come to the market in similar size this year. So, huge appetite there. I think it gives them a kind of stronger overall capital structure, gives them optionality in terms of how they fund both their organic investment and maybe look to kind of expand the investments they've been making in other companies, probably reduces their overall cost of capital. So, I think it's an opportune move and makes a lot of sense.
All right, Matt, we'll speak to you a little later in the program. That is Matt Bloxham of Bloomberg Intelligence. And just while we're talking tech, I want to check SpaceX. It's up another 10% in the pre-market. We are looking for it to outrank Amazon in terms of market cap, and that may happen today if these gains hold. Up 42% since its IPO just Thursday. Remember, it opened at 150, so it opened 11% above its IPO price of 135. But in total, since that 135 IPO price was set, it's up 42%, plus potentially a lot more today. Coming up, the Trump administration mulling a $300 billion investment fund for Iran if a final nuclear deal is upheld. We'll take a look at what's making headlines in your front page news next. This is Bloomberg.
Look at the more successful economies in the region. The key to their success is continuity. But the way our constitution is written, it actually encourages a lack of continuity. And that's a problem. The term for local government is 3 years. When I first became a congressman, it takes you a few months to learn the business and to make your connections, the network, etc. If, for example, you are not particularly favored in the majority, passing a law in a year and a half is not that easy to do. After about a year and a half, you already hear that there's somebody in your district beginning to campaign and is going to oppose you in the next election. So you have to go back to your district to take care of that. And how much work do you get done?
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
This is Bloomberg Brief. I'm Bonnie Quinn in New York. Time now for your front page news. First up, the Wall Street Journal is reporting on that crash of the B-52 bomber shortly after takeoff from Edwards Air Force Base in California. 8 crew members are believed to have died. 2 are Boeing employees. The Journal says it isn't uncommon for defense contractors to supply military aircraft, especially during flight testing. The crash of the Boeing-made plane is under investigation. Next up, the New York Times says naval mines in the Strait of Hormuz may still stymie Gulf shipping after the war. Before the war, U.S. intelligence agencies estimated Iran had 5,000 mines of different kinds. The Times is reporting that the U.S. Navy will be deploying a new generation of drone-based countermeasures to search the sea floor and surface for any mines. And finally, the FT reporting the Trump administration is prepared to allow the establishment of a $300 billion investment fund for Iran if Tehran agrees to a final settlement. Coming up, we'll speak with Jane Foley.
world's most powerful investors don't ring a bell. They quietly reshape entire industries. This is the money shaping the world. The Dealmaker Playbook, where power and billions of dollars change hands every day. From private equity and credit to venture capital and M&A, we bring you the inside scoop on the biggest deals and debates, plus exclusive conversations with finance's ultimate insiders.
Great scoop on this. You've been reporting about an activist investor coming up and trying to shake things up. What's the latest?
We've been hearing that there was going to be an activist at some point. The question was who?
There is a convergence of technology and national security.
The United States is a big country. We're playing in the Northeast. That's an economy as big as the United Kingdom.
This is a really interesting space to watch. We're expecting more consolidation.
As this is Bloomberg Deals at Bloomberg Invest, I want to talk about the broader deal and M&A environment.
This is a moment in time. We'll see how long we're here. It's far too early to call.
There is an underinvestment in what's going on in private markets because everyone's looking for additional AI cloud capacity, and it's very tough to build.
Everybody wants to get things going, and the IPO market is just one symptom of that. It is an early indicator of what we're going to see in the M&A market.
Let's go to Scarlett Fu, who's taking a closer look at drone companies.
With ongoing conflicts in the Middle East and Ukraine, there's renewed investor appetite for new names in the space.
Excellent reporting. I'm Danny Berger, and this is Bloomberg Deals. Every week, only on Bloomberg Television.
Asia is at the forefront of some of the world's biggest stories.
And we're here, where the action starts in Sydney.
And in Tokyo, get ahead as the global trading day begins.
The Asia Trade, weekdays, only on Bloomberg.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
It's 5:30 a.m. in New York City, 10:30 a.m. in London. Good morning, I'm Bonnie Quinn with your Bloomberg Brief. Let's get you set up for the day. Oil on track for its longest losing streak this year as the US and Iran reach an interim deal to reopen the Strait of Hormuz. The Bank of Japan raising interest rates to the highest since 1995 and keeping the door open for more hikes. And stock futures tentatively point to the green as Fed Chair Kevin Warsh's first FOMC meeting is set to kick off. So let's take a look first at futures. We have S&P futures just very marginally lower now after the equal weighted index hit another record yesterday. The market cap index not far behind that in terms of records. Nasdaq 100 is just 0.3% off its all-time record and looks to be pointed higher once again today. The Philly Stocks index was up at a record once again yesterday. The Russell 2000 also keeps powering ahead. Let's take a look at bond yields because obviously it's the front end of the curve that's going to be most affected by the FOMC decision and what kind of communication we get from Fed Chair Warsh. Right now we're down about 2 basis points, 404.53 on the 2-year, and that 30-year yield is staying well below 5%. And then let's take a look at oil because we have seen that massive losing streak. WTI above 78.87, Brent at around 81.48, and if you look at the December contract, we're trading around $78 a barrel on Brent. And then I wanted to point to aluminum as well because it's down to its low since March. That's primarily on the China story. We had basically the economy stalling with consumer spending just down to levels not seen since the pandemic. So it's raising the issue of whether China will stimulate again. The consensus seems to be no, not for right now, but the economy is a little bit stalling out at the same time. All right, let's get some individual stock movers now with Chloe Melly in London. Chloe.
Good morning, Bonnie. SpaceX is having another really good day with pre-market shares up about 10% this morning. And based on these moves, this actually sets the company on track for the market cap to exceed that of Amazon. So we have seen a really good start for SpaceX since that blockbuster debut on Friday. Moving on to Qualcomm, which is also in the green today, and that is because there is a report from the information about talks for Qualcomm to buy a AI startup called Tenstorrent for a price of between $8 and $10 billion. Of course, nothing has been confirmed yet, but rumors of that deal are really pushing up those shares this morning, up about 4% for Qualcomm. And finally, Dave & Buster's is seeing a bit of weakness this morning after first quarter revenue missed estimates, and we are down quite strongly this morning, about 13%. One of those names in the sectors that are really feeling the impact of that weaker consumer spending, of consumers wanting to spend a little bit less on dining out and on seeking out entertainment as well. And so we're seeing a little bit of weakness there for Dave & Buster's.
All right. Thank you, Chloe Melly in London. The Bank of Japan raising its benchmark rate to the highest in 31 years. It's now at a whopping 1%. Joining us is Jane Foley, Head of FX Strategy at Rabobank. So we can smile, Jane, obviously, but this is a watershed moment, right? The market was looking for it and perhaps was even looking for a little bit more. Did the Deputy Governor, because of course Ueda is in hospital taking care of some health issues, did he give the market what it wanted to see?
Probably not enough. I mean, if we look at the dollar-yen exchange rate, perhaps we can gauge that market reaction. Dollar-yen is still, of course, above that 160 level. That will be a disappointment, perhaps, for the Japanese policymakers. But at the same time, you know, we're not moving into new highs on that level. So that, I suppose, a relief. I mean, I think if we look through some of the statements that we had from the Deputy Governor today, there were certainly hawkish lines in there. There was confidence about the outlook for the Japanese economy, and that, of course, in itself is very significant if you compare to where we were just a few years ago. But probably not enough. I think what the market wants to see is evidence that the Bank of Japan is not behind the curve on inflation. It continues, the market continues to accuse the Bank of Japan of being behind the curve. And whilst the market is anticipating, yeah, the Bank of Japan can probably hike interest rates again later this year, maybe in December, there is yet no confidence that they will hasten that pace. And perhaps that's what they need to do to really turn around the outlook for dollar yen.
Why wouldn't the Bank of Japan want the market to at least suspect that that's still possible? It really has to keep an eye on these financial markets almost more than any other central bank, doesn't it?
I think it really does. But, you know, of course, right now there is still an awful lot of uncertainty about oil, about the supply of energy, and, of course, other byproducts of that energy process that go into Japan's economy. It does get most of its oil supply from the Middle Eastern region. And whilst, of course, it's a rich economy, it has its own reserves. You know, that could still be a significant question mark about the outlook for activity later on in the year. Now, what we did get from the Deputy Governor today was reassurances. And he was saying that the economy has been performing really quite well. And of course, real interest rates still very soft in Japan. So monetary conditions still very accommodative. But, you know, we have had good news, obviously, this week about the extension of the ceasefire. But there is still, of course, a lot of skepticism about what's going to happen in 60 days' time with respect to US and Iran. And I think perhaps it would be a little bit jumping the gun, particularly for a deputy governor to really signal real confidence that they could potentially hike interest rates at a hastened pace, given the uncertainties that there still are.
Now, obviously, in response to questions and so on, everybody says that they don't target a specific level on the currency, right? But we have had the yen above 160 now for quite some time. It's not really been moving. Has the Bank of Japan been intervening, or how has it been working that it's above this level? No one appears to be too concerned, and yet the last time it was well above this level, there was huge intervention.
And of course, the market is aware of that. Now, of course, the Bank of Japan doesn't target the currency, nor do most, of course, of other major central banks. But of course, it is an input into the inflationary outlook. If you have a weak currency, then of course it imports inflation. So it is a variable that they will be considering. Now, the Ministry of Finance is, of course, the one that agrees on the intervention, decides on the intervention. They, of course, are much more political. They will probably be, you know, some sort of friction there potentially with the US Treasury if dollar yen does continue to rise. And the market is aware of that too. So the market is still a little bit nervous of pushing dollar yen, you know, higher from these sorts of levels. But if the Bank of Japan doesn't keep on indicating an aim to wanting to increase interest rates, well, those speculators could still see potential upside in that currency pair. So there's a lot of risk there on both sides.
Jane, obviously day one of the FOMC meeting and all eyes on what exactly are we going to get with a Kevin Warsh-led Fed, right? I mean, there's so many questions from communication style to whether he'll be dovish or hawkish to what he'll say about the balance sheet. What are you primarily focused on?
Well, again, whatever we say about the other central bank meetings this week, this is the one that is overshadowing all of them because of the uncertainties about Walsh and the tone he will take. I mean, another uncertainty you could throw out there is, which inflation indicator he's going to watch. That's something that the market's been discussing too over the last week or two. If he has a preference for one of these trimmed mean measures, well, he could potentially become a little bit more dovish on the back of those because they're moving lower relative to the PCE inflation measures. We know, of course, that he doesn't want the Fed to talk so much, that he doesn't particularly enjoy forward guidance, so we can expect perhaps less from him. But I think the really crucial indicator is whether or not he is going to be politically motivated to find ways to give the Fed a more dovish framework. And that's what we'll be looking for signs for tomorrow.
So with the 2-year yield just below 405, about 15, 16 basis points priced in of a hike by the end of the year, is that appropriate, you think, going into this meeting? Will we see a big change, a big move after it?
Well, it's Rabobank's view that they may not hike interest rates this year, and that is, of course, because of the potential for the political motivation, to be leaning on Walsh. But of course, that very much depends on the economic data that comes through, particularly the labour market data. So there's a lot to play for. But whether or not, again, he begins to set in motion some sort of framework, perhaps leaning on other indicators of inflation that really do try and push the Fed towards a more dovish position, is going to be really, really crucial. So it's going to be a lot to play for. And of course, other central banks are aware of that too. It really will have a significant issue on where the dollar goes, not just for dollar yen, but for euro dollar and for all of the other exchange rates. And the market knows that too. And I think right now it's adding to perhaps a lack of direction in major currency pairs such as euro dollar.
It's fascinating, Jane, because he won't have had that long to get a consensus together, right? At the same time, he wants to come out strong at his first meeting, so can't wait to see what he says. Jane Foley of Rabobank, thank you so much for joining us today. Now, two other top stories trending on the terminal this morning. BlackRock is eliminating about 1% of its workforce. That amounts to about 200 employees. Sources say the cuts span jobs in investment, operations and technology, and private financing. A spokesperson for BlackRock says the cuts are, quote, the ordinary discipline of a continuously evolving organization. Germany renewed its opposition to UniCredit's proposed takeover of Commerzbank. Germany's finance agency says the offer doesn't come with an appropriate premium. It's the final day of the formal acceptance period. A trader on Polymarket lost almost $1 million when Cabo Verde tied Spain in one of the most unlikely outcomes in recent World Cup history. The bettor had waged that Spain would win. Spain was widely considered a favourite to win the World Cup. Cabo Verde, on the other hand, is ranked 67th in the world and is playing its first FIFA World Cup. Would have thought you'd get better odds on Cabo Verde. Coming up, President Trump insists that the Strait of Hormuz will be completely reopened Friday. G7 leaders are sceptical. We're at the G7 summit in Evian, France. Next, this is Bloomberg.
Technology is embedded in every aspect of our lives, and that revolution is playing out in real time. From finance to defense tech, AI to entertainment, from the road to the stars. Bloomberg is bringing you the stories of companies and people that are pushing tech to new frontiers and the politics reshaping global tech markets. I'm Ed Ludlow, live in San Francisco, and this is Bloomberg Tech. Every weekday, only on Bloomberg Television.
We should not deny that change is coming. And change is not coming just in data centers and AI. As a world, we are building infrastructure, we're building energy, we're doing energy transmission. we're building next-gen manufacturing, we're ramping defense, and we're doing this thing called AI and data, we will see the largest need for capital ever. And that's what we've seen so far this year. And so now to your specific question, it's about underwriting. There are a number of very strong US tech companies who run diversified businesses, Amazon, Google, Microsoft, who are interested in seeing these centers built and are interested in not consolidating the debt on their balance sheet. And to the extent they are prepared to lend their credit, one can lend against those types of things and make sensible underwriting decisions.
Welcome to Bloomberg This Weekend. I'm David Burke.
I'm Lisa Mateo.
And I'm
Christina Raffini. We're tracking breaking news today from Wall Street to Washington. Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
The Iranians don't get a dime unless they behave and change their behavior. Right. And this means that Iran will never have a nuclear weapon. Sean,
that's why we did this. They don't get a dime. Do they ever get an American dime, a taxpayer dollar?
No. So number one, first of all, they never get a dime of American taxpayer money, ever. Full stop. Not even close. Okay.
Vice President J.D. Vance there defending the administration's interim pact with Iran as the White House tries to assure skeptical allies a deal will end a global energy crisis. Bloomberg's Oliver Crook is live from the G7 summit in Evian, France. Ollie, the US and Europe are at odds over the opening of the Strait of Hormuz. Can you give us the context? Why are they at odds with each other?
Well, I think that it comes down to the sort of optimism that Trump is trying to sell on this deal, that the grand finality of the deal, the great comprehensiveness of the deal, the fact that Iran has basically signed on to everything, and that is something that, frankly, European leaders at this point are fairly skeptical about. You heard the President of the United States last night speaking alongside Emmanuel Macron, the host of this G7 meeting here in Evian, France, and talking about, really seemed like he was trying to sell the deal to the world and saying, the Strait will be open by Friday, everything is worked out. I think from the European side, there's still a great many questions. There's a lot of skepticism that the Strait will actually fully reopen by Friday. The Europeans had offered to do some of the demining required in the region, but of course that can only happen after there is a final agreement.
I'm just going to stop you there. We're going to listen into actually President Trump, who is speaking in Evian, France right now.
Green cash, it was crazy. I watched that, I couldn't believe it. But the one thing that's happening that's of note, frankly, the only thing that really matters to me, is Iran will never have a nuclear weapon. And it says it loud and clear. They're not going to develop it. They're not going to buy it. They're not going to do anything with it. And if they do, they suffer unbelievable consequences. Not just a little bit like, I won't even tell you the consequences, but the consequences are the ultimate consequences. And with that being said, I hope we have a very good relationship. But the biggest thing is they will not have a nuclear weapon. And that's the reason I got in, and that's the reason I agreed to sign. And we originally had, Marco was with me, and they originally wrote that we will not develop a nuclear weapon. I said, no, you're not going to develop it, you're not going to buy either. So we have, that took another couple of days of time. Everything was, it's ridiculous, but. So we they will not develop, purchase, buy, or any other thing. They're not going to acquire a nuclear weapon. If they do, all hell will rain down on them. And they're not going to do that, Now, you talk about regime change. I never cared about regime change. It's never a part, but I guess you have regime change because you know better than anybody. The first group, they're all dead. The second group, they're dead. A part of the third group is gone. And we're dealing with people that I think are very rational people. I mean, they were nice to deal with. They were strong people, smart people. I think actually they're smarter than the first and second group. But they're not radicalized, and they're, looking to help their country. So, again, I don't believe the regime change. I've watched regime changes for years. They never work. It has to just happen. I can tell you this is a country where the Emir is so respected, and the Prime Minister is so respected by the people, and that's the way a country should run. It should run out of respect, not of fear. As you know, at least 42,000 protesters were killed in Iran. Killed. They were protesting. The wrestler, they had the big event at the White House the other day, the UFC, and they were all talking about he was a great fighter. And he was hung with his two friends because he spoke something about their regime. It's tough stuff. So we're very happy that we were involved. We're very, very impressed with Qatar and the way they've handled things, because they were really on the line. They were on the front line. They were being shot at just about as much as anybody, but you were a lot closer because you were right there. Literally, I could walk in a minute. Every other place I have to take a plane, but I can walk. So they were really on the line. And I just want to comment that I just want to really congratulate you on bravery. I don't know if you get congratulated for bravery, because bravery is something you either have or you don't, and you never know until you test it. But you were tested, and you had great bravery. Thank you very much.
Are you going to have a separate meeting with President Zelensky, and what would a Ukraine deal look like?
Well, we have one, but we had a good meeting. I'm meeting him later on today. We had a very good meeting. Look, Russia should make a deal. Russia's lost tremendous amounts of people, and so has Ukraine. Last month, they lost 35,000 soldiers between the two of them. Think of it. This is on a monthly basis. They average 25,000 people, mostly soldiers, young, beautiful people. And it's crazy what's going on there. But we had a meeting, and we'll see how. I spoke with President Putin on Sunday. And it's sort of the same thing. I mean, they just keep going, fighting, losing soldiers. They lose so many soldiers. This is not since World War II has anything like this happened. I settled 8 wars. This was the one I thought was going to be the easiest settled. There's a lot of dislike between the two leaders. But yeah, I'm meeting with him again later on today.
And are you going to have a special focus on Ukraine?
Well, we're going to look. Now we were focused on Iran. That's going to be in the back, in the rear view mirror. But look, we have nothing to do with it. We sell weapons to them. We don't even give them. Obama gave them $350 billion worth of what gave, which was crazy. The European Union pays us full price for weapons. But it's not that. It's that it has no impact on us other than we sell weapons. We're thousands of miles away. But the only reason I don't like to see 25,000 young people die every month. Every month, 25,000 people die. Young people, they're just starting their life. They go to this front and they get blown up. And Ukraine is losing a lot of people too. I mean, the whole thing is ridiculous. So, yeah, I'm going to do whatever I can.
Mr. President, if the Iranian regime continues to kill their own people, will you still move ahead with this deal?
If they refuse to what with their people?
If they continue to kill their own people, the Iranian
Well, we talk to them about it, and we see. I will say the majority of that took place during the first and second regimes, much more so than now. It was much more severe, but it's a terrible thing. Yeah, do you have a question?
Yes, Mr. President. This is for both you and the Emir, what are the economic opportunities for Iran if there's, continued cooperation with the United States moving forward?
Well, I think they'd be good. I mean, I can tell you from our standpoint, we have a lot of opportunities all over the world. But the Emir lives right next door, and I think, they have a lot of oil. I think they'll be good. First, they're going to have to prove themselves, I think, before any of us go in there. But I hope they do well. I hope they do well. Look, one thing, whether they do well or poorly, they can't have a nuclear weapon. That's a big thing. If they had a nuclear weapon, they would have blown up Israel, they would have blown up the Middle East, and they probably would have taken a shot at us. We would have gotten them first, I think. But they would have done tremendous damage. Had we not canceled the Obama nuclear deal, the JCPOA, you would have had them having a nuclear weapon 5 years ago. You know, that expired. That was a road to a nuclear weapon. It was the dumbest deal I've ever seen other than NAFTA. NAFTA maybe was even dumber. But just in terms of a bad deal for us. Paid them billions and billions of dollars. We pay nothing. They paid them billions of dollars. And it was a disaster. I terminated that in my first term. Had I not terminated, and we hit them hard, we terminated it. In my second term, we sent in the B-2 bombers, and we terminated their, I call it the nuclear dust, their enriched material, right? And totally effectively. And I remember when CNN, which is fake news, I don't know, it probably isn't, but CNN said, well, maybe it wasn't that effective. So the Atomic Energy just reported that it was one of the most devastating bombings that they've ever seen. The whole mountain collapsed on top of it. And frankly, to go get it, we're going to go get it. But to go get it is a big deal. Because they say only China and us have the equipment where you can even get. The whole mountain is collapsed on top. We have cameras on it. You could make the case, why are you even bothering? Because it's not really valuable. It's, you know, it's probably $500,000 worth. It's not very valuable stuff. But I think psychologically we want to get it.
Can I just answer you asked that? I think in the last couple of months or weeks, I think that wasn't we were not interested in, you know, what are the opportunities, economical opportunities in Iran. Our interest, both of us, was to, first of all, to find a deal to stop this war. This is our main target. But looking at the economy and the opportunity, I'm sure there are going to be huge opportunities. And, you know, as I said, this is a very important momentum to keep working like that to reach, let's say, the final deal. After that, Iran will be, you know, of course, open for any kind of investments. And I'm sure there are going to be huge opportunities. But to be honest, you know, we never thought of it, you know, our target, you know, is to try to find a deal.
Well, they're going to need something because we blew them up. And, you know, you could make the case, I used to make the case that, like a week ago I said it, now it's different, we have an agreement, but if we left, we did a great job. If we just left, we did a great job, because it'll take them 15, 20 years maybe to rebuild. And we were going to do a much bigger job if the agreement wasn't signed. We would have taken it to a level. But if we did that, they would never, ever, I believe, be able to rebuild. Too much.
Mr. President, what are the expectations for Israel? Can this deal survive if Israel attacks Lebanon?
It can, and you know, I consider that the minor war. Iran's a big one, but we have that little pinprick out there that constantly rears its head, and that's Hezbollah. And, you know, I was very responsible for Syria, and the man that's running Syria now is a person that I put there along with President Erdogan and some others. He's done an amazing job of pulling it together. He's not a Boy Scout, but he's done an amazing job of pulling it together. And he is very good with Hezbollah, does not like them. And I'll tell you what, Israel's fighting Hezbollah too long, and too many people are being killed. And you don't have to knock down an apartment house every time you're looking for somebody, because there are a lot of people in those apartment houses, and they're not all Hezbollah, that I can tell you. And I suggested to Israel to let Syria take care of Hezbollah. Because to be honest with you, I think they do a better job of doing it.
Is Netanyahu on board?
And I didn't like Syria. I didn't like where 2 hours before we're signing the agreement that there was an attack in Lebanon, in Beirut. It wasn't like in the southern side, and you know, it was in Beirut. I did not like that. I let them know that. I didn't like it, not at all. But I think that Syria, you know, he's pulled that country together amazingly quickly. He's very capable, and he's been very good for me. He's protected everything that I've asked for. He's done. And if Israel can't do the job without killing everyone else, he'll do the job. Syria will do the job.
Are you frustrated with Netanyahu, sir?
No, we had a great relationship. We're talking about some end details. I didn't like that he did an attack based on a, you know, there's a very minor, little thing with some drones that were released, and he ends up doing I saw that attack. I saw where that bomb went. Did you see what happened? That was a vicious, that was too much. You know, you can do too much also. But we've had a very effective relationship. Without us, without the United States, there would be no Israel. Without me, there would be no Israel, because no other president was willing to do what I did. I've had a great relationship with Bibi, but now Bibi has to be more responsible with respect to Lebanon. Lebanon used to be a great country. It was a country where you had professors, doctors, lawyers. The great intellect was in Lebanon. Now it's terrible. I would say of all countries, they've been treated the worst. And they can't defend themselves. And they have Hezbollah, which is a problem for them. So, no, I'm not happy with the way Israel has handled themselves with Lebanon and with Hezbollah. They should have been able to do the job faster. It just goes on forever. And when that happens, it throws a negative light on the big deal, and that's the deal with Iran. So when you ask me about Bibi, an unbelievable relationship. But Israel would have been blown up a long time ago had I not gotten involved. Two things I did. I terminated the Iran nuclear deal. Barack Hussein Obama sold out Israel for Iran. He went to Iran. He sold them out. How anybody can vote for this guy or the party, the Democrats I call them, because they're dumb. They're dumb people. That's number one. How anybody can vote for them. And the second was the B-2 bombers, just totally destroyed. So they had the right, the JCPOA. I watch these politicians. I watched this Senator Reid that nobody ever heard of the other day. Well, this deal is the same as the deal with Barack Obama. No. This deal is a wall to a nuclear weapon. His deal was a road to a nuclear weapon. My deal, they can't have a nuclear. They get blown up. If they have a nuclear weapon, they get blown up. In his deal, they were allowed to have a nuclear weapon. And in all fairness to Bibi, I remember very well, Bibi came to Washington and he begged Obama not to make that deal. And Obama was on the side of Iran, not Israel. And he made the deal. That deal was a disaster. I terminated that deal. And if I didn't terminate, and it was very tough after the termination, and if I didn't do that, Howard knows better than anybody, if I didn't terminate that deal, I believe that Israel wouldn't be here right now. And the second one was what we did with respect to the nuclear dust, as I call it, right? We blew it up. The mountain collapsed on top. You can't get to it. And they were 2 weeks away from having a nuclear weapon. And if they had a nuclear weapon, they would have used it on Israel, and I hate to say it, and probably the rest of the Middle East, because they had all those missiles aimed at the Emir, at Saudi Arabia, at UAE, at Kuwait, at Bahrain. I mean, the biggest surprise in this whole thing, I didn't think you guys would, I thought he would aim at Israel, but he didn't aim at Israel, much less. He aimed at your countries. And actually, that was a mistake for them, because it brought us, these countries, in particular the 5 countries, it brought us, I mean, he even had Turkey once. I never understood it. Nobody's going to understand it. That's the problem. They're totally irrational people. And those people are now gone. And I think Iran has rational leadership now. But you wouldn't have, if it weren't for the United States of America, with me, because Obama was the opposite, Israel would not exist right now. Israel would have been blown off the face of the earth, 100%. And every smart person in Israel knows that. Okay, thank you very much, everybody. Thank you. Thank you.
Good morning from New York. This is Bloomberg Surveillance. I'm Anne-Marie Horder, and alongside Danny Berger today, Jonathan and Lisa are off. We just heard from the President of the United States alongside the Qatar Emir at the G7 taking place in France. And really, Danny, came out strongly in defense of his deal, because we are seeing a lot of pushback, especially in the press, that this doesn't really go far enough in terms of meeting the president's expectations and the red lines he had set forth when it comes to Iran.
It's still details that we're waiting for, exactly what this MOU will be. We heard from the vice president also saying that there's not much text to it. It's only a few pages. The president, though, also being very clear in his frustration about Benjamin Netanyahu. And Anne-Marie, you've been talking about this. This is one of the uncertainties of this deal. It's clear that Israel is unhappy. What does that mean for the sustainability of any agreement to really be reached if Israel doesn't comply?
Right, and that's not an issue for the Iranians as well. Think about what Giorgia Meloni, the Italian leader, is saying, that she wants to make sure that what's going on in Lebanon with Hezbollah is wrapped up before they start to send vessels to help the United States. The president said that that would be a minor war right now, what's going on with Israel and Hezbollah. But he did say, to your point, I'm not happy with the way Israel has handled themselves with Lebanon and with Hezbollah. They should have been able to do the job faster. It just goes on forever. When that happens, it throws a negative light on the big deal, and that's the deal with Iran.
It's clear, though, that the president wants to put this in the rearview mirror. In fact, that's exactly what he said. He said that Iran is now in the rearview mirror, that this war is over. He also gets congratulations from Ursula von der Leyen on this deal. But Anne-Marie, for this market, yes, it is rallying, but how much conviction is there behind it? It seems at the moment it's a lot of short covering. Maybe in order to get that conviction, you need a clear deal to come to fruition. We need more details of exactly what Friday looks like.
And this is what Jim Reed of Deutsche Bank was talking about this morning. And we do have a little bit of stabilization this morning in markets. Yesterday, the S&P 500 closed just short of its record high. And he says in part that comes as there's still a lot of question marks over how the deal will be implemented, as we don't have the full details or the text yet. So we do have equities a little bit mixed this morning, but yesterday, as I said, we're just short of S&P 500 hitting at all-time highs. So relatively flat this morning. We do have yields, though, and Dan, we have to talk about this. Yields a little bit lower. And how much is this going to help Kevin Warsh as he kicks off his two-day meeting today with the FOMC newly minted Fed chair? We are now going to be in a Kevin Warsh era.
It is hugely helpful for him if this risk is removed. And as we were just discussing, there are a lot of question marks there. I do think it's interesting, though. Equities have been in gung-ho rally mode, within 1% of all-time highs. Treasuries, though, yes, they've been rallying, but not as dramatically. We're still just about 4.45% on Treasuries. We're still pricing in about 1 in 4 odds that we'll get a hike by the end of the year. It used to be 1 in 3, so that's better. But before this war, we weren't pricing in any hike. So it is still a bond market that says we need something to have more conviction. It's not just Friday, but it's also Kevin Warsh. We need to see if he's really as dovish as he had been discussing when it was candidate Warsh.
And all that helping him, of course, the fact that we have oil prices lower. The president said yesterday the Strait will open on Friday. A lot of people are pushing back. They don't think we can have a full reopening as that soon as Friday. This is going to take weeks. But WTI, $78.93. We've seen these oil markets just completely soften up with the president saying that's opening up. And then, Danny, just quickly, we've got to check on SpaceX. What an incredible, stunning first few days of trading. It's about to overtake the market cap of Amazon. Potentially, we could see that happen today.
I mean, it rallied, what, 20% yesterday? Just 19? It rallied 19.2% on its first day, too. At the moment, look, there is some mechanical buying, right? You need to get this thing into indexes because of all the rules that have changed, basically all of them except the S&P. So you have this demand that's very clear in the market, and the supply is really limited, but it just goes to show this thing is probably going to be volatile for the next, I don't know, until the end of the year, for months to come. We are going to get a lot more supply of SpaceX stock coming online post-earnings throughout the rest. So it's going to take a while to get true price discovery for this thing.
Greg Battle yesterday was talking about how there's a few liquidity events coming up, and this is going to be incredibly volatile. But this morning, SpaceX in pre-market up more than 10%. Coming to the program, Keith Lerner of Truist as tech pushes equities higher. Former Deputy National Security Advisor Victoria Coates as President Trump declares the Strait of Hormuz will reopen on Friday, and the former Fed Governor Betsy Duke maintaining Kevin Warsh is still a hawk. We begin this hour with stocks looking for direction as investors hope to build on tech-fueled gains. Keith Lerner of Truist giving the bull market the benefit of the doubt, writing lower oil should help extend the recent broadening, even as hotter growth, inflation, and rising equity supply pose risk. Keith joins us now for more. Keith, what do you think the real main driver of this market is right now? Is it the fact that we're getting a little bit of an extra push given the fact that the president says he has this deal with Iran and the Strait will reopen on Friday?
Yeah, well, great to be with both of you this morning. You know, I think there's a couple of different factors. Off the rebound, it's really been all about rotation. So even though we talked about the S&P hasn't broken to new highs yet, if you look around, we're seeing many indices break to new highs. So we had the equal weight index at new highs, small caps at new highs, industrials at new highs, the Dow Jones Industrials at new highs. So what is that telling us? To me, that's telling us that the market is sensing an economy that's been very resilient and probably continues to be somewhat strong as we see oil prices come down. Think about all the things this economy has to grapple with, and it's still creating jobs all of a sudden, which is against the consensus. And then the last point I'll make is going back to the yield conversation. We're seeing that being a reflection, I think, of economic growth because inflation expectations have been coming down. So all in all, I think the economic backdrop is somewhat strong. And again, this inflation backdrop is improving somewhat on the back of lower oil prices.
May I just play devil's advocate, Keith? And this comes in the form of Goldman Sachs' trading desk, so I'll let them do the talking, not me. Essentially, they argue that if you look at the market action that we've seen so far this week, it's reminiscent of short covering. It's not any true conviction when you get the things that hadn't been playing along all of a sudden starting to catch up, like the equal weighted measure, for example, outperforming the S&P. Do you see conviction in this market, Keith?
Yeah, I just have a different perspective on this. I mean, when you see the tech sector, which we pointed out about 2 weeks ago, that had become pretty extended on a short-term basis, even though we still like tech long-term, when you see that kind of hot sector come out, you can see either market leaving the market or rotating. And, clearly what we've seen on the corrective move in tech when it moved down 11%, money rotated to other areas. So to me, that's a healthy sign of a bull market as opposed to short covering because money hasn't left the market. And as I mentioned, you have all these different indices hanging in there. At the same time, I would say the fundamentals still seem relatively positive, but we're seeing forward earning estimates for the S&P 500 make new highs, but we're also seeing small caps, mid caps, and emerging market earnings also hit 52-week highs. So again, our perspective is one of rotation as opposed to short covering being the main fuel for what's happened recently.
Well, within that call of rotation, Keith, you also just on Friday upgraded financials. What was the reasoning behind that?
It's part of the rotation trade. Listen, we still think tech is the dominant theme of this bull market. That's a core position that we want to stay in. But, financials, I would say, after underperforming by a significant amount, we're seeing some improvement in relative trends. And also, if you have a little bit better economy than what was expected, I think that's good for credit. And also maybe more of that kind of just a little bit of a catch-up trade. So, listen, if you look at the last couple of years, you've seen, money kind of have these short moves or sharp rotations to other areas. I think that likely has somewhat longer to go. But we still think that, money will eventually rotate back to tech. And I think the SpaceX IPO being somewhat successful as far as the way it's traded is good for overall sentiment.
Do you buy this argument at all that you have the SpaceX IPO, OpenAI, Anthropic, what have you, and you get a ballooning of issuance? JP Morgan has put the number at $1.5 trillion over the next 2 years, that what used to be a tailwind, this idea that supply was limited, starts to turn into a headwind. Keith, is that a real issue for this market to overcome?
I think it is. I think that is a fair argument. I mean, we've seen the amount of stocks really dwindle over the last 15 and 20 years. So that changing on the margin means there's more, there's more supply coming into the market. And maybe, even this year as an example, like, we often talk about tech and AI and then the Mag 7, but the Mag 7 is somewhat flat this year, while tech overall is up almost 20%. Small cap tech is up 50%. So I think what could happen is you see some money rotate out of some of these big mega cap tech stocks and money goes to other areas. But yeah, that's certainly a risk. It's hard to quantify. It's not something that's just acute one day, but over time, I do think that's more of a headwind than a tailwind, but it's one factor out of many.
Keith, how much is Kevin Warsh's helm at the Fed right now? How much is that a catalyst for you this week?
You know, it's interesting because as you all mentioned at the start of the program, the 10-year has been pretty sticky here. Again, I'm making the point that I think it's more economic related, but in some ways, you know, even though there's a consensus, I expect that his tone will be a little bit more dovish. So in some ways, if you can get yields to come down a little bit alongside oil, which hasn't happened yet, you know, that could actually help elongate this rotation trade that we've seen more recently. Listen, again, earnings, the AI trade is likely more important overall, but I do think, you know, what is said and the path of rates moving forward is important. The last point is, with the market pricing in a rate hike, we still think there's not likely going to be a rate hike. So that could actually be a positive catalyst if the market starts to pricing no hike as opposed to a rate hike.
Keith, thank you so much for your time this morning. Keith Lerner of Truist. And to that point, Danny, at the end, swap traders are pricing in less than 80% chance now for a quarter-point Fed hike by December. Move is not fully priced in until next year, and we saw a little bit of that change when the president came out with this Iran deal.
Yeah, I mean, it was a huge relief when it comes to the inflation picture, but maybe there's this idea, I mean, to Keith's point, this economy is strong. Maybe it goes further than just oil and why we've seen sticky inflation. And that's why the communication from Kevin Warsh is going to be so important, because we know he wants regime change. Just how much of that are we going to get from him? Is he going to talk about different measures for inflation? There's still a lot of question marks to be answered.
Absolutely. All right, let's get you an update on stories elsewhere we're watching this morning. Here's your Bloomberg Brief with Vonnie Quinn. Hey, Vonnie.
Good morning, Anne-Marie. President Trump speaking at the G7 moments ago, saying Iran is in the rear-view mirror after reaching that agreement with the country. Trump also describing Iran's current leadership as rational, emphasizing they can never acquire a nuclear weapon and that the U.S. will not invest any money in the country. The Bank of Japan has raised its benchmark interest rate to 1%, the highest level since 1995. The central bank is also planning to stop cutting back its bond purchases from April of next year. The decision was widely expected, and just one member of the board dissented. The world's richest people are getting even richer. The 500 wealthiest people added $336 billion to their fortunes yesterday. That's the biggest one-day haul on record, according to the Bloomberg Billionaires Index. Elon Musk, the world's first trillionaire, saw his net worth rise more than 10% to $1.27 trillion. That is your Bloomberg Brief. Anne-Marie.
Thank you so much, Vonnie. And Danny, I think this morning with SpaceX up 10% in pre-market, he's just going to keep adding to as well.
It is mind-boggling, the figures themselves. And I mean, you add to that if he hits all of his metrics, like the Tesla pay package he'll get to.
And he says he's going to hit revenue on SpaceX to $1 trillion in 2030, far out where analysts expect.
I feel like we should talk about like the K-shaped economy, but it's like K with like an asterisk at the top, which is Elon Musk's wealth.
Totally. Up next, reopening the Strait of Hormuz.
The strait is already partially open. The ships are starting to go out now. On Friday, it'll be completely open. We have an agreement where it's going to be open, and it's toll-free.
Former Deputy National Security Advisor Victoria Coates joins us next. You're watching Bloomberg Surveillance. Good morning.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg. When news breaks,
a redhead across the Bloomberg terminal.
Bloomberg has you covered.
Trump's global tariffs are struck down by the U.S. Supreme Court.
For all the context and clarity you need.
There's going to be now tons of tariff headlines until midterm elections.
Hear it first on Bloomberg.
Good morning. Welcome to Bloomberg Surveillance. I'm Anna Marie Hooder, and alongside Danny Berger today, John and Lisa are off. We are seeing equities just stabilizing today, relatively flat. S&P 500 closed 1% short of an all-time high yesterday. The NASDAQ yesterday was up 3%. We continue to see this tech rally. Kevin Warsh kicks off his first day as the new leader of the Federal Reserve, the first day of the FOMC board meeting. Tomorrow we're going to be hearing from him as we have the Fed rate decision, and helping him out a little bit, as we've been talking about, is the fact that just a little bit more breathing room with yields coming down. Your 10-year yield right now, 4.43%. And Danny, we've quickly got to talk about the dollar yen. Because what did we see today? The rest of the world is hiking.
Yes.
And we had that out of the BOJ.
Yes, and I mean, Japan hitting 1% on their policy rate is something we haven't seen in like a decade. It's definitely a step change for Japan. They have their own idiosyncrasies going on, but it's a discussion, to your point, Anne-Marie, that's happening throughout the world. It happened last week at the ECB, and how much does that in turn cap the ability of American yields to rally when the rest of the world is turning hawkish?
And they have no choice. These are energy importers, and they are dealing with sky-high energy prices right now, and that's what we're going to discuss at this moment under surveillance, reopening the Strait of Hormuz.
The strait is already partially open. They're doing a little hunting for a couple of mines that they've already found. The ships are starting to go out now. On Friday, it'll be completely open. I don't think we're going to need much help because we have an agreement where it's going to be open, and it's toll-free.
Here's the latest. President Trump at the G7 meeting in France, declaring the Strait of Hormuz will completely reopen on Friday, and some European allies remain skeptical. Bloomberg's Tyler Kendall joins us now for more. So, Tyler, what do these conversations look like at the G7?
Hey, Anne-Marie, good morning. Well, it is becoming increasingly clear that many of these leaders have questions on just how quickly the Strait of Hormuz can be reopened and how it's actually going to work in practice. Because while President Trump has outlined what is considered to be a relatively aggressive timeline of Friday for the strait to be reopened, a senior administration official who briefed us reporters says that ultimately traffic is going to ramp up over time and that it could take about 2 weeks to really see those trade flows increase. And that is due in large part to, one, the fact that there are still mines in the strait, and the second, that this wariness still remains among commercial shippers who are also seeking some firmer assurances when it comes to safe passage. Now, with that said, European allies here at the G7 are talking about this naval mission that could be deployed. That effort is being led by the United Kingdom and France, but still both countries say that they're not going to actually deploy military assets until we see that finalized signing of this memorandum of understanding, potentially as soon as this Friday in Switzerland. In fact, we heard from the French president earlier today who said that once there is that signing, we could see French military assets deployed within days. But Anne-Marie, while the conversation right now seems to be about the immediate reopening of the strait, we still have big questions about what long-term security is going to look like after Iranian state media reported yesterday that Iran will have the strait be toll-free for the 60-day extension of the ceasefire, but after that seemed to indicate that the country has plans to charge fees related to what they say would be navigational services.
Certainly going to be messy because those fees are unacceptable to the United States. Bloomberg's Tyler Kendall at the G7. Thank you. Former Deputy National Security Advisor Victoria Coates writing, opining on what is or is not in the deal is a fool's errand until we know what is actually in the deal. We do not need to be in a race to be wrong. Victoria joins us now. Victoria, great to catch up with you, especially given the other day I saw the president said that you are absolutely fantastic. You worked in Trump 1. You can maybe translate for us the direction of travel for this administration. The president said it's reopening the Strait of Hormuz on Friday, a viewer writes in and say, maybe should we call this a soft opening? How do you think the Strait is actually going to open where we see 20 million barrels once again flowing through?
Now, good to be with you, Anne Marie. Now, I fully support, obviously, President Trump's statement about me. That was a very exciting moment. But in terms of the Strait, one of the things we need to focus on, and especially in the context of the G7, is those 20 million barrels mean a whole lot more to the other members of the G7 than they mean to the United States. I mean, between Japan and Europe, the dependency on the Strait is huge. And so, yes, the president is going to insist that Iran doesn't charge tolls going through the Strait going forward. But really, that's their fight, not so much ours. And so I really hope we get very strong statements out of the G7 condemning any attempt by Iran to try to continue to hold the world hostage over the Strait. And the other thing that I find fascinating about how this is all playing out is the effort that is going on in the region to bypass the Strait in terms of the Fujairah pipeline that UAE is building around the Strait, the potential for a natural gas pipeline across the Arabian Peninsula to parallel Saudi Petroline, which is an oil line. All of that makes this less and less of an asset for Iran going forward. So whatever we do in the future, it's going to be different from what we've just experienced, and I don't think it's going to advantage the Iranians at all.
We heard from the president this morning. He said he's not happy with the way Israel has handled themselves with Lebanon. How much does the Lebanon issue and Israel and Hezbollah create really a problem for the president as he continues these negotiations with Iran?
Well, Lebanon's been a problem for about 50 years now, Anne Marie. I mean, it's really a tragic situation. It should be a beautiful, prosperous country, a diverse population, incredible location, natural gas assets, but it's just been in this state of disarray because of the presence of Hezbollah, a terrorist proxy of Iran's. And so we'll see. I mean, Israel's trying very hard to neutralize that threat on their northern border. Given what happened on October 7th in the south, that is understandable that they don't want to tolerate these things. They want to eradicate them. And, that's their right to self-defense. But at the same time, the president is looking to get a deal between the government of Lebanon, separate from Hezbollah, and Israel. That would be good for Israel's security. And if a lot of Lebanese infrastructure is being devastated by Israeli attacks, it makes that harder to do. So, both those perspectives are legitimate, and they're not necessarily going to be in conflict. I mean, the president did say a week ago that if Israel were more surgical in their strikes on Lebanon, the United States might assist them against Hezbollah. Nobody likes Hezbollah. So that is a possibility as well. But I think that is a resolvable situation. My understanding is that starting next week, we're going to have more talks in Washington between Lebanon and Israel, hopefully get to some resolution there.
Victoria, I'm also struck by the idea that this G7 meeting is happening in France, in a conversation that it feels like the Europeans have been somewhat absent. A coalition supposedly led by Britain and France had been discussing helping ships navigate the Strait of Hormuz. Maybe this is the moment where they can finally begin to do that and start to deploy minesweepers, given this deal is on its way. But where are the Europeans in all of this? They're obviously very impacted by the flow of energy. Do they have a seat at the table at this moment?
Well, Danny, it's a really interesting moment, as you put it. I mean, 5 of the 7 members of the G7, I believe, are European countries. These are very large economies and, a very, very important trading bloc and security partner to the United States. But there are some hard conversations that have to take place. At the beginning of Operation Epic Fury, the Brits said they were going to deploy, 1 destroyer, and then they couldn't get it into the Mediterranean for 2 weeks. To get to their own assets in Cyprus. I mean, that's the vaunted British Navy can't get 1 destroyer to the Mediterranean in 2 weeks. I mean, we moved a carrier group in less time than that. So, it's really disturbing to see how these militaries have atrophied. And it's not that they don't want to help us, they can't help us.
Victoria, Victoria, thank you so much for your time this morning. That's the former Deputy National Security Advisor, Victoria Coates. Coming up, we're going to have Dan Ives of Wedbush on as Anthropic pushes the White House to ease AI restrictions.
anything we do in Africa is going to be more risky than the U.S. I think the approach we want to take is, how are we being compensated for that risk? And one of those is obviously going to be a valuation question. In our minds, valuation is a lot more attractive in Africa, even if we adjust for some of those Africa risks that a lot of Western investors see. So yes, in a lot of ways, you take some of those models that, as I said, might be more asset medium or asset heavy. There might be some more inherent risks. However, if we're saying we're adding some risk because of that kind of model, but we're now solving a core problem as opposed to maybe a nice to have solution in Africa, that might actually offset it. Where if you're solving something that people really absolutely need and can't live without, in a way that then that's a lot less risky. So again, we'd encourage investors to have a less binary view. In other words, the US isn't risky, Africa is risky. That's going to lead to a lot of complications down the road.
Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
Good morning and welcome to Bloomberg Surveillance. I'm Anna Marie Horder, and alongside Danny Berger today, Jonathan and Lisa are both off. We are 3 hours away from the cash open. Equity futures this morning are flat. We had yesterday, though, the S&P 500, 1% away from all-time gains. NASDAQ yesterday was up 3%. Tech-driven rally continues. Jim Reed this morning of Deutsche Bank talking about market stabilization. He says in part this comes as there's still a lot of question marks over how the deal will be implemented, as we don't have the details or a text yet. And of course, this is coming as the president says the Strait of Hormuz will be open on Friday. A lot of people are skeptical about how messy this is going to be and how quickly we can get to the Strait really being fully open as normal before this conflict began. We are seeing yields, though, giving Kevin Warsh today a little bit of breathing room, Danny, as he kicks off this 2-day policy meeting. Everyone just has a question, which Kevin Warsh is going to show up? This is a new era for him, but clearly this is giving him a little bit of a gift in terms of oil prices coming down, yields coming down. It's going to be a little bit less tense potentially for him when he greets the press.
I gotta say, I'm really looking forward to speaking with Betsy Duke, formerly of the Fed, later, who says Kevin Warsh is still a hawk. And that idea is definitely floating out there. This idea that he doesn't like forward guidance, so perhaps he is more data dependent. And the data right now, even with the removal of the threat of oil, is still inflation that's been running too hot. So did Kevin Warsh mean all the dovish things he said? Are we going to get a different flavor for him? Or maybe we just won't get any clear communication at this point. That might not be enough to keep the rally going. Or maybe it's just a market that sees the glass half full and can continue to anticipate inflation coming in.
People think potentially he doesn't even put a dot on the plot because he doesn't love forward guidance. I think that would be a little bit scandalous in a way for the new Fed chair to come out and not really give a direction of travel where he sees interest rates going. Of course, the fact that oil prices are coming down is helping him, and it's pretty incredible to see. The Strait of Hormuz is, for the most part right now, technically closed. And you have New York crude with a 78 handle. That is insane when you think about what has been going on in the physical market. I will say I was in Houston last week. The energy secretary told me that they see 7 million barrels a day going through the Strait of Hormuz right now. Pre-conflict, it was 20. The Chevron CEO said they actually see more like 3 million barrels a day. So some product is getting out. But we are still in a deficit in terms of what was flowing through the Strait of Hormuz before this conflict.
Right, and for example, you heard from the Qataris saying that they still need about 2 months once the Strait reopens to get to 80% capacity. And I'm still, though, struck by exactly what you're pointing out. Just how low these prices are starting to drift. The oil and energy experts had said exactly what you're saying, that the physical market is constrained and the paper market doesn't reflect reality. At what point, if ever, will the paper market reflect reality? Are the energy experts wrong? Or are we just missing something right now?
Well, we're living kind of off inventories right now. So once we hit those tank bottoms, potentially this become a big problem, which is why many people think this is why the president wants to strike this deal now, especially as we head into peak driving season. All right, 3 hours away from the cash open. Let's get your morning movers with Yahira Anin. Hi, Yahira.
Hi, Anne-Marie. It looks like SpaceX is extending its post-IPO rally. Shares up another 10% in the pre-market. That puts the stock on track of a gain of more than 50% since its IPO in just the last 3 trading sessions. And if these levels hold, SpaceX would open with a market valuation larger than Amazon, just cementing its place as one of the most valuable companies in the world. And it appears SpaceX's gain is Tesla's loss. Shares are falling 1.5% in the pre-market, leading the declines among the Mag 7. Most of them are actually in the green right now, as some investors appear to be making room for SpaceX. According to the investing platform AJ Bell, Tesla was among the most commonly sold stocks among retail investors who bought into the IPO. At the same time, I've heard from other investors who say that they are sticking with Tesla on the idea that Tesla and SpaceX could one day merge, something your next guest, Mr. Ives, has also discussed. And we end on the chip makers. The Philadelphia Semiconductor Index closed at a record high, as did Micron yesterday, but Western Digital really stole the show. It was a top gainer in the S&P, jumping 16% yesterday, and we're seeing that optimism carry into today with Western Digital up 6.5%, Qualcomm and Micron also gaining. Anne-Marie?
Thank you so much, Yahira. On our radar this morning, President Trump saying the deal reached with Iran will not involve any U.S. investments in the country.
We can talk about the Iran deal all day long. We're not investing any money. We have the right to if we want, but we're not investing any money.
President Trump also reiterating Iran will never acquire a nuclear weapon and that he expects the Strait of Hormuz to completely reopen by the end of the week. The Trump administration is reportedly open to talks with Anthropic over the blocking of foreign access to its AI models. According to the New York Post, a senior White House official is suggesting a resolution could be worked out directly with CEO Dario Amodei. And SpaceX is extending gains after its blockbuster first day of trading. The stock on track for more than 50% jump in just its first 3 sessions, with its valuation now sitting above $2.5 trillion. It's basically overtaking the market cap of Amazon, and we're going to see that when it opens today.
I still just don't think we're seeing anything that resembles market pricing yet. I mean, the supply demand picture is very warped than what you'd usually get. On the demand side, you have all these price-insensitive buyers coming from index-linked funds. Over $18 billion worth within 15 days on Friday, says BNP, is the type of buying that we're going to get. So that's helping thrust this thing higher. And at the same time, we've only had about $500 million worth of shares come to market. By year end, we're expecting about $3 billion be eligible for release. That might flip this dynamic on its head, and it gets the argument of, why include these things in the index so quickly? You're going to get these big swings as we try to figure out what fair value is.
Absolutely, a lot of liquidity points coming up for SpaceX, and to your point, it's going to be incredibly volatile. Sticking with tech, Anthropic looking to ease those tensions with the White House. Sources telling us here at Bloomberg, executives met with the administration to discuss security curbs on its 2 most advanced AI models. Dan Ives of Wedbush writing, quote, Anthropic has become a disruptive force. These issues need to be resolved sooner rather than later for the tech sector and ongoing enterprise deployments and pilots. Dan joins us now. Well, Dan, according to the New York Post, potentially we will get some sort of resolution when it comes to the administration and Anthropic, but please educate us. I thought Anthropic said their models were too advanced and they wanted to be regulated. Isn't that what the Trump administration is doing?
Look, I mean, and we've talked about it in the show, this continues to be this tug of war between Dario and Anthropic as well as the administration. But it all goes back to this essentially boxing match that we've seen between Anthropic and the Pentagon, DOD, and of course, they're essentially characterized like Huawei when it comes to U.S. government. Look, this needs to be resolved, I think, sooner rather than later, because the implications are much more than just government. It's what happens on enterprise, foreign workers, foreign companies as well that are using Claude, and that continues to really make this, I think, front and center in AI.
What does a resolution look like to you? Should foreign hands have access to these AI models?
The problem is we're talking about something that's so global, you can't just contain it to U.S. When you think about so much of Anthropic's success, and you could say OpenAI and so many other big tech company, it's going to be international. How do you sell this into a corporation and say, okay, that could only be used at headquarters, it can't be used in Europe, can't be used in Asia? And that's part of the quagmire that's essentially happened here, is that you cannot put the genie back in the bottle. But it also goes back to with Anthropic, almost kind of, I wouldn't say picking a fight, but like as they now are in this fight with Pentagon, DOD, it's not good for them. It's not good for government. It's not good for the industry, especially where we are in terms of early days of AI revolution.
Dan, I mean, these are companies, these frontier models that are spending a lot of cash. OpenAI spending hitting $34 billion last year, according to the FT, outstripping their revenue. To what degree do they need a global marketplace in order to justify the levels of spending that they're doing? And if any of that gets chipped away at it, how do you price in that sort of political risk premium once these companies go public?
Yeah, Danny, that's a big thing because it is global. And you cannot just contain it to U.S. And look, when you think about, I'll tell you, like a lot of investor meetings I've had in Europe and Asia, I mean, this, because of Anthropic, because of Claude, just how powerful it's become, and because of the growth that we've seen, this is unprecedented. But it also speaks to, as we see more government involvement in tech, you know, Anne-Marie's talked about this as well, like it's a slippery slope because you cannot contain it. It goes international. And I think what we're seeing right here is a good example of the, beware of what happens in these situations.
Dan, we every day are getting new deal news when it comes to things like AI. There was Salesforce yesterday buying on some sort of AI tool. This just crossing that SpaceX has agreed to merge with Cursor. The deal's worth $60 billion. It's something that Musk and SpaceX had talked about previously, this idea that they might be able to merge, or maybe they just basically have an option. I think it was for about like $10 billion to use the stuff but not merge. But it is a moment where M&As look so differently because they need access to this technology right away and maybe don't have the timeline to wait for a year for a deal to close. I just wonder how you're seeing this sort of activity shape up as different companies try to add on various AI capabilities here and now, and M&A sometimes gets messy.
Yeah, well, data is the new oil or the new gold. And that's why we're going to continue to see M&A. You saw Salesforce, and we've seen a lot of other deals as well. And we'll see more over the coming months. It's going to be accelerated because as these companies are in this arms race, it's not just about CapEx, it's about access to data. That's what this is all about. Now, of course, it's compute power across the industry, but it's data. And that's going to lead to more and more acquisitions on the software side. I think on chips, you're going to see more and more conversions, even on industrials and potentially power as you build out these stacks. I think that's really where we are today. We continue to think third inning of this AI revolution in terms of where we are in the game. But it all is going to come down to winners and losers will be defined by the strategic moves they make over the next 3, 6, 9, 12 months. And the last thing, you want to be in the Knicks side. You don't want to be on the San Antonio side.
Absolutely. Preach, Dan. I also wanted to get your take on this story from the Financial Times about OpenAI's net losses jumping 8-fold after they spent $34 billion on research, marketing, and other costs in 2025. When you're looking at these companies and ranking them, what do you think of OpenAI when you hear news like this and they're about to hit the market this summer?
Look, I think OpenAI, I mean, obviously, along with Anthropic, the two core leaders as defined by anyone in the market, but it's that, I'll get back to the tug of war. Investments is no different than the CapEx that we see with Meta and big tech, but yeah, you see the opportunity, but you'll see the losses in the near term. Now, investors need to see around the corner, and they need to basically build out what they think ultimately the growth's going to be. But I don't see any other choice for like an Altman OpenAI, what they need to do here, given what's happening across the industry from the hyperscalers to obviously Anthropic and others. And we've seen it from Godfather of AI, Jensen, NVIDIA. I mean, they continue to put foot on the pedal, and that's what they need to do. And I think the rest of the industry is taking their cues from what's happened across some big tech.
Dan, who's the Jalen Brunson right now in the AI space?
Jalen Brunson will be Palantir.
Why?
Because I continue to think that people doubt them, elusive and continued to perform again and again. If you wanted, I mean, we could go down the list, but like Karl Anthony Towns, I'd say maybe that would be, where I could be like a crowd strike here.
All right, this is good to
Wait,
know.
I want to know who the Wemby is.
All right, who's the Wemby?
Who's the
Dan?
villain in this, Dan?
The Wembley would probably right now be some of the software companies because there continues to be a sort of, prove me view despite obviously the install base.
Dan, I love it. And congrats to you, because I know you're a big Knicks fan, as we are here
And
as
congrats
well
to you.
around the studio. It was amazing to be there at Game 5. Dan Ives of Wedbush Securities. Let's get you an update on stories elsewhere this morning. Here's your Bloomberg Brief with Vonnie Quinn. Hey, Vonnie.
Hey, Anne-Marie, thank you. 8 people died after a B-52 bomber crashed shortly after takeoff from a U.S. Air Force base in Southern California. The aircraft was on a routine test mission when the incident occurred. The bombers were recently deployed in operations in Iran. China's retail sales declining last month to levels unseen since the pandemic. Home prices fell at a quicker pace in May, and fixed asset investment shrank worse than expected, as China's economy is at risk of a deeper slowdown due to weak domestic demand. More central banks than ever to increase their gold reserves. In a survey of 74 central banks, 45% say they plan to buy in the coming year. Gold prices more than doubled over the past 3 years, but some of those gains have been erased due to the Iran war. And that is your Bloomberg Brief. Anne-Marie.
Thanks so much, Vonnie. Up next, a test for the new Fed chair.
I think Kevin Warsh has a dilemma on his hands.
Fed Chair Kevin Warsh then has his work cut out for him.
I don't think he has any intention of leading a charge to cut interest rates.
Former Fed Governor Betsy Duke joins us next. She thinks Kevin Warsh, once a hawk, always a hawk. You're watching Bloomberg Surveillance.
My old mentor, Roger Staubach, who told me when I transitioned, football will never leave you, but you need to leave it.
Wow.
Everyone has a dream, and a lot of dreams are, my dream is to play football and play professional football, and you get the dream comes true, but it is going to end. And the day it ends, the day before it ends, you're one of the best in the world. Great. The next day you wake up, that's gone. What are you great at? And the truth is, nothing, right? I'm not great at anything else.
I talk about it all the time, Steve, is this whole idea of it's not from penthouse to penthouse. And what I mean by that is you played for 15, 20 years and you're in the penthouse. That doesn't mean that you come to the business world and you're going to be in the penthouse. Now, you don't start on the third floor or the lobby. You actually have to start in the basement.
It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more. We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
It's Bloomberg Money.
This is the Asia trade.
This is Wall Street Week.
Welcome to Balance of Power.
You're watching Bloomberg Deals.
Welcome to Bloomberg This Weekend.
This is Bloomberg Television.
bringing you up-to-the-minute automotive news whenever and wherever it happens. I'm Matt Miller in Detroit, and this is Bloomberg.
Good morning. Welcome to Bloomberg Surveillance. We have equity markets this morning relatively unchanged. Yesterday, the S&P 500 just 1% short of an all-time high. Markets still looking for some details when it comes to the deal the president struck with Iran, as well as waiting, of course, on what the Federal Reserve has today. Kevin Warsh's era begins today, and we'll hear from him tomorrow. And Danny, also just crossing the wire, European Union trade deal close to being implemented. They're going to try to sign this deal. The president had given them till July 4th. You think the market's moving on from Iran? They have well moved on from tariffs. But this is just something that was lingering out there, and it looks like the EU is moving forward.
Yeah, maybe more good news, more clouds being cleared. Of course, I mean, much like the trade deal, there's still all these uncertainties. There's still questions over tech regulations, over other tariffs when it comes to metals. So yeah, some uncertainties out there, but yeah, just another notch job done, I guess, for the president.
Yep, we should see that final nod from the European Union on June 26th. Under surveillance this morning, a test for the new Fed chair.
I think Kevin Warsh has a dilemma on his hands.
Once you're in that seat, it's a lot different.
Fed Chair Kevin Warsh then has his work cut out for him.
He can't make any kind of near-term push for cuts.
I don't think he has any intention of leading a charge to cut interest rates.
Here's the latest. Investors bracing for Fed Chair Kevin Warsh's first FOMC press conference, closely watching the statement and forecast for a signal on the central bank's direction. Former Fed Governor Betsy Duke writing, Kevin Warsh is still a hawk. All the action will be in communications. Betsy joins us now. Betsy, thank you so much for joining us this morning. Me and Danny are really looking forward to getting your insights on exactly what you think we're going to hear from Kevin Warsh tomorrow.
So I do think it's all going to be about communications. And I think the first place he will start is with the statement. I wouldn't be at all surprised to see the statement itself that comes out after the meeting be significantly revised. Normally when the statement's put together, it's put together with a red line of changes from the prior statement. So even if it weren't a new chairman, you probably see the bias change in that statement, and that would be about all that would change. I think he'll completely rewrite it. It'll be shorter. And I'm interested to see if he goes back to the discussion of the balance of risks, which they had before when we got to the current statement format.
Betsy, do you think he declines to put a dot on the plot?
He might, but I think his discussion will be more with the committee in general about whether or not to get rid of the dot plots altogether. I don't know that he'll get rid of the entire SEP. I don't expect that to go, but I do expect the dot plots to go.
Betsy, I'm still interested in this idea that Kevin Warsh is still a hawk, because what we saw from candidate Warsh was a different measure of inflation that he preferred, a trim average, so you get rid of some of the more volatile components, which would lead you to a lower reading of inflation. He's talked about the necessity of lower interest rates, and he's talked about the productivity gains from AI, which would also allow you to get there. So what are you seeing that leads you to believe that we still might get a Fed chair that leans more hawkish?
So there's not any conflict, I don't see, between remaining a hawk but talking about different measurements of inflation that he's most concerned about, talking about different approaches to rein in inflation. But remember this, Kevin Warsh doesn't just want to be chairman of the Fed. Kevin Warsh wants to be a great Fed chairman. His idols are the great Fed chairman, and that's what he wants to do. And the Fed's primary job is controlling inflation. So Kevin's not going to do anything that will let inflation run hot in order to please President Trump. He is going to really focus on inflation, I think, in a strong way. But he may approach it differently, and he may measure it differently.
This idea of where we get continuity and where we don't, Betsy, one of the things that you've looked at is Michelle Smith, who functionally serves as the chief of staff to the Fed chairman, that will be staying on with Kevin Warsh. That makes the 5th consecutive Fed chairs that she has served. What is the importance of having Michelle Smith still there at Eccles Street?
Well, I thought it was really important, first, that Kevin asked her to stay, and they have a long relationship going back to his time on the board. And secondly, that Michelle agreed to stay. She is one of the most respected members of the Fed staff over many, many years. And she has the ability to adapt to the current chairman and support every chairman in the way that chairman needs to be supported with their style and their objectives, and to make them the strongest chairman they can possibly be. I've not met anybody who has better judgment than Michelle Smith.
Betsy, there's another individual that's going to be hanging around. Of course, it's the former Fed Chair Jay Powell, who said he was going to keep a low profile, hasn't been so low. What do you think his role is going to be in all of this?
He's going to be supportive. He again is going to support the mission of the Fed, and he's going to do that in every way he can. He's not going to work against the chairman. This isn't some like petty office politics. This is the job. This is the job for the American people, and that's what he has shown that he believes in. And so he's going to express his views on things in the meeting. I don't think you'll see him outside criticizing anything that the chairman is doing, and he will help wherever he can.
But how long do you think he's going to stay on?
I don't know. He's not staying because he wants to be there. He's staying there to make sure of the independence. So I think he's looking for some signal that the legal investigations into him and into his role at the Fed are completely ended. And so far, I don't think he's gotten that from the Department of Justice.
Betsy, thank you so much for your time this morning. Former Fed Governor Betsy Duke, on a really important moment as we begin this Kevin Warsh era. She thinks it's going to be complete rewriting of the statement.
Yeah, I mean, look, this is a Fed chair who said that his ambition is regime change. It will be interesting to see just how far he goes, whether there is any hanging on of that continuity as we get his first decision as communication to the press. But this idea that he doesn't like forward guidance, does that necessarily make him a hawk? Because does it not remove any of the easing bias if we have something like that? Again, to Betsy's point, he was a hawk before this, and he will want to just be a great Fed chair. So maybe he does need to be more data dependent, and you don't necessarily get that dovish bias that many had been hoping for, including the president.
I do think this week, though, has helped him. The fact that yields are coming down, oil prices, WTI, $78 a barrel, that sort of takes a little bit of the heat off, maybe some of the intensity of these discussions behind closed doors.
Yeah, but it is more than oil. I think that's a very fair point, but it is more than oil. The AI trade, 3 consecutive very strong jobs reports that's left inflation stuck at 3%. It is still an issue for this Fed, but again, maybe that's not a today issue. With the removal of higher energy prices, you can take a beat and kind of pause.
All right, coming up on the program, Victoria Fernandez of Crossmark, Ariana Salvatore of Morgan Stanley, Sarah Kuntz of Clio Capital, and Torsten Slock of Apollo. You're watching Bloomberg Surveillance. Very good morning. We'll be back with you in just a minute for the next hour.
Being called an ideological lunatic or a bunch of left-wing nut jobs?
You know, I've been called worse things than that.
Oh! You'd think she owned the place.
23andMe, I think, is so incredibly valuable. We're coming back.
It had that kind of detective story feel to it. You know, when you're hot on the trail of something, you know that it's very exciting.
What magazines were you reading as a kid?
I don't think I was reading magazines until I was in them.
You are on the cover of all of these. Oh, and there's many, many more, but we just don't have time.
Why should people trust you?
I don't think anybody should trust any company or entity completely with any of this.
It's very uncomfortable. Artificial intelligence is this force that is far bigger than we are.
I want to build better businesses around these brands.
The shock will never wear off.
So you're a brother and sister running one of the most powerful companies in the world. When you argue, who wins?
No one. The way I could see AI being banned or blocked is if something really went wrong. And if something really went wrong, then maybe it deserves to be.
So is it Paradise ahead or Gattaca?
Maybe somewhere in the middle.
Technology is embedded in every aspect of our lives, and that revolution is playing out in real time. From finance to defense tech, AI to entertainment, from the road to the stars. Bloomberg is bringing you the stories of companies and people that are pushing tech to new frontiers, and the politics reshaping global tech markets. I'm Ed Ludlow, live in San Francisco, and this is Bloomberg Tech. Every weekday, only on Bloomberg Television.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Welcome to Bloomberg This Weekend. I'm David Gura.
I'm Lisa Mateo. And I'm Christina Raffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up. Sorry.
Pretty remarkable the way the consumer has powered through.
If consumers in general feel freer to spend, maybe there's a bit more resilience.
All eyes on the bond market, in my view.
Oil prices are coming down, but the market's removing those hikes.
I don't think the Fed is going to be looking to cut rates anytime soon.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Good morning from New York City. The Fed kicks off its 2-day policy meeting today, the first gathering under newly minted Fed Chair Kevin Warsh, who's getting a little bit of breathing room with oil and yields lower, as President Trump says the Strait of Hormuz will reopen on Friday.
The strait is already partially opened. As you know, they're doing a little hunting for a couple of mines that they've already found. But it's essentially ships are starting to go out. Now, on Friday, it'll be completely open.
Allies, though, Danny, remain pretty skeptical.
They remain skeptical. There's also this idea that Israel is unhappy at the moment, and we saw it in the president speaking this morning. It feels like the rift is only opening between him and Benjamin Netanyahu. We don't know the details of this MOU, of the Memorandum of Understanding, and just how detailed any sort of agreement might be. But despite all of that, it's a market that's rallying now and asking questions later. I think there is some enthusiasm that we are getting something of a deal, that ships can start to return through the Strait of Hormuz, and that at the moment seems like enough for equities.
Yeah, the market at the moment believes in Trump, and they believe in the direction of travel, but this is going to be messy, especially when the Iranians come out and say, well, after 60 days, we're going to be charging a toll. J.D. Vance last night on Fox News, the vice president, said there will be no way there will be a toll. But at the end of the day, the president wants to see that oil flow, and what concessions is he willing to give to make sure that we are not in peak driving season and you have oil prices and gasoline prices rising higher.
Right, J.D. Vance talking about the idea of giving Iran $300 billion in order to repair the damage that's done was very clear it wouldn't come from the American taxpayer. But even still, is that something that the Iran hawks are going to be happy with? Just how much consensus might we get in any sort of deal? And not to mention, I mean, the president was talking about it there. You need to clear the mines from the Strait of Hormuz. Are you going to have ships that are actually comfortable with traveling through there, even if you get something signed up?
Yeah, Maersk said yesterday they have no change in plans at the moment. They want to see more details, and the devil really for this is going to be in the details. Let's take a look where equities are trading this morning. And I keep going back with Deutsche Bank's Jim Reed and said basically the fact that there's still a question mark over how the deal is implemented. So maybe that's why we don't have more room to run this morning, although S&P yesterday closed just 1% short of an all-time high. And let's take a look where yields are this morning. Danny, you've been bringing up a great point. Inflation is still sticky, but we do have a little bit of breathing room when it comes to the bond space as Kevin Warsh kicks off two-day policy meeting.
I still do think it's important to compare and contrast what yields are doing versus equities. Equities off to the races, equal weighted all-time highs. The S&P is nearly there too. Stocks, the Philadelphia Semiconductor Index is at a record. But what you're seeing with yields there is, yes, they are coming in, but the curve is still not where it was before this war, whereas stocks are. There still is some pricing in the market that we might get a hike, where we didn't have that before the war. So bonds have not caught up to where this equity market is. And Anne-Marie, it's because of what exactly you've been saying. We need to see what this agreement looks like, and we need to hear from the new Fed chair.
And we have, when it comes to the oil market, oil prices once again today softer. WTI crude $78, Brent $81. This comes as well as two Iran-linked tankers are sailing eastward through the Strait of Hormuz ahead of the deal. The market is just looking at this like it's going to be a lot easier for product to get out. And that is why you have crude down 3% this morning.
I mean, NYMEX crude with a $78 handle is quite remarkable. But the oil energy experts have said that there is an issue in the physical market that's not yet reflected in the paper market. How does that get settled?
We're running low on inventories, and it might not be enough right now that the Strait of Hormuz is going to be open because it is going to take weeks to really get oil flowing through where we had 20 million barrels a day before this conflict. Coming up the program, Victoria Fernandez of Crossmark Global Investments with stocks trading near all-time highs. Ariana Salvatore of Morgan Stanley on what a signed deal with Iran means for midterm elections. And Torsten Slok of Apollo as the Kevin Warsh era begins. We begin this hour with stocks hovering at fresh records as investors await the first policy decision under a new regime. Victoria Fernandez of Cross Global Investments writing, we believe there is still room to run. Even if we get higher rates, as long as earnings and margins remain strong, the market can digest a rotation of leadership. Victoria joins us now. Victoria, where else do you see this market having more room to run?
Yeah, well, I think when you look at the rotation that we've seen, we saw those high momentum, those high beta names really come back over the last week. And so other areas have started to pick up a little bit. You saw it in some transportation. You saw it in healthcare. You saw it in some energy names. Obviously, we've seen energy names come back a little bit based on the information of the last few days, but it's still not in an oversold position. I think at this point in time, what you're looking for is maybe not necessarily specific sectors. The names that are going to be able to run are those that have those positive factors like good free cash flow, good profitability like return on equity, looking at strong earnings yield, right? Not just earnings growth, those high growth names, but relating that to PE. So I do think there's some opportunities within all of the sectors, but on a broad base, you are seeing some of those that have been hardest hit that are now in uptrends starting to make a comeback here. And I think that's important when we look at the breadth of this market and how far this bull market can actually go.
Well, Victoria, one of the things that you point out that one should be cautious on, it's clearly not outright bearish by any means, but is the consumer, what are you seeing that's leading you just to be a little bit more tepid about the state of the American consumer?
Yeah, so, you know, Danny, it's really amazing when you think of how well the consumer has held up over the last months as we've been very concerned about things that are happening. And you're looking at wages that are really stagnating. You're looking at the difference between real wage growth and real consumption. That continues to widen as savings continues to come down. We had a little bit of improvement in consumer confidence, but it's still very low. We're back below levels that we saw in COVID on some of those things. And small businesses, that's to me a big yellow flag. You've got the NFIB report that came out last week that really is not showing tremendous signs of improvement there. They are still struggling and still concerned. So as we get additional signs of layoffs. We had more layoff reports reported this morning. I think that tells us the consumer is going to continue to be a little bit cautious in what they're doing, especially with some of the liquidity efforts we've seen earlier in this year start to pull back. Like I said, wages stagnating and savings being depleted.
Right. I mean, we heard the news overnight that BlackRock is going to cut about 200 roles worldwide. I think maybe is perhaps what you're talking about. But Victoria, what do you do with that? I mean, AI is still hot. These companies are still spending a lot, even if there is some softness in hiring. How do you factor that into your trades at the moment?
Yeah, I think when you're looking at these companies, obviously CapEx is really driving the productivity that we're seeing, and we're hoping productivity is going to be supportive of earnings. So I think you go back to some of those elements we were talking about a minute ago. I think you look at what are the companies that give us those high earnings yield. I mean, look at a company like NVIDIA. You can still add to your tech positions. NVIDIA is doing well. Fortinet, look at cybersecurity. Again, high earnings yield, so good earnings growth, but a lower PE relative to other companies within its sector and within the market. Even Adobe is fitting within that category and profitability as well. So I do think there's some things you can do within these sectors, and that's how we're looking at where to invest for our clients, along with adding a little bit of that defensive component. Because of our concerns, you can add a little bit to fixed income here, because I do think when you look at the short end of the curve, you guys were talking about a minute ago, 2 years are still over 50 basis points above the low end of Fed funds. So as some of that starts to get priced out, the shorter end of the curve could be advantageous as well.
Victoria, of course, we have Kevin Warsh's first meeting as Fed chair. We just heard from Betsy Duke, former Fed governor, says Kevin Warsh is going to be a hawk, and she's expecting a complete rewrite of the statement. What are you expecting from him?
Yeah, I was surprised to hear her say that she expects a complete rewrite. I do think we'll see some changes. Obviously, everyone's looking to have that easing bias removed, and I think that's somewhat a given at this point. What I'm going to be looking at is what is being told around how communication is going to happen in the future. I think that is going to be the key point that we're looking at here. Does Warsh even give us a dot on the SEP? I'll be very curious to see if that happens. I don't think he's going to replace Myron's dot. Where is he going to land on there, or does he give us one? And what is he going to say around press conferences going forward? How much Fed governors are going to be able to go out and talk about things? To me, it's some of those changes along with potential balance sheet changes that we're going to be watching.
How do you expect the market maybe to test him? We see the market test new Fed chairs, but this is a known figure. He's been around, he's establishment figure for years. Do you think the market's going to test him?
You know, they say they're always tested, and we've seen it historically. Maybe the test is going to be sitting here where we are right now, where labor market is actually holding its own somewhat right now. So it's not giving you really a case to ease, which we assume he's coming in with maybe a little bias towards wanting to ease. But at the same time, having this sticky inflation, I don't think inflation is going to come down just because we get a deal signed with Iran potentially over the next few weeks. I think some of that inflation is really built in there. We saw it even before the Iran war started, and I think it will continue. I mean, you look at Supercore CPI over the last 3 months, you're running at a 5.5% rate on an annual basis. So I think that may be his test. We've got that sticky inflation. You know, labor's somewhat holding steady. So with his easing bias, will he actually be more of a hawk? I think that's what we have to wait and see.
Or maybe he already got the test with just a market that started to remove cuts from it, Victoria. I mean, maybe that's a help for him at this moment. I was talking to Anne-Marie about this idea before, that there does seem to be sort of a disconnect of what the bond market and the stock market has been doing in the recent week. Both of them clearly are pricing in something of a peace premium, but the equity market seems to have gone further, almost at a high, when we haven't totally removed the hiking bias from what the futures probability are pricing in from this Fed. What do you make of that slight disconnect between the two markets?
Yeah, it's interesting. So I actually manage fixed income strategies. I mean, I grew up in the fixed income world, and we tend to be a little more cautious in the things that we do. And I think that's what the bond market is doing here. They're saying, look, we're not blowing out, you know, anything on credit spreads. We're not saying there's this tremendous issue that we have to look at. No credit concerns right now. But we also are not so sure that inflation is going to come down very quickly. We're not so sure that this deal or memorandum of understanding is going to flow through and help earnings, like the equity market is tending to just be all in on that thought process. So I just think the bond market is being a little bit more cautious. It's a wait and show me market right now. And that's what the numbers are showing. I think as we go over the next couple of weeks, if we get more concrete answers, you might see the bond market respond a little bit more.
Yeah, Victoria, people I speak to say it's a good first step, but it's going to be a messy process. Thank you so much.
Very messy.
Thank you so much for joining us this morning. Victoria Fernandez of Crossmark Global Investments. Let's get you an update on stories elsewhere this morning. We're watching. Here's your Bloomberg Brief with Vonnie Quinn. Hey, Vonnie.
Hey, Anne-Marie. The Trump administration is open to negotiating with Anthropic. A day after barring foreigners from the company's most powerful AI models, the New York Post reporting the administration would be willing to work directly with CEO Dario Amodei. SpaceX announcing a merger just 3 days after making its trading debut. Elon Musk's company agreeing to merge with AI startup Cursor in a deal valued at $60 billion. It's part of SpaceX's efforts to catch up with rivals in AI coding tools. Meta's Threads topping 500 million users 3 years after its launch. Daily active users also increasing due in large part to its relationship with Meta's other popular apps, including Instagram, and its popularity with high-profile celebrities, including LeBron James, Spike Lee, and K-pop group BTS. That is your Bloomberg Brief. Anne-Marie.
Thanks so much, Vonnie. I have a Threads account, but I've never actually, what do you call it? Tweeted, threaded?
Threaded? I have no idea. I think I got one when it first started. I was like, oh.
Because you got to get your handle, too.
Yeah, exactly. I don't even know what mine is. I haven't looked at it. You know when Instagram pops up, has an option that pops up, like, would you like to post to Threads? I never do.
No.
I ignore it.
It's too many. Tweeting is enough, or Xing is enough. But yeah, I just checked. I was like, oh, I forgot I even have that. All right, well, I guess more people are signing up. Up next, a toll-free reopening.
The strait is already partially open. The ships are starting to go out now. On Friday, it'll be completely open. We have an agreement where it's going to be open, and it's toll-free.
Ariana Salvatore of Morgan Stanley joins us next. You're watching Bloomberg Surveillance.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
The trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
Let's talk about the significant risk transfers to find space in their balance sheet.
Hedging some of that risk.
You could look at it the other way. Obviously, this stuff is risk-weighted.
I would much rather be long than be short.
We're in a kind of sweet spot.
Very, very strong alignment.
3 revolutions in one.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Every trading day, only on Bloomberg.
Asia is at the forefront of some of the world's biggest stories.
And we're here, where the action starts in Sydney.
And in Tokyo, get ahead as the global trading day begins.
The Asia Trade, weekdays, only on Bloomberg.
Good morning. Welcome to Bloomberg Surveillance. I'm Anna Marie and alongside Danny Berger today, John and Lisa are off. We are seeing equities holding steady today, of course. This is as we begin two-day policy meeting at the Federal Reserve, and the markets looking kindly on the fact that the president says he has this deal with Iran. Still waiting for details, though, and potentially that'll be the next catalyst this market is looking out for. Under surveillance this morning, a toll-free reopening.
The strait is already partially opened. They're doing a little hunting for a couple of mines that they've already found. Ships are starting to go out now. On Friday, it'll be completely open. I don't think we're going to need much help because we have an agreement where it's going to be open, and it's toll-free.
Here's the latest. President Donald Trump telling G7 delegates in France that the Strait of Hormuz will reopen fully on Friday. Bloomberg reporting 2 Iran-linked tankers are currently making their way through the strait. Bloomberg's Tyler Kendall joins us now from the G7 summit in France. Tyler, give us a sense of what the discussions have been regarding this deal the president says he has inked with Iran.
Hey, Anne-Marie. Well, at this point, actually, the G7 leaders right now are in their working lunch, and a senior diplomat tells us that the sole focus of this dialogue is going to be on a potential international mission by our allies to help secure the Strait of Hormuz. Now, we've heard about this mission before. The efforts are being led by the United Kingdom and France to potentially deploy this naval mission, though the allies have said that they're not going to ultimately deploy any such military assets until we actually get some firmer details around what is in this memorandum of understanding. And we see that signed potentially this Friday in Switzerland. And that seems to be a lot of where this discussion has been focused, that these allies want some more assurances on exactly what's in the deal and the timeline that the U.S. is eyeing when it comes to the Strait of Hormuz. Because, as you heard, President Trump has outlined what is considered to be a relatively aggressive timeline of Friday for a full reopening. But a senior administration official who briefed us says that the U.S. knows that it's going to take time for the traffic to ultimately ramp up, but that they are expecting within 2 weeks we could see an increase in flows. But part of that is because there are still mines in the strait, and there still is this wariness among commercial shippers as they themselves also seek some assurances here on how the U.S. will ensure safe transit. Now, Anne-Marie, we're talking a lot about the immediate reopening of the strait. Another big question from allies here on the sidelines of the G7 is what is the future security going to look like after we heard from Iranian state media yesterday seemed to imply that after this 60-day ceasefire extension, the country could still seek to impose fees related to what Iran is calling navigational services.
Tyler, thank you so much for your work in France. Bloomberg's Tyler Kendall there at the G7. Ariana Salvatore, the head of U.S. Public Policy Strategy at Morgan Stanley, joins us now for more. Thank you so much for joining us. How important do you think it was for the president to get this done now, before we go into peak driving season in the summer, before everyone starts traveling for July 4th, and then, of course, the midterms?
Yeah, absolutely. When we think about Trump's incentive structure, you can't discount the importance of gasoline prices, right? But when we think about this in the election, we think about this in the context of affordability. Cost of living is the #1 issue for voters, right? Aside from foreign policy, even the Iran war, being largely net unfavorable for voters. And on that front, we think what matters more than the actual gasoline price and the absolute level is the rate of change. So heading into peak driving season, coming into the fall, if you're seeing gas prices actually on the decline, that might set up a different environment for Republicans come November than you would have if the election were today, right? So that's what we think about. But again, it's one piece of the puzzle. We also think about things like consumer sentiment. We look at the generic ballot. We look at prediction markets. All of these are kind of painting the mosaic of what to expect.
When you look at polling and you look at surveys, you see a consumer that's frustrated. At the same time, the data shows they've been relatively resilient.
Right.
How do you, square that circle?
Yeah, so when we think about the consumer and the outlook there, our economists are forecasting a step down on a relative basis to last year, right? So just about 1.8%. That's still, okay levels. It's not as healthy as it was last year per se, but things aren't falling off a cliff. And I think that's, from a political perspective, the most important point to underscore, right? So this is not the type of environment that's going to necessitate another reconciliation package, some sort of direct relief to consumers, something like that. That's not really entering the conversations in Congress as far as we can tell for now. What we tend to look at is, like I said, aside from consumer sentiment, things like the generic ballot and how consumers are feeling about the incumbent party in Congress. And there what we see is that Democrats are still up about 7 points. Notably, that's actually pretty similar to how they were doing at this time in Trump's first term. The key difference, of course, is that President Trump's approval rating is almost 10 points lower now than it was back then. So when I look a little bit deeper into that data, what you see is that there has been a big swing away from Democrats in terms of their favorability. So not just the approval rating of sitting lawmakers, but also the favorability of the party brand as a whole, right, relative to 2018. So that's an important consideration, too, when we think about the outcome here. Obviously, historical precedent is strong, suggests that the president's party is likely to lose seats. But I think the outcomes here are still kind of uncertain when we think about it in that context.
Well, I was going to say, and this is something you've noted as well, that prediction markets, specifically Polymarket, has an 83% odds that the Democrats take the House. How offsides is that then?
So, I mean, look, the House and the Senate are completely different animals when we think about this. So if we look at the House, like I said, historical precedent is strong. The president's party almost always loses seats. I'd say the bar is pretty low, right? So Speaker Johnson there is working with a very thin majority. So I think House odds, being greater than 50% certainly makes sense. When we think about the Senate, very different. Obviously, not all the seats are up. The map there is just extremely challenging for Democrats. They have to win races that are in states that Trump won in the past election. It's not necessarily a kind of a done deal. Republicans are also coming into that with a bigger majority than they've had in previous elections, too.
Again, something you point out, which I feel like is apt and not discussed enough, that a lot of the things that have mattered for this market, things like tariffs, are within the president's purview. Right. So how should investors think, if there is any sort of change, be it in the House or the Senate, how much it matters for markets?
So look, if you're a macro investor or an equity investor, the answer to that question is going to be different. So when I think about this from a macro perspective, to your point, tariffs, deregulation, immigration controls, foreign policy, geopolitics, all of that is in the president's control. And I think that kind of policy risk is likely to stay elevated throughout, the next couple of years too. When I think about this from a legislative perspective, what really matters here, I think there is some nuance. And I think in particular, if you look at things like healthcare and consumer sectors, that's where the difference comes in. Because we had the One Big Beautiful Bill Act legislated last summer. That included some spending cuts, right, that are going to take effect 27 and 28. Now, I'm of the view that if you see Democrats win both the House and the Senate, and they have what I call a cohesive majority, so they're able to unify and coalesce around some of the key policy asks, they may be able to work with the president on delaying, softening, or extending those cuts. Now, that limits the downside for some stocks in consumer and healthcare spaces that are anticipating a fall off in participation in programs like SNAP and Medicaid.
Ariana, when it comes to affordability, the president, when he was asked about negotiating Iran, says he doesn't think of Americans' financial situation. The context was, I don't think of them when I'm thinking of a nuclear Iran, but that's going to be clipped and played. I was recently with the president, and I asked him about getting into a Knicks game. The game he went to, the getting in price was $8,000 for nosebleed tickets. And he said, basically, that's life and it's semi-free on TV. Are these messages going to land with consumers?
What we're seeing across the board is exactly that point, right? I think that's reflected in the president's approval rating kind of taking a bit of a dip over the past few months. But affordability policy has really been top of mind since, I would say, January of this year. The reality is there's a lot that can be said about affordability policies, very little that can be done. When we think about the total universe of what's available and what's kind of quick to implement, what can impact voters ahead of November, there's not that much out there. So we think about something like housing policy. We have the Road to Housing Act getting kind of ping-ponged back and forth between the House and Senate right now. That's not something that's going to really, implement and matter for voters ahead of November. The easiest lever the president has to pull is on tariffs. And I think you could maybe see something on that come July.
Ariana, thank you so much for your time this morning.
Thank you.
Ariana Salvatore of Morgan Stanley. Danny, this was a problem for the Biden administration, now one for Trump, just inflation, too high. Prices are too high.
Yes, and how you communicate that with people.
It's huge.
Yeah, the Biden administration had a real problem in that they kept saying the economy is fine when people didn't feel fine. Trump can't afford to make that mistake again.
Absolutely not. All right, coming up in the program, Sarah Kunst of Clio Capital with what to expect from AI executives that are attending the G7 summit. Plus, Yahira is back with your morning movers, SpaceX, continuing its rise, including some M&A news. You're watching Bloomberg Surveillance.
At 9:30 a.m., the market tells you what it's really thinking.
We beat the drum to the opening bell.
With deep analysis of the forces driving the price action.
Focusing investors on what really matters.
Where the money flows, which markets are changing.
Conversations with players shaping the narrative.
Innovative growth companies gravitate to NASDAQ.
It's not just like, let's buy the Mag 7 or AI.
That's a really compelling story.
This is where your trading day begins.
And this is Open Interest.
Only on Bloomberg.
Middle East and Africa, vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg. Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg.
Very good morning to you. I'm Anne-Marie Hordern alongside Danny Berger. Jonathan and Lisa are off today. 2 hours away from the cash open. Equity markets are, of course, waiting for Kevin Warsh to speak. They'll have to wait one more day, who does kick off his two-day policy meeting today. It's a brand new era at the Fed. S&P 500 futures are relatively flat, though we are still close to, of course, the all-time highs. When it comes to what's going on in the bond market, we do have yields lower this morning, of course, potentially giving a little bit of breathing room to Kevin Warsh, and then, of course, helping him out even more, and potentially the Fed could just look through this, is the oil price shock, because this board says it all. Not really a shock this morning. $78.20, Danny, on New York crude.
Wow, and Brent crude at an $80 handle. It's coming down really rapidly. And it's also coming down further across the curve, too. That big separation between contracts is starting to get smaller. There seems to be optimism that not only can this conflict end, but you can get oil back online quickly. The Qataris have said it will take about 2 months to get to something like 80% capacity. But considering we've been sitting here for now, 108 days of this conflict, maybe 2 months isn't too bad at this point. We can handle it.
The problem is, what if we reach tank bottoms or inventories go so low? Then we'll be living on these buffers, which pretty much people say we're there right now. And if the Strait of Hormuz is not opened as quickly as potentially the market is expecting, this is when we can have maybe prices move up higher in a much more elevated pace and a pretty serious velocity. I go back to what we heard early on in this conflict, and that was from Jeff Curry saying you can't print molecules.
It was such a pressure point. And it's really an issue because not only do you need to get the strait opened, you need to make sure that there aren't mines there. You need to send minesweepers to the region. And you need to have ships comfortable with moving through. And you have to have Iran agree to all these points. Are they going to be okay with the idea that a toll will not be put in place? And we know that Iran knows they have this lever now.
Oh, absolutely.
If a conflict emerges again, what's going to stop them from trying to close the strait yet again?
The Strait of Hormuz has been a key leverage point for them. They're going to use it. Potentially we'll get more news on this. J.D. Vance, the vice president, is expected to sign that agreement in Switzerland on Friday. I believe the Iranians are sending Mohammad Ghalibaf. But before we get to that, we're going to have the Fed meeting, so it's a really, really busy week. And we are 2 hours away from the cash open. For some morning movers, Yahira is back. Hey, Yahira.
Hi, Anne-Marie. Well, it's official. SpaceX has officially decided to buy AI coding startup Cursor for $60 billion. It's a transaction that had largely been expected and will be paid for with SpaceX stock, giving us an early glimpse as to how the company plans to use its soaring valuation to fund its AI ambitions. We are seeing shares up 7.5% in the pre-market, and if these levels hold, it will open with a valuation larger than Amazon. And turning to the chip makers, yesterday the Philadelphia Semiconductor Index closed at a record high, as did Micron, but it was Western Digital that stole the show. It was a top gainer in the S&P yesterday, surging 16%. It's up another 8.5% in the pre-market. That optimism carrying into today with names like Micron and Qualcomm also higher in the pre-market. And we end on Robinhood. It is the latest tech company to announce layoffs, saying that it is cutting 10% of its workforce, or roughly 290 of its employees. It joins the likes of Block, Snap, Pinterest that have also cut its workforce. Shares are up 2% in the pre-market, though Robinhood is down 13% this year as crypto continues to struggle. Anne-Marie?
Yahira, on our radar this morning, President Donald Trump dismissing claims that the U.S. government will give Iran $300 billion to rebuild.
We can talk about the Iran deal all day long. We're not investing any money. We have the right to if we want, but we're not investing any money.
The president calling the reports, quote, fake news. And Anthropic working to ease tensions with the White House. Sources telling us here at Bloomberg, staff from the company have met with U.S. officials in an effort to lift curbs on its AI models. The New York Post also reporting a resolution could be worked out directly with CEO Dario Amodei. And spending at OpenAI surging ahead of its highly anticipated IPO. Financial Times reporting the ChatGPT maker spent more than $34 billion on research, marketing, and other costs in 2025. The spending glut accounting for a nearly 8-fold increase in net losses in 1 year. And we spoke to Dan Ives earlier, and he was basically just like, look through this. This is the first, second, third inning of this entire sector, especially when it comes to OpenAI.
What this makes me think of is just the amount that these large frontier models have been subsidizing for compute, that they haven't been charging as much to companies because they're trying to get those customers, hence the spend on things like marketing. If the business model is starting to look challenged, especially if they're public companies, do they start to charge more for compute and inference? It's something that a lot of people have been expecting. And what does that do to this whole AI trade? Does it really make companies as willing to continue to double down and spend as much as they have been if all of a sudden compute gets more expensive?
And this is why you have some people coming out and saying it's actually cheaper to have human capital, to have humans working some of these jobs than to pay up for that compute.
And by the way, does it all come back around to the infrastructure spend, the thing that's been supporting the U.S. economy? If people aren't using AI as much because it's too expensive, do we need all the data centers that we've been building?
That would be a massive risk to this economy as well as to this market. Sticking with tech, AI executives expected to attend the G7 summit to discuss policy and potential risk. Sarah Kunst of Clio Capital warning some major changes to the AI industry could come from the meetings in France. She writes, the biggest risk bubbling up from Anthropic is a sector-wide rotation out of U.S.-controlled AI names and into more sovereign ones. We may see this as a theme out of G7. Sarah joins us now. Sarah, I loved your note. Can you walk us through what this rotation could look like?
We know that France has been sort of banging the drum for sovereign AI for a while, as have a lot of other countries. We saw Mark Carney with some comments to that effect. The UK has been talking a lot about that. But the interesting thing, particularly about France, is they actually have the companies to back it up. So they have AI sort of neo-lab unicorns like Mistral. They have Yann LeCun, who is a longtime sort of head of AI at Facebook, who recently left Facebook at seemingly exactly the right time, given all the chaos going on with their AI teams. And now he is actually back in his home country, and he raised over $1 billion for a seed round to build his own AI neo-lab. And so there is a real risk, I think, to not just Anthropic, but to SpaceX, to OpenAI, that a lot of countries around the world say, hey, maybe we don't want to be dependent on the whims of the White House, and we want to invest elsewhere in our AI spend.
Sarah, how are you thinking, though, about this fight, really, disagreement between the White House and Anthropic? Because at the same time, Dario Amodei has been coming out and saying, well, this is very dangerous technology and it should be regulated. And the White House basically said, okay, you're right then, and put export controls on them.
You know, Dario is good at his job, but he is still relatively new to this. And I think what he is learning is that this is not a great administration to sort of try to call their bluff. The funny thing about this AI model is a lot of experts are pointing to OpenAI's, I think 5.5 GPT, saying, hey, this can do basically the same thing. So Anthropic on one hand is talking up how they are the best, they have the most advanced models, it's way too dangerous, you don't even want to be able to touch it, we can't give it to you. And the White House said, bet. Right? And so now there's a really good chance that they are going to have to go figure out how to make that right. And in Donald Trump's administration, that tends to mean that you give him something. So I expect to see some sort of deal that is good for the White House, that is good for the president, come out of this sort of marketing issue, really.
Sarah, what could that be? What can Anthropic offer this White House?
Trump loves money. He loves gold. I mean, he likes equity. He'll take equity if he can't get anything else. I think that they will find something that works well for them. In other administrations, you might think, hey, is it going to be a cybersecurity backdoor? Is it going to be sort of some kill switches? That is less what this administration tends to be motivated by. And it tends to be more, hey, I have the ability to make sure that you are as big or small as I want you to be. And in the words of the mob, it is a nice store and it would be unfortunate if something happened to it.
Sarah, does that mean as we're evaluating these companies, when we're deciding who's ahead in the frontier AI space race between OpenAI and Anthropic as these companies become public, that it's as much of a political question as it is a technical one?
Absolutely. The tech is the tech. There are a lot of very smart engineers who can build this tech around the world. The real question in terms of who's going to win, I think at least in the US, is going to be who can stay on side politically. And we see that from the data centers being built, often over community objections, where you do have to have someone in power willing to come in and say, we want this to happen, we're going to make this happen. Or on the flip side, they can say, actually, we don't want this, and then you're in a lot of trouble.
Sarah, is this going to hurt Anthropic ahead of their planned IPO?
I don't think it's going to hurt them. I think that there are a lot of macro risk in general with these IPOs when you see how much money they're burning, how sort of unstable some of that revenue still is. Anthropic's a more enterprise-focused company, so their revenue is certainly more stable, and they spend less than OpenAI, and I think that will play in their favor. I think if the SpaceX IPO continues to do what it has been doing, that will also be good for Anthropic. So I don't think that being in the news as having the most powerful, scariest AI in all of the land is going to be bad for them in the short term. I do think there are questions long term for what this does to their international business.
They're still regarded as a supply chain risk, though, to the Department of Defense. Do you think as the White House works this out with Dario that the DoD reverses?
I think that was a pretty political decision, and Dario's been pretty, candid about his views on that as well. And so, yeah, I think that if he is a great deal maker, we could see him come out of this with sort of everything he wants and needs to have a green light to that IPO. But I think that there's a lot of chapters sort of left to right in that book.
You mentioned SpaceX. I just want to end on this because the SpaceX stock this morning is once again surging. Market cap, it's about to overtake Amazon today. But there's going to be a number of liquidity events, and Danny had run through them. Do we need to wait to really see where this stock levels off basically at the end of the year?
Yeah, I mean, I think when you look at the sort of super unconventional liquidity events that happen very, very early, and we don't even know who, right? We don't know which institutions have the green light to get that early liquidity. That is not normal. We know that the way that they're going into the indexes so early is not at all what we normally see. And the reality is they're losing money and they don't make much money. Most of their sort of business plans are not yet feasible. One of the reasons why they bought Cursor. And so I think that if you haven't already bought into this stock at some single, double-digit billions years ago, this is probably not the time to do it.
Sarah, thank you so much for joining us this morning. Sarah Kunst of Clio Capital. And to that point, where Elon Musk thinks he's going to be in terms of revenue by 2030 is so different, about $500 billion different where some analysts think they're going to be.
I mean, the banks, I still go back to the banks putting a $29 trillion TAM on this company feels crazy, but they also think we're going to get like 10 million people to Mars too. So if we get
and
that,
data centers.
Yes, I mean the physics
The
of
next
getting
frontier.
data centers in space. We're talking to Sheila Kayaglu of Jefferies, who said that you need to be sending 27 rockets a day to space in order to make this reality. Like my puny little human brain can't comprehend how
We're not there yet, but if you hear Jeff Bezos, Elon Musk talk about it, they say we will get there one day.
Yeah, I mean, they're true visionaries. Maybe we do.
Yeah. Let's get you an update on stories elsewhere right here on Earth. Here's your Bloomberg Brief with Vonnie Quinn. Hey, Vonnie.
Hey, Anne-Marie. Well, the bulls cannot be broken, it seems. The Bank of America June Fund Manager Survey finding investors are, quote, steadfastly bullish, with 56% of surveyed investors saying AI stocks are still in the boom phase. And on the World Cup, Spain receiving the most support with 22% expecting the European country to win. BlackRock is eliminating about 200 jobs and roles across investment operations and technology. The move marks the company's fourth round of job cuts in less than 2 years as it continues to trim headcount while expanding through major acquisitions. And back to sports, the New York Knicks are on pace to become the best-selling team ever on Fanatics, the online sports merchandise seller in the US. Immediately after New York's victory on Saturday night, Fanatics released more than 300 Knicks-branded championship products. At one point, the company was taking in 8,000 orders per minute. And that is your Bloomberg Brief. Anne-Marie.
So well-deserved. And I know everyone is going out and getting more Knick merch. If they didn't have it, if they didn't have Knicks merch, they're going out and buying them like myself. But obviously, we here at Team Surveillance have been on the Knicks for a while. We didn't have to wait for the championship. All right, up next, changing the institution.
When you're easing, you want to create animal spirits, you want to create economic velocity. And so I actually think not having forward guidance or having less forward guidance is actually a real tool that you can utilize going forward.
Torsten Slok of Apollo joins us next. You're watching Bloomberg Surveillance.
Look at the more successful economies in the region. The key to their success is continuity. But the way our Constitution is written, it actually encourages a lack of continuity. And that's a problem. The terms for local government is 3 years. When I first became a congressman, it takes you a few months to learn the business and to make your connections, the network, etc. If, for example, you are not particularly favored in the majority, passing a law in a year and a half is not that easy to do. After about a year and a half, you already hear that there's somebody in your district beginning to campaign and is going to oppose you in the next election. So you have to go back to your district to take care of that. And how much work do you get done?
Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
Key
investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Anand, only on Bloomberg.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
Good morning. Welcome to Bloomberg Surveillance. The Kevin Warsh era kicks off today. Equity markets actually waiting on the next catalyst for this market. They certainly liked the news out of the White House that they are close to this agreement with Iran. The president says the Strait of Hormuz will reopen in earnest on Friday. There's a little bit of skepticism, clearly, that how quickly you can get product really moving through the Strait of Hormuz. Remember, before this conflict, it was about 20 million barrels a day. The energy secretary told me they're now seeing 7 million barrels a day moved. Although you have some oil executives pushing back and saying it's a little bit lower. So more news is needed on that front, as well as what to expect from the Fed. And that is under surveillance this morning, changing the institution.
One of the beauties of what the Fed has is its voice. When you're easing, it's very different than you're tightening. When you're tightening, you want to be foreshadowing. When you're easing, you don't want that. You want to create animal spirits. You want to create economic velocity. And so I actually think not having forward guidance or having less forward guidance is actually a real tool that you can utilize going forward.
Here's the latest. Investors awaiting Kevin Warsh's first meeting as Federal Reserve Chair. As roaring inflation adds to uncertainty over the direction of rates, Torsten Slok of Apollo writing, with geopolitical risk easing and Fed Chair Kevin Warsh focus on simplifying Fed communication, the number of words in the FOMC statement could move down to levels seen under Alan Greenspan. Torsten joins us now. Okay, so the statement comes out. Do I need to read it first or just do a quick word count?
We certainly need to read it first, because the key issue here is, of course, what style of communication are we going to get? And in particular, what is the forward guidance? Is there any forward guidance? Is he going to say that we do not like forward guidance? This is still a very, very unclear area in terms of what is the communication style and what is Kevin Warsh going to do in terms of what is he going to say at the press conference.
Former Fed Governor Betsy Duke was just on with us, and she was talking about how there could be a complete rewrite of the statement, not just a little tweak of the easing bias. Is that what you're expecting as well?
I think that is something that we should expect as one of the outcomes. We just don't know. So that's the reason why the market, of course, has been used to having very well anchored expectations around the dot plot. The dot plot has been around now for 15 years almost. The ACP, meaning the forecast, has been around for almost 20 years. So most people in financial markets have grown up with very anchored expectations about the economic outlook and very anchored expectations about what the Fed will do. And this discussion about is there an anchor? Is there not an anchor? Of course, it's good to have an anchor in the sense that that's clear, then everyone knows where we're going. But at the same time, if the world changes, then it's not good to have an anchor. And this is the debate up on the scale, namely, do we want to have an anchor or do we not want to have an anchor that will give more flexibility to the FOMC?
In this very moment, if we remove some of that and we remove some of the forward guidance, does that not, all things considered, make us a little bit more hawkish because we don't have that residual easing bias that had been there before?
Yes, and that's particularly important if we begin to think about the discussion around rates, because Kevin Warsh has also been focusing on shrinking the balance sheet. And a compromise could potentially be that, well, we're not going to change much communication on rates, but maybe saying that the balance sheet will be smaller is implicitly also going to be a tightening of policy. So it all depends on where the committee stands and where they discuss today and what their outcomes is in terms of how should they communicate, how are they going to signal, to your point, Danny, that there is still some problems with inflation being too high. We still have a very strong labor market, which all argues for that the Fed should be tightening financial conditions.
Do you think this is a Chair Warsh who will want to sort of galvanize a consensus as Powell had? And how challenging will that be, if so, if he does want to implement something, in his words, of a regime change for the Fed?
Well, Kevin Warsh knows what he is doing, but I think what is a very important challenge, of course, for him is that if he wants any changes, basically he needs to have the other 11 members on the FOMC, the voting members, on board with whatever he wants to change. So that's why it must be clear also for him, he needs to get them on his side in terms of any decision making, because always decisions about not only rates, also about QE, QT, whatever needs to be changed in terms of policy. There are 12 voting members, and they vote about what do they want to change, and therefore the number of dissents also potentially becomes important when we get the statement tomorrow.
Do you think we get less Fed speak then with Kevin Warsh as the Fed chair?
Well, that's really challenging, because telling the regional Fed presidents that they're not allowed to talk more, even the governors that they're not allowed to talk more, that's just not possible. And given we have had a history now of a lot of communication, that means also the market has been putting more weight on the Fed chair. And I think the market will continue to put most weight on the Fed chair.
And don't you think we've seen more of this robust debate and communication because of Steve Myron, who was a Trump appointee? So it would be pretty odd if Kevin Warsh came in and said, actually, stop talking as much.
Yeah, because we've also had some, of course, to your point here, we have some quite diverging views in terms of the dot plot. And this is, of course, also why the dot plot creates sometimes a bit more confusion. Yes, it may be anchoring expectations, but the standard deviation of those expectations also get a lot of attention. In other words, how divergent are the views in terms of what's going to happen in the future? And we don't know which dot is the Fed chair dot. So that also makes it more complicated in terms of the dots coming out actually going to be helpful in the sense of anchoring expectations, or do they raise more questions about the uncertainty of what is the disagreement on the committee?
There's also a debate right now whether or not Kevin Warsh puts a dot on the plot.
Yeah, because he could also decide to, this would be highly unusual, of course, that we'll, of course, decide, he could decide to say, I'm not going to put in a dot. He could also decide to say, I'm not going to submit my CP forecast, meaning his forecast for where he thinks the economy is going. That would be pretty dramatic. So if the goal here for him, remember, the most important job for the Fed chair is really to create consensus about a decision. All books written by previous Fed chairs, they all emphasize that a key part of the job is to basically call around to all the voting FOMC members and also the non-voting members and say, what do you think should be the outcome of this meeting? What is your view? And try to come up with some solution and try to come up with some path where he can get a majority, and ideally a big majority for the decision that they're going to take.
It's complicated, but does this week's news on Iran, a deal, a memorandum of understanding being signed on Friday, make things less complicated for Fed Chair Warsh?
Absolutely, because one key issue was that inflation is still at roughly 3% in core PCE and core CPI. And the problem is when inflation is 3 and the Fed's target is 2, then now we have at least one good news is, of course, that we have energy prices coming down. But we still have a fairly strong economy, getting tailwinds from the AI boom, getting tailwinds from the one big beautiful bill. And we also at the same time have upward pressure on inflation from tariffs still hanging over and putting upward pressure, as several Fed posts have been suggesting. So the key answer to your question is, he absolutely is helped. He's helped by the fact that energy prices are moving lower.
Yeah, he's helped, but again, to your point, Torsten, there's inflation coming from other parts of this economy. So if he wants to lean more dovish, if he wants to kind of like fulfill the promise that he had been talking to from Trump, what parts of this economy can he point to say we can still get a cut this year?
Yeah, and the double-edged sword is, of course, that when energy prices go down, then we spend less money on energy and we spend more money on something else. And given that literally all high-frequency indicators are still very strong data from the TSA, how many people travel in airplanes, still very strong data on the weekly data from Redbook on how many people are consuming stuff at Walmart and Target and TJ Maxx. And we also have still very strong data when it comes to hotel demand on a weekly basis. So there just is very little signs. There are no signs, essentially, at this point of the economy slowing down. So too high inflation, strong labor market, that argues, of course, for the Fed needs to move towards a more hawkish stance.
Consumers are frustrated in polls and surveys, but resilient in the data.
It's remarkable, but it's been a disconnect that has been going on for so long that I think people have started to really discount any sort of that survey data to say this doesn't matter because this is not what the consumer is actually doing.
Torsten, thank you so much for your time this morning. Torsten Slok of Apollo. Coming up in the program, Julie Beal of Kane Anderson Rudnick, the president of Cisco, Jitu Patel, and Andrew Hollenhorst of Citi, as well as Catherine Rooney Vera of StoneX. You're watching Bloomberg Surveillance. Good morning.
As an exchange, what can you do to make it more attractive to be a publicly traded company?
Talk to our customers. We spend a lot of time with our listed companies, listening to their concerns, particularly the offices of the CFO, head of IR, listening to their pain points, general counsels as well, and then act as an advocacy group for those companies to really focus on structured reform to allow a company to tell their story in the most efficient way possible and reward them for the good disclosures that they are making in the market.
Is there any sort of financial innovation that you could drive to get more companies to list? Tokenization has come up.
Well, we did announce our tokenization initiative earlier this year. We already built the technology, we've already done a variety of proof of concepts. It allows for instantaneous settlement, 24/7 trading. It importantly allows for the rights associated with a share to move into that electronic form, but it is going to be a platform that runs in parallel to our more traditional exchanges.
It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more. We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
We should not deny that change is coming. And change is not coming just in data centers and AI. As a world, we are building infrastructure, we're building energy, we're doing energy transmission, we're building next-gen manufacturing, we're ramping defense, and we're doing this thing called AI and data.
Yes.
We will see the largest need for capital ever. And that's what we've seen so far this year. And so now to your specific question, it's about underwriting. There are a number of very strong US tech companies who run diversified businesses, Amazon, Google, Microsoft, who are interested in seeing these centers built and are interested in not consolidating the debt on their balance sheet. And to the extent they are prepared to lend their credit, one can lend against those types of things and make sensible underwriting decisions.
Up-to-the-minute geopolitical news whenever and wherever it happens. I'm Stephen Engel at Japan's Akasaka Palace in Tokyo, and this is Bloomberg.
Risk appetite is completely alive and well.
We're in an environment where liquidity is incredibly important.
This market is still very dependent on the AI trade.
We have a sector that's in the middle of a super cycle.
The enthusiasm is hard to overlook right now.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Good morning. This is Bloomberg Surveillance live from New York City for our audience worldwide. The third hour of Bloomberg Surveillance starts right now. I'm Anne-Marie Hordern alongside Danny Berger today. Jonathan Farrow and Lisa Abramowitz are off. We'll be hearing from Lisa a little bit later, sitting down with the RBC CEO. And Danny, it's a stacked week. Today really begins a new era at the Federal Reserve with Kevin Warsh at the helm. They kick off their two-day policy meeting. And then everyone is so looking forward to the statement, his communication. How does he talk about the Federal Reserve going forward? And all of this, as we are waiting on more details on this deal. The president said he struck with Iran. That signing is going to be happening in Switzerland on Friday. And the president says the Strait of Hormuz will be reopening on Friday, maybe a soft launch.
So if you're coming into this market on Monday, you get this huge boost from this idea that we're going to get a deal. But Anne-Marie, all the things that you're talking about, the calendar just leads to uncertainty. The risks remain. That conviction remains missing. Warsh could possibly be leaning hawkish. AI has started to become politicized. That's a problem for this market too. Plus, a wall of supply coming to this equity market in the form of issuance. There's still a lot of risk for this market. That maybe puts a ceiling just on how much we can rally and just how much of a peace dividend we can price in.
Maybe potentially holding back more gains when it comes to what's going on in the equity market, but they don't seem to be looking at a ton of risks right now. You have futures relatively flat, but S&P yesterday just a percentage short of all-time highs. The NASDAQ yesterday up 3%. The AI trade continues. A lot of that probably boosted by, of course, what's going on in some of these AI names, especially SpaceX. And then, Danny, when you look at the oil market this morning, $78 when it comes to WTI. There are risks, though, in this market that you've been pointing to, that executives have been pointing to when it comes to the physical market. And this story getting a readership spike across the terminal. U.S. emergency supply of crude oil has fallen to its lowest level since 1983. So if anything bad were to happen, people are starting to worry about the cushions that are left to supply this market.
Yeah, I was talking with Rebecca Patterson, Matt and I were of the Council of Foreign Relations yesterday, who basically said, look, oil prices can come down, but they can only come down so far. For one, we know that Iran has this leverage over the strait that they can use whatever. But two, it's this point that the U.S. is going to have to refill the strategic reserves. And that itself will be a buyer that comes into this market that pushes oil prices higher. So you can't have too much of a relief of prices coming down across the curve at this moment.
And all you would need to do to potentially wreak some havoc on this market right now is to see China start ramping up its imports, because they've been holding back on some of those imports that they normally have, the levels they have.
Yeah, to your point, they've been hoarding to some degree too, and they're running through that. Again, it gets to this question of a physical market that still seems quite constrained.
Coming at the program, Julie Beal of Kane Anderson Rudnick, with stocks eyeing a fourth day of gains. Cisco president Jeetu Patel on the next phase of the AI arms race, and Andrew Hollenhorst of Citi expecting a dovish tilt from Fed Chair Kevin Warsh. We begin this hour with stocks holding steady as the Federal Reserve's two-day meeting begins. Julie Beal of Kane Anderson Rudnick writing, quote, inflation and jobs are the things to focus on. Earnings growth for now is on cruise control. Stay invested, but you make sure your portfolio can withstand higher interest rates. Julie joins us now. Julie, welcome to the program. What are you expecting to hear from the Federal Reserve Chair if you're trying to look at your portfolio that should be able to withstand those higher interest rates?
I think the thing that I'm most curious to see is how they talk about forward guidance. I think that's the place where there is a real desire for Kevin Warsh to, rein in a lot of what gets said. And I think that he's pretty limited in his ability to do so, because I think that now this market is pretty attached to its dot plot. It's pretty attached to all of the forward expectations in terms of where the economy is going to be, because that's kind of what we all use to be able to handicap whether or not we're going to see rate increases or cuts. I think it's pretty important to set out exactly how you're going to start communicating to the market. I think it's unrealistic to think we're going to get back to the Alan Greenspan days where, you remember, he could talk for 2 hours straight and you would actually hear nothing incrementally that would help you make a decision one way or the other.
You have in your note, I worry that hopes of a massive decline in oil price in the near term is unrealistic. Those massive declines, though, might give Kevin Warsh some breathing space this week. What are you most worried about when it comes to potentially higher oil prices? Because we're not seeing that on the board today.
I think that for now, we're probably in good shape, because everyone is really, really reacting to having this reopening, and it really sets everyone up to feel good about where oil prices are going to be. The problem is it's not just the U.S. that's going to be rebuilding its strategic reserves. China has talked about rebuilding and expanding their already gargantuan reserves that they have. And I think that the rest of the world can really recognize that we're in a different era geopolitically. I should make sure that I have more safety stock than I did before, because the markets themselves are going to be probably less efficient if we have these kinds of interruptions. And so I think that there is a larger natural buyer for quite a long time. And that, I think, is going to create like a real concrete floor for oil prices. I don't think they can go too much lower from where they are here.
What does that mean for the broadening out trade, Julie? Because that's clearly, and it has been, a bigger issue for places beyond the U.S., like Europe and like Asia. Does that mean that that sort of idea that you can get a rally that expands beyond the U.S. AI type of names is somewhat hamstrung?
I agree. I think that it creates a challenge for a lot of these businesses, particularly outside of the U.S. I think it's going to be relief for them to not be at $100. But I do think that it creates some challenges for the broader market, for industries that are really dependent on oil prices. So, and I also think that part of the struggle is that it really takes time for these things to filter through. I hear President Trump talking about the strait reopening as soon as Friday, but I think we all know, insurance companies are not that keen to send ships through or be the first one. So I think it really does take time for some normalization. And I think as it filters through the rest of the prices in terms of fertilizer, plastics, resins, et cetera, that takes time too. I think that when you think about the broader price increases, so far they've been digested pretty well. You have a consumer that is very grumpy about price increases, but has the capital and the wallet to be able to take them on. It's just how much more price increases can we really expect to digest easily?
Well, now we're looking at the average price of gasoline back around $4 a barrel, Julie. Does the discontent among the consumer, though, remain just that? Just discontent rather, and not actually something that translates into action or a true pulling back of spending?
I think it really depends who you ask. I think when you talk about, I agree with this idea that there's this K-shaped economy. I think it's more of an E-shaped economy, which I really like, where it's been a while that the low-income consumer has been under a lot of pressure. There are enough jobs to be able to scrape by, but the number of people that are just scraping by with 2 jobs is what creates a lot of discontent for them, particularly as they just continue to see oil prices increase. But I think that broadly speaking, we've had a real disconnect from what the sentiment data says versus what people are actually doing in terms of going out and spending. And I think as long as jobs are there for people and they feel like they have the prospect of better wages over time, they're not right here, right now, right? It's been outpaced by inflation, but if they have the prospect of that, I think that they continue to spend. The minute there really starts to be a crack or a weakening in the labor market, I think that is where consumer sentiment changes, because a lot of the consumer behavior is not just necessarily, I lost my job, but I might lose my job. That's really pretty critical too.
Julie, thank you for bringing us a new letter in terms of how to describe this economy. But if you are invested in this market, how would you describe this? If you think it's an E-shaped economy, how would you want to project that into a portfolio, into the market?
Well, I think in terms of your consumer exposure, you really have to recognize just how under pressure a lot of the low-income consumer is, and that it's hard to see the places, the relief valves for that consumer. For me, I have been taking out a lot of the exposure that I had to a lower income consumer. And then if you're thinking about retail more broadly, most of us can really recognize that post-pandemic, there was so much pent-up demand, but now we kind of expect to see good value. And value can be up and down in terms of the price point, but you just want to feel like you're getting your money's worth, because you're not getting your money's worth in lots of other places. It could be insurance or gas prices, what have you. So I think that the retailers that are really demonstrating an ability to deliver great merchandising and things like that, I think they're better positioned. But I think when I am exposed to whether I really want to have a ton of exposure to the low-income consumer in any kind of sector, it's not really a place that I think I want to be in right now.
I realize this is not necessarily a question I'm about to ask about the low-income consumer, but consumers more generally. How big of a difference does it make to have the stock market roaring like it is now? It has been record household exposure to the equity market. And at the same time, SpaceX's IPO itself minted, like 4,000 new millionaires? Julie, how important of a pillar is the equity market becoming in holding up the American consumer?
I think it's actually pretty large, and I think that people understate exactly how important it has become, not even just in terms of people looking at their portfolios, but I think younger people that are on Robinhood and that are investing and getting excited about the markets and what have you, and feeling some of that wealth effect, even though they actually haven't created so much wealth for themselves, they're seeing the stock market go up, and that's giving them more confidence and excitement. This is an unusual time because many times the wealth effects that most times we feel as consumers are related to our houses, and that really hasn't been the case. What's really been driving wealth effects and confidence in terms of portfolios has really been the stock market. So if that gets taken away as an element you can point to as I'm still in good shape because my portfolio is in good shape, I do wonder if that is the thing that really makes people pull back on their spending. We saw it, quickly for the 30 seconds during the pandemic, where it really took some confidence out of people's sales, even those with very, very robust portfolios.
Julie, thank you so much for your time this morning. Julie Beal of Kane Anderson Rudnick. Let's get you an update on stories we're watching elsewhere. Here's your Bloomberg Brief with Yahira Anin. Hey, Yahira.
Hi, Emery. Oil is sliding for a 4th straight day, on track for its longest losing streak of the year as The U.S.-Iran deal to reopen the Strait of Hormuz boosts expectations for a boost in supply. Morgan Stanley and Goldman Sachs cutting their price outlooks for the coming quarters. The coach of Iran's World Cup team says his squad was ordered to leave the U.S. and return to its home training base in Mexico just hours after their 2-2 draw against New Zealand. The team had expected to spend the night in the Los Angeles area, but was told to board a plane to Tijuana. And Texas and parts of the Gulf Coast are facing several days of heavy rain and flood risk. Forecasters are also monitoring a developing system that has a 50% chance of becoming a tropical storm. Texas Governor Greg Abbott has issued a disaster declaration for 101 counties, including the Houston and Austin areas. That's your Bloomberg Brief. Anne-Marie?
Thank you so much, Yahira. Up next, the morning calls, plus Cisco President Jeetu Patel on navigating the next phase of AI adoption. That's next. You're watching Bloomberg Surveillance. At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
Technology is embedded in every aspect of our lives, and that revolution is playing out in real time. From finance to defense tech, AI to entertainment, from the road to the stars. Bloomberg is bringing you the stories of companies and people that are pushing tech to new frontiers and the politics reshaping global tech markets. I'm Ed Ludlow, live in San Francisco, and this is Bloomberg Tech. Every weekday, only on Bloomberg Television.
When news breaks,
a redhead across the Bloomberg terminal.
Bloomberg has you covered.
Trump's global tariffs are struck down by the U.S. Supreme Court.
For all the context and clarity you need.
There's going to be now tons of tariff headlines until midterm elections.
Hear it first on Bloomberg.
We often talk about tech and AI and then the Mag 7, but the Mag 7 is somewhat flat this year, while tech overall is up almost 20%. Small cap tech is up 50%. So I think what could happen is you see some money rotate out of some of these big mega cap tech stocks and money goes to other areas. Over time, I do think that's more of a headwind than a tailwind.
That was Keith Lerner of Truist speaking to us earlier this morning. Markets this morning, of course, are holding steady. Yesterday, we had S&P 500 just 1% short of a record high. The NASDAQ closed up 3%. The market is moving on from what's going on in Iran, although you have to say Deutsche Bank's Jim Reed had a good point. Potentially, we're just waiting for a little bit more details as well when it comes to this agreement. The president said the Strait of Hormuz is going to open up on Friday. A lot of people are skeptical when it comes to that. And then here's the board that Kevin Walsh will be looking at this morning when he gathers for the first time as the Federal Reserve Chair. Danny, yields just a little bit lower, maybe giving him a little bit more breathing space.
Yeah, because there's been this conversation that the bond market is already testing Chair Walsh before he comes in by sending yields higher. We were something around 4.5%. Now we move back to 4.44. It's not a complete relief rally yet because, to your point, Anne-Marie, there still are a lot of uncertainties. But if we have something of a deal, it certainly does give him more room to at least just pause. Maybe we still get a removal of the easing bias. Maybe to former Fed official Betsy Duke's point, you still have something that's more of a hawkish Kevin Walsh But at the moment, maybe this just allows them to play for time.
All right, time now for the morning calls. First up, Jefferies raising its price target on American Airlines, saying demand remains solid with fares up 20% year over year. Next up, Rosenblatt raising its price target on Roku to $160, seeing the headline acquisition price offered by Fox as not only reasonable, but beatable. And finally, Wolf Research upgrading Palantir to peer perform after resuming coverage, saying the company has the best product market fit of any enterprise software maker in the market today. And Danny, what did Dan Ives say is the Jalen Brunson of AI right now?
He said it is Palantir.
He said it's Palantir, and software right now would be
the Wemby.
The Wemby trade. All right, AI adoption facing a harsh reality check. A new report from Cisco finding 61% of organizations are holding back on increasing scale until there's greater confidence in security. Cisco President and Chief Product Officer Jeetu Patel joins us now. Jeetu, thank you so much for your time this morning. If that's a key challenge and right now for the AI trade, how do we get past that, given it's moving so quickly?
Firstly, thank you for having me on the show, Anne-Marie. And if you think about AI and what's happening right now, we are moving from this era of chatbots, which were largely human-driven, to agents, which are largely machine-driven, where agents are going to conduct tasks and jobs for us almost fully autonomously. And so this kind of notion of making sure that security is really a big part of it, because you want to trust delegation to the agent, gets to be increasingly more and more important. And as these models get more and more powerful, organizations are kind of thinking about what do they need to do to feel safe and secure as they trust these workflows to these agents. So that it's a normal course of maturity for these different technologies, but you are seeing a fair amount of emphasis around safety and security being at the center of the discussion right now.
What does it mean for you and Cisco to be a part of Project Glasswing? Of course, you're working with Anthropic, OpenAI, some of the most advanced models, and being able to test them before adversaries do.
Yeah, so one of the things that happened a few months ago was Anthropic came out with a very powerful model called Mythos, and they invited about 11 or 12 companies to go out and participate in this initiative called Project Glasswing. And it was a really good step forward, because what they did was they invited certain critical infrastructure companies to participate in seeing what Glasswing could do to go out and identify vulnerabilities in the infrastructure before they made it open to the general public. And so we were one of those companies, because we have such a massive footprint. And it's actually been tremendous. We have a great partnership with Anthropic, and we actually continued to make sure that we identified areas which could be exposure points for customers, and actually started to patch them. And one of the other things we've done is build technology where this notion of patching infrastructure is really hard, because you have to bring down your system. So what we've done is also build technologies that can give you the interim stopgap while you have patched. So we've got this new technology called Live Protect that allows you to make sure that while you are in this window where the vulnerability is announced and you've patched, we can also make sure that we have this kind of interim step where you can provide a shield, so that you as an organization, minutes from the time that a vulnerability is announced, are still feeling safe and secure and don't have to wait for 45 days before a patch typically gets applied. So.
Well, Jeetu, presumably you don't have access to that most powerful model anymore, considering what's happening with the White House and with Anthropic. How big of a blow is this just for the advancement of AI? I mean, as a business, be it Cisco or any other enterprise, surely you're not going to adopt a model and try to implement it if you know there's a risk that just one day the switch gets turned off.
So what we do have is access to the previous model from Mythos 4, and then that we continue to keep working with them. And I think it's really important for the private sector and the public sector over here to partner pretty closely, because these are issues of national security. These are issues of critical infrastructure. So, the public and private sector have to continue to partner up and make sure that they're educating each other, and we're learning as we go along, because these are kind of times that no one's navigated before. There's such a profound impact of AI globally at this point in time, that you want to make sure that these models that are out are safe and secure for people to use.
The other thing we're navigating right now and businesses are navigating is, Citrini Research put it, moving from an era of token maxing to token panic, just the sheer cost of compute. I have to say, it feels like people are quite divided on this. G2, I was having a conversation with a private equity executive yesterday who was like, it's not a concern. These frontier models have every incentive in the world to figure out how to bend time and space and to make this cheaper, that in some way this is gonna be figured out. Should we be concerned about the cost right now? Is this a real issue for enterprises to try to navigate?
So the way I think about this is there's 3 phases on how you actually start to use these models. The first phase, AI, using AI is like riding a bicycle. The first time you get on it, you're not good at it. So first you have to get familiar with it, then you have to get good at it, and then you get efficient with it. The problem is, while you're getting familiar and good, you're actually incurring costs of tokens. So there is a cost of tokens that is actually, in some cases, can sometimes get to be prohibitive because these agents start working. And so what I think is going to be really important for most organizations is to get really both efficient and secure at generating tokens and the use of tokens. And so it's not something that you can take lightly, because there is a cost run-up that could happen. But on the other hand, this is not a reason to kind of pull back and not use AI, because AI is going to be so foundational to the way that companies operate in the future that you just have to get efficient with it. And the way that we've done it is we've actually got tooling in place where you can make this available as a product to the market as well for tokenomics, where you can say, is the infrastructure working at a utilization rate that's going to be strong enough? Are the agents behaving in a way that you want them to behave, and have they started to go awry? And if they have and started consuming way too many tokens, how can you intercept that? And then making sure that you have a constant pulse and are observing the cost of tokens on an ongoing basis. These are kind of tools and apparatus that will actually continue to start getting built up over time as the industry matures. So this isn't something that I would panic over, but this is something that I would definitely be paying a lot of attention to.
G2, should we be panicking over this factoid in your research? A single agentic task generates 450% more traffic than a human doing the equivalent work?
So this is a really interesting statistic, because what's happening right now is you're seeing that we are entering into a networking supercycle. These agents, Anne-Marie, work 7 by 24, and they're constantly kind of, they're very consumptive on their capacity to consume infrastructure, and specifically network bandwidth. And so what we have to do is, what you're starting to see is, because of this very high consumptive behavior, you're seeing very, very different models that are starting to emerge. When I say models, I mean very different ways that people are starting to operate. Up until now, inferencing has only happened in the data center. What you're now starting to see is inferencing is going to be everywhere. In fact, what you're seeing is people have a new category of computing that's starting to emerge, which is called desk-side computing, where you might actually be sitting as a human with your laptop on your desk, but on the side you might have a Mac Mini, or you might have a NVIDIA PC or an AMD PC that just has these agents running. That's for the agents. And the reason that that's happening is because token costs are high, and you're starting to see a tremendous amount of kind of distribution of inference costs all over.
G2, thank you so much for your time this morning. Cisco President Jeetu Patel. Coming at the program, Andrew Hollenhorst of Citi on how the Fed could still cut rates this year.
Welcome to Bloomberg This Weekend. I'm David Hurd.
I'm Lisa Mateo.
And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
It's Bloomberg Money.
This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
You're watching Bloomberg Deals.
Welcome to Bloomberg This Weekend.
This is Bloomberg Television.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
The trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
Let's talk about the significant risk transfers to find space in their balance sheet.
Hedging some of that risk.
You could look at it the other way. Obviously, this stuff is risk-weighted.
I would much rather be long than be short.
We're in a kind of sweet spot.
Very, very strong alignment.
3 revolutions in one.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Every trading day, only on Bloomberg.
Welcome back to Bloomberg Surveillance. Let's take a listen to the president speaking right now at the G7.
We've been both involved. I think they're going to want to get it done. Iran wants to get it done. They have to get back to business. And the relationship is now normalized. So I think it's going to go pretty quickly, Steve. Could go faster. Could take longer, too, but it could go faster.
There's so much interest in the text of the document. Why not release the document?
Oh, I will.
Why not release it
Well,
before
because
Friday?
I'd like to get a formal setting first before we do that. But I have no problem with that. It's a good document. Here's what it says. Iran will never have a nuclear weapon. That's what it says. It won't have one to buy, to develop. They will not have a nuclear weapon. And I would say that's about 99.9% of what I wanted, because we couldn't let that happen. You couldn't let that happen. And they won't have a nuclear weapon. Now, in addition to that, the Strait is going to be open toll-free. And it's toll-free beyond the 60 days. It's not, somebody said, oh, it's toll-free for... No. It's toll-free, period. When it opens permanently, it'll be toll-free. I want to congratulate our Navy because the naval blockade was unbelievable. But I'll not only release it, I'll probably have a press conference and read it to you word by word so that the press covers it accurately, because it's a very important document. And unlike Obama, who could have destroyed the Middle East with a horrible JCPOA, it is the worst agreement. That was a road to a nuclear weapon. Mine is a wall against a nuclear weapon. I mean, I see these people say, but we already had one. That was the words. He paid a fortune for it. We paid nothing. We don't pay. There was some statement, we're going to spend $300 billion. No, we're not. We're allowed to go and invest if we wanted to someday in the future. We have no obligation whatsoever. It could be that Iran will turn out to be successful when they have oil. But if we left a week ago, just left, before the last 2 attacks, it would have taken them 20 years to rebuild Iran. So, but I'll go over the document with the media in a couple of days.
Mr. President, a few weeks back you said you'd like to see other nations join the Abraham Accords, much like the UAE has. Have there been any discussions with Arab leaders about that?
About what?
Joining the Abraham Accords like the UAE has?
Well, I'd love to have them. This is a man who's very advanced. He was early in, and he's done very well with them, the Abraham Accords. No, it's. I think they should happen. The big impediment to the Abraham Accords. We have our original countries, very smart countries. Every one of them. Do you notice that even during that period of conflict, nobody dropped out. Nobody said, "Oh, gee, I'm going to drop out." Nobody. I think they're all going to come in now into the Abraham Accords. The only conflict was a place called Iran. And I understand that, it's a little bit tough when people were afraid of Iran. So but I think they're going to all start coming in there. Good question, actually.
Mr. President, what do you say to Republicans like Senator Lindsey Graham, who is skeptical of the MOU?
Lindsey is skeptical?
Yes.
I'll have to talk to Lindsey. He'll be in big trouble. Lindsey's good. Lindsey's fine. He's not skeptical. He's just fine. Look, this agreement covers something very nicely. We're not paying for anything. We're not doing anything. The markets now are higher than they were when we started. Remember that. The stock market now is 2,500, maybe even more than that, points higher than it was when we said. It's pretty amazing. This agreement is about one thing, that Iran will never have a nuclear weapon. Never, ever, ever. The rest of it's irrelevant, frankly.
Senator Graham also said that an eventual agreement with Iran should be sent to Congress for review. Would you do that?
I never thought of it, but I would. I wouldn't mind. I mean, you know, the Democrats, you know, we call them Democrats because they're dumb people. The Democrats are, well, what I'd like to do is send it to Congress saying you shouldn't approve it, and I'll get it approved. They do whatever I say, they want to do the opposite. It's not working too well for them, by the way. But yeah, I never thought about sending it, never even thought about it, but I will. I will send it to Congress. I like the idea.
On another topic,
I mean, who wouldn't approve it? Let's let them have a nuclear weapon. The Democrats will say, oh, they should have a nuclear weapon. They'll go crazy. I like the idea. Send it to Congress, please, all right?
Mr. President, were you briefed on the attack plans for the UFC event at the White House? There was, the FBI thwarted an attack.
I haven't heard about it, no. But I watched, the attack that I watched were the fighters. And he saw it too, by the way. He was sitting back home in his beautiful palace and he was watching it. And they were as good a fights as I've ever seen, right? The best fight. The best. They were. That last fight was brutal. Wow. And the two last, all of the fights were good. The two fights. It was all good. It was a great evening. It was very different for the White House, but I wish you could have been there. We built an incredible arena. Dana did a great job.
Is there going to be another fight next year, Mr. President?
Well, I don't know. I got away with it because 250 years. You know? Maybe in another 50, maybe in 300.
Are you considering an increase on sanctions on Russia and whether to renew those?
Well, soon we'll be able to do that because the oil is now flowing. So we took sanctions off because obviously we're not looking to impede the oil. So we're in a position to do that soon.
Let them last.
Yeah, okay. At some point.
Mr. President, I have a question.
Yes.
Regarding this.
What a nice-looking person. Is he from your country? Yeah. Is he from your country?
Yeah, absolutely.
No, he's got such a nice way about him. My people are so mean. Look at him, handsome guy. Can put him.
Be careful.
No, I can put him in a movie right now. Go ahead.
Mr. President, how can we make sure that Strait of Hormuz is open for lasting and navigation in the future?
Have a United States with a strong president. It's the only way you can do it, I guess, when you think we have all the agreements you want. The agreements for bad people don't mean anything. Look, we were the ones that blockaded the sheet. They blockaded it, and we then said, well, we blockaded it for them, so they didn't get any oil. You're going to need to have, and this is true with a lot of things, if you have a strong president of the United States, a lot of good things can happen. You know that better than anybody, right?
Absolutely.
You know it better than anybody.
Stability of the Middle East.
Can you talk a little bit more about the plan for the enriched uranium that is in the mountains?
Yeah, we do. We'll take it.
Has Iran said they would welcome the U.S. coming in? How specific?
Iran will be just fine. What's happening is that at an appropriate time, there's no rush at all. We have cameras from space on it. We know everybody that goes there, which is like nobody. The B-2 bombers hit it. The entire mountain collapsed inside it. It's a very tough excavation. Nobody else can do it but us and probably China. They have the equipment. We have the equipment. We're in no rush, but we get it, and when we get it, we'll destroy it.
Is that part of
We're not looking to take it. We're looking to destroy it. We have plenty of it.
Tell it the Versailles dinner tomorrow night. What prompted you to go to that? The dinner tomorrow night at Versailles.
So, well, I'm a fan of beautiful places. And I was leaving in the afternoon, and then the French president, who happens to be a very nice man, invited me to dinner at Versailles. And Versailles is not a gold leaf. Versailles is the real deal. And I said, I'd like to do it. I mean, you know, all it means is that I get home later in the evening, meaning early in the morning, and I'm not a big sleeper anyway. I'll be in the Oval Office I won't lose any time in the Oval Office. So I have to say this, our country is doing really well. We're doing better than we've ever done as a country. The stock market's the highest, everything's the highest. 401ks are the highest they've ever been by 25%. And we're doing really well. And now you're going to see prices coming down. You know, when I took over, prices were very high. We had the worst inflation in the history of our country. Prices were high, eggs were high, bacon was high, everything was high. And the first question I got asked, what about affordability? I did a news conference one day after I took over, and these people said, what about affordability? I said, I didn't cause it, but I'm bringing it down. And now with the fuel going way down, you saw it yesterday, it went down $6, $7. With fuel going down, as goes fuel, so goes everything. And I've always seen that, right? Fuel, you're in a very good business, because as goes fuel, so goes everything. Fuel is dropping. It's now in the 70s per barrel. And I think we'll get it down. When I say, I was in Iowa, and we had great victories in Iowa. And when I left, I noticed at a gas station, $1.85 a gallon. That's where we were. It was a little bit higher generally, but I saw two stations, $1.85, one had $1.91. And, you know, we're going to get around those levels. So, very honored. Thank you very much, everybody.
Thank you, That was the President of the United States speaking alongside UAE leader Mohammed bin Zayed, and he was ending there, Danny, talking about how oil prices are in the 70s. And we have seen this morning Brent crude drop below $80 a barrel, something we have not seen since March. And we have New York crude now trading even lower, down nearly 5% this morning, $76.96. Of course, this is the president continuously talks about the Strait of Hormuz opening shortly, this deal to be signed, a memorandum of understanding on Friday. But of course, the other worry for many people in this market is that we are running on inventories, and this could be a messy reopening.
It's not stopping the oil price, though. It really is not. It's so amazing to look at the price of Brent crude go under $80 a barrel. And to your point, the president talking about it, saying that oil is at $70. But will he face this disconnect of where he talks about the economy doing well, oil prices coming in, 401k is higher than they've ever been, and still a populace that feels discontent, and worried about affordability. For now, though, it's a president that clearly they're taking a victory lap on this idea that we will get a memorandum of understanding signed on Friday.
Absolutely. Andrew Hollenhorst of Citigroup is joining us right now, and he writes, Chair Warsh can make a dovish case at this week's FOMC, leaving eventual rate cuts on the table. Andrew, can he make that dovish case because of where oil prices are trading today? Is that part of the calculus?
I think it gives them a lot more flexibility. This is really a huge deal for oil markets, for energy markets, but also for interest rates and what the Fed might do. If you think about the balance of risks around inflation, since late February, the discussion has been upside risk to inflation, energy prices that are moving higher. Energy prices now down significantly this morning, likely to continue to fall. Gasoline is going to follow oil prices lower. So this inflationary pressure has now reversed and become a deflationary pressure. Can Chair Warsh fully pivot to that all at this meeting? It's probably going to take a couple meetings. It's probably going to take weeks of discussion and rhetoric, but it gives him that opening this week.
If you think he's going to be dovish, does that mean they retain the easing bias?
No, I think that they're going to remove the easing bias. I think that their dots are going to show no cuts this year. That's pretty well expected. I think that's already in the price. I am interested in how Warsh messages around that. There's a hawkish way to do it where you would say, well, we're removing the easing bias because we might be hiking. That would be very hawkish. What I think Warsh will do is say, there's tremendous uncertainty. We had oil prices that went up significantly. Now there's a possibility that they will come down even more significantly than they already have. And we just shouldn't be providing this much forward guidance. That's been Warsh's position. So I think that's the more dovish way to talk about removing that easing bias.
Is that a benefit or is that a bad thing for this market to get less forward guidance, to have more volatility in it? Is that a useful tool or is that a problem for this Fed if there is more bond market volatility?
I think forward guidance is really useful when you're stuck at the lower bound on interest rates and you're trying to guide the market that you're not going to be engaging in more hawkish policy. You want to ease conditions. That's really why forward guidance was originally envisioned. That's why it came into the Fed's toolkit. Where we are now, I would kind of agree with the statement I made about the uncertainty around what's going on in the economy, what's going on with oil prices. So I think it would actually be good for the Fed to have that flexibility here.
Do you think the entirety of the Fed will be on board with that, with this different style of communication? Will they listen to a Chair Warsh if he says, maybe don't go out there and talk to the media as much?
Yeah, this is not something that Warsh is going to be able to control from the top. Just the structure of the Fed itself, the regional Fed presidents, a lot of independence to go out there and talk. So I don't think he's going to try to impose kind of a top-down constraint on how people talk about things. But just in terms of the formal messaging, in terms of what we hear at the press conference, all of the Fed officials speak. Chair Warsh speaks with the loudest voice.
Well, but this is something that John has talked about, John Ferris talked about in this program. If you don't get that clear messaging from the chair, it just is taken up by the mantle of all the different Fed and regional governors and presidents. Is that not a risk that he just loses control of the messaging and cedes it to other members of the FOMC?
Yeah, this is a balance that every new chair needs to figure out in terms of their messaging versus the individual Fed officials' messaging. How much will Warsh be reflecting the committee view at this press conference? How much will he be reflecting his own view? I think what Warsh is quite adept at doing, and I think what we'll see, is trying to kind of bring things together into some kind of consensus and at least be talking about the possibilities of where policy could go from here.
Andrew, the market's looking at hikes. You still think we're going to get cuts? 3 cuts this year. When can we see these cuts start?
I think the only reason we're talking about hikes is because oil prices went higher. So now that oil prices are going lower, I feel a lot more comfortable that we won't be getting these hikes. When we get the cuts, in our base case, we have the Fed cutting in September. That would involve the labor market data looking significantly soft over the next several months. That happened in 2024 over the summer, 2025 over the summer. If that pattern repeats in 2026, that's how we have them cutting this year. If we don't get that weaker labor market data, I think it probably is a longer discussion. Those cuts could be coming even in 2027. Max Layden, our commodities strategist, talking about a surplus of oil in 2027 now, so we could even get a further disinflation in that year.
What about the fact, though, and Danny's been talking about this a lot, the fact that the AI trade is inflationary, at least in the beginning?
This is another area where I think Warsh could do something very interesting and nuanced in terms of how he messages around that. So yes, absolutely. Prices for computer memory, for instance, are skyrocketing because this is just in short supply and everybody wants it right now. What Warsh can say is, yes, these prices are going up. The reason these prices are going up is because there is expected stronger productivity growth coming in the future. You want to invest in these technologies now to drive that future productivity growth. Ultimately, that's disinflationary in the future when you get the productivity growth. If we constrain investment now, we're actually increasing inflation in the future by not allowing that productivity to happen.
I mean, he has talked about this point before, about the AI and the productivity and what that means for the ability to lower rates. Andrew, this idea has been really swirling around that at some point we need to stop talking about the price of oil, about what the consumer is doing, that AI is the new macro, that that's all that matters for the overall picture of this economy. How much do you subscribe to that viewpoint?
It's not all that matters, but it is a big chunk of it right now. If I look at just GDP growth and I add up the components of GDP growth, about half of it is accounted for AI-related investment right now. So that really is driving this economy. And then in terms of the jobs picture, I think that's just a big unanswered question. And I don't think any individual economist or maybe all of us together can answer this question. How quickly will this technology continue to advance? How will that change the way that people look at hiring in the job market? This is a big open question.
Andrew, thank you so much for your time this morning. We look forward to seeing your analysis following Kevin Warsh's first meeting. Andrew Hollenhorst there of Citi. Up next in the program, Catherine Rooney-Vera of StoneX Group on what rising valuations mean for the equity rally. You're watching Bloomberg Surveillance.
anything we do in Africa is going to be more risky than the U.S. I think the approach we want to take is how are we being compensated for that risk? And one of those is obviously going to be a valuation question. In our minds, valuation is a lot more attractive in Africa, even if we adjust for some of those Africa risks that a lot of Western investors see. So yes, in a lot of ways, you take some of those models that, as I said, might be more asset medium or asset heavy. There might be some more inherent risks. However, if we're saying we're adding some risk because of that kind of model, but we're now solving a core problem as opposed to maybe a nice to have solution in Africa, that might actually offset it. Where if you're solving something that people really absolutely need and can't live without, in a way that then that's a lot less risky. So again, we'd encourage investors to have a less binary view. In other words, the US isn't risky, Africa is risky. That's going to lead to a lot of complications down the road.
At 9:30 a.m., the market tells you what it's really thinking.
We beat the drum to the opening bell.
With deep analysis of the forces driving the price action.
Focusing investors on what really matters.
Where the money flows, which markets are changing.
Conversations with players shaping the narrative.
Innovative growth companies gravitate to NASDAQ.
It's not just like, let's buy the Mag 7 or AI.
That's a really compelling story.
This is where your trading day begins.
And this is Open Interest.
Only on Bloomberg.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg. Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
The market, of course, has been used to having very well anchored expectations around the dot plot. It may be anchoring expectations, but the standard deviation of those expectations also get a lot of attention. We don't know which dot is the Fed chair dot, so that also makes it more complicated.
That was Torsten Slok of Apollo as we look ahead to Kevin Warsh's first meeting as Fed chair. This morning in the markets, all attention really now focused on the oil market. Brent crude below $80 a barrel, the first time this has happened since March 3rd. Of course, this is even as the Strait of Hormuz is closed. The president said it will reopen on Friday. But Danny, it's pretty staggering to see this, given the fact that we also have another headline about the U.S. emergency supply of crude. The SPR has fallen to its lowest level since 1983. So it's shocking that we see just crude falling so much this morning, and New York crude with a $77 handle.
Right, because you can have an auto. Made a really interesting point, and that is maybe demand is not as high as we thought it was. That maybe was much lower, that you have China, their ability to turn around and not use fossil fuels, that has been enough. So if the demand level is actually much lower than we thought, if we get this rally, maybe it could really pick up steam. He says that maybe the fair price of oil is something between $40 and $50.
Well, we're going to have to see exactly how quickly we will get product moving through the Strait of Hormuz. Stocks this morning hovering near record highs following a tech-fueled rally. Catherine Rooney-Vera of StoneX writing, the valuation math works only if earnings keep rising or Treasury yields fall. Catherine joins us now. Well, Catherine, which one do you think it's going to be? We do have yields a little bit lower this morning, potentially the market breathing a little bit of a sigh of relief that potentially we're at the end of the road here when it comes to conflict in Iran.
Yeah, hi. I'm not bearish. I think it's still a bull market and earnings are still growing, and that's the basis of this rally, and that's a good thing. But the market is extrapolating, I think, first quarter spectacular earnings of 28% through the year-over-year through the rest of this year. We really do have a lot of headwinds. Equities near record highs in a time that I truly believe, Anne-Marie, the Fed tomorrow is going to be pulling the rug out from the easing bias. So when you have a Fed that's not going to cut, but I've been calling this since January, the real risk is a hike. I think that's going to happen this year. Combine that with equity risk premium, which is effectively zero versus the 10-year Treasury, then you have forward earnings yield now sitting at parity with the 10-year. So you're taking equity volatility and getting paid virtually nothing for it. So I think the rally has already front run the earnings growth. And I think that, we're in for a very volatile rest of the year.
The earnings growth, though, has been remarkable, Catherine. I mean, it feels like nothing can stop this, especially as we rethink sectors like semis, that maybe they're not cyclical anymore and the growth continues. Why can't we continue to get that type of earnings growth upgrade to help power this equity market forward?
Well, since the end of the first quarter, Danny, analysts have raised their expectations for S&P earnings for the rest of the year nearly 10%, and the index has risen more than that. So investors have already paid up for the stream of earnings that they're expecting. So you need to get earnings that continue to surprise the upside in the face of a market that I think is going to increasingly price in what I think is very likely going to be potentially more than one rate hike. My team member, John Hilsrath, does a survey of former Fed officials. And out of approximately 32 of them, the overwhelming majority expect 50 basis points in rate hikes this year. There's only one former Fed official that's expecting a rate cut. So, I think that I agree with Andrew, you're from Citi, that if we get a rate cut, it's only because we get unemployment moving materially higher. We're not seeing that. We're seeing unemployment remain very low, and that's a coincidence and it supports my view, which I've held since the beginning of the year, which is that the real risk here is not stagflation. The real risk is overheating of the U.S. economy. We have multiple quarters of economic growth above potential, with a 6% fiscal deficit, with the consumer remaining remarkably strong. I think it's a long shot to call for a rate cut this year.
Catherine, thank you so much for your time this morning. Catherine Rooney-Vera of StoneX Group. Of course, Danny, market's divided. Citi's saying 3 cuts potentially this year. Market's pricing in a hike. Catherine says Fed officials say hike too.
Yeah, correct. This bond market still has a way to go to price out anything like that, even though we have this deal potentially in hand.
Danny, thank you so much for joining me. Lisa will be back tomorrow. Jonathan will be off. Coming up at 10:30 a.m. You don't want to miss this conversation. Lisa sitting down with the RBC CEO.
Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg.
World's most powerful investors don't ring a bell. They quietly reshape entire industries. This is the money shaping the world. The Dealmaker Playbook, where power and billions of dollars change hands every day. From private equity and credit to venture capital and M&A, we bring you the inside scoop on the biggest deals and debates, plus exclusive conversations with finance's ultimate insiders.
Great scoop on this. You've been reporting about an activist investor coming up and trying to shake things up. What's the latest?
We've been hearing that there was going to be an activist at some point. The question was who?
There is a convergence of technology and national security.
The United States is a big country. We're playing in the Northeast. That's an economy as big as the United Kingdom.
This is a really interesting space to watch. We're expecting more consolidation.
As this is Bloomberg Deals at Bloomberg Invest, I want to talk about the broader deal and M&A environment.
This is a moment in time. We'll see how long we're here. It's far too early to call.
There is an underinvestment in what's going on in private markets because everyone's looking for additional AI cloud capacity, and it's very tough to build.
Everybody wants to get things going, and the IPO market is just one symptom of that. It is an early indicator of what we're going to see in the M&A market.
Let's go to Scarlett Fu, who's taking a closer look at drone companies.
With ongoing conflicts in the Middle East and Ukraine, there's renewed investor appetite for new names in the space.
Excellent reporting. I'm Danny Berger, and this is Bloomberg Deals. Every week, only on Bloomberg Television.
My old mentor, Roger Staubach, who told me when I transitioned, football will never leave you, but you need to leave it.
Wow.
Everyone has a dream, and a lot of dreams are, my dream is to play football and play professional football, and the dream comes true, but it is going to end. And the day it ends, the day before it ends, you're one of the best in the world. Great. The next day you wake up, that's gone. What are you great at? And the truth is nothing, right? I'm not great at anything else.
I talk about it all the time, Steve, is this whole idea of it's not from penthouse to penthouse. And what I mean by that is you played for 15, 20 years and you're in the penthouse. That doesn't mean that you come to the business world and you're going to be in the penthouse. Now, you don't start on the third floor or the lobby. You actually have to start in the basement.
Bringing you the latest geopolitical news whenever and wherever it happens. I'm David Gura on the Salar de Uyuni in Bolivia, and this is Bloomberg.
SpaceX going to overtake Amazon today. 30 minutes till the start of the cash trade. I'm Matt Miller.
And I'm Danny Berger. Bloomberg Open Interest starts right now.
Coming up, SpaceX is on track to overtake Amazon and become the 5th largest company in the world.
Crude crumbles. Brent falls below $80 a barrel as the U.S.-Iran deal paves the way for more supply.
And a new era at the Fed kicks off. Chairman Kevin Warsh joins his first two-day policy meeting that starts today.
Matt, you said this. I mean, looking at the rally every day that SpaceX is putting in is really remarkable. 19% the first day, 19% the second day. And today we have, I mean, this looks unremarkable compared to that. 5% this morning. We also learned that SpaceX has agreed to take over the AI coding startup Cursor, a $60 billion deal, largely in stock. Because why wouldn't you? If the price of your shares are doing this, why wouldn't you do a deal and pay for it in stock and go on your way to overtaking Amazon?
I mean,
inside?
this I think had been planned already.
Yes, correct. But it was an option to buy them, and I guess now they're officially going to exercise.
They're going to exercise that option, yes. And what it means actually is more overhang in the stock, as well as the fact that they get this coding startup. Robinhood says it's cutting 10% of its workforce. Robinhood will decimate its human capital. That's 300 positions. It's wanting to remain lean and disciplined, it says, as it develops new products. But investors cheer the news, and the stock rises 1 3/4%, Danny.
Let's get back to that story with SpaceX. Bloomberg Technology co-host Ed Ludlow joins us. Ed, I mean, is this something that we should have expected with SpaceX? You get a rally in share prices that, yeah, why not go out and buy Cursor thanks to having that in your hand?
Well, the timing of the confirmation, post-trade day 3 is surprising, but not the concept, right? They, in April, announced they had the right to buy Cursor. The terms are exactly the same. They just waited until the IPO was completed because it would have made a material change to the prospectus, which would have slowed them down a little bit had they have tried to force it through prior to listing. I think it's as simple as that. So it's $60 billion where existing Cursor investors receive SpaceX shares at that value. But the valuation is the big point. I think you've nailed that, Danny, right? Bill Ackman's on X literally right now in the last few minutes talking about the value of SpaceX is its value. When you are able to make financial moves like this, all-stock deal, it allows you to move quickly. But there has been a concession from Elon Musk and the company that XAI has been behind in coding, behind Anthropic and OpenAI, and this will very quickly put them back in the game.
Anthropic has its own issues, as we know, after the government cut its Fable model, its Mythos, consumer-facing Mythos model. What do we know about the talks to get those tools back into the hands of consumers? Because its valuation is built on its ability to sell these products worldwide, right?
Yeah, so the talks took place in the last 24 hours, but they were between technical staff at Anthropic and administration officials, right? So I don't know that this is like Anthropic leadership with the president himself, who of course is in Europe for the G7. It was a pretty terse statement that the company puts out, but they've had a number of virtual meetings prior to the session that was happening in DC yesterday, and they're trying to basically explain to one another what the confusion is, like whether there is a technical risk on the guardrails for those models, which is what we discussed on the show yesterday. But as it stands, there is no sort of big move forward to making Fable 5 and Mythos 5 available again.
Have you been able, by the way, to jailbreak it? Have you? Did you have a try?
No.
Ed?
You know what's interesting? Like my coding competence is not there. I wouldn't be able to. But I guess for a lot of people, they would be if they were to use one of the coding tools, right? And the jailbreak. It can come in many forms, but it's basically an ability to go around the guardrails, to make the model do something that the guardrails specifically are trying to prevent it doing, which in Mythos' case historically has been cybersecurity use case, but there are others out there. But no, I am a fair weather vibe coder for sure.
Ed, thank you very much for joining us. Bloomberg Tech co-host Ed Ludlow. Robinhood elsewhere says that it's cutting 10% of its workforce. That amounts to 300 positions. The firm says the purpose of the cuts are to maintain a high-performance culture as it develops new products. Joining us now is Bloomberg finance reporter Catherine Doherty. It's not just Robinhood, it's BlackRock, too, that's cutting another 200 jobs. I was just doing a quick word search. I didn't see AI any mentioned anywhere when they were talking about these job cuts for either company.
No, both of these companies are talking about this trimming. This is not a cull. As really maintaining discipline is a word that I think is being repeated from both firms. And it's about the future, thinking about being leaner. And as you mentioned, for Robinhood, they're calling out their new product development. So this is all about a culture that, interestingly enough, they want to be perceived as I mentioned, leaner,
right,
more efficient. But if you are an employee, I'm sure that even a 1% cut, these 200 people, it's going to be felt in the culture.
1%, the 200 people, that's the BlackRock cut. So they're cutting 1%. That looks like a trim to me.
Yes.
Taking out 10% of your workforce, I feel like you could get some muscle with that fat.
For the 300 people, that's right. That's absolutely right. And as you mentioned, for BlackRock, that 1%, very small percentage overall, it's also something that is becoming very much a trend. They've done that twice before a year ago. This seems to be something that they're just going to instill going forward. For Robinhood, this is something that I think is the testing point. We'll see if they will have future cuts of this magnitude. Maybe they will be smaller. Maybe it will actually not be enough. I think this is kind of the start of what they're hoping will set the stage for, again, a more leaner company moving forward.
All right, Catherine, thanks very much. Bloomberg finance reporter Catherine Doherty on the job cuts at Robinhood as well as BlackRock. Now let's get to commodities because Brent is dropping. It fell below $80 a barrel for the first time since March as the U.S. and Iran prepare to sign an interim peace agreement in Geneva on Friday. You can see it's bounced back up a little bit, but holding around there. Yesterday, Infrastructure Capital Advisors CEO Jay Hatfield said he sees oil heading even lower.
Obviously, oil prices were horrible for inflation. We think we'll quickly get to 70. We're a little bit skeptical that they'll actually agree in 60 days, but the strait will be reopened. Oil will be flowing very fast, we think, because of this production. So we get below 70.
All right, so President Trump achieving at least some of his stated goals, the drop of oil. We see rates coming down as well. Let's get to the G7 summit in Evian, France. Bloomberg Washington correspondent Tyler Kendall is there. And Tyler, the president seemed this morning in a long press conference to be taking somewhat of a victory lap before the signing on Friday.
Yeah, Matt, at this point, the White House is really expressing optimism, even as we know that there are still a lot of big questions here, including that we haven't seen the finalized text of this memorandum of understanding from either of the sides. President Trump in his remarks earlier said that he wants to see a, quote, more formalized setting before actually releasing that text, presumably in reference to a potential signing ceremony this Friday. Now, we just saw the G7 summit leaders wrap up a working lunch that was focused squarely on the Strait of Hormuz and a potential naval mission from our European allies to help secure the strait, because so far our allies, including the UK and France, have repeatedly said that they're not going to actually deploy military assets until we see pen to paper on this agreement. I'll also point out that President Trump, he right now is meeting with the president of the UAE, but earlier today he met with a senior Qatari official. As people familiar with the matter tell Bloomberg News that Qatar has plans to ramp up LNG shipments the minute that the strait is opened. But Matt and Danny, as you both know, there's still risks here. A senior administration official says that the U.S. is tracking it could take 2 weeks to get flows really going through the strait, in part because mines still need to be cleared. And there's questions about the longer-term security, as Iran has seemed to reference that they do intend to charge some fees after that 60-day ceasefire extension.
Tyler, thank you so much for your coverage there in France. That's Bloomberg's Tyler Kendall at the G7 summit. A check on markets this morning, and enthusiasm is still very clear in this oil market. We did dip below $80 a barrel for Brent crude. We're just about at that level now. And you're seeing yields come in too, but that enthusiasm is not extending out to equities after they rallied yesterday to reach within 1% of all-time highs. It's tech that pulls us lower this morning. We're down 0.2%, so unable to put in another day, Matt, of a rally.
Yeah, well, so far, right?
Sure, we haven't even opened yet, I guess.
Exactly. We're still 20 minutes away from the opening bell. Let's take a look at some of the single stock stories we're following for you this morning. Meta's Threads announcing that it has hit 500 million monthly users.
Who?
I do not know.
But like, does it count people who opened up an account and never post on it?
I guess you have to use it every month, but
are
we to believe that 500 million people are using Threads every month or accidentally fall into it while on Instagram?
Yeah. That accidentally post, straight to Threads. I think that one's more it. Elsewhere, Rackspace Technology, those shares are surging. The IT company said that it signed an AI compute agreement with AMD.
And Yum Brands has agreed to sell what some might say is its yummiest asset, Pizza Hut. For $2.7 billion, Long Range Capital has acquired Pizza Hut, the assets excluding those on mainland China, and we're going to talk more about this once delicious restaurant.
Oh, so it's not delicious anymore.
Well, I mean, I feel like Pizza Hut has fallen a long way from its glory days.
But that worries me because usually when private equity buys stuff, I love
they make it better. For all stakeholders, including the employees.
Yes. I mean, Wagamama's used to be so good before it was private equity owned.
Coming up, the Fed is kicking off its first policy meeting under Chairman Kevin Warsh. We'll look ahead at tomorrow's decision. Next, this is Bloomberg Open Interest.
Look at the more successful economies in the region. The key to their success is continuity. But the way our Constitution is written, it actually encourages a lack of continuity. And that's a problem. The terms for local government is 3 years. When I first became a congressman, it takes you a few months to learn the business and to make your connections, to network, etc. If, for example, you are not particularly favored in the majority, passing a law in a year and a half is not that easy to do. After about a year and a half, you already hear that there's somebody in your district beginning to campaign and is going to oppose you in the next election. So you have to go back to your district to take care of that. And how much work do you get done?
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Stephen Engel at Japan's Akasaka Palace in Tokyo, and this is Bloomberg.
Making money isn't about drowning in emotions. It's about understanding what's actually happening.
Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
We did it. Let's get now to high interest, what's making headlines around the world. One of the World Cup's biggest upsets is also one of Polymarket's biggest losses. A trader bet nearly $1.1 million on heavily favored Spain. He saw that wager wiped out after the underdog Cabo Verde denied Spain the win and battled to a stunning draw. That means it was a tie, by the way. That's soccer. The richest people on Earth just had their biggest payday ever. The world's 500 richest people added a record $336 billion in a single day yesterday, pushing their combined wealth to over $13 trillion. Elon Musk led the surge as newly public SpaceX jumped 20% again, lifting his net worth to $1.27 trillion and widening the gap between the ultra-wealthy and everybody else. But obviously it's not like money he can just use, right? The Fed kicks off its first meeting under Chair Kevin Warsh. The central bank is widely expected to keep rates on hold tomorrow, with the spotlight on Warsh's news conference as he signals a major shift in how the central bank talks to markets. He wants fewer speeches, less forecasting, and potentially, I should say, less forward guidance and potentially fewer press conferences. Apollo's Torsten Slok says we could see a rewrite of the FOMC statement. He spoke on surveillance.
We just don't know. So that's the reason why the market, of course, has been used to having very well anchored expectations around the dot plot. The dot plot has been around now for 15 years almost. The ACP, meaning the forecast, has been around for almost 20 years. So most people in financial markets have grown up with very anchored expectations about the economic outlook and very anchored expectations about what the Fed will do.
Joining us now is Michael McKee, Bloomberg's international economics and policy correspondent. Before we get to the communication we might get from Warsh, we have to assess the current economic picture. Maybe it gets a helping hand from lower oil prices. We also had data this morning. What have we been seeing, Mike?
Well, the data are backward looking, but they do make the case that they can't do anything tomorrow. We got two disappointing numbers this morning. Import prices come in up 1.9% after a revised higher 2% in April. Year-over-year basis, 6.7%. That's the highest since the post-COVID inflation in 2022. Housing starts, look at that, down 15.4%. Some of that weather, but a lot of that is builders being more cautious, just not knowing what's going to happen with interest rates. Building permits also falling 0.7%. So Kevin Warsh comes into office with an economy that is hanging in there, but certainly not breaking out of the walls. What is Kevin Warsh going to do? Well, that's the big question tomorrow. There's no change in rates, and the bias is, as Matt said, likely to be dropped. A bias for lower rates likely to be dropped. No cuts in the dots is what's expected. But will there be no dot for Warsh? Warsh has said he doesn't like the dots. He doesn't want to submit a dot. So does he submit a dot? We'll find out. News conference, communications plans, and really, what is he going to say about his relationship with President Trump? That's going to be something that Wall Street is watching very, very closely. And of course, the big question, too, is this going to be the first and last news conference? And I had to bring this quote in. John Cochran is an economist out at the Hoover Institution, close friend of and worked very closely with Kevin Warsh, and he noted that Kevin Warsh is the dog who caught the car. I say that with great affection and sympathy, he says, because now Warsh has wanted to be Fed chair for a long time, but now what does he do with it, now that he's got it?
He'll probably still have a good time, I imagine, while he's there. By the way, I made a distinction earlier that I wonder if you caught on to. He's going to, or he wants to, maybe stop forward guidance or slow it down or change forward guidance, but not forecasting, right? Because yesterday, Jay Hatfield on this program told us he wants to do more forecasting rather than look at data dependency as a way to guide rates.
Yeah, well, what he has said is that he wants to change forecasting. He's indicated he doesn't think the Fed's model of the economy, FERBUS, as it's known, is any good anymore, and that needs to be changed, and they need to incorporate more private sector data, et cetera, et cetera. But yes, if you're not going to use data dependency, not looking backwards, you got to have something to look forward. So we may get a change in the summary of economic projections, but the idea of putting out what they think the economy is going to do is probably not going to change.
Or maybe they don't put it out. I mean, maybe they make a forecast, obviously for themselves, and then keep it close to the vest.
Well, they could do that. In the Greenspan years, until things really started to change with communications, they used to put what they thought was going to happen or options for what was likely to happen in a general term in the Monetary Policy Report, the book that's released when they do the Humphrey Hawkins testimony, which we haven't had this year. Maybe they just go back to that.
I mean, does it make a difference for this Fed to have a market that isn't pre-warned? I mean, there is this idea that you do that when you're kind of like stuck at the lower bound. We're not that right now. How necessary is it to have a bond market that isn't volatile on a decision, that you like very much so broadcast exactly what you're thinking and where you're going?
Well, are you at the Fed or are you on a trading desk? If you're on a trading desk, as we know, they want to know to the minute what you're going to do. But that's a habit that has developed over the last 30 years since we've had all of this additional openness. The feeling used to be that it was better to surprise the markets because you keep them on their toes and they're more accurate price setters. Then the Bernanke came along and said it's better if we sort of give them guidance because then they put that into interest rates ahead of us. We don't have to push them. It's already there. They're doing half the work for us. Now we have to see. Kevin Warsh doesn't seem to like that idea. We have to see if he changes it.
Transparency is so woke. You know, we don't need quarterly reporting. Mike McKee, thank you very much for joining us. Don't miss our special coverage of the Fed decision kicking off tomorrow at 1:30 p.m. New York time. Now, coming up, Yum Brands is selling its struggling Pizza Hut division. We'll talk about that restaurant and private equity picking it up next. This is Open Interest.
Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg. U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg. When news breaks,
A redhead across the Bloomberg terminal.
Bloomberg has you covered.
Trump's global tariffs are struck down by the U.S. Supreme Court.
For all the context and clarity you need.
There's going to be now tons of tariff headlines until midterm elections.
Hear it first on Bloomberg.
Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia. We'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything. The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Shares of Yum Brands rising in the pre-market. The company is selling its struggling Pizza Hut chain for $2.7 billion to a private equity firm. Michael Halen, Bloomberg Intelligence Senior Restaurant Research Analyst, joins us now at the desk. And, you know, this is a popular topic of conversation for people my age because we remember it so well, you know, with well-lighted, packed restaurants, happy staff, and now it's like no staff, dark, and the product is fallen off a cliff. Is that fair?
Yeah, I think that's fair, and I think that's kind of why we've seen this spiral downward. I'd say Domino's has had a big impact on that, right, and Papa John's as well, so competition has definitely increased from the other national players, which...
But those are all also takeout places, right? Pizza Hut used to be a restaurant you would go to, and now I wouldn't bring my family there, you know?
Well, sit-down restaurants in general have also, the competition for sit-down occasions has also increased mightily, right? And so now Pizza Hut is stuck with these huge footprint stores here in the U.S., you know, especially without the volume to justify them, right? And they're doing more to-go orders and things of that nature. And so, you know, profitability has really declined for the franchisees, and so they haven't been reinvesting in the business.
So PE buys this. The firm is called Long Range Capital, which I'm going to be honest, I hadn't heard of before. And just looking at what they own, so they own 24 Hour Fitness. They own a funeral products and services provider, a maker of synthetic diamonds for mining. They also own a ski resort in Kitzbühel. This doesn't scream to me, hey, we're the guys to turn around the struggling Pizza Hut.
I don't have to worry about that anymore. I only work with the public chains. So
okay, but you know these businesses, Mike. I mean, what can be done to turn it around?
I mean, what you need to do is change the footprint. I mean, you know, they need to have small 1,000 square foot, 1,500 square foot delivery and pickup only stores like Domino's and Papa John's. That's where, you know, the money can be made in this business. When it comes to that, the real estate, it's tough, you know, going back to that point. That's been kind of a yoke on its neck for years now, those red roof restaurants, and you know, it's going to be tough to turn around here in the United States. I think there's more of an opportunity with Pizza Hut internationally, and especially in China. Right?
What does Yum Brands then have left? I mean, what can they do with Kentucky Fried Chicken and Toxic Hell?
So, listen, KFC and Taco Bell are their two twin growth engines. Taco Bell's an absolute machine, right? They're gold standard in QSR, right? Tons of talent have come out of that organization. Best in class in terms of marketing, absolute machine. KFC internationally, unit growth is very, very strong, been very, very strong for years, has done very well internationally. Now their U.S. turnaround is starting to show some signs of life. And so what they have remaining is a company that's gonna grow faster than it had. Margins are gonna expand. And as you're seeing in the pre-market today, the valuation multiple is gonna, you know, move higher.
Michael, thank you very much for joining us. Appreciate it. That's Michael Halen of Bloomberg Intelligence. Coming up, we're going to start our trading day with Abby Yoder, U.S. equity strategist at J.P. Morgan Private Bank. World's most powerful investors don't ring a bell. They quietly reshape entire industries. This is the money shaping the world. The Dealmaker playbook, where power and billions of dollars change hands every day. From private equity and credit to venture capital and M&A, we bring you the inside scoop on the biggest deals and debates, plus exclusive conversations with finance's ultimate insiders. Great scoop on this. You've been reporting about an activist investor coming up and trying to shake things up. What's the latest?
We've been hearing that there was going to be an activist at some point. The question was who?
There is a convergence of technology and national security.
The United States is a big country. We're playing in the Northeast. That's an economy as big as the United Kingdom.
This is a really interesting space to watch. We're expecting more consolidation.
As this is Bloomberg Deals at Bloomberg Invest, I want to talk about the broader deal and M&A environment.
This is a moment in time. We'll see how long we're here. It's far too early to call.
There is an underinvestment in what's going on in private markets because everyone's looking for additional AI cloud capacity, and it's very tough to build.
Everybody wants to get things going, and the IPO market is just one symptom of that. It is an early indicator of what we're going to see in the M&A market.
Let's go to Scarlett Fu, who's taking a closer look at drone companies. With ongoing conflicts in the Middle East and Ukraine, there's renewed investor appetite for new names in the space.
Excellent reporting. I'm Danny Berger, and this is Bloomberg Deals. Every week, only on Bloomberg Television.
What is going to be the consequence for U.S. markets? We are seeing modest gains across European equity markets.
Take a look at how we're faring when it comes to Asian markets.
Bringing you up-to-the-minute political news whenever and wherever it happens. I'm Tyler Kendall in Washington, and this is Bloomberg.
Moments away from the start of trading, this is Bloomberg Open Interest. I'm Matt Miller. The energy is feeling a little bit lackluster today after the incredible rallies we've had the last couple of sessions. S&P futures, you can see, are a little changed here. NASDAQ futures actually down about 0.2%. The Dow Jones Industrial Average futures are climbing. On the New York Stock Exchange, we got PSEG ringing the opening bell, celebrating the armpit of America, New Jersey. And down at the NASDAQ market site, you've got IPG Photonics ringing the opening bell, and they seem very excited.
God, how many angry emails are you about to get?
All that
You know,
all
we
that
probably
matters.
have so many viewers from New Jersey.
I mean, you know, Katie Greifeld, who anchors the closer, Romaine Bostic,
Yes.
she celebrates New Jersey. Like, she absolutely
Well, she does live in it,
loves
so I hope so. You gotta
New
love,
Jersey.
You gotta love where you live. So.
Yeah, I respect that.
Yes,
I respect
yes.
that.
Here at the Open Mat, I am looking at SpaceX shares. I gotta say, 6%, this feels like nothing. This feels like a shrug after 2 consecutive days of near 20% rallies. But we go up again. We're up 6.7%. 7% now at the pre-market. They also agreed to take over AI coding startup Cursor. $60 billion deal, largely funded by stock, because why wouldn't you do that? So rally comes for a third day, and I now believe with this rally, SpaceX has overtaken the Amazon market cap if it can hang on to these gains.
I'm checking for you
Yeah,
right
please
now.
do.
SpaceX equity DES.
Yes.
Looking at, yes, $2.719 trillion, and Amazon currently at $2.653 trillion. So good call, Danny Berger. Robinhood says it's cutting 10% of its workforce. It's going to fire or reduce 300 positions to remain, quote, lean and disciplined as it develops new products. And those shares continue to rise, now up more than 3% in the cash trade to over $100 a share. So investors like the idea of a lean, mean machine over at Robinhood. By the way, Bank America's latest fund manager survey finding that investors believe the AI stock rally has more room to run, with a majority of respondents describing the current stage of the AI cycle as a boom. Let's get the view from Abby Yoder, U.S. equity strategist at J.P. Morgan Private Bank. Abby, so the idea, I guess, from this survey is that it's not irrational exuberance or euphoria that's not justified. This is built on something solid. Do you agree?
I do agree. And it's funny because when you read that, I was like, oh, what do they mean? Like, what is this relative to? But relative to euphoria, right? Like, it's not based on fundamentals. When you look at what happened with 1Q earnings, it really was spectacular. Even X, the Mag 7, tech grew earnings 50% year over year. That hasn't happened since coming out of a recession, since the global financial crisis, right? So really, really strong fundamentals. And the issue and why, 3.5 years into this tech cycle, we're still at kind of the building phase is because we're so supply constrained. And now that those supply constraints are broadening into other parts of the market beyond just the traditional like GPU semiconductors to things like memory and hardware, like optoelectronics. And that's where you're seeing a lot of that price action.
By the way, you just said Mag 7. I was thinking, like, when are we going to stop talking about Mag 7? No one talks about Netflix anymore. I know this had been a useful moniker for this market to be like, this is the thing leading us higher. I just wondered to what degree have we moved away from that, and is it kind of the semis, the AI kind of stocks? Like, I know it's not the most important thing, but often narrative means a lot for this market.
No, actually, I think that's a great call out. Like, the Mag 7 themselves had not actually done that well year to date, right? Like, they're not the ones that are outperforming. When you look at like the cohort of semiconductors that are outperforming, they're not in the Mag 7, right? They're now in the top 10 of market cap, but they're not in the Mag 7. And the Mag 7 is not a monolith. They're very different companies performing in very different ways, whether you're in software, hardware, semis. And so I think to your point, like, I do think we're going to get to a point where we're moving beyond talking about the Mag 7, particularly as their contribution to earnings comes down.
Yeah, Intel is worth twice as much as Netflix, right? Micron is worth 4 times
By the way, if
Netflix.
you could go back in time and tell yourself that 5 years ago that Intel would become more of a component for this market than Netflix, it was like this great behemoth in the Mag 7.
But if I understood the story, I would buy into it. And Abby, I mean, it's interesting, right? We have the one big, beautiful bill, which regardless of your political leanings, sets up carrots and sticks for investments. Intel is taking advantage of that. Obviously, the president has bought into it, and his relationships are going to help them. The optimist would say get more orders, right? We want to bring chip making back to the U.S. I'm not sure if manufacturing is coming back here, but certainly chip makers are starting to build fabs. I mean, isn't that a success story?
Yeah, I mean, I think, well, actually, when you look at price action, the S&P is close to its all-time high. The equal weight is at an all-time high, and industrials are at an all-time high. They're one of 2 sectors within the S&P that are at an all-time high, and I think you speak to exactly that, right? Like, the structural tailwinds behind them, whether it's AI, whether it is, reindustrialization more broadly in the U.S., right? Just reshoring manufacturing. Again, to your point, I think you're seeing that a little bit slower than just the AI trade, but having that incentive from the One Beautiful Bill Act to, immediately expense CapEx, particularly in the U.S., has brought a lot of money back to the U.S., and obviously the industrials are going to benefit from that.
When do financials start playing along? They're one of 2 sectors that are down year to date.
We've been highlighting that as, one of our favorite ways to think about this reopening trade, right? And you saw a lot of that, particularly the consumer finance names yesterday do really well because you have this easing of credit concerns as it relates to the war, right? You don't have as much of an inflationary impulse. That should be good for the consumer, so that therefore should be good for those consumer finance names, but also the large cap banks, right? I think the credit concerns were also weighing on them, and particularly if you get the curve steepening, that would be a net benefit, right? Because on the short end of the curve, you've got some more deposit competition for the financials that could ease if you see that steepening.
At some point in this program, we're going to play a shot from Jim Chanos. He was on with Scarlett and Tom Friday, and he made the point that during the dot-com sort of CapEx era, companies were recording 30% increases in earnings because everyone was spending to lay fiber, right? But then the following year, companies were recording 40% drops in earnings as those orders went away. Are you not concerned that we're over-investing here and aren't going to see the return on investment beyond, the hyperscalers after this?
No, well, I think what was very different back then is that they were laying all of these dark fibers, but the demand wasn't, the supply was there, right? And the demand was not in excess of that. At the moment, because, and this is because of strategic decisions that, the country has made over the last 30 to 40 years to not prioritize reindustrialization or industrialization, that we just don't have the capacity to really meet the needs of this AI build-out, right? Or just electrification generally speaking, right? So it's been decades of this move towards towards services, basically. And so you can't just turn that around, right? That doesn't take 1 year, 2 years, that takes multiple years. And we're coming up against just a very, very strong demand story where we can't meet that supply.
Abby, we're going to have to leave it there. Thank you so much for joining this morning. Really great to see you, Abby Yoder of JP Morgan Private Bank. About 8 minutes into your trading day, let's get a check on kind of an uneven market. It's the small caps doing well. It's the industrials. Abby was pointing this out before. Kind of everything except the AI darlings. If we look at MOV on your screen, which that is not, that is, it's, again, not necessarily the AI winners. Some of it is doing okay, but it feels to be kind of this like broadening out with the equal weighted measure of the S&P doing better. You do have one of the chip makers leading gains, Western Digital, followed by Micron, JP Morgan. So financial is doing well. So chip makers, yes, check, those are doing well. But on the downside, NVIDIA, not doing well, down 1.33%. And just given its weight in the S&P, it's detracting about 8 points to the S&P 500. We are up about 0.1%. Microsoft, Broadcom, Tesla, Apple. So some big tech names not having a good day, which is why tech is one of the losers of today's session, as is energy. That's not surprising considering the price of oil drops for yet another day. And at the top, again, industrials is up there, financials, utilities, so more cyclical type sectors having a pretty good day for an overall gain of about 0.1% for your S&P this morning, Matt.
The breadth is so strong. It's like 4 to 1 in terms of gainers.
Yeah, but I mean, because the big stuff like NVIDIA's down, it's, you know, we're still barely up right now.
Fair point. Coming up, Jefferies analyst David Katz talks sports betting as platforms see a high influx in bets during the World Cup, much of which will be held in beautiful and sunny New Jersey. This is Bloomberg Open Interest.
We are dealing with supply issues, and so therefore fertilizer, the planting season, food security is high up there, but so too is fuel and energy. So yet again, as we had with Ukraine, the energy crisis, the food crisis, the cost of living, and that kind of fiscal space needs to be created for countries that are going to be dealing with the debt crisis. They are still repaying their debts. Inflation will result in interest rates that will put many countries in jeopardy on the debt issue. So we're looking to find solutions here from the IMF, from the World Bank. There have been many offers of the windows and facilities that could be put at the disposal of countries. But I think at this stage we need scale. Many countries are still recovering from the previous shocks, and some of those crises are not over yet.
At 9:30 a.m., the market tells you what it's really thinking.
We beat the drum to the opening bell.
With deep analysis of the forces driving the price action.
Focusing investors on what really matters.
Where the money flows, which markets are changing.
Conversations with players shaping the narrative.
Innovative growth companies gravitate to NASDAQ.
It's not just like, let's buy the Mag 7 or AI.
That's a really compelling story.
This is where your trading day begins.
And this is Open Interest.
Only on Bloomberg.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
It's Bloomberg Money.
This is the Asia Trade.
This is Wall Street Week.
Welcome to Balance of Power.
You're watching Bloomberg Deals.
Welcome to Bloomberg This Weekend.
This is Bloomberg Television.
Trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
Let's talk about the significant risk transfers to find space in their balance sheet.
Hedging some of that risk.
You could look at it the other way. Obviously, this stuff is risk-weighted.
I would much rather be long than be short.
We're in a kind of sweet spot.
Very, very strong alignment.
3 revolutions in one.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Every trading day, only on Bloomberg.
Quick check on markets here. We're looking at an S&P that is up only 0.1% despite very positive breadth. The NASDAQ down 1/10, and the Dow gaining 362 points to 52,033. Time now for our top calls. Some of the analyst action in focus this morning. First up, BTIG is downgrading Fannie Mae and Freddie Mac, saying it's still unclear when the mortgage giants could be freed from government control. The firm doesn't expect the issue to be a priority for the Trump administration anytime soon, so investors may need to wait for meaningful progress. Next up, Wolf Research is upgrading Palantir, saying its AI platform is turning interest in artificial intelligence into, I should say, real-world adoption. So we were just talking with Abby Yoder about that. Nonetheless, Palantir down 1.4%. Finally, Wall Street is turning cautious on Roku after Fox's $22 billion acquisition. Wedbush, JP Morgan, Piper Sandler, and Evercore ISI all cutting their ratings. Moffett-Nathanson says combining Roku and Tubi could make Fox one of the largest streaming players in the U.S. Interesting thoughts there, but the stock down again today, 0.75%. Annie?
Elsewhere in the world of entertainment, the World Cup, which, by the way, has been pretty great if you've been watching the matches. It's expected to drive as much as $10 billion in betting volume, according to Bernstein analysts. The massive scale of betting on display yesterday was clear when a trader lost $1 million on a polymarket bet for tournament favorite Spain to win against Cabo Verde. The unevenly ranked teams tied. I think Cabo Verde is 61 places below Spain. Joining us now is David Katz, analyst at Jefferies. He's at the Jefferies Annual Consumer Conference in Nantucket, and we, David, are needlessly jealous of you because you're in Nantucket right now. Well, we're in New York, but putting that aside, I mean, look, these stories of losing $1 million on a single bet over the World Cup, are these things good or are they bad for the platform? Because it seems like we're entering this phase from like the hobbyist to mass adoption to now maybe scrutiny.
Thank you for having me on. I appreciate the opportunity to join from the Jefferies Consumer Conference here in Nantucket. Been going on for many years. Bigger, better than it's ever been, and of course, when the weather is this nice, it is truly hard to beat. Look, I think the sports betting environment and therefore the stocks have become increasingly complex based on what you've talked about. Going into the World Cup, there's no question that the volumes are going to be up considerably, right? What makes it more complicated is what the economic opportunity will ultimately be for the companies, right? So, for example, last night, DraftKings posted on X that on Sunday, they generated $4 billion of consumer volume. That was 3 times the volume magnitude of the entire month of May, right? And so there's no argument from anyone that the volumes on World Cup are going to be higher. The questions are, number one, in the core sports betting business, the hold percentage. How customer-friendly will those outcomes ultimately be? And that has been an earnings volatility driver. It's made the stocks hard to own. At the same time, the second point, prediction markets, which you mentioned in your introduction, are a new business, right? And, you know, DraftKings, FanDuel are in it, but yes, Call Street Polymarket, they're in it too. And I think the street has been asking for a while now, what is the ultimate economic opportunity? What is the earnings power from that business? And the candid answer is, we're not sure yet.
So we've seen, I mean, you mentioned the stocks, I guess, flutter is what I'm looking at. The peak to trough drawdown over the last year has been like 70%. Is it the prediction market competition that is the main driver for this sell-off?
It is, I wouldn't call it the prediction market competition. I would call it the prediction market and all of the uncertainty that it embodies, right? Because the CFTC has indicated that it's legal. It is regulated by the CFTC, but it's untaxed, right? And does not have the same regulatory infrastructure that we have been used to in regulated gaming for the past 25 years in the United States. And so, you know, pick any state. New York is fine. You have a competition of prediction markets, and that's untaxed, with a core gaming, sports betting business that is taxed at a relatively high rate. How are they going to compete with each other, right? And how is New York going to protect the tax revenue that it's been generating from sports betting, right? And so I think there's inherent conflict, right? And we could be 2 years, 3 years down the road where the prediction markets turns into another business entirely. This is my opinion. that, it could be regulated, it could be patently illegal, it could be taxed, it could be a whole range of things. And so, we approve of DraftKings spending the limited $200 or $300 million and using its scale to launch a prediction markets business. But we want to make sure that its earnings power 3, 4, 5 years down the road is really going to be compelling before they spend more.
We'll still, we're getting a lot of volume on these platforms thanks to the World Cup. David, what else are you looking at? What else might be a beneficiary of your universe of stocks you coverage of the World Cup this year?
The easiest stock to own, and frankly the most productive within this universe, has been RSI, Rush Street Interactive. It's been the best performing stock coverage-wide. It's up 124% last 12 months. It was an outperformer in 24, outperformer through this period of time. Now, they have a Latin American exposure in Colombia, Peru, Mexico, where they can compete and compete effectively. It's 24% of their total revenues now, and at higher profitability than their U.S. business. They're extraordinarily disciplined. The management's up here talking with investors this week on how they're going to continue to grow their top line and grow their bottom line along the way. It's been a much, much more peaceful stock to own and cover.
David, great to get some time with you. Really appreciate you joining us. David Katz there of Jefferies, coming to us from the Jefferies Annual Consumer Conference in Nantucket, talking about the effect of the World Cup on these companies, these gaming companies, and then the businesses other than exactly what you would expect from the World Cup, more betting. Coming up, SpaceX passes Amazon to become the world's 5th most valuable company. This is Bloomberg Open Interest.
Business and financial news whenever and wherever it happens. I'm Michael McKee at Mount Everest, and this is Bloomberg.
We're at the epicenter of a global realignment on a scale not seen for decades. At the intersection between markets, economics, and geopolitics, a forum for sophisticated conversation. This is Bloomberg Surveillance.
Welcome to Bloomberg This Weekend. I'm David Gura.
I'm Lisa Mateo.
And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
Bringing you up to the minute geopolitical news whenever and wherever it happens. I'm Anne-Marie Hodern in Beijing, China, and this is Bloomberg.
This is Bloomberg Open Interest. I'm Matt Miller. Check on stocks as we head into the next hour here. S&P 500 gaining 0.1%. The NASDAQ has now flipped from losses to gains. It's very little changed, but at least it's green there. You can see the Russell and the Dow doing much better. Look at the 10-year yield. Continues to come down, although yesterday when we spoke it was right here, but it had gone back up and come down. 445 the level on the 10-year Treasury. Brent crude coming down 3% to 80.71, and at one point today it had crossed below $80 a barrel. So that's a tailwind for stocks. This is a headwind. Nvidia falling 1.25%, a headwind for obviously Nvidia, but also the indexes on which it's listed. And if that doesn't turn around, you're unlikely to see massive gains. Yum Brands is up 2%. 2% as it sells Pizza Hut. Rackspace up 14%, so a big gain for Rackspace and a loss for AMD at 1%, another chip maker down. Robinhood, as it plans to cut 10% of its workforce, still gaining, but only 0.4%, and SpaceX another 13% the gain there. So SpaceX now worth more than $2.7 trillion, Danny, and that's more than Amazon.
Yeah, it's a rally that goes on for a third day after rallying 19% in 2 consecutive sessions. Let's discuss with Bloomberg Intelligence Head of Global Tech Research, Mandeep Singh. Mandeep, are we seeing anything like true price discovery in SpaceX right now? When you look at that, are you like, oh yeah, this is a market that's really figuring out its worth, or is it just, okay, there's some mechanical buying happening from indexes right now?
I mean, we knew it going into the IPO with the thin float they have. You know, there will be that supply-demand mismatch when it comes to the IPO, and that's precisely what we are seeing right now. The momentum is up. I mean, they haven't even reported a quarter, and people have bid up the stock 40%. So, you know, surpassing Amazon, which is a $150 billion AWS business, compared to SpaceX, which just signed 2 compute deals worth $25 billion. I mean, it just goes to show, like, you can't discuss rationality here. It's more about, you know, future and what people perceive of SpaceX. Yeah.
When they do report a quarter,
yeah,
what kind of numbers would make you more bullish? You know, what would they have to do to say, I think this stock is worth even more than $2.7 trillion?
I mean, for me, the SpaceX story is really about orbital compute and their ability to do things differently compared to, you know, the cloud companies that are running terrestrial data centers and, you know, have created $150 billion businesses by setting up terrestrial data centers. So,
I mean, it'll certainly be different, right? Orbital compute has to be far smaller. They can't ship 500 acres of satellites up there.
They
right?
can't, but...
And also, how do you repair? You got to send a space shuttle every time you need to get somebody to reconnect a wire?
So the reusability is a huge deal, and that's why they talked extensively about Starship, which can send up to 100 tons of payloads.
Not yet, right?
Not yet.
So far, what have they got so far in dummy payload? Like 30 tons, maybe?
Yeah, and they have done that multiple times with Falcon. So that's the promise. If they can deliver on that promise and show the path, I mean, we know companies get bid up in the market just because of the growth prospects. And that's what I think everyone is anticipating, the ones who are buying this stock at this price.
You're not just buying space technology, you're buying AI too with XAI, and they announced today that they're buying Cursor. I think they had 30 days to decide whether they wanted to buy it, and they're like, nope, we've made our decision now. What do you make of the fact of the timing and the fact that they pulled the trigger to buy Cursor?
Yeah, when your stock is trading at 50 times the ARR, buying a company at 15 times the ARR make a ton of sense with an all-stock deal. So the timing is perfect in terms of their IPO going well and then closing the deal in the first 30 days. And look, Cursor is a great asset in terms of the coding agent market. So the promise over there is their own model, Grok, will improve because of the Cursor acquisition. And that could happen fairly quickly in a 3 to 6 month time frame. So in addition to the $4 billion run rate that Cursor has, which will show up in the XAI, revenue numbers. It's really about the training side of, XAI that could improve because of that Cursor acquisition.
Mandeep, great having you on the program. I say when I have to push back a little on SpaceX, right? Because my job, I feel like as a journalist, is to be skeptical. But when I make derogatory comments about New Jersey, I'm only kidding.
We gotta move on.
I was just joking.
Of course.
And Mandeep, I mean, you're a happy New Jersey resident, so we love having you on here. Mandeep Singh of Bloomberg Intelligence. Coming up in the next hour, Cameron Dawson of New Edge Wealth joins us on earnings expectations. Don't miss it.
Court was hurt by the perception that it was a political decision?
The court's always hurt, it seems to me, if we look political. One of my concerns, my present-day concerns, is there's too much partisanship. It's true historically that most presidents have appointed justices to the Supreme Court who are members of their own party. The partisanship should not be an overriding factor. What you look at is temperament, learning, background, reputation, whether or not you have those qualities of independence and caution that make for a good judge.
Increasingly, you see dissenting opinions in the Supreme Court aren't quite as civil as maybe you might prefer. And is that of concern to you?
Yes, it's of great concern to me that our civil discourse, our civic discourse, is not civil enough. Aristotle said that a democracy depends on an open debate where you respect the dignity of those with whom you disagree. He said democracies only live if they are sustained over a period of time by a thoughtful, rational discourse, a discourse in which you respect the dignity of those with whom you disagree.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
Iran's top diplomat insists that the tentative deal to end the war with the United States would require Israel to withdraw from Lebanon, a condition Israel has rejected. As we await details on the plan itself, ABC's Rachel Scott has more on the back and forth.
Iran's foreign minister saying ending the war cannot happen unless Israeli forces leave Lebanon. The president making it clear he's not happy with Israel.
They should have been able to do the job faster. It just goes on forever. And when that happens, it throws a negative light on the big deal, and that's the deal with Iran.
Senior administration officials say the deal broadly reopens the Strait of Hormuz and lifts the U.S. blockade on Iranian ports.
The president at the G7 summit in the French Alps. Today he will meet with Ukrainian President Zelensky. He's already done that and says Friday he'll meet with Russia's Vladimir Putin. Back in Washington, the FBI says it foiled a plot to attack the UFC fight at the White House Sunday night using drones and explosives.
FBI Director Kash Patel, in a statement released to ABC News, said, on June 10th, FBI and our law enforcement partners became aware of a potential threat to the UFC 250 event in Washington, D.C., involving individuals outside the national capital region. The investigation so far involves individuals in Ohio, Missouri, California, and Nebraska.
ABC's Pierre Thomas. More signs of a slumping housing market. ABC's Jim Ryan has the numbers on permits for building homes.
After a steep decline in April, the consensus was for at least a slight rebound in housing starts in May. Instead, the figure fell by another 15% to 1.17 million units. Looking ahead, housing starts might not rise in June either. 10,000 fewer building permits were issued last month compared to the month before.
Economists say even though there's a tentative deal to end the Iran war, prices for gas, food, clothing, and plane tickets could still be a while coming down. You're listening to ABC News. It'll be some time before we know the cause of Monday's B-52 crash at Edwards Air Force Base in California that left 8 people dead.
Officials say the B-52 Stratofortress was supporting a test for a radar modernization program. Officials say those on board were a mixed crew of military and civilians supporting the test mission. Boeing confirms 2 of those on board were their employees, adding, quote, "We are in contact with their families and are offering support."
ABC's Trevor Alt. A couple who gave birth to a daughter who wasn't biologically theirs will be keeping the little girl. Tiffany Score and Stephen Mills reached an agreement with the 6-month-old girl's biological parents. The couple are suing the IVF clinic in Orlando where the embryo was implanted by mistake. Why do New Yorkers love their Knicks?
That grit that they got, that fight back. It's been many a times that we playing and we think that we're better than someone, or they think that they're better than us, and we come back and we get that win.
Yeah, you might need that grit if you're planning to attend Thursday's ticker tape parade for the NBA champs. They're currently shredding 2,500 pounds of office paper that'll be used as confetti, and the mayor says it could be the biggest parade New York City has ever seen. Nothing says Independence Day like fast food. McDonald's is bringing back its fried apple pies in honor of America's 250th birthday. Burger King has a firecracker cookie pie for sale. Sonic offering a red, white, and blue slushie, and Hardee's has an iced biscuit with red and blue sprinkles. This is ABC News.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney.
How do you think the Fed is looking at tariffs, the uncertainty of tariffs?
Let's take a look at the sectors and how they performed.
A lot of investors getting whipsawed every day by news events.
Breaking market headlines and corporate news from across the globe.
Could we see a market disruption, a market event?
Are people just too exuberant out there?
You see some so-called low-quality stocks driving this short-term rally.
Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio, Originals and the Bloomberg Business app.
Good Tuesday morning from the Bloomberg Interactive Broker Studio in New York City. To our worldwide audience, we're streaming live on YouTube. We're streaming live at Bloomberg.com as well. It's Scarlett Fu and Paul Sweeney, the Bloomberg Intelligence program. Stocks on the move higher here today. SpaceX up another 17%. It's bigger now than Microsoft in terms of market cap. About that. Tyler Kendall, Bloomberg Washington correspondent. She is in France with the president of the G7. We've got the latest reporting there. Ashna Shah, Bloomberg Municipal Finance reporter on World Cup impact on public transportation in the New York City, New Jersey area. I just got my text from New Jersey Transit saying, if you want to take New Jersey Transit after 10:30 today, good luck from Penn Station.
Have you made your plans ready?
Yeah, I'm going to go to Hoboken, and then I'll go from there. But it's just like, why do we letting FIFA tell us what we can do? It's just so infuriating.
I mean, we'll get into all of that, but it looks like it's a mess.
Oh, it's a mess. Dafina Maluka, CIO and co-founder of Sagewood Asset Management, get her thoughts on these markets. Gautam Mukunda, lecturer at Yale School of Management and a Bloomberg Opinion contributor. He's got a piece out saying trillionaires and republics will be a toxic mix. So we'll talk about that coming up. So we got a lot going on here. Let's kick it all off. Alexis Christophers with a Bloomberg Business Flash. Alexis.
All right, thanks a lot, Paul. And this Bloomberg Business Flash is brought to you by IBKR. For the past 3 years, Interactive Brokers' individual clients averaged 24.3% annually, beating the S&P 500. Lower costs and access to 170-plus global markets matter. Visit ibkr.com/performance. Stocks are mostly higher. The Dow, the star of the day, in record territory, up more than 300 points at 51,973. The S&P 500 is flat, and the NASDAQ Composite up about 45 points. All of this 1 day ahead of the Federal Reserve's interest rate decision under new chair Kevin Warsh. And of course, as traders wait for the U.S. to sign a peace deal with Iran Friday that promises to reopen the Strait of Hormuz. That has oil prices continuing to slide. And briefly today, we had Brent below $80 a barrel. Oil prices now at a 3-month low. Brent at $80.62 a barrel, down 3%. West Texas Intermediate down nearly 4% at $77.74 a barrel. And as you can imagine, energy-related stocks are lower. Occidental Petroleum, Halliburton, and Chevron coming under pressure here this morning. But shares of SpaceX continuing to gain altitude, now up 13%, extending gains since its record initial public offering, and now putting SpaceX on track to overtake Amazon as the 5th largest publicly traded company in the world. Yum Brands brands in the news today. The company is selling its Pizza Hut division for $2.7 billion to focus on its KFC and Taco Bell chains. The private equity firm Long Range Capital will buy Pizza Hut, excluding China, for $1.5 billion. Yum China Holdings will buy the rest for $1.2 billion. And that is your Bloomberg Business Flash. Paul and Scarlett.
You know, there's a new Taco Bell, Lexington, between 57 and 58.
Oh, really?
It's outstanding.
Oh, you've been?
Oh, yeah. You're darn right. I'm a
You
big
know what?
fan.
Separate story for another time, but they're coming out with new menu items at KFC, and they're going to redesign a bunch of stores.
Okay. All
So
right.
there you go.
A lot going on there.
Is Colonel Sanders still like,
So
the
it's funny,
ambassador?
even with all of the, revamping, the bucket is still there, and Colonel Sanders not going anywhere.
Okay, very good.
Classic.
Yep. All right, Alexis, thank you so much. Appreciate that. Scarlett Fu and Paul Sweeney are live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube as well. We got some stocks moving a little bit higher here today. Let's take a look at some of the stocks on the move today. We can do that with Bloomberg's Judy LaGrue. Judy, what are you looking at?
Good morning, Paul. First and foremost, I'm looking at Dave & Buster's, ticker PLAY. The stock is down as much as 16%. It's its biggest drop since September. And this is coming as the company is reporting comparable sales for the first quarter that missed Wall Street estimates. Analysts at Benchmark Research changed their rating from buy to hold. An analyst said that there's not enough evidence that exists to support the company's confidence that these sales will turn positive for the rest of the year. Other analysts shared this negativity amid really just a consumer weakness and the headwinds that come as a result of that.
Never been to a Dave & Buster's.
Well, it's been a while since you had young kids.
Yes.
So there you go.
I mean, still good for adults. I mean, definitely.
The adults who are there on their own, I kind of question.
This is true.
That's
This is true.
a separate story.
It's got to be a group thing. You cannot just be wandering.
Yeah, I got to wonder. All right, let's move on to some tech names.
Of course. Second is Western Digital, ticker WDC. The stock is up by as much as 12% in trading today. It's currently trading at an all-time high. There are a number of reasons for this activity. First and foremost, Western Digital is cleaning up its balance sheet by retiring convertible debt. And analysts at Evercore really are noticing this deleveraging, and they're saying that this gives the company more flexibility in buying back stock and paying dividends while simultaneously benefiting from AI and cloud storage demand. Morgan Stanley also raised its price target on the company to $650 from $488. And this is implying a 15% increase from the last closing price. And really for Morgan Stanley analysts, the focus is that the stock is very much undervalued by investors, that there's a growing shortage of hard disk drives, and that's set to see a really big price increase and an increase in demand in the coming years. So definitely confidence there.
SpaceX, what's the latest there?
Sure. SpaceX is, we're seeing the stock is up by as much as 17% in intraday trading. That is ticker SPX. And also, Bloomberg just reported that SpaceX has formally agreed to take over Cursor, an AI coding startup, at $60 billion. So a lot of news coming out about SpaceX, and, again, very much an interesting stock to keep an eye on for us.
Hope Cursor got the stock at $135 a share.
Yeah?
As opposed to where we are today.
All right.
Nice trade. I don't know.
We'll see. All right. Thank you so much, Judy LaGrue. Judy is our Bloomberg Equities reporter. And for more conversations like this, be sure to subscribe to our Stock Movers Reports. Listen for 5-minute audio reports on the biggest winners and losers in the stock market. You can subscribe to Stock Movers on Apple Podcasts, Spotify, or anywhere you listen. All right. We have to talk about what's going on with this peace deal, interim peace deal or peace deal, however you want to call it. We don't have any published text for it, but it's coming and it's definitely moving markets.
Yes.
I mean, we see oil prices, again, extending their declines. WTI now trading at $77 a barrel. Tyler Kendall is traveling with the president. She joins us remotely from France in a town that I can't pronounce.
Evian.
Oh,
I'm
like the
just
water.
like the water.
Okay. Evian
Nah, don't even go there.
Okay. All right. Maybe Tyler can help us out there.
Is really bad.
Okay, we're just going to avoid bad French right now. Tyler, tell us what we need to know about this signing ceremony that is supposed to take place on Friday. Is that still on schedule?
Well, Scarlett, at this point, that's what we're hearing from the administration. They seem to be really pushing this date. Officials have told us that they're just trying to work out those final technical details to get this memorandum of understanding actually signed. But as you pointed out, we haven't seen the finalized text from either of the sides. President Trump earlier today said that he wants to wait for a more formal setting to release the text, presumably in reference to this Friday date and a signing likely in Switzerland. Still waiting on confirmation, though, there, because even as we get the main contours of this deal, we know it's going to extend the ceasefire by 60 days. It's going to prioritize reopening the Strait of Hormuz, and the U.S. would presumably lift its naval blockade. There are still questions from G7 allies here at the summit, even about that first phase. Before we even get into the talks about curbs on Iran's nuclear program, I actually just caught up with a key top official from France's foreign ministry office, who told me that allies need to see this finalized text before they could commit military assets, for example, to help secure transit through the Strait of Hormuz, because we've heard from U.S. officials even that strait still has mines in it, and that poses risks for our allies that are trying to seek more clarity on both the timeline the U.S. is really aiming for here and exactly how this deal is going to be implemented.
Tyler, there's been some conflicting reporting and some questions about any financial aspects of a peace deal, whether it would be unfrozen Iranian assets or payments by the U.S. for damages. What do we know?
So the one thing that's been consistent is that the U.S. says that any sort of financial relief is going to be conditioned on whether or not Iran upholds its end of the deal, whether that means in response to reopening the strait or in response to curbs on its nuclear program at this point also remains unclear. The administration has previously floated that this could be through a few different options. Last week, a senior administration official told us reporters ahead of us flying here that sanctions relief as well as an unfreezing of assets would be on the table. Then we got news that potentially we could see this $300 billion fund that Iran could use for payment in order to help rebuild the country. I also asked this French official about this, where this money would be coming from. At this point, that is also still unclear, though it doesn't appear evident that our European allies would be contributing to it, or the conversation about that hasn't quite started just yet. He told me that any negotiations regarding what this would really look like has to take place once the Strait of Hormuz reopens. That is the top priority for all the sides at this point.
So let's go there. The top priority, which is to reopen the Strait of Hormuz. The idea here, the U.S. is pressing for free transit, free passage. However, we keep hearing about not necessarily tolls, but some kind of fee that Iran will impose. If not immediately, then after this initial 60-day period.
It feels like a rebranded toll, perhaps. I think it's fair to say, Scarlett, we heard from Iranian state media yesterday saying, yes, the Strait of Hormuz will be toll-free for the first 60 days, which would align with the ceasefire extension. But then after that, we could see Iran move to impose what they are saying are fees related to navigational, insurance, and environmental services. We also heard that this would be done in tangent with Oman. We did have some reporting earlier that the U.S. has been frustrated with Oman amid these ongoing negotiations, even as we have seen the U.S. really tout other regional partners that have been taking more of a forward leading role in this, including Qatar and the UAE, as President Trump met with officials from both of those countries earlier today on the sidelines here at the G7. But I think it's safe to say that any sort of payment would not be acceptable to the U.S., definitely not to France. I also asked this French official about this too. He said that cannot be included in any sort of deal. So questions about the longer-term security of the strait still linger, especially here over the summit. But that is going to come after perhaps we get the initial immediate reopening that we know that both sides are trying to race towards. But issues still remain, including those mines.
Tyler, thanks so much. Appreciate that. As always, Tyler Kendall, Bloomberg Washington correspondent. She is with the president at the G7 meetings in France. And fantastic backdrops. 2 days in a row, as Alexis was calling. Yesterday is like on Lake Geneva, and today she's got kind of the low Alps.
It's good to be Tyler right now.
Yeah, it is. I mean, she's
even with the G7 branding right behind her too.
Yeah,
so
it still works. It still works. That's a beautiful part of the world. I love traveling around there.
Evian Le Ben,
something like that.
Alexis, you say it with conviction, and we'll just believe it.
Evian Les Bains. Oh boy, that was ugly.
Exactly. Spanish, maybe I can handle, but French, I don't even try anymore. All right, look at the markets. The S&P's unched on the day. That's unchanged for Lisa Bromwich. She hates that term. The Dow's up 390 points at 0.75%, and the Nasdaq's also unched. So there you go. But we got SpaceX trading higher, up by about 11%. So people continue to buy that. Key thing here: Brent crude oil down $3, below $78 a barrel. Brent, it's at $80. It was 79 print earlier today. How about that? This is Bloomberg.
headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
Coming up on 1022 on Wall Street, I'm Alexis Christoforous from the Bloomberg Interactive Broker Studio. The Dow Jones Industrial Average is on track for its 17th record close so far this year, one day before the Federal Reserve makes its interest rate decision under new Fed Chair Kevin Warsh. Right now, the Dow is up 362 points at 52,031. 1. Broader market, though, is lower with the S&P 500 down 6 and the NASDAQ composite easing back about 56 points. Oil is at a 3-month low on hopes the Strait of Hormuz will reopen when the U.S. and Iran sign their peace deal on Friday. Brent crude at $80.49 a barrel. It did briefly dip below $80 a barrel earlier today. West Texas Intermediate crude now at $77.56 a barrel. In stock news, SpaceX shares up another 10%, putting Elon Musk's rocket company on track to overtake Amazon as the 5th largest publicly traded company in the world just 3 days after its blockbuster debut. We've got shares of Robinhood gaining about 2% after saying it's cutting its workforce by 10%, or about 300 jobs. Robinhood is also closing a small number of open roles at the firm. And no fun and games over at Dave & Buster's today. That stock is down now about 2%. The arcade restaurant operator reported a lower profit and falling revenue in the first quarter. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Alexis Christoforous. That's a Bloomberg Business Flash. Paul and Scarlett.
All right, Scarlett Fu and Paul Sweeney live here in our Bloomberg Interactive Broker studio, streaming live on YouTube as well. So I got my little text from New Jersey Transit saying, you know, from 10:30 for the next 4 hours after that, if you don't have a ticket to the World Cup, you're not going to New Jersey.
The other thing, of course, was that they wanted you to work from home first, right?
I mean,
that's not possible, but
I can't tell you how stupid this whole thing is and how badly we, the U.S., is doing as it relates to our relationship with FIFA. I would have told FIFA, you want to use our country? This is how we're going to do it. Ashna Shah joins us here, municipal finance reporter for Bloomberg News. Ashna, I'm blaming it on you here. What's going on here with New Jersey Transit? I mean, I know there's a lot of fans, and you got to get them to and from MetLife Stadium. I'm not going to go where they want us to go. MetLife Stadium over in the swamps of Jersey. How's that working out?
Yeah, I mean, that's 40,000 fans that are going to be going over to MetLife. And on top of that, you have the commuters as well that need to go into work. And like you said, NJ Transit told people who, if you can work from home, you should work from home. And that might honestly be the best case scenario because you have trains going into Jersey from Penn Station shut down only for World Cup ticket holders 4 hours before. The trains will run fine during the match, but the match today is at 3 p.m. So 4 hours before that, you know, you should try and get home if you can. So you have that as an option. But I mean, NJ Transit is still proving to be the best option. You have a $98 train ticket that takes you to the closest point near MetLife Stadium. You can't do that with a car. You can't do that with a private jet or a helicopter. You'd have to go to American Dream Mall and park there for that. So
can you drive if you wanted to?
Use for American Dream Mall.
Yes, I guess so. That's true because that mall, well, it hasn't quite delivered on what a lot of people wanted. You mentioned parking. Can you drive if you wanted to?
You can drive if you wanted to if you have a parking pass at American Dream Mall. So those parking passes are
but not at MetLife.
Not at MetLife. There's no parking at MetLife. That MetLife parking lot is only going to be used for the New York, New Jersey shuttles, and parking is at American Dream Mall. So if you have a $250 to $300 parking pass, that works out. But that parking pass is already completely sold out for the final game. So there may still be a few ones, and they're reselling for thousands of dollars on the resale markets.
I was just going to say the secondary market on that must be nuts. Okay, so my son has been looking at social media because he, like everyone else, is addicted to it. And he keeps talking about how there are a bunch of fans who say they're going to just walk to MetLife Stadium. They're going to walk alongside the freeways and get there themselves. Yeah. What are we hearing about that?
So the police departments in both New York and New Jersey and the host committees have said that is absolutely illegal. Please do not walk to the MetLife Stadium. Your best options are definitely taking a car, taking an Uber, or, you know, taking that lovely NJ Transit ride over to MetLife Stadium.
I asked a colleague of mine who worked here if I could borrow his helicopter today. I've yet to hear back. I'll let you know how that works out.
Hasn't responded.
So who's footing the bill for this New Jersey? Is it the customers? Because I can get to a Giants or a Jets game for like $12. So $98, does that mean, I don't know, who's paying for all this?
I mean, that $98 ticket is coming straight from you. And that used to be about $105, but after a lot of backlash from, you know, customers and fangoers, that, you know, fare has come down to $98. And there's been a lot of back and forth on who should be footing this bill, but ultimately that is faring out to be the cheapest way to get to MetLife Stadium, because even if you take an Uber, that's going to have massive surcharge and Lyft as well.
How did Saturday go, by the way? Because that was the first World Cup game in the New York, New Jersey area, and kind of a test run for what would look like on a regular weekday.
Yeah, so I talked to a couple people that did go to the match on Saturday, and it went pretty smoothly on the way there. It seems like Penn Station has a lot of signage everywhere. I think on the way back, I was hearing that there is a little bit less direction on where to go, but you kind of just follow the crowd. But it seems like it went pretty smoothly. Today will be the real test, because the game is going to end when work lets out, and so we'll see how that clashes with commuters trying to get back home and also, fans trying to get back to the city.
Everyone wants to go to Jersey. I'm telling you.
It's the new hotspot.
It's the new hotspot.
Wait, Paul, wasn't there some fire recently on the New Jersey Transit tracks, or
yes,
I don't know?
outside of Penn Station on the tracks. There's something all the time, but we deal with it. We're okay. And we're getting a new tunnel put in. We got a new bridge, so things are looking up.
Not in time for the final, though.
No. So, anywho, we'll see how that plays out. Ashna, thanks so much for joining us. Ashna Shah, she's a municipal finance reporter for Bloomberg News, joining us live here in our Bloomberg Interactive Broker Studio. Red and green on the screen here today. The S&P's down 12 points. The Dow's up 300. The NASDAQ is off 80. I'm not sure what we're doing here. I know people are buying this SpaceX stuff here 3 days after the IPO, so that's all well and good there. Defina Maluki joins us. She's CIO and co-founder of Sagewood Asset Management. Defina, what's the conversation you're having with your clients here today? We've got equity markets, boy, setting all-time highs, it seemed, every day. We had really strong earnings, which is the good news, but, there's inflation concerns out there. So how are you talking to your clients these days?
Yeah, hey, it's great to be here, and thanks for having me. It's fascinating. I've been having 2 to 3 meetings a week for the past 2 months just on SpaceX, and I'm actually currently on the road discussing this very topic with clients today. As you know, there's just been a significant amount of wealth that's been created in the U.S. Over $35 trillion for the top 10% of the population, going back to the pandemic. And a lot of that wealth is actually held in private companies like SpaceX, like Anthropic, and so on and so forth. And these companies are actually going public today. And so, clients have this opportunity to be really thoughtful about how they effectively diversify out of these concentrated, pockets of wealth into the market in a tax-neutral way.
Now that the U.S. and Iran have come to some kind of agreement, at least in principle, no deal has been signed just yet. That's supposed to be on Friday once we get the text. There's a lot more optimism underpinning the gains that we've already seen. In fact, Wells Fargo has boosted its S&P 500 outlook to 7,950 from 7,300, talking about easing macroeconomic concerns after this deal. How are you thinking about how much easier this makes life for policymakers?
It's certainly easy for policymakers, but, a lot of our clients are actually fretting just about, things like concentration risk and so on and so forth. For most of them, and this is what really matters to the folks I'm speaking to, a large portion of their net worth is actually in these, AI companies and so on and so forth. And so how do they actually transition out of these portfolios, again, into something that's a lot more diversified? One of the things we're advocating is, a two-pronged approach. You have option strategies that effectively allow them to define future outcomes on these concentrated positions. And so from concentration risk perspective, you can effectively hedge the portfolio using options. But at the same time, as folks are actually exiting these positions, they've got massive embedded capital gains, potential tax liabilities there. And so we're also advocating a tax-aware long-short strategy that generates tax losses, allowing clients to effectively exit these positions by offsetting their capital gains tax liabilities against these losses that are created by the strategies. And so a couple of important tools in the toolkit for clients that are available today.
So, Defina, we've seen the development over the last, 10 years, it seems like, maybe more, where there are some opportunities for early investors to monetize some of their stake, sell some of their shares in some side markets and other vehicles here. Is that still a thing for these big private companies?
Yeah, it's certainly been an opportunity that's available today that maybe was less available in 2000. I'll say this about, the .com era. A lot of folks kind of bought into, names like Global Crossing, if you remember that, and rode them all the way up and then again all the way down. And today's, investors are a lot more astute, right? They're kind of, they're very long, these concentrated names. Some of the companies, if you look at Anthropic, just, phenomenal wealth creation over the past 2 or 3 years. And a lot of clients are actually taking these opportunities within these private markets to transition out of these stocks. But to the extent that folks don't necessarily want to do that, you can see effectively the cost of missing out on a popular IPO like SpaceX. Now that the names are public, I think SpaceX options listed today or tomorrow. Clients actually have the opportunity to start using option strategies to strategically and thoughtfully exit them, right? If you exit a name in a private market, you're effectively creating almost immediately a capital gains tax liability for yourself. If you exit the name in a public market, you have tools available to you to effectively exit these names in a tax neutral way, allowing you to redeploy that capital at a dollar for dollar, as opposed to cents on the dollar, right? So think about compounding within your IRA versus compounding within your regular account, right? Every time you have a realization event, you get to deploy less capital in the market because of taxes.
Right. Before we let you go, Defina, talk a little bit about what other sectors, very quickly here, look attractive once you decide not to put more double down on tech. We do see technology leading the losses today in the markets, and I know it's one day, but it's a good reminder that it's time to look. It can be time to look elsewhere.
Yeah, very simple diversification strategies are, clients are running with us. We run, again, these long-short tax-aware strategies. And some of the implementations we're seeing are, very basic sort of equal-weighted type portfolios within the S&P, right? To the extent that you think valuations tend to be fuller in one section of the market, but the market rally is actually broadening out because we are in a relatively strong, economy. Then, an equal weighted portfolio with kind of long, short tax extensions makes a lot of sense for our clients.
Defina, thank you so much for joining us. Really appreciate it. Defina Maluki, CIO and co-founder of Sagewood Asset Management, talking about some of the alternative investments and strategies, tax strategies and options and strategies around some of these large positions that a lot of people have with these big private companies. SpaceX, higher again today. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Alexis Christoforous. Stocks are mixed, and oil is at a 3-month low in anticipation of the U.S. signing a peace deal Friday with Iran that promises to open the Strait of Hormuz. The S&P 500 is down 8 points, but the Dow Jones Industrial Average is climbing 363 points in record territory now at 52,037. NASDAQ Composite is slipping about 72 points right now. We've got Brent crude down nearly 4% at $80 a barrel. Briefly earlier, it dipped below $80 a barrel. WTI crude down 4.5% at $77 a barrel. We've got shares of SpaceX rallying 9%, extending gains since its record IPO. The market value of Elon Musk's rocket and AI company is nearly $3 trillion. This is roughly $300 billion higher than Amazon's and about $20 billion more than Microsoft's. Shares of Huntsman Corporation plunging 18%. The company announced an all-stock merger of equals with its chemical peer Olin. Shares of Olin down 6.5%. And Netflix lost out, we know, on Warner Brothers Discovery to Paramount Skydance. And now Semaphore reports the streaming giant lost out to Fox in its pursuit of Roku. Netflix is also reportedly one of a number of companies interested in buying Lionsgate. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Alexis Christoforous. That's a Bloomberg Business Flash. Paul and Scarlett.
All right, Alexis, thank you so much. Appreciate that. Scarlett Fu and Paul Sweeney live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube as well. One of my favorite functions on the Bloomberg terminal is Rich Go, R-I-C-H. It's the best accounting for the wealth of the wealthiest folks out there. The methodology is outstanding. The data is outstanding. Elon Musk is number one. 1.3, no, let's go exact here. $1.273 trillion. Number one. Number two is Larry Page at $313 billion. Just to give you a
he
order
just
of
so
magnitude.
outpaces everyone else. It's laughable.
Year to date, he's up $650 billion. That's representing the public markup and value of SpaceX here. So the question is, a trillionaire. I mean, what are we doing here? What's the impact here? Gautam Mukunda, he thinks about this stuff. He's a lecturer at the Yale School of Management, and he's a Bloomberg opinion contributor. Gautam, when you think Elon, you think about that wealth, and again, number two is $300 billion, and he's at $1.3 trillion. Put that in perspective. How do you think about that?
I mean, just imagine being the second wealthiest man in the world and thinking, "Wow, I'm $1 trillion behind." You got to feel for him, really. It seems awful.
So, what does it mean for policy? What does it mean for influence? I don't know. The numbers here are getting just extraordinary.
Yeah, and I think we have to layer in that the big difference between the gargantuan wealth of today's sort of wealthiest people and the equivalent 100 years ago in the Gilded Age, when you had people with about the same level of GDP, is back then there were profound normative constraints about you could not be seen to use your wealth to just sort of like drown the political system. However much political influence they had, there were limitations about what you could do, and you were sort of expected to give money to charity and things like that. All of those things have apparently fallen by the wayside. So the easiest way to think about the level of Elon Musk's political power, even apart from his work with the administration, is in Ohio, the most expensive Senate race of all time, the two campaigns combined spent about $115 million. So that's a lot of money. So that is about less than 1% of a day-to-day random fluctuation in Elon Musk's net worth. So he can spend more money than two Senate campaigns combined, the most powerful, most expensive Senate campaign in history, about as casually as you or I buy a cup of coffee or a soda. If you are a politician and you're worried, you're thinking about what political stances you should take or how you should shape government action, if that's not top of your mind, you should get out of the business.
Okay, well, you've given us a lot to think about here. And one thing that I did like about your column is that you point out these mega billionaires. And I think according to Rich Go, there's maybe like 20 odd people who are worth at least $100 billion. So let's just call them the mega billionaires and one trillionaire. They run companies, they own companies, and those companies employ a lot of people. And a lot of those people reach out to you for advice. And as you put it, the conversation always goes like this. These are people who have accomplished a lot of things, and they're very successful at what they do, but right now they're struggling in this company that they work for. Why is that, and what do you tell them?
Because when you operate at this stratosphere of wealth and power and influence, we should stop thinking about you like a private citizen. You're a king and you're surrounded by a court. And there are people around you whose only desire in life, whose only goal in life is to please you. That's being a courtier. So, I talk to people who, they've been Army Special Forces or very senior executives, and they go to these companies and they're like, nothing makes sense. I have been trained to succeed, but I don't even know what success means. And I said, that's right, because you've always been trained success means winning a war or making a profit. Success means keeping the king happy. That's what it means. And that's a completely different way of looking at the world. And so now you have these people, they have the power and resources of a nation state. In fact, most of the nation states in the world don't have the resources of someone like Elon Musk. And it changes everything.
I was thinking, Gotham, just when you were speaking there, well, he's got to answer to his shareholders. And then I'm like, no, he doesn't, because he's got the super voting stock. So there goes that argument.
Nominally, he might, but in reality, he doesn't.
So
yeah, that's right. And in a real sense, also, like, there's this wonderful term, post-economic, right? If Elon Musk fails to answer his shareholders and they sell the stock and his net worth goes down by 75%, he'll still have $300 billion. I'm sure he'll be okay.
Yeah. I mean, although for those who are keeping score, that's not okay with them. I mean, you don't get to that level without keeping score.
So I think that's completely right. You keep, keeping score, and it is striking, right? It seems like the one thing that they can't buy is enough. But let me put it differently. At that level, I think keeping score isn't just about the number on the Bloomberg billionaires list. It's about power, right? You have transcended the things where you can buy material things. What you can buy are governments or immunity from the law or just the fulfillment of your every whim, no matter what it is that what that might be. And at that point, the amounts of money that you have can translate to power in ways that we just haven't seen in democratic societies before.
Is there any, I'm not going to say there's a problem, so I'm not going to ask you for a solution, but is there any way that you think society may change or bend or try to deal with some of this newfound extraordinary wealth and influence?
There is, because we've done this before, right? The United States has dealt with people of this kind of wealth and power relative to society, not in absolute terms. Before, Theodore Roosevelt did that with J.P. Morgan, and the antitrust people did that with John D. Rockefeller. And there are two big lessons that we should take away from that, right? One is that however wealthy and powerful these people are, when the government, backed by the people, decides to go and do things, the government is still the government. And in a democratic republic like the United States, the people still rule, not individual wealthy people, not individual oligarchs. But the second thing to remember is that over the long term, that outcome was much better for the wealthy people than the fulfillment of their whims, right? Would you rather live in a state like Russia that bends to the whims of, whatever the handful of wealthiest people who run the state? Or would you rather live in the United States? The answer is you would rather live in the United States. Hard as it is to hear, right? Constraints can be good for you even if you're a trillionaire. And democratic constraints aren't just good for the whole of society. They'll end up being good for the wealthiest members of it, too.
Gotham, have you gotten any feedback on writing this column? I'm wondering if any readers have reached out to you and what they've said.
More than any other column I've written for Bloomberg, actually. And so far, I would say, of people who have reached out to me directly, the response has been sort of enormously positive. Of people who responded on Twitter, who seem to be big fans of Elon Musk, let's just say that they were not so positive.
Exactly. But I
the
think
Musk army.
Yeah, and they're buying the stock again today, so good for Mr.
They're riding the coattails. They're already part of the court, using Gotham's metaphor there.
Yeah, so, but again, I think we knew that with this IPO, that when Elon walked in the door, what you were really buying was his vision. So.
Yeah.
Gotham, thank you so much for joining us. Gotham Mukunda, he's a lecturer at the Yale School of Management, and he is a Bloomberg opinion, I underline opinion, contributor for Bloomberg News. He's up there in Boston. He walks, he's a Harvard dude, and he walks around with a Yale pin on. So he's playing to his audience up there, I guess, with the students up there. So
I like the title of his column, Trillionaires and Republics Will Be a Toxic Mix. We have one trillionaire right now.
One trillionaire, yeah. And the others are, we'll see how.
They're working to get there.
Yep. S&P down 12. The Dow up 300 points. That's 0.6%. But the NASDAQ, that's down about 90 points, 1/3 of 1%. We'll have more coming up. This is Bloomberg. Good morning.
Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio.
All right, Scarlett Fu, Paul Sweeney. We are live here in our Bloomberg Interactive Brokers studio. We're streaming on YouTube as well. Let's talk a little retail here. We just got through a lot of the earnings from the retailers. They always kind of bring up the rear of their different calendars here. Bloomberg Intelligence, they got a survey looking at Prime Day deals, and there's a lot to talk about there. I want to talk about how AI influences how we shop. Who do we talk to about that? We talked to Poonam Goyal. She covers all the e-commerce and the retailers for Bloomberg Intelligence. Poonam, I know you have a new survey out here. What did you find here? What were you looking to find?
People are still interested in deals and shopping Amazon's Prime Day, which comes earlier this year. It comes in June versus July last year. So part of 2Q, not 3Q, in terms of their financials. I think what we found just confirmed what we believed, which is that more than ever, deals matter today, especially in the face of rising inflation where you have tariffs and higher gas prices. Consumers are looking to find ways to stretch their dollars, and more are looking to shop on Prime Day than last year.
This is a dumb question, but I'm going to ask it anyway. It's called Prime Day, and Amazon has that Prime loyalty program. But do people who shop Prime Day, are they all Prime members, or is there a significant number that actually has not signed on to the program yet and will do so because of these offers?
No dumb question, but the answer is Prime Day is for Prime members. So to take advantage of the deals, you have to be a Prime member. So Amazon does have over 200 million Prime members around the world that will be taking advantage of these deals, but it is also a time where many people sign up for deals that don't have the membership. Some of them sign up to take advantage of the deals and cancel, and many of them do stay on. In fact, in our survey, that was one of the questions we asked is, do you have a Prime membership? And if not, are you planning to get one? And the answer was very consistent with last year, that there is a select group of respondents that plan to get the Prime membership and hold it indefinitely. So just growing that Prime member base, which is always a key win for Amazon.
All right, yesterday I pulled a John Tucker. I said, you know what? I need a power washer for my back patio. So
that sounds like it sounds like you could borrow that from him.
I could probably borrow from John Tucker. So instead of going to Google, I just went into Amazon.com, search bar, power washer, boom. A lot of stuff comes up, a lot of good descriptions. I found one, boom. Didn't even go to search, and it's coming tomorrow for those that care.
You didn't want to wait for Prime Day?
No, I'm not. I don't know.
You wanted it right away.
I want it right away. AI, Poonam, how are people using AI for shopping? How are retailers using AI?
Yeah, I think Amazon is furthest along when you think about how a retailer is using AI. You know, what you just explained about the search bar, I think what many people still don't know is the Amazon search bar is no longer just a search bar. It's an AI-powered, agent-led tool, which means if you don't have to no longer go in the search bar like you did and say power washer. You can say, I'm looking to clean the bricks or the pavers outside of my house, and I want the strongest power washer, and it will provide you with an answer. Not only that, when you get to it, you can go ahead and say, what was the cheapest price that this power washer sold in the last 3 months, 6 months, and it will give you a price chart. Then you can go ahead and further say, okay, when this power washer drops to this price, go ahead and purchase. And long behold, if it drops to that price next week, you'll have it at your door without you having to go back.
Boy, I thought
so
I
really,
was good
really
yesterday.
further along.
I thought I was like doing really well yesterday, just going into Amazon search, but apparently Poonam says I could do a lot better.
Yeah, you could make it work for you as opposed to doing the legwork yourself. Yep. Given all of this, Poonam, how are competitors responding? We've seen how Prime Day and the fact that it's an annual sales extravaganza has really forced other companies like the Targets of the world, like Walmart, to come up with their own kind of sales extravaganza in the middle of summer.
Yeah, and it won't be any different this year. So as soon as Amazon launches its Prime Day dates, what happens is that the larger retailers and some of the smaller ones just follow, right, to make sure that they can capture some of that wallet share too. Remember, this Prime Day comes before the July 4th sales. So it's actually a move to pull sales forward even more than it has been ever in the past. And we do expect online sales across the board, not just for Amazon, but even the Walmarts, the Targets, Best Buys of the world, to feature deals to try to lure that customer spend, because it's a time when consumers are prepared to stretch their wallets to take advantage of the deals.
Poonam, you mentioned Walmart, and I'm just amazed every quarter. Whenever they report earnings, I go right to their digital sales, and every quarter they don't disappoint. You know, teens, 20%, 25% growth in digital. Walmart's, they go toe-to-toe with Amazon, don't they?
Absolutely. I mean, Walmart's done an amazing job at capturing the online shopper. You know, if I was speaking to you 5 years ago, they were very, very small when it came to the online presence that they have. And today they're approaching over roughly $200 billion in almost online sales. So quite a move since then. But when you compare it to Amazon, you know, we're expecting Amazon to get to $1 trillion in GMV. So still, you know, Amazon is further along on a global basis, but Walmart is catching up fast for sure.
I gotta say, as much as I want to be very productive and get a lot of stuff done for Prime Day for the holiday season, I can't get myself to do it.
No.
Because I just don't want to be in that mind frame. I'm enjoying summer too much.
Yes, exactly. I don't want to think about that. Poonam, you get paid to think about that stuff. So thanks for spending a few minutes with Poonam Goyal. She is our senior U.S. e-commerce and retail analyst for Bloomberg Intelligence, based down there in Princeton. For our listeners in the U.S., a reminder, you can listen to us via satellite radio on Sirius XM channel 121. Access the world's only global audio business network, coast to coast, 24 hours a day. Bloomberg Radio on Sirius XM channel 121 is presented by Golden Crest Metals. Stay tuned for the latest market news and industry research. The next hour of Bloomberg Intelligence starts in just moments. We got red and green on the screen here. The S&P's down 17 points. That's not nothing. The Dow's up 350, but the NASDAQ is down 125 points. No real direction out there. The VIX, it is quiescent, as Tom Keene would say, sitting right at 16. Market's not too worried. This is Bloomberg.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney.
How do you think the Fed is looking at tariffs, the uncertainty of tariffs?
Let's take a look at the sectors and how they performed.
A lot of investors getting whipsawed every day by news events.
Breaking market headlines and corporate news from across the globe.
Could we see a market disruption, a market event?
Are people just too exuberant out there?
You see some so-called low-quality stocks driving this short-term rally.
Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio, Originals, and the Bloomberg Business app.
Good Tuesday morning from our Bloomberg Interactive Broker studio in Midtown Manhattan. This is Bloomberg Intelligence with Paul Sweeney, Scarlett Fu, and Charlie Pellet. We've got a lot to cover. Markets are lower if you look at the S&P 500 and the NASDAQ, but SpaceX continues to move north. The stock is up for a third straight day. It's now pierced $200 a share, so we're going to get into all of that because there is some news. Seth Vigerman, our Bloomberg AI team leader, will talk about how SpaceX has cemented this takeover of Cursor, an AI startup, for $60 billion following its big IPO last week. Michael McKee will join us because it is day one of the Fed's policy setting meeting today, and there's a new chair, Kevin Warsh, who's in charge, and we know that he wants less communication with the public. So how's that all going to play out? Walter Todd, he is CIO and Managing Director at Greenwood Capital, will join us to give us his market outlook as oil prices continue to head south. And Carmen Reinecke will join us to talk about how SpaceX is now bigger than Amazon in value as it climbs further north. All right, let's check in first with Charlie Pellet for our Bloomberg Business Flash.
Hi, thank you very much. And here's what's going on. We got the Dow at a record, trading above 52,000 right now. 52,013 on the Dow. That is a record, a gain of 346 points, up by about 0.7%. S&P, NASDAQ 100 index, Russell 2000, they are all in the red. Right now, the S&P 500 index down 12, drop there of 0.2%. NASDAQ down by 0.3%. The NASDAQ 100 index down 0.9%. The VIX below 16. The SOX, the Philadelphia Stock Exchange Semiconductor Index, down now by 2.7%, with the 10-year at 4.44%. The 2-year 4.06%, and the 30-year 4.94%. Gold is up 0.3%, 43.25 the ounce, while West Texas Intermediate crude down 4.4%. WTI with a 77 handle now, 77.11. Brent was trading below 80, 80.06 right now, down by 3.7%. Day 3 of SpaceX. Shares are jumping again. SpaceX up by 7.6%, putting the firm on track to overtake Amazon as the 5th largest publicly traded company in the world, just days after its blockbuster debut. Amazon, by the way, up by 1.3%. So today we've got SpaceX up 7.4%. Yesterday up 19.6%. It IPO'd last Friday, up 19.2%. Dafina Maluki is CIO and co-founder of Sagewood Asset Management, and he was a guest last hour, right here on Bloomberg Intelligence.
There's just been a significant amount of wealth that's been created in the U.S. Over $35 trillion for the top 10% of the population going back to the pandemic. And a lot of that wealth is actually held in private companies like SpaceX, like Anthropic, and so on and so forth.
Dafina Maluki of Sagewood Asset Management, and again, SpaceX up by 7.6%. And as we have been reporting, SpaceX has formally agreed to take over Cursor in a deal that values the AI coding startup at $60 billion. And of course, our SpaceX coverage will continue right here on Bloomberg Intelligence. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcast. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
Charlie Pello, thank you so much. We appreciate that. Scarlett Phil and Paul Sweeney live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube as well. I know it's not Friday. Friday we do Munis in Focus, but I saw this Muni story just popped up. Vanderbilt University just sold up to $430 million in Muni bonds. How cool is that? So apparently they've been expanding their presence in Nashville, but they also bought an art school in San Francisco that's closing down
that's right.
in 2027. So that's going to give them a physical presence in that tech hub of San Francisco. And there's a lot of schools from the East Coast that do that. I see that driving around.
And
San
Vanderbilt has really risen in profile of late. I mean, I know it's very much a known quantity in the South, but it's really taken on the Ivy Leagues for prominence and attracting a lot of applicants.
Yeah, the last time we were down in Nashville for remote, I did spend some time on that campus, and it is just awesome there. So good news and Bank of America is running that deal. I always look to see who the bankers are, who's getting paid. All right, let's see who's making money here today on the market. We got red and green on the screen. Let's take a look at some of the stocks on the move today. We're joined by Judy LaGrue. Judy, what are you looking at today?
Good morning, Paul. I'm looking at SpaceX, ticker SPCX. Again, the stock is up as much as 8% right now. And of course, this is on the heels of the Cursor takeover announcement. But one thing I noticed in my research here is that our equities team noted that SpaceX is up, yes, but space-linked names are down today. So space infrastructure firm Redwire, ticker RDW, is down about 8%. Spacecraft maker Firefly Aerospace, ticker FLY, is now down about 7%. So again, really interesting movement. That's what I'm looking at for sure.
All right, of course we have to keep our eye on that one because it's been a straight shot up since, someone even say taking off like a rocket since its IPO. Right. All right, let's stay in the tech space. What else do you have?
Sure, Rackspace Technology, ticker RXT. The stock is up currently right now at about 11%. It's up as much as 21% in trading today. The company did two things, right? One, finalized a deal to use chips from Advanced Micro Devices in its data centers. So that's a really big deal for them. And second, the company approved a 15% cut of its global workforce. So they're expecting to realize as much as $85 million in annual savings from this move. So I'm definitely looking at that company as well.
All right, one more.
Sure. Netflix, and I find this story to be really fascinating here. The news came out, well, first, ticker NFLX, that is Netflix, and the stock is down by as much as 4% in trading today. And this is coming off the heels of a Semaphore report that Netflix lost out to Fox to buy Roku. And also, according to Semaphore, Netflix is one of a number of companies interested in buying Lionsgate. So again, all of this movement is really looking at this downward movement for Netflix.
Interesting, given that Netflix didn't get too far with its last M&A effort either.
No, they're not.
I mean, it got far, but it ended up not becoming the buyer.
They're very disciplined, I have to admit. You know, they don't go crazy for these things.
But they're definitely on the outlook for something.
They're on the outlook for stuff, and why
That's
not?
right.
They've got a great stock value, and they can borrow whatever they need to borrow. Judy LeGros, thank you so much. Appreciate that. For more conversations like this, subscribe to our Stock Movers Reports. Listen for 5-minute audio reports on the biggest winners and losers in the stock market. Subscribe to Stock Movers on Apple Podcasts, Spotify, or anywhere you listen. Lost in all this SpaceX discussion is that they made a $60 billion M&A trade today. And it's like you don't even talk about it.
Well, partly because they had indicated before their IPO that this was something that they acquired the rights for. So now they've just kind of pulled the trigger on it.
All right, let's talk to somebody. It's his job to know what's going on with this stuff. Seth Fiegerman, Bloomberg AI team leader. I didn't know we had an AI team leader, but we do, and it's Seth. That's awesome. What is Cursor, and why did SpaceX buy it?
Sure. Cursor is one of the leading startups that focuses on AI coding, so basically building AI tools that streamline the process of writing and debugging code. You know, it's one of the fastest growing startups in terms of its revenue run rate, but it also faces a lot of competition with the likes of OpenAI and Anthropic, but it has historically been quite beloved by coders in Silicon Valley. I should say historically, this is really, you know, a 3 or 4 year old company that just got bought for $60 billion. So quick turnaround.
Quick turnaround indeed. So what does owning Cursor allow SpaceX to do that it couldn't do before?
Yeah, I mean, it's important to step back and think that, you know, SpaceX merged with or acquired Elon Musk's AI venture, XAI, and since then has tried to position itself as not just a rocket play, but an AI play. But to date, they really haven't made too much of a dent in the AI landscape, and coding has really been the most lucrative early market for these AI tools. There's a certain irony there. They're kind of disrupting their own folks in their own backyard. But I think the bet here is that bring Cursor in there, bring their talent in there, and you can help supercharge SpaceX's own efforts to build a more viable, credible AI product.
All right, I'm asking for all Cursor shareholders here, did I sell my company for $135 stock or stock today? Do we know the terms?
I'm not sure we know at the moment, but the deal should close in the third quarter.
I like the $60 billion valuation on a $135 stock.
Yeah.
So then I get the upsides.
Well, let's see how good Cursor was at negotiating all this.
Okay. SpaceX, do we know how M&A might figure into their growth strategies?
Good question.
Yeah, again, I think like they're trying to position themselves as more of an AI company, and I think they're doing that along 2 prongs. One is through deals like this one. I would be shocked if this is the last time that we see them pursue an AI company to build a real credible in-house product. The other is through these infrastructure tie-ups that they're doing with the likes of Anthropic and Google, kind of using the chips and data centers that they already have to make money while they figure out how to build a credible AI product.
SpaceX is using cash and stock to buy Cursor. If they're going to be buying more companies, are we going to see SpaceX taking on debt as well? You know, selling bonds, for instance?
Possible, but again, I think the fact that it just went public gives it a leg up on rivals like OpenAI and Anthropic as they compete not just for talent, but for acquisitions like this one. They have something they can offer that other companies can't.
All right, you're the AI dude. Where are we on that spectrum of let's spend money to now let's really see what we're getting in return for that money?
I think we're still in the spend money. Okay. But I will say what we are starting to see is companies, OpenAI, Anthropic, are thinking about how much they're charging for this stuff across different spectrums. That includes sort of getting rid of this all-you-can-eat model where we just kind of charge you a flat fee and then you kind of use as much AI as you want. Now they're starting to charge based on the usage that you do, or maybe they'll charge more money for premium subscriptions. So
where are we on? So Anthropic and OpenAI have also filed confidentially for initial public offerings. Do we have any sense as to timing for either of those 2 deals?
You know, the most recent that we've reported is that both were targeting the fall. Now, I should say that could be fluid, but the fact that SpaceX is doing so well right now, and it's early days, but the fact that they're doing so well probably does open up an opportunity for those companies to go public then or sooner. You know, it's always a vibes thing on some level, and this kind of creates a positive moment to try to bring it to market sooner.
I go back to that idea that OpenAI's S1 filing indicated that it wasn't necessarily in a rush to go public either. You know, it said that there are things I could do as a private company that can't.
And I think that they probably were a bit more explicit on that than Anthropic was. So it's certainly possible that OpenAI pushes this. We don't have updated reporting on that timetable yet, but they certainly indicated that perhaps they could still do financing on the private market as opposed to having to tap the public market. But at the end of the day, all these companies, including SpaceX, are spending tens, if not hundreds of billions of dollars on chips and data centers and talent. You need capital for that, and public market is a good place for that.
All right, Seth, thank you so much. Seth Vigerman is our AI team leader here at Bloomberg News on SpaceX, making a $60 billion purchase just 3 days into its life as a publicly traded company. All right, we also have day one of the Fed's policy setting meeting today under the new Fed chair, Kevin Warsh, who, of course, succeeds Jay Powell, who's still sitting on the Fed board. So,
which is awkward, maybe? I don't know.
Awkward, unusual? It's definitely unusual. Let's bring in Michael McKee, our international economics and policy correspondent. Is it awkward that Jay Powell is sitting on the Fed board?
I suppose. I mean, you'd have to be in the room, but, you know, I've been around when I've changed jobs and people who've taken my job, my old job, have, you know, been there. So Powell has said, and I'm sure he will follow through on this because it's the kind of person he is, that he's going to just hang back, and he will be a vote. He will be a governor and do the governor's work, but he will not try to make public statements that would put him in conflict with the chair.
Okay, so speaking of public statements, that is something that Kevin Warsh might want to change, because he has been clear, and he mentioned this in his confirmation hearing, that he may want less communication. He might want the Fed to be, I don't want to say less transparent, but speaking to the public less. What might that look like? What forms could that take?
That's a little hard to say at this point because, of course, he'll have to get people on board. He would like the Fed bank presidents to maybe speak less. I don't think he's going to be able to do that. Fed bank presidents have always spoken in public. It's just that now with modern communications, it's much easier to flash their comments around the world. The governors maybe will tighten things up a little bit. One thing that Kevin has told me he wanted to do was have communications focused on a particular area, if that's something that's important. For example, if they decide to redo the communications policy, then they would talk more about the communications policy as a unified group than they would monetary policy. But we'll have to see how that goes. They can change the statement. Statement's been changed many, many times. Sometimes it's very long, sometimes it's very short. So that's certainly something that could change. Dot plot may go away eventually. Kevin is no fan. You know, that's one thing I'm not going to criticize him for. It'll be very interesting tomorrow to see if he even submits a dot, since he says he doesn't believe in the dot plot. And they may tweak the summary of economic projections as well, give it a little less forward guidance-y and a little more, you know, just here's a kind of an outline of where we see the economy going.
DOTS, one of my favorite functions on the Bloomberg terminal.
Yeah, but it might be obsolete.
I know, it might become obsolete. The poor person who invented DOTS Go, I feel sorry for that person. So again, tomorrow, is there going to be a change in, you expect there to be a change in your day tomorrow, which is go down to DC, release at 2 o'clock, press conference at 2:30. Any change to that cadence, do you think?
No, I don't think so tomorrow. They've told us we're going to have the news conference, so we're expecting the same as what we have seen. Now, obviously, it's going to be one of the first questions that he's asked if he doesn't make it in his statement. Are you going to continue press conferences? He has said he would like to see fewer press conferences, only when there is something to say. Now, the problem with that, of course, is how do you do that without saying you're going to have something to say which will move markets? Yes. Because it's not like everybody just would show up accidentally on a day. Then the question is, does he change the way he does press conferences? Does he just read a statement? Does he take fewer questions or more questions? Or, you know, how does this all work?
How does it all work? And this is something that people have to kind of adjust to, but it definitely feels like the market has gotten conditioned into getting a lot of information at all times, especially after the financial crisis when, you know, the Fed had fewer tools at its disposal, right? I mean, it couldn't cut interest rates anymore, so it had to use job owning to move the markets or to indicate to markets where it was thinking and where it was going.
That was the belief. Originally, under Alan Greenspan, who was Fed chair when I started covering the Fed, the belief initially was that it was good to surprise the markets because it would keep them on their toes, it would keep them from leaning, and then you'd get better price discovery. The situation changed around the financial crisis time when Ben Bernanke became chairman, and his view was if you guided the markets, then they would put that information into their trading, and it would be reflected in monetary policy. It would be reflected in the bond market before monetary policy had to make a change, and so they're doing part of the work for you. And Warsh seems to disagree with that view, so we'll see how he thinks it should be handled, and then whether he can convince anybody else to go along with it.
All right, Mike, thanks so much. Appreciate it. Michael McKee, International Economics and Policy Correspondent, Bloomberg News, joining us here in studio. He'll be heading down to D.C.
Tonight, tomorrow?
Tonight. He goes out tonight, and he flies. Yeah, go down. He won't take the Acela train.
Well, that's a good idea, given what's happening today.
That is probably a good idea.
Yeah.
We'll have more coming up.
Yeah, you tell me for...
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 11:20 on Wall Street. We do check markets all day long here at Bloomberg, looking at records right now on the Dow Jones Industrial Average. Right now, the Dow is up another 362 points, up 0.7%. S&P, NASDAQ, they are both in the red. And this Bloomberg Business Flash is brought to you by Gold and precious metals. Inflation, tariffs, and volatility have some investors turning to gold for stability. To get a free gold and silver info guide and learn how to add metals to your IRA or 401k tax and penalty free, go to goldandcrestmetals.com/guide, goldandcrestmetals.com/guide. S&P down 17 to 75.37, drop there of 0.2%. Nasdaq Composite Index down 0.4%. The Nasdaq 100 Index lower now by 1%. The SOX, the Philadelphia Stock Exchange Semiconductor Index, it is down by 2.9%, and the VIX now trading below 16. We've got the 10-year at 4.44%, the 2-year 4.05%, the 30-year 4.94%, and gold up 0.3%, 43.24 the ounce. A retreat for crude. WTI just above 77 a barrel, now down 4.6%. Barrel of Brent down 3.8%, holding right around $80 a barrel. A big pizza takeout order. Yum Brands agreeing to sell its struggling Pizza Hut chain for $2.7 billion to a private equity firm and its China business. Right now, looking at shares of Yum Brands, they're up by 2.1% among pure play rivals. Shares of Papa John's International down 1.3%. Domino's Pizza up by 1.4%. While we're talking fast food, McDonald's frying up some apple pies to honor America's 250th birthday. The company says it's bringing back fried apple pies for the first time in more than 3 decades. McDonald's up by 0.5%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcast. I'm Charlie Pellet. Scarlett and Paul, it's a Bloomberg Business Flash.
All right. Thank you so much, Charlie Pellet, for that check on the markets, the Bloomberg Business Flash. We appreciate it. SpaceX. I know we keep talking about it. We talked about it in the lead up to the IPO. We're talking about it on its life as the third, on its day as the third publicly traded company. Sorry, third day as a publicly traded company. There you go. Can't get my words out today. It is up quite a bit, now at $211. And I want to bring in Walter Todd. He is president and CIO at Greenwood Capital, joining us from Greenwood, South Carolina, a friend of the show. And Walter, I'm curious to get your take on the SpaceX IPO and how it serves as a catalyst or not for the broader market, given that there are so many different drivers right now. We have the imminent end of the Iran-U.S. war right now. And of course, nothing's been signed yet, but oil prices are certainly moving in that direction. And now you have the SpaceX IPO that's finally gone off without a hitch, and it seems to be doing well. How has that changed perceptions around the market?
Good morning, Scarlett. Thanks for having me on. The market seems to rally if we're having a war and the straits closed, or if the war has ended and the straits are about to open. The market seems to rally in either scenario really since early April. Recall that the strait was supposed to open in early April, never did, and the market never looked back from that point. And so I think SpaceX, to me, with the IPO on Friday, is kind of the culmination of this just massive market rally that we've had, particularly in technology and the semiconductors, which you referenced. And now SpaceX, over a 3-day period, adding roughly another $1 trillion to the market cap over that 3-day period, and now exceeding the market cap of Amazon today, which is a company that has $830 billion in sales and scheduled to earn over $100 billion in net income. Just doesn't make a lot of sense to me personally.
So what do you do here? What's the conversation you have with your clients? I'm sure they're phoning and saying, I want to get in on this, I want to get in on this. What is the discussion you're having with clients today? Maybe about diversification, about maybe longer term views, that type of thing.
Yeah, Paul, it's a great question. What we've tried to do with our clients and with our portfolios that we manage for our clients is just stay disciplined. And what that means to us is, kind of trimming back on these names that we view as extended, particularly in the technology space, reallocating that money depending on the client situation, either to other parts of the equity market, or potentially you reallocate to that to fixed income or some alternatives to try to, again, stay diversified in the face of a market that's, I think getting a little ahead of itself with the moves that we've seen, particularly in certain parts of the market. So you're right, clients calling in, asking about the IPO and the upcoming IPOs, and if we're interested in buying those. And just as a matter of practice, we do not buy IPOs for clients. We like to see a company be public for at least several quarters before we would take a position there. And so we'll take the same tact here with the new IPOs.
And I assume that'll be the case with OpenAI and Anthropic when they list as well. So, Walter, walk us through how you're thinking about fixed income if you are diversifying in that direction. Where do you want to be on the curve?
Yeah, I mean, I think to me, with the drop in oil and the perspective, peace deal here, I think the front end looks good. The market's obviously still pricing a probability of a hike about 83% for this year. So the 2-year over 4% to us is attractive. And I think you can go all the way out to kind of the 3 to 5 year part of the curve as well. You can get investment grade rated portfolio of corporate bonds in excess of 5% today. NVIDIA did a big deal yesterday as an example of that. So we think those rates are attractive in the face of, if you believe we're going to get this peace deal, inflation is going to roll over, rates should ultimately come back down.
Walter, thanks for joining us. Always appreciate getting a few minutes of your time. Walter Todd, he's President, Chief Investment Officer, Managing Director. I think that just makes him basically the boss at Greenwood.
Yeah, boss
Capital.
of everything.
That's the way I'm going there. So get a few minutes of his time here. Looking at the markets, some red and green on the screen, but we're seeing SpaceX up another 10%. I think it's now bigger than Amazon. I don't know. Let's talk to somebody who actually looks at these things. Carmen Reinecke, she's Deputy Team Leader for U.S. Equities. All right, she's the right person to talk to. Carmen, talk to us about SpaceX. Who's buying? What's going on here? Are we surprised at all by how this continues to trade higher?
I talked to a source this morning who said this is not at all unexpected. Third day trading, had a blockbuster IPO, so we're seeing this gains extend into a third day. And the valuation has jumped significantly. It's at $2.7 trillion. It's larger than Amazon. At the intraday high, it briefly overtook Microsoft as well to be the 4th largest company in the world, which is just incredible to think about after 3 days of trading. I think something that's really important to point out here is that part of what might be sort of boosting the elevation here is the low float. So we know that there is less than 5% of total shares outstanding that are right now available to trade, and this contributes to a lot of volatility. We especially know, there's tons of demand in this stock, but so that can boost share prices, and then that price is what you're using to calculate with the total outstanding shares, including ones that are locked up, the market value.
You mentioned the demand. There's, of course, demand from individual investors, institutional investors, and soon or not yet, demand from index funds, which have to mimic, say the NASDAQ 100 or the S&P 500, which, we're not there yet. But for the NASDAQ 100, when does it go into that index?
So I believe it's eligible to be included 15 days after the IPO. So that would be next week.
Okay.
And yeah, exactly what you just said. That would add a ton of passive investing, and any fund that tracks the NASDAQ
There's
100
a lot of those.
has to add. So it could be another boost to stock prices. It just could really keep this rally going.
Do we know who's buying? Is it retail? Is it institutional? A little of both, I guess, because there's allocations to both.
Yeah, a little of both. We know that retail was sort of allocated more than usual in the IPO. There's obviously so much demand there and interest. Elon Musk has a lot of followers in the retail space. And we've seen some data from Vanda Research that net buying in the SpaceX IPO was more than or equal to about the same, I think, as total buying across the market for last week. So tons of retail involvement here and excitement around this stock.
It's like he's activated his base, Elon Musk.
So I'm looking at Tesla. Tesla shares are down 1.3% today. They're down almost 10% year to date.
So you think there's some switching?
There might be. All things being equal, I don't know. Which one would I rather? They're both kind of out there. You got to really have.
You have to be an Elon believer.
You have to be an Elon believer. You have to have a really long-term horizon for both. But
and eventually, one day, the two might be one.
Right. That's what I think a lot of Tesla. Is that kind of what you're hearing, Carmen? That maybe a lot of Tesla investors say, "Hey, one day I'm going to be part of SpaceX anyway."
It is definitely something that I've heard. Hearing more and more of this idea that they might merge Tesla and SpaceX, and there are a few different reasons for it. It'll be really interesting to see if that happens. I know there's at least one investor that was on TV, I think on Friday, that said, I'm not going to sell Tesla or I'm not going to buy into the SpaceX IPO because I would have to sell Tesla. And my bull case is that they're going to merge with the same company.
And so I'm just going to wait it out and make sure that that happens. How does this set up the expected IPOs of Anthropic and OpenAI? Given how SpaceX has done, the moves that it has made, what do you think that means for those companies and the bankers who are kind of keeping an eye on this?
There was a lot of sort of concern or worry heading into SpaceX's IPO that the market wouldn't be able to digest such a large deal, or that there might not be quite as much demand as was sort of assumed. And this trading and the IPO kind of going off without a hitch really signifies that there is a ton of investor demand in the market, one on the space side, but also the AI side. So I think it bodes really well for Anthropic and OpenAI coming down the pike in a number of months, or by the end of the year. Especially because they're also set to have these sort of mega valuations. Those IPOs would be expected to list at values of about $1 trillion as well.
Will the index compilers, like the guys behind NASDAQ 100 and S&P, also make the same exceptions for those companies as they did for SpaceX?
Yeah, so the NASDAQ rules specifically, they just tweaked it for large IPOs in general. It's not necessarily... My understanding is that it's not specific to SpaceX, though it's the first one that could be, eligible based on those rules.
But the S&P, they've not changed. You still have to wait a year. You got to be. They have not changed their rules, right?
No, they decided not. Yeah, they decided not to tweak the rules to allow SpaceX or any of these other large IPOs sort of a rushed entry.
They're like, show me first.
Entry. Yeah, exactly.
All right, I'm looking at the FA function for, for SpaceX. They're they're not going to be public. I'm looking at the FA. Yeah.
Do you want to talk price to sales?
Okay, go there. I know this is going to be. It went public at 95 times sales, I think. Where are we today?
The last I calculated, it's a moving target, but was about 150.
Wow.
It's huge. And if you think about the companies that it's now sort of in the realm or similar valuations, Amazon and Microsoft, it's so much higher. If you think about just the revenue that they're bringing in. So last year, SpaceX brought in, I think, about $19 billion in revenue. For Microsoft, it was $281 billion in revenue, so more than 15 times. So those price to sales ratios look very different, even though the valuations are.
That's a great way of putting it into perspective.
Yep. There you go. It's the Elon effect, I guess. All right, Carmen, thank you so much. Appreciate it. Carmen Reineke, Deputy Team Leader for U.S. Equities, joining us live here in our Bloomberg Interactive Broker Studio. I saw the interns from Interactive Brokers. They were here today.
Walking by the Bloomberg Interactive Broker Studio.
So I said, thanks for your sponsorship. No idea what I was talking about. So I'm not sure they know what sponsorship means, but I said it's money. So anyway, there's a bunch of them. So they're all coming through.
It's intern season here in New York.
So every investment bank brings their summer interns through Bloomberg to get a sense of, hey, you need to learn how to use this Bloomberg.
It's going to be the key to your career success.
Exactly. So we get them in here early. S&P down 12. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 11:40 on Wall Street. We do check markets all day long here. Bloomberg just getting word that the signing of the interim peace deal between the U.S. and Iran will take place on Friday near Lucerne in Switzerland. That according to the country's foreign ministry. The memorandum of understanding set to be signed at the Bergenstock, that's a mountain resort overlooking Lake Lucerne. U.S. stocks pushing higher now with a 400-point gain in the Dow Jones Industrial Average, a record of 52,090, up 0.8%. We have got the S&P, NASDAQ, and the NASDAQ 100 index all retreating on the eve of the first Fed rate decision under Kevin Warsh. S&P down 16, down 0.2%. NASDAQ down 137 for the NASDAQ Composite Index, a drop there of 0.5%. The NASDAQ 100 index also lower by just about 1.2% right now. The VIX below 16, the 10-year 4.43%. Gold up $12 the ounce, up 0.3%, 43.24. And a slide for crude oil. West Texas Intermediate 76.64 a barrel, down 5.1%. Barrel of Brent below 80 again, 79.55, down now by 4.4%. Keeping an eye on SpaceX shares, they're up again, up by another 9.2%, up for a third day, now topping Amazon in market cap. Walter Todd is the Chief Investment Officer of Greenwood Capital, and he was a guest moments ago right here on Bloomberg Intelligence.
SpaceX, to me, with the IPO on Friday, is kind of the culmination of this just massive market rally that we've had, particularly in technology and the semiconductors. And now SpaceX, over a 3-day period, adding roughly another $1 trillion to the market cap over that 3-day period, and now exceeding the market cap of Amazon.
Walter Todd of Greenwood Capital, a guest right here on Bloomberg Intelligence. SpaceX up 9.1% right now. Amazon up by 1.1%. Robinhood Markets says it's cutting 10% of its workforce. And Threads, owned by Meta Platforms, has now topped 500 million users 3 years after its launch. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcast. I'm Charlie Pellet, Scarlett and Paul. That's a Bloomberg Business Flash.
All right, thank you so much, Charlie Pellet, with a check on our markets. We have some breaking news. A red headline just crossed. L3 Harris's missile arm. So the ticker for L3 Harris is LHX. Its missile arm is said to tap banks for up to a $2 billion IPO. Our reporting shows that it has picked JP Morgan and Morgan Stanley for this initial public offering. Shares of L3 Harris, a parent company, are up right now at about 1.6%. We'll keep you posted on any further developments. But again, the missile arm of L3 Harris, AXYV, is said to pick JP Morgan and Morgan Stanley for its IPO, which will be up to $2 billion. All right, in other news, June is Pride Month. So over the next couple weeks, we're going to highlight segments on topics related to equality. And today, we're speaking with Megan Thomas. She is a sexual harassment attorney and founder of Megan Thomas Law. Megan, thank you so much for joining us today. Just kind of set the scene for us and put things into context. There's news that the Equal Employment Opportunity Commission, EEOC for most people, rescinded its harassment guidance in January. So that's federal harassment guidance. So for our audience of executives and general counsel and general audience, really, what does that mean in practical terms for companies, for legal exposure right now?
Yeah, great question. First of all, thanks so much for having me. I'm happy to be on the show. Secondly, yes, the EEOC has rescinded longstanding guidance. It's important to note that this doesn't change the law, but it can change how that law is being interpreted. And so it really remains to be seen what the long-term impacts of this will be. But for now, the guidance that was really helpful in terms of providing examples of what to do under certain scenarios is no longer there. That guidance was very friendly to employees and plaintiffs. So again, it's important to be aware of that. This also means that federal and state law will have an even wider contrast than they did in the past in many states. So in a state like New York, where I'm from, the New York State law on sexual harassment, discrimination is stricter than federal law is. Now, that guidance was helpful for kind of interpreting federal law in a more protective way to plaintiffs, and now that's no longer happening. So again, it's important to just be aware of those differences and keep appraised of how everything will turn out here.
What was the explanation or the rationale by the EEOC for making that change?
I don't believe there was one. What they did say on their website was, this doesn't impact the law. So it was one of those things from the Trump administration that we're seeing where there's not a ton of explanation happening, but they're saying basically it's business as usual, but I don't think it actually is. That's correct that the law didn't change, but again, the way it's being interpreted may change in some ways.
Megan, just get us up to date on some of the high-profile cases in the news. There have been a couple of them. They include Mr. Beast, Abercrombie & Fitch, Epstein, Jeffrey Epstein. Our audience obviously has heard of a lot of these names, but I'm curious what you see as a common thread that ties together everything from a legal standpoint.
Right, so what I'm seeing both in my practice, I do sexual harassment law and discrimination law, and then also on the broader scale. So I'm working in New York, but on the broader federal scale, I'm seeing cases where men with a lot of power are abusing that power. Of course, this isn't most men, right? This is a small fraction of the population, but unfortunately, when you have so much power, you can use it for good or you can use it for bad. And we're seeing some people who are really taking advantage of that power. So what I'm seeing in my practice is lawyers, doctors, people who seem to have a lot of power in their communities are doing very similar things, for example, to what Jeffrey Epstein did. So they're essentially running mills. You know, they have people coming into their places of work who are very young, very vulnerable, and they're systematically abusing them.
Is it harder today for a victim to use the legal system to try to get justice?
It depends on when you're comparing that to, because around the Me Too movement, for example, in New York in 2019, the law changed to become much more favorable to victims. But in today's era, the culture, it has kind of backslid a bit. And so what we're seeing is the laws are still in place, but the culture has changed such that people aren't feeling as supported in their places of work. Maybe they don't have DEI training anymore. Maybe they're not taking sexual harassment training seriously. So I would say compared to prior to 2019, it's still better, but we are seeing some regression here from 2019.
So from a business risk perspective, that regression, that increased silence when there is harassment or when there is problematic behavior, why should that concern a board of directors? Why should that concern a CFO?
That's a really good question. And something I see a lot is people in high positions of power at big companies, they want to sweep this stuff under the rug. That's actually a really costly decision, and it's not the best decision from a business standpoint, and clearly not from a moral or ethical standpoint. Let's talk about it strictly from a business standpoint. When you push things under the rug, they fester, they grow to the point where maybe you had one person who had some claims and some minor claims before. Now maybe you have multiple people with very significant claims. If you don't address these problems, again, they grow and they fester, and that can be very, very expensive for a company.
So is the Me Too era, is that over? Was that have its time already?
No, it's not over. The laws are still in place again in many of the states where laws were changed during the Me Too movement such that they're stricter. So I tell my clients every day, the law is still on the books. These people might think that they can get away with this now, but they can't. And furthermore, I think cases like the Blake Lively case show us that culture is still popular culture is still very much upset about what has occurred to women over the course of time, and they're still frustrated about it now. So I think the movement among many people is still that we need to get better and make improvements, but then there's kind of this counter movement of it's gone too far. So I don't think that the Me Too movement is over. I think we're seeing some challenges. Again, I want to reiterate that the laws that changed during the Me Too movement are still in place. So it's not over, but we are seeing a new era here.
All right, Ashley, thank you so much. I'm so sorry. I was looking at the painting behind you and of Ruth Bader Ginsburg. For those who are on radio and can't see it, it's an Ashley Longshore product, is it not?
You know what? I don't know. That's a good question. I just fell in love with it and ordered it, but
yeah, it's Ruth Bader Ginsburg, and one of our eagle-eyed viewers have pointed out that it's an Ashley Longshore portrait of Ruth Bader Ginsburg. So. congrats to StartupPal for noticing that. Thank you so much, Megan Thomas. Really appreciate it. Megan Thomas is founder of Megan Thomas Law. She is a sexual harassment attorney as we cover June, which is Pride Month, and looking at issues of equality. This is Bloomberg.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio.
Scarlett Fu, Paul Sweeney, live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube as well. Red headline crossing the Bloomberg terminal. Want to get to that. U.S.-Iran deal will allow Iran to immediately sell oil. That is according to the Wall Street Journal, and we'll have more reporting on that. So again, some of this details of this memorandum of understanding, which will hopefully be signed into some peace agreement come Friday, some of that starting to come to the market, so we will stay on top of that. One of the M&A trades today, Yum Brands selling its Pizza Hut division for $2.7 billion to focus on its KFC and Taco Bell chains. I'm in on all three of those. Those are all good with me. Michael Halen, he joins us here, Senior Restaurant and Food Service Analyst for Bloomberg Intelligence. Michael, talk to us about this transaction. What's Yum doing here?
Yeah, and it's been expected. They've, since last fall, they had announced that they were looking for strategic options here for Pizza Hut, which has been struggling for years, right? And so we think it's a great deal for them. You know, it allows their very talented management team to focus on their two real growth brands, Taco Bell, which is a monster. It's the gold standard in QSR. Best marketing program, phenomenal same-store sales for years now. Since I've been, an analyst, so probably about 15 plus years. Great same-store sales, and KFC, which is phenomenal overseas, strong net unit growth overseas and starting to turn around here in the United States in the last couple of quarters. So, you know, with the cash, it's going to be about $2.3 billion after tax. They're going to pour that right into share buybacks to offset some of the operating profit loss that they're going to have here, and you know, we think it's a good deal. It's going to have a much higher operating profit and net unit growth, faster revenue growth, and all of that is, you know, turning into a higher multiple is what we're seeing in the market today.
Stock's up 2.3% today on this news, up about almost 5% year to date, and up about 11% over the trailing 12 months. KFC and Taco Bell, do you think they're going to maybe think about growing via acquisition? Is there something for them to go out and buy? Is that part of their strategy, their DNA?
You know, it could be. You know, it has historically. They purchased Habit Burger a few years ago, but it was just really too small to make a big difference in the top and bottom line. But that could be an option. You know, Chris Turner, he was the prior CFO, is the new CEO, and he's more aggressive. You know, the company was run pretty conservatively under their prior CEO. You know, good, solid company, you know, but not very exciting. And so, you know, as you can see with this deal, Turner hasn't wasted any time, and he's being more aggressive with the moves that they're making. And so I could see M&A being an option going forward.
So what was the problem with this Pizza Hut? Was it simply Domino's? What was kind of the problem?
Domino's was a big part of it because since 2009, and in 2009, Pizza Hut was #1 in the country. Domino's has taken share year after year after year. So that's been a big part of it. Papa John's had some good years in there too, where they were taking some share. So that's a big part of it. But, you know, I'd say a big issue is like food quality and the real estate, right? Like they have these really big boxes that cost a lot of money. These franchisees are paying big rents. And when you don't have people coming into the restaurants anymore, because in addition to the Domino's and Papa John's competition, you had more competition at sit-down restaurants, higher quality sit-down pizza joints cropping up locally. You know, and it just starts this downward spiral that the you know, people aren't coming in, so the franchisees aren't going to spend money on improving, you know, the look and the feel of the restaurants. You know, restaurants fall into disrepair, and so it's kind of been this spiral here in the U.S. anyway. That's you know, been going on for quite some time.
I've been telling the story today. Back in the 80s in college, in Richmond, Virginia, it was our savior. It was our go-to place. But that was a long time ago.
Listen, the breadsticks were phenomenal.
Exactly. All right. So all the restaurant companies that you cover, you cover them all. What's the theme you're hearing from your restaurant companies about kind of how the consumer's doing out there?
The theme is that they're holding in, right? And I think part of that was the tax refund checks. You know, as you probably know, I was pretty bullish coming into this year because inflation was close to 2%. We had these refund checks coming. We're much less bullish now based on the inflation that we're seeing. You know, like I said, a lot of them are talking about kind of holding in. Beef inflation continues to be an issue, so some of those chains are kind of worried there. You know, what they're saying, I'm paying closer attention to what they're doing. And what we're seeing is the most aggressive discounting we've seen in this business for a while. And that's really worrisome.
Tough for the margins there. All right, Michael Halen, thank you so much. Appreciate it. Michael Halen, he's a senior restaurant and food service analyst for Bloomberg Intelligence, joining us live here in our Bloomberg Interactive Broker studio in New York City, which makes me suspicious because Mike likes to stay in Princeton like a lot of those analysts down there. So I think there's a free meal somewhere in his day today, and that's why he's here. For our listeners in the U.S., a reminder, you can listen to us via satellite radio on Sirius XM Channel 121. Access the world's only global audio business network, coast to coast, 24 hours a day. Bloomberg Radio on Sirius XM Channel 121 is presented by Golden Crescent Metals. Stay tuned for the latest market news and industry research. Your top stories and global headlines are coming up in just a moment. We got mixed movement here in the market. The S&P's down 14 points. That's nothing. The Dow's up 450 points. That's 0.8%. And the Nasdaq taking a little bit of a breather here after 4 or 5 days solid run here. Down about 150 points. That's 0.5%. So not a lot of direction there at the index level. The VIX quiescent now under 16, 15.96. I'll call that out for Tom Keene. Yield markets, yields coming in. 10-year Treasuries down 5 basis points, 4.42%. WTI crude oil It's coming down again, down almost $5, just under $76 per barrel. Bitcoin, it is lower, $66,000 per token. This is Bloomberg. Good morning.
From ABC News, I'm Michelle Franzen. At least 5 people have been arrested in what federal authorities say was a foiled plot to attack the UFC matches at the White House last weekend. More from ABC's Pierre Thomas.
Sources telling ABC News that on Monday, 5 people were detained in connection with the alleged plot, with as many as 23 people allegedly involved. According to sources, suspects allegedly plan to use explosive-laden drones, which would be designed to hit buildings to spur a mass evacuation.
World leaders holding meetings for their first full day of the G7 summit in the French Alps. The impact of the war between the U.S. and Iran also front and center. President Trump says Iran will finalize a memo of understanding to extend a ceasefire by 2 months, renew nuclear talks, and reopen the Strait of Hormuz. During a meeting with the head of the UAE, President Trump was asked why details have not been made public.
I'd like to get a formal setting first before we do that, but I have no problem with that. It's good document. Here's what it says. Iran will never have a nuclear weapon. That's what it says. It won't have one to buy, to develop. They will not have a nuclear weapon. And I would say that's about 99.9% of what I wanted.
Vice President J.D. Vance on the promotional tour for his new book titled Communion, appearing on the ABC's The View today, fielding questions about the Trump administration's immigration policies, the Epstein files, and the economy. Vance says inflation is still too high and was also asked about the president's comments on last week's consumer price index, saying the numbers were great. You know what I really love? I love inflation.
What he said is, I love the inflation because it's going to come down when the war is over. And now, again, we already see gas prices today, $4.06 a gallon, too high, but way down from where they were just a couple of weeks ago.
The Federal Reserve Board beginning its 2 days of policy meetings today. What's next for interest rates as well? The first meeting since new Fed Chair Kevin Warsh was confirmed as chair. You're listening to ABC News. Nearly 2 weeks after it was first detected on the umbilical cord of a calf in South Texas, the New World screwworm infestation has spread to a dozen animals. ABC's Jim Ryan has more from Dallas.
In Texas, cattle, sheep, and goats in 6 counties have been found infested with the parasitic larvae of the New World screwworm, along with a dog in New Mexico. The latest case came from Sutton County, 135 miles northwest of San Antonio, raising concerns that the screwworm problem is moving beyond South Texas, where it first came in from Mexico.
Millions across the South affected by life-threatening flash flooding. Here's ABC's Hannah Bata.
The governor of Texas declaring a disaster for more than 100 counties across the state. In Waco, highways turned into rivers.
There's a car just floating down the median.
Vehicles washed down the interstate as fast-moving water overtook the road.
Literally, I'm not kidding you, thought I was going to die out here.
First responders rescuing dozens of people, even using ropes to pull one trapped driver to safety. In Houston, stranded motorists forced to push their cars through flooded streets as debris drifted by.
Dangerous floods also stretching into Louisiana and parts of Mississippi. Some familiar faces returning to Wimbledon this year. The tournament revealing that Serena and Venus Williams will team up and return to the Grand Slam Championship as doubles partners in a wild card entry. The duo are 6-time doubles champions at Wimbledon. I'm Michelle Franzen, ABC News.
Live from Washington, D.C., this is Balance of Power with Joe Matthew.
But what's in the deal? Welcome to the Tuesday edition as President Trump meets with foreign leaders at the G7 in France. Big questions over details in a peace agreement with Iran that has a big signing ceremony on Friday. We're going to get the latest from Bloomberg's Tyler Kendall, who is traveling with the president in France. Will Congress codify a treaty with Iran? Big question today in Washington that we'll discuss with our political panel. Rick Davis and Jeannie Shanzano are with us for the hour. And it's back to Georgia on Balance of Power. Runoff elections today. We're going to look at primaries in 3 states when we spend time with Bloomberg's Bill Ferries. All after a look at Wall Street. We've got the markets first, of course, like we do every day with Charlie Pellet. He's live at World Headquarters in New York. Charlie, how are we doing?
Right now, mixed market, Joe Matthew. By the way, welcome back. We missed you. We are looking at the Dow higher, trading at a record, trading above 52,000. The S&P, NASDAQ 100 index, all in the red right now. We got a rally, though, for the Dow. This ahead of the first Fed rate decision under Kevin Warsh tomorrow. S&P lower, little change right now, down 8, 75.46. Where we stand, that is a drop there of just about 0.1%. Dow Industrial is up 468 now, up 0.9%. Nasdaq Composite Index down 110, drop there of 0.4%. The Bloomberg Mag 7 Index down 0.3%. The SOX, the Philadelphia Stock Exchange's Semiconductor Index, down 2.9%. The VIX below 16 with a 10-year at 4.42%. Gold is up $26 the ounce to $43.38. That is an advance of 0.6%. West Texas Intermediate crude 76.15 a barrel. WTI down 5.7%. Barrel of Brent right now trading at 79.13, below 80, drop there of 4.3%. And Bitcoin 65,793. Bitcoin is down now by just about 1%. SpaceX keeps on going. SpaceX shares trading higher by another 10.8%. All eyes will be on Fed Chair Kevin Warsh tomorrow when he holds his first news conference after the Fed decision. We'll have it for you live, 2:30 p.m. Wall Street time here on Bloomberg. The decision itself, 2 o'clock. Victoria Fernandez is chief market strategist at Crossmark Global, and on Bloomberg Open Interest this morning, she told us she'll be listening for any talk about communication.
What I'm going to be looking at is what is being told around how communication is going to happen in the future. I think that is going to be the key point that we're looking at here. Does Warsh even give us a dot on the SCP? I'll be very curious to see if that happens. I don't think he's going to replace Myron's dot. Where is he going to land on there, or does he give us one? And what is he going to say around press conferences going forward? How much Fed governors are going to be able to go out and talk about things? To me, it's some of those changes along with potential balance sheet changes that we're going to be watching.
Crossmark's Victoria Fernandez on Bloomberg's Open Interest this morning. I mentioned crude oil lower. West Texas Intermediate crude now at 76.06 a barrel. Oil majors trading mixed. ExxonMobil up 0.2%. Chevron down 0.3%. ConocoPhillips down by 1.3%. And that, Joe Matthew, is a Bloomberg Business Flash.
Hey, all right, Charlie, thank you so much. Charlie Pellet will return in about 15 minutes with the latest on the market. Not looking so hot today, despite all the good feels about Iran. I thought we had the ingredients for a Bafo rally, but it's more about the rotation, right? That Dow's still up about 500 points. Hard to ignore the NASDAQ down 120 points. So we are seeing some pretty heavy losses in the big tech companies, including Micron, including most of the Mag 7. And we'll keep tabs on this for you throughout the day here. Oil certainly looks a lot better, though. To see a 7 handle on WTI and Brent, we've come a long way from $120 a barrel. And, of course, it's all keying off of what's happening between the United States and Iran. So thank you for joining us at an important moment here on the Tuesday edition of Balance of Power on Bloomberg Radio, satellite radio channel 121. We're always streaming live on YouTube and invite you to join us right here in the studio. Search Bloomberg Business News Live and catch our stream on YouTube. It's not just BOP here. We've got all of our shows all day from Washington and New York streaming on the video if you like to watch the radio on TV. Big thanks to Kaylee Lyons for keeping things afloat while I was gone. I missed you on the long weekend here. I tried to get back home. It was the flyovers at the UFC fight that kept me from ever getting there. ground stop in D.C. all night. There wasn't a drop of rain, but they did blame the weather. I will tell you that. I got back yesterday just in time to join you today with news to report on Iran. If you're following the president at the G7, at least, he's trying to fill in the blanks here when we have so many questions about what is in this deal. Knowing it's been signed, they tell us virtually signed, which is ironic in the age of the auto pen. But on Friday, there'll be an actual ceremony in Geneva. The president was talking about this as he had a series of bilaterals this morning at the G7 in Evian-les-Bains. He met with leaders of Qatar and the UAE, where this came up. Listen to the latest from the president on the deal.
Here's what it says. Iran will never have a nuclear weapon. That's what it says. It won't have one to buy, to develop. They will not have a nuclear weapon. And I would say that's about 99.9% of what I wanted, because we couldn't let that happen. You couldn't let that happen. And they won't have a nuclear weapon. Now, in addition to that, the Strait is going to be open toll-free.
The new definition of compromise, 99.9% of what I wanted. And yet, toll-free, hold on to that phrase. We've been hearing it a lot lately. If the Strait is actually open yet, it's going to take, we know it's going to take some time here. They've got to do some demining, grease the skids, get the boats lined up, and it's going to take a minute. We've been told it could take a couple of months before oil flows rationalize themselves through the Strait. Iran doesn't see toll-free necessarily. They're talking about, well, I guess it's a case of semantics, fees that will continue to be charged once the Strait reopens here. We'll see if we ever get that far. And I'm really glad to say that Tyler is on the case and more literally on the road, traveling with the president, joins us now from Evian, where they're just coming out of, if my timing is right, well, they're headed for a cultural performance here, and then you've got the big social, the G7 social dinner. Tyler, where are you? You look like you're in a field somewhere in France. I wish I was with you. What's going on there?
I wish you were here too, Joe. And yes, I actually can confirm. If you're joining us on YouTube, I am in a field, but it's on the sidelines of the G7 summit where we are seeing these leaders engaged. You mentioned the social programs that we're expecting for tonight, but there were some difficult conversations that happened today during the day during this summit, including a working lunch that was focused solely on the reopening of the Strait of Hormuz and what our allies may be willing to commit in terms of deploying military assets to help secure the waterway. The overarching sense here is that allies don't want to commit military assets till they actually see what is in the finalized text of this memorandum of understanding, which gives us a little bit of a behind-the-scenes look into how many of these European leaders, for example, have said that they still need some more clarity on exactly how this is going to play out. That perhaps is the short-term picture when it comes to the Strait and the questions we have there. But as you alluded to, when it comes to the fees that Iran is talking about charging, that is leading to questions about longer-term security in the Strait. And I had a chance to catch up with the spokesperson for France's foreign ministry, Pascal Canferou, earlier today, who told me that any such fees would be a non-starter for the country.
We're against it for two reasons. These straits, they are international waters. So we have to respect international law. Second, it will increase the cost of international shipment. And third, it has to, we have to avoid any precedents for that, because you have many other straits in the world, and in this case, it could create problems in other parts of the world.
What is France's assessment on the timeline that it could take to get the Strait reopened?
The discussions are happening now. So it's for us, it has to be as soon as possible to have this decision taking place, and then you'll have concretely how we can help it on the ground, which means indeed minesweeping and also preparing these escorts. But there has been a lot of work in the last weeks, a lot of work in terms of military planning to say, okay, which are the different countries that are ready to do it, how they can contribute, which kind of frigates and so on. And for instance, France can deploy quite quickly some frigates, some minesweepers as well, but with other countries such as Italy, for instance, also, but can also deploy some planes. We have our aircraft carrier, which is in the nearby, in the vicinity, and so as soon as possible, we can when the decision will be taken, we can be on the ground on that.
That was, again, France's spokesperson for their foreign ministry, talking about the timeline here, Joe, that it could take to reopen the strait, because a lot of logistical things need to happen, including European allies deploying these assets, such as minesweepers, to help secure the waterway. And just crossing the Bloomberg terminal moments ago, it appears that another ally has signed on to this diplomatic mission. The German Chancellor Merz telling reporters that he himself directly told President Trump that Germany is ready to contribute to the Hormuz mission. We are just waiting to see exactly when we could expect the strait to be reopened and these allies to fully contribute in.
Excellent. Tyler, great reporting here. As we understand, there is a 14-point document, a 2-month ceasefire extension at hand, and a Friday signing ceremony. Do we expect to learn more about what is in this memo of understanding before then?
So there's been some conflicting reporting on this, Joe. A senior administration official who briefed us reporters here on the ground said yesterday that we could expect this text in the next 24 to 48 hours, which would put us at later today or tomorrow. But you heard President Trump asked about this directly earlier today in one of his bilateral meetings, where he said that he is waiting for what he called a more formal setting to happen, presumably alluding to the anticipated signing ceremony this Friday. So it may be that we have to wait for that ceremony to actually happen, pen to paper, and then we get the finalized text. But it is something that us as reporters are looking for. But again, it is something that I have heard echoed here on the ground that our allies are looking for too. Joe, in fact, the spokesperson added to me that in order to really commit to helping to reopen the Strait of Hormuz and deploying those assets, they have to see what that finalized text looks like.
Got it. Tyler, we've only got about a minute. I want to set you up here, but what else is the president in for in the next couple of days as we wait for that signing on Friday? I know there's talk of him meeting with Volodymyr Zelensky. Has that taken place yet? What do the next 24 hours look like?
We're waiting to see if another bilateral meeting between the two leaders will happen. They did meet today earlier on the sidelines of the summit in a meeting alongside other G7 leaders. Tomorrow, I'm also tracking, Joe, of course, that the president is going to be in this meeting with some top tech CEOs that are here at the G7 to brief the world leaders. That includes Anthropic's CEO, amid what has been this push by the administration to ban Anthropic's most advanced models from being used for foreign use. So that could maybe be contentious. Also, not to mention that President Trump has now threatened a 100% tariff on French wine if France doesn't get rid of its digital services tax, which hits American big tech companies. So I think tech is going to be the next wave of discussion here.
Great stuff. Even in the middle of a field in France, Anthropic creeps its way back into the conversation. You look great out there, Tyler. I'm so happy that you could join us, and we'll see what's going on in our second hour here with Washington. What's going on in our second hour here with Washington correspondent Tyler Kendall. It's primary day here in the U.S. We'll have more on that coming up and look at the runoff, specifically runoff elections in Georgia, next on Bloomberg.
It's 12:21 on Wall Street. We do check markets all day long here at Bloomberg. Best level of the day on the Dow, trading at a record up 505 points right now, trading above 52,178 on the Dow. That is a gain of 1%. A retreat, though, for NASDAQ, the S&P 500 index, and the NASDAQ 100 index. A little changed on the S&P right now, down 6, under 0.1%. NASDAQ down 94 for the NASDAQ Composite Index, a drop there of 0.3%. The NASDAQ 100 Index down by 1%. Right now, the SOX, the Philadelphia Stock Exchange's Semiconductor Index, is down 2.9%. The VIX below 16, and the 10-year at 4.42%. Spot gold is up $32 the ounce to $43.43 now, up 0.7%. West Texas Intermediate crude just above 76 a barrel, down 5.8%. Barrel of Brent below 79 now. Brent crude down by 5.1%. Bottom line here, S&P, NASDAQ lower. SpaceX, though, pushing higher, topping Amazon in market cap. SpaceX, day 3 of trading, up by 12.5%. Amazon, meanwhile, up by about 0.5%. A big pizza takeout order to go. Yum Brands agreeing to sell its struggling Pizza Hut chain for $2.7 billion to a private equity firm, and its China business, Yum Brands, up by 2.1% among some of the pure play pizza names. We've got shares of Papa John's International down 1.3%, and Domino's Pizza up by 1.4%. For on-demand news 24 hours a day, subscribe to Bloomberg News now wherever you get your podcast. I'm Charlie Pellet. That Joe Matthew is a Bloomberg Business Flash.
Hi, Charlie. Thank you so much. Charlie Pellet. We'll be back with more on the markets in just about 20 minutes' time, part of our program every day here live from Washington on Balance of Power. Thank you for joining us. I'm Joe Matthew in the nation's capital. Kaylee will be back coming up top of the hour, just in time for hour 2 as we turn our attention back to Georgia. The memories of Atlanta. Remember, we went down to cover the primary, and of course, the 2 big contests we were there to cover resolved into runoffs. Go home for a couple of weeks, and, well, it's time to decide now. And we've got some additional endorsements to talk to you about here from none other than Donald Trump and, yes, Brian Kemp. So here we go again with the Kemp versus Trump drama. And we're going to start with the race for Senate here as President Trump comes in off the top rope with a last-minute endorsement. Once again, this time Representative Mike Collins, the Republican from Georgia, was already said to be in the lead. And he's going up against Brian Kemp's favorite, Derek Dooley, the former football coach. We talked to Brian Kemp, not in Georgia, as a matter of fact. Tyler talked to him out in Las Vegas at this big energy summit a couple of weeks ago about the politics in his state. Listen.
There's no doubt this is a challenging political environment, and it always is for any majority party in the second term of a presidential administration, whether it's Donald Trump or anybody else. But I feel very optimistic because of the things, at least in Georgia anyway, because of the things that we've been able to do in our state, the policies that we can run on and remind people of things that we pushed and that we have done, and also what we're going to do in the future.
Okay, now remember, this is to figure out which Republican is going to run against Jon Ossoff, the Democratic senator in Georgia. It's already time, once again, for Ossoff to defend his seat. I want to take the opportunity to reintroduce you to a great journalist here at Bloomberg by the name of Bill Ferries, who used to come on our program when we were just a simple radio show years ago. He was working in Asia at the time, and he's back with us in Washington, having run our national security coverage. He's back in the world of politics, right where we want him, in the dirty swamp. And we're all excited about primary season, including Bill, and it's great to have you as our senior editor back on the program, Bill. Thank you so much for joining. Let's start with this Senate contest here. Who's got a better chance in the general, according to the establishment, to beat Jon Ossoff?
Well, one of the things we've seen so far in all these primaries is the power of Donald Trump's endorsement, particularly in deep red states. Just ask Thomas Massie in Kentucky or John Cornyn in Texas whether Donald Trump makes a difference. He had not endorsed until just a few days ago in this Georgia Senate GOP runoff, but he came in for Representative Mike Collins. So we're going to see. Collins had been doing well. Yes. Before then, we'll see if this is what he needs to get himself over the top again. And as you know, because this is a a primary runoff. Voter turnout is a huge question mark in these things.
That's right.
How many people show up for primaries? Not that big a slice of the population. How many show up for runoffs after a primary?
Honestly.
You're really shrinking the population there at this point. Mike Collins is hoping that endorsement carries him over the line. He is facing Derek Dooley, not just former Tennessee coach, but but the son of a former University of Georgia coach. He has the endorsement of outgoing and very popular Governor Brian Kemp.
Yes.
So this is definitely a Kemp versus Trump showdown. Brings you back those memories, as you mentioned, of 2020. And it's potentially going to be a tight race, but we thought Texas was going to be a tight race between Ken Paxton and John Cornyn, and that ended up being a blowout, maybe partly because of lower turnout in these kind of runoff races.
Well, and you wonder if Texas feels differently about Trump than Georgia, which has, frankly aligned itself many times with Brian Kemp when it's had the opportunity. To your point, though, there's also the potential for a lot of election fatigue. They've had a lot of specials here between Warnock and Ossoff. These poor people have had to go to the polls a lot recently. And so now here we are a couple of months after, or whatever it is, a couple of weeks after the primary, it's time for a runoff. To that point can bring some noise into these results. But if this is the clash of the titans, Brian Kemp is still the more popular Republican politician in the state of Georgia, is he not?
He is. He's going out on a record of, I think he's been in office since 2019.
Yep.
He's been popular. He's made his with Dooley, but I think the fatigue's going to be a huge question. I mean, there were some House races that we had runoffs for Marjorie Taylor Greene's old seat as well. People have been going to the polls a lot more than they usually think. You think of it as like every 2 years, every 4 years kind of thing. Some people are going to get it in 3 or 4 times this year if they keep going and they stay registered. So, but it is Alabama or Georgia is a very different state than Texas or Kentucky, where we've seen Trump really his endorsements make a huge difference. So that's going to be a question mark. When you talk to the Republican Party officials, they have a lot of confidence in their ability to turn out what they call these low propensity voters. And those are the ones who they think are going to come in with backing Trump's endorsement for Mike Collins tonight.
So we've got a gubernatorial runoff as well. It's tough for Rick Jackson, boy, because in this case, Kemp and Trump agree. They're both behind the lieutenant governor by the name of Burt Jones. Is this as good as over?
Burt Jones definitely seems to have the advantage. I mean, he is. These are two very pro-Trump candidates. Let's just say that. Burt Jones helped lead Georgia's efforts to overturn the 2020 election. He's been with Trump since 2015, since he came down the escalator down there at Trump Tower. So he is hardcore pro-Trump. But Rick Jackson has spent about $100 million. He's a healthcare executive. He's a billionaire of his own money. So we're going to see whether a self-funded campaign like that makes a difference. Tom Steyer obviously had a lot of problems in California, despite over $200 million of his own money.
Did I see Ted Cruz back Rick Jackson? Is he just trying to be a pain, go up against Donald Trump? This is going to be the test of the Cruz endorsement here tonight. Bill, thank you. Maybe we'll compare notes tomorrow and see how this all pans out. It's great to have you back. Come and hang out with us more often. Bill Ferry's Wickets here because we're keying off of the news, or at least, well, the news and lack of detail coming from Iran. The oil market is clearly convinced that this is meaningful. We've got WTI and Brent with a 7 handle. West Texas, $75 a barrel. Brent's at 78, 79. They're both down 5-6%. Not bad. You would think that the stock market would be on fire right now, but in fact, the broad market is a little bit lower. We're not selling off here, but the S&P 500 is down fractionally. 12 points. NASDAQ's down a little more than 100 points, almost 0.5%, a little more meaningful because we are seeing some tech stocks take it after that massive rally that we saw yesterday. We wonder what's at play, though. If it's the lack of detail coming from Iran, if it's the technical response to what happened yesterday, or maybe we're tapping the brakes ahead of this Fed meeting. I haven't mentioned that yet. Kevin Warsh today is starting his first meeting, and tomorrow will stand in front of reporters with a lot of questions to answer. And we're curious how many news conferences he has in the pipeline here. So great to have Eric Weiner come back to join us, Bloomberg senior editor for America's Equities, live from World Headquarters in New York. How am I doing, Eric? Are you going to tell me it's all of the above? Because it felt this morning like we might have another big rally on good news from overseas.
You have pretty much nailed it, Joe, I have to say.
See, I've been reading your stuff, man. I'm doing my best.
Thank you. No, I mean, it is this mishmash of where are we? The thing about the S&P is that we did get a pretty strong run up for 3 straight days. So the idea that it's taking a bit of a breather, not a true stunner. The idea that it's tech that's coming off, that's a little bit concerning only because that's the growth side of the market, and that leads to the fear side of the market, which is this idea of what's going to happen with the Fed. And then, as you mentioned, there's Iran, and there's a lot of hope, obviously, in the oil market. You're seeing it, that, you know, things are going to open up and we'll be returning to normal. I've had a couple of traders, a friend of mine who's a prop trader at one of the big banks said, you know, imagine if where we'd be if DC had just done nothing. And it's a great point, because actually the fundamentals underlying all of this are wonderful. But the further away we get from the enthusiastic announcement from the president and we get closer to the supposed signing without any details, the market gets kind of skittish. So you had this first burst of enthusiasm, and now you're getting a bit of a pullback in sentiment. And I think a lot of people really are on hold to hear what the Fed has to say. We're entering a new regime, and we just don't know. And this is going to be different. We're used to Powell, and now we have Warsh.
You just said that line is going to stick with me. Imagine where we'd be if Washington just did nothing. Because it does seem like we're simply trying to get back to where we were before this whole damn thing began. And if that's the case, do we have investors this morning who woke up and started listening to the analysis from some of the more downbeat analysts who said it's time to sell into strength? If you get another up day, start taking some money off the table, Eric.
That's a great point. That's one of them. And the other one is what is actually going to happen with the Strait of Hormuz. We do not know. And if that is the choke point and you're betting on that and you don't have any details, at first blush, you rush in. But once you start digesting that, it becomes a little dicier. And that's kind of where we are right now.
Really fascinating. Is it going to be like this then until we hear from Warsh on Wednesday? And could that catalyze another leg higher? We've got about 30 seconds.
It absolutely could. I mean, it definitely could catalyze something, because if they come out much more hawkish and Warsh can't do anything about it, that could scare the market the other way. But there is a lot of room to move if we get some solidity.
Yeah, it could catalyze something. Imagine where we'd be if Washington just did nothing. The poetry from Eric Weiner in New York. Eric, thank you. We'll keep tabs on this market for you. You're going to hear from Charlie Pellet in just about, well, less than 10 minutes. And we'll assemble our political panel. Rick Davis and G.D. Shanzano coming up on everything happening overseas. I'm Joe Matthew. This is Blue.
It's 12:40 on Wall Street. We do check markets all day long here at Bloomberg. Headline from the Bloomberg: EV startup Rivian said to be laying off hundreds of workers. That according to the Wall Street Journal. Rivian shares right now down by 5.2%. But again, the headline: startup Rivian said to be laying off hundreds of workers. The Dow at a record, up more than 500 points right now, advancing by 1%, trading above 52,174 on the Dow, up now by 505. That is a gain of 1%. The S&P, NASDAQ, the NASDAQ 100 index, all lower. S&P is down 0.2%. NASDAQ is slumping 0.6%. And the NASDAQ 100 index, full of those big tech names, down now by 1.3%. We've got the 10-year currently yielding 4.42%. This as the VIX falls back below 16. The 2-year 4.03%, and the 30-year 4.93%. Gold is up 0.7%, $43.43 the ounce, while West Texas Intermediate crude oil 75.72 a barrel, down now by 6.2%, extending its slump. Barrel of Brent 78.63, drop there of 5.5%. Next up for Wall Street, the Fed decision tomorrow, and Chair Kevin Warsh's news conference. Catherine Rooney Vera is Chief Market Strategist at StoneX Financial, and on surveillance this morning, she told us, forget about the Fed lowering rates this year.
The real risk here is not stagflation. The real risk is overheating of the U.S. economy. We have multiple quarters of economic growth above potential, with a 6% fiscal deficit, with the consumer remaining remarkably strong. You know, I think it's a long shot to call for a rate cut this year.
Catherine Rooney Vera of StoneX interviewed this morning on surveillance. Shares of SpaceX up for a third day, gaining another 12.3% after IPOing last Friday. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcast. I'm Charlie Pellet. Once again, welcome back, Joe Matthew. That is a Bloomberg Business Flash.
Great to hear your voice, Charlie. Good to see you as well on YouTube. Search Bloomberg Business News Live. If you want to watch the program, Charlie, the voice of Wall Street, will be back with more on the markets coming up at the top of the hour, 1 p.m. Eastern Time. Voice of the New York subway as well. Just listen when you get on the car. It's a gorgeous day here in the nation's capital. We've got like 75 degrees and sun. I mean, perfect. The kind of day when you want to just walk right past work. Beautiful breeze coming off the Potomac. Maybe it'll cut down on the algae in the reflecting pool. You know, it's been very hot and humid around here. That's what happens. We grow algae in the summertime. This is a swamp, after all. Then again, I see it's going to be 90 degrees again on Thursday. If you're listening to us on 99.1 here in Washington, you know what we're talking about here. 'Tis the season. And it's not like a new thing to be walking past the reflecting pool and seeing some algae in there in the summertime. It's just a bigger deal now that the president spent millions of dollars to have the whole thing redone. And so the National Park Service got a phone call from the White House. We got to figure this out, guys. This has been 8 weeks of work here, and it looks, you know, we practically got mushrooms growing out of this thing right now. If you've seen the pictures, these massive green plumes of algae. It was supposed to be American flag blue. Remembering that a couple of companies from Oklahoma got this already just in time for the big fight. And so they're taking matters into their own hands here, as I read, going beyond just the getting in there and scraping with the nets and everything else here. They're doing more than brushes and turning to something called nanobubbles. I love this kind of story. I read, often used in wastewater management and aquaculture to reduce algae blooms. Hey, look, there it is. If you're with us on YouTube, just a shot of the algae there, and it gets to be a lot greener depending on where you are here. Turn to the Googles. Nanobubbles, extremely tiny gas bubbles in liquids, okay? Unlike regular bubbles, these are unique. Unlike regular bubbles that float and pop, I read, nanobubbles remain suspended in water for weeks due to their lack of buoyancy. Somehow this cuts down on the algae. Revolutionizing industries, I read, through highly efficient gas delivery. This is what's happening in our nation's reflecting pool right now. Just think of how many pools Donald Trump has made since he came down the escalator 11 years ago today. Producer James finding the trivia that matters. He's overseas today, by the way, probably seeing some gorgeous pools in Evian. The shot, wait till you see Tyler coming up in the next hour. The hills are alive. With the sound of, we're not sure yet. Because we've got a peace deal that was virtually signed with 14 points. A literal signing ceremony is set for Geneva, right, on Friday. And the market and, well, everyone else is asking what's inside, what's in the deal. We know that the president says Iran cannot have a nuclear weapon. We know that a deal would presumably, well, he said this, it'll reopen the Strait of Hormuz, even though Iran still says that it's going to be requiring some fees for transit. Just don't call them tolls. Maybe there's an easy pass or something they're coming out with. After that, though, it's pretty unclear about what's going to be signed here and what will happen in the next 2 days as J.D. Vance packs his bags. He's the one who's going to be leading this delegation, it seems, after his visit on The View today. Now, best case scenario, everything we need in there, we've got it, blammo, they sign it, it's a deal. What about Congress? Remember the same group of representatives supposed to oversee things like taxes and, you know, tariffs? They're also supposed to oversee treaties, right? I mean, so does Congress vote on this? Congress would like to. By the way, even Republicans are talking about this. I was struck to hear from James Lankford this morning, the Republican from Oklahoma. If you want a deal to last, it cannot be an executive agreement, he said. We've got to have a vote of Congress to be able to solidify it long term. In a conversation with reporters at the G7 in France, President Trump was asked about this idea. Here's what he said.
I never thought about sending it, never even thought about it, but I will. I will send it to Congress. I like the idea. I mean, who wouldn't approve it? Let's let them have a nuclear weapon. The Democrats will say, oh, they should have a nuclear weapon. They'll go crazy. I like the idea. Send it to Congress, please, all right?
Send it to Congress. He said he hadn't thought about it. That usually is an important stop in the road. We've come a long way from war powers as we assemble our political panel with Bloomberg Politics contributors Jeannie Shanzano and Rick Davis. Jeannie's our Democratic analyst, of course, democracy visiting fellow at Harvard Kennedy School's Ash Center, and Rick is a partner at Stone Court Capital, our Republican strategist. What's your thought on that, Jeannie? Would Democrats, the president seems like he wants to pin down Democrats on this, knowing they would vote no. Is he right?
Yeah, Joe, I'm still stuck on the algae in the reflecting pool. We were promised American flag blue, and this is
it's pretty
horrifying. Gross. It's gross.
We got Kermit the Frog green instead, Jeannie. It's not easy being green.
Yeah. What is happening? You know, the reality is that negotiating these deals in privacy and secrecy makes a lot of sense. But how often do you hear that a deal is signed, sealed, and delivered, which is what we have heard, and yet we've still not seen the text? And I think that speaks volumes as to what may potentially be in this thing. And if we just take the president at his word, what he said today was, he said it ensures his 99.9%, I think he said, goal was that Iran will not have a nuclear weapon. And yet that's exactly what was in the JCPOA that he ripped up. He also said it ensures that the Strait will be open, and yet the Strait was open before this war. So I don't think the Democrats would have a problem depending on what is in this thing, because what seems to be in this thing is Donald Trump capitulating to Iran to get us back to the negotiating table where we were before he started this war. I think he's going to have more of a problem, quite frankly, with the hawks in his own party. And you just referenced some of them who are coming out. You know, Lindsey Graham doesn't want to quite take on Trump yet because he needs him. So he's sort of taking on J.D. Vance and saying, what is in this thing? We've got to look at this thing. So I think his problem is not the Democrats as much as it's going to be members of his own party.
What's your thought on this, Rick? Would this pass today in Congress?
Depending upon what it is. I mean, you know, if it's a if it's an agreement that can get some public support behind it, sure. The reality is these are the things that Congress should be doing, right? Congress is supposed to ratify treaties. If this is going to be a treaty, Congress should ratify it, because then the next person around, as you stated earlier, has a much harder time abrogating a treaty. They got to get Congress to sign off on that, instead of what Barack Obama did, was basically just make a political agreement which means the next president in line can just throw it out, which is exactly what Trump did. He didn't need Congress. He can just do it himself. So it's kind of like an executive order. If you don't run it by Congress, it's not a law. And so I think Congress's job is to do these kinds of things, and the president's job is to negotiate them. So let's go back to doing the job that we all have been given by the Constitution to do.
What a revolutionary
That said,
concept.
nobody really knows what's in this package. And until they see it, Congress may change their mind and say, don't bring that dog to our house, and may not want any fingerprints on it. But look, I can't wait to see who actually signs this document, because you're really kind of putting your political future in the hands of the Iranians, right? Anything goes wrong, your name's on there. So like the pen goes from the vice president, then he's going to hand it to, the Secretary of State, and then the Secretary of State may hand it to one of his aides. I mean, like, who wants? It's kind of like the hot potato of a negotiation.
The JD Accords. Jeannie, there's reporting in Axios today that John Ratcliffe, the CIA director, has told Donald Trump and other officials around him in the White House that the intelligence gathered by the Central Intelligence Agency from U.S. spies who are on the ground raised serious doubts about Iran's willingness to make nuclear concessions that the U.S. would need to call this a real deal. Remembering, this just reopens the Strait. This now begins a 60-day series of talks around the nuclear program. Secretary of State Marco Rubio, Defense Secretary Pete Hegseth have also expressed concerns and raised questions about the deal in internal discussions. So what happens if we get to 60 days and there's no agreement on the nukes, Jeannie? Do we just go into indefinite talks? Do we resume military action? Because it seems like nobody wants to do that. Could we be talking about negotiations in November when we vote in the midterms?
We absolutely could. I mean, I think anybody who knows the history of Iran would say none of what Ratcliffe is talking about is at all a surprise. I'm listening to President Trump over at the G7 today talking about the idea that there is a new regime. I think he calls it like the third iteration of the regime in place. And they're nice guys that we can deal with. We have J.D. Vance all over the TV yesterday making statements that were really stunning, like the idea that the people in charge of Iran today, I think he said, they are done with the way they've been doing business with the U.S. for 47 years. They realize it's a mistake, and they want to move on in a new and a fresh way. That is not at all a reflection of reality. The supreme leader in place is the son of the murdered supreme leader. His entire family was killed. The IRGC, that is made up of people who are even more radical and more entrenched, are in charge. So this is like wish casting, wishful thinking on the part of the president and J.D. Vance. And Ratcliffe is reflecting the reality. And yes, we will be hopefully negotiating, but the other option is we go back to a hot war. And either of those options are really in the offing at this point.
So we look at the calendar here, Rick, and I'm wondering what you see 60 days in. If there's no agreement on a nuclear, the nuclear program or lack thereof in Iran, do we need to have a definitive period of time to continue talks? Or does this just become kind of a gray area where we're back in the status quo?
Yeah, I think that the pressure of the midterms is going to try to convince the White House that they need to have closure on this issue, right? And so what does closure mean? Having some kind of an agreement in place, a signature of the Ayatollah on something with Trump. You can frame it in a lot of different ways, but this thing, the current 60 days will expire right before Labor Day. And all of a sudden, you're full in the campaign stream. And so every survey that is going to be taken from September on is going to reference the Iran deal, whatever that happens to be at the time. And are you more or less likely to vote for a Republican, if how you feel about the Iran deal? And boy, every Republican I've talked to is like, man, the last thing we needed, we're fighting it over cost of living. We can't keep this administration's, focus. And now we're going to be thrown into debating Iran all through the fall. I mean, it's literally set up to do that. And I think that's really the political problem in this whole thing is they needed to get this deal done in the summer. And now they've basically kicked it right into the fall.
Rick Davis and Jeannie Shanzano, great panel. They're going to be back with us in our second hour here on Balance of Power. Update on the reflecting pool. The nano bubbler has been installed. Katie Martin at the National Park Service, due to deploying this advanced technology, the algae is dead.
Being green.
Being vacuumed as we speak. This is...
From Washington, D.C., this is Balance of Power with Joe Matthew and Kaylee Lines.
The president meets with leaders at the G7 as the world asks, what's in the deal? Welcome to the Tuesday edition. As President Trump rounds his day in France with a signing ceremony on that deal with Iran, set for the end of this week. I'm Joe Matthew alongside Kaylee Lines in Washington. And Kaylee, no matter what is in this 14-point memo of understanding, it will not be addressing Iran's nuclear program.
No, that's what the next 60 days are for. That is, of course, how long the ceasefire will be prolonged. And the ultimate objective, the Trump administration says, is to guarantee that Iran will never pursue a nuclear weapon. But the question around the enriched uranium still in Iranian territory, President Trump today suggested that perhaps it's not really a big deal to go and get it, to paraphrase his words.
Suggesting again that it's a psychological kind of a thing. It's tough talk for Israel, disappointed in the way that Benjamin Netanyahu has been handling Lebanon, and also questions about Congress. The president now does seem in favor of sending whatever is in this agreement to Congress to sign off and codify this into law.
Yeah, of course, that has been what many Republicans in Congress have been calling for, including perhaps one of the biggest Iran war hawks of them all, Senator Lindsey Graham, wants to see this deal when there is one. To your point on Israel, the president also suggested on the sidelines of the G7 summit today in a bilateral meeting with the UAE that Israel wouldn't exist without him.
That's right.
And I wonder the reaction to that statement from the former Israeli ambassador to the United States, Michael Oren, who will be with us in just a few minutes.
That's right, and we're going to bring you to France to get the latest from Bloomberg's Tyler Kendall, who's traveling with the president. There's, I guess, some sort of cultural presentation going on right now, and then the big G7 dinner to be a fly on the wall for some of these conversations. I will say that the oil markets have been responding positively. Well, at least if you're a bear. We've got 7 handle on both WTI and Brent today. Kaylee, but a little bit of confusion, you might say, in the stock market as the Fed meeting gets underway this week in Washington.
Yep, Kevin Warsh's first decision and press conference is due tomorrow. So let's get a check on how markets are bracing for that and dealing with all of these other headlines as we turn to Charlie Pellet up in New York. Hey, Charlie.
Hi, thank you very much, Kaylee. Lines indeed from the G7 to the Mag 7. We got you covered here at Bloomberg. Dow higher, trading at a record. S&P, NASDAQ, they are both slumping. We'll throw in the NASDAQ 100 index as well, full of big tech names. It, too, is down right now. The NASDAQ 100 index down 1.3%. NASDAQ Composite down 0.5%. S&P lower a little change, down 0.2%. But the Dow Industrials holding close to session highs, up 493 now, up by 1% at 52,163. That is a record, also for the first time ever, trading above 52,000. Our Mag 7 index down 0.4%. All of this with the SOX, the Philadelphia Stock Exchange's semiconductor index, down now by 3.4%, and the VIX just a hair below 16. The 10-year 4.41%, with the 2-year 4.03%, and the 30-year 4.92%. Spot gold is up 0.6%, 43.38 the ounce. West Texas Intermediate crude, big story there, slumping another 6%, 75.91 a barrel on WTI. Brent crude 78.85, barrel of Brent down now by 5.2%. Again, Dow at a record on the eve of the first Fed rate decision under Kevin Warsh. Cannot ignore another move higher today for shares of SpaceX. Now, day 3 of trading up another 12.7%. SpaceX, by the way, has surpassed Amazon in market cap. Amazon up by under 0.1%. But the big news, SpaceX keeps on going, up another 12.3%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcast. I'm Charlie Pellet. Joe and Kaylee, that is a Bloomberg Business Flash.
All right, Charlie Pellet, thank you very much. Just incredible to consider SpaceX has only been a public company for 3 days, and it already could be cracking the top 5 in terms of the largest publicly traded companies that exist on planet Earth. And Elon Musk, of course, still far and away the wealthiest person on paper on planet Earth. That trillionaire status keeps adding a bunch of numbers to that.
A lot of zeros.
Ticking. Yeah, a lot of zeros, and he just keeps climbing as that stock does. But of course, as we consider the wider picture Wall Street is contending with, as Charlie mentioned, we are seeing yields lower and oil lower today on the back of optimism around this memorandum of understanding between the U.S. and Iran that the Vice President J.D. Vance in an interview yesterday described as a general document, only about a page and a half. So our real question is, what exactly will this MOU accomplish? What is in it? This is what the president had to say about that at the G7 earlier today.
Here's what it says. Iran will never have a nuclear weapon. That's what it says. It won't have one to buy, to develop. They will not have a nuclear weapon. And I would say that's about 99.9% of what I wanted, because we couldn't let that happen. You couldn't let that happen. And they won't have a nuclear weapon. Now, in addition to that, the Strait is going to be open toll-free.
Toll-free semantics we do explore here with Iran suggesting, according to some reporting, that maybe not tolls but fees, as they're calling them, will be in place when the strait reopens. Either way, the market is taking this in stride, and we are all waiting for the president, for the administration to start filling in the cracks on what is in this 14-point agreement. That's why we turn to Bloomberg Washington correspondent Tyler Kendall, who is traveling with the president. The hills are alive with the G7 in Evian, France. If you're with us on Bloomberg TV or on YouTube, we're joined by a Tyler Kendall who is in a gorgeous setting, hopefully one that might produce some results here. Tyler, I know the president is going to be resolving into a meeting with G7 leaders this evening. Having had some bilateral meetings today, are we learning more about what's in the agreement?
Well, Joe, at this point, President Trump says that he's going to wait for a more formal setting, in his words, to release that finalized text of what is in this memorandum of understanding. But until we get those final details, it is raising some questions among our allies here at the G7 summit, perhaps most notably about what is prioritized in this deal when it opening the Strait of Hormuz. Of course, we know that both sides say that we are going to see freedom of navigation in the strait, at least for the 60-day extension of the ceasefire. But our allies are raising some concerns about what assurances there are to ensure safe transit. And I had the chance to catch up with the spokesperson for France's foreign ministry, Pascal Canfrou, and asked him if France has the necessary clarity that it needs in order to commit military assets to help secure the waterway once this deal is signed, and he told me not yet.
This agreement that happened just before the G7 was a good news. It was supported by the different members of the G7. Second, we all want to make it a reality and a lasting reality in the days to come. So it was part of the discussions that are happening actually this morning. And third, yes, as President Macron said, we stand ready to deploy this multinational mission that we've been working on with our UK partners for now a couple of weeks. There was a summit of the Elysee on April 17th that gathered 50 states that are ready to, in a way or another, take part in this freedom of navigation operation. Concretely, it will mean first to have the ability to swipe mines, and second, to have the ability of having some military escorts of civilian ships. Now, the discussions are to see how it can be possible to deploy it if the situations agree on the ground. So that are parts of the discussion, but we stand ready to do it.
What are the biggest roadblocks in those discussions?
But first, we have to see how the agreement will unfold. The agreement was electronically signed a few hours before. Now we have to wait for the Friday signature ceremony, which will happen in a few kilometers from here in Switzerland. And so the discussions are to see how the belligerents will take that into account for the future, and what do they need to reestablish this freedom of navigation, because you know that is extremely important for us, first to have that as soon as possible for the sake of our global economies, but also second, not to have any toll in the future, because this is unacceptable in terms of rise of shipments, but also in terms of precedents that we want to avoid for any future straits in the world.
Well, since you brought up tolling, we did hear from Iranian state media seeming to indicate that after that 60-day extension of the ceasefire, we could see fees imposed later. They're not calling them tolls, but they're saying they would be related to navigational services, insurance services. Is this something that France would be willing to accept fees, even if it meant reopening the strait, at least in the near term?
We're against it, so we have to discuss on that. We're against it for two reasons. These straits, they are international waters, so we have to respect international law. Second, it will increase the cost of international shipment. And third, we have to avoid any precedents for that, because you have many other straits in the world, and in this case, it could create problems in other parts of the world.
What is France's assessment on the timeline that it could take to get the strait reopened?
The discussions are happening now. So it's for us, it has to be as soon as possible to have this decision taking place, and then you'll have concretely how we can help it on the ground, which means indeed mine sweeping and also preparing these escorts. But there has been a lot of work in the last weeks, a lot of work in terms of military planning to say, okay, which are the different countries that are ready to do it, how they can contribute, which kind of frigates and so on. And for instance, France can deploy quite quickly some frigates, some minesweepers as well, but with other countries such as Italy, for instance, also, but can also deploy some planes. We have our aircraft carrier, which is in the nearby, in the vicinity, and so as soon as possible, we can, when the decision will be taken, we can be on the ground on that.
That was a conversation earlier today here on the sidelines of the G7 summit with the spokesperson for France's foreign ministry. And Joe and Kaylee, we heard from another ally today as well, the German Chancellor Merz, telling reporters within the last hour that he told President Trump directly that Germany is ready to commit military assets to a naval mission. But he also echoed the same sentiment that the country needs to see some firmer details around this memorandum of understanding before those assets are deployed.
Bloomberg's Tyler Kendall live in Evian, France for the G7 summit. Thank you so much. Tyler, of course, running us through the views of two allies of the United States around this potential memorandum of understanding or the existing memorandum of understanding that we just only know potentially what is in it. But we have to consider another ally as well, Israel, where President Trump has had some pointed words for Israel and the conduct of the Netanyahu government specifically. And as we mentioned earlier, even going so far as to say today that Israel wouldn't exist without him, that there would be no Israel, in his words, without me. So for reaction to all of this, we turn now to the former Israeli ambassador to the United States, Ambassador Michael Oren. Ambassador, welcome back to Bloomberg TV and radio. Could we just begin, and we'll get to the president's specific comments regarding Israel in a moment, with the Israeli view of this memorandum of understanding as we understand it? I know that there are a lot of details that we aren't firm on to this point. So what does this actually need to look like for Israel to be comfortable with it?
Well, it's good to be back with you too as well. Well, there were 5 goals set out by the United States and Israel jointly at the beginning of this war. They were to prevent Iran from getting the nuclear weapon, ending its nuclear program, removing the stockpile of highly enriched uranium. That's up about close to 2,000 pounds of highly enriched uranium that can be made into about a dozen bombs, probably more. Stopping Iran's intercontinental ballistic missile system that has been pummeling Iran's neighbors and the state of Israel. These are huge missiles. And stopping Iran's support for terrorist groups like Hezbollah, like Hamas, like the Houthis. And generally changing the Iranian regime in such a way that it no longer threatens its neighbors and no longer threatens its own citizens. Those were the goals of the war. Another one was added during the course of the war, and that was reopening the Strait of Hormuz. And the question is to what degree, if any, this memorandum of understanding addresses any of these issues which are absolutely vital for the state of Israel. The president has criticized Israel's actions to defend itself against Hezbollah. What we have to recall is the entire northern part of this country where I'm sitting, the Galilee, which is known to a great number of Americans from their religious services, is completely uninhabited today because they are being shelled daily by Hezbollah rockets and drones, and Israel has to take whatever measures are necessary to defend those citizens who send that part of the country, even at the cost of standing up to the President of the United States.
So let's talk about what Americans are hearing from their president, ambassador, and I'm sure that you heard yourself. He said, I've had a great relationship with Bibi, but now Bibi has to be more responsible with respect to Lebanon. More specifically, he said you don't have to knock down an apartment house every time you're looking for somebody because there are a lot of people in those apartment houses and they're not all Hezbollah. I'm not happy with the way Israel has handled themselves with Lebanon and with Hezbollah. Is there some truth to what he's saying, Ambassador, or does this display a fundamental misunderstanding of the threats facing Israel?
It's a long-standing, I would say, difference we've had with the United States. We're dealing with enemies that on purpose hide among the civilian population. They use them as shields. And they're going to keep on shooting at us. And if civilians are hurt or tragically killed, and that is a tragedy, certainly, it is not the responsibility of the state of Israel. I think the president would be well advised to address his comments to Hezbollah and tell Hezbollah to stop shooting at the northern part of this country and rendering it uninhabitable and stop hiding behind its civilian populations. And there'll be no further apartment buildings that'll be collapsed.
Well, as you talk about a misunderstanding here between the United States and Israel, or at least in the way in which the U.S. is understanding this particular circumstance in Lebanon, does it actually not go deeper than that? Ambassador, do you see the ambitions and incentives here for the U.S. and Israel at this point actually diverging when it comes to Iran? Is Israel going to have to go its own way at some point?
Well, I think it's natural that the interest at some point would diverge. The United States is a very big country. It's situated far from the Middle East. It's not threatened immediately with rocket and missile fire or terrorism from Iran, not immediately. And Israel's a small country. We're in Iran's backyard, and we are threatened not just strategically, we're threatened existentially. If we don't defend the North, we basically lost this country. So a very different set of interests at the end of the day. And yes, those interests might diverge. But Israel will simply say, and I think with due respect to the president, that this agreement is between the United States and Iran, not with Israel. We were not consulted about the agreement. We're not to the agreement, and we're certainly not signed on this agreement. It does not obligate us in any way. We will continue to take whatever measures are necessary to defend our land and our people, whether it be in Lebanon or elsewhere, in addressing in any continued threat from the Iranian nuclear and ballistic program.
What's the feeling when you talk to people on the ground in Tel Aviv or Jerusalem today, Ambassador? Is it one of optimism or one of nervousness about what this deal might lead to?
Very somber mood indeed. There was a shimmering moment some months ago that we thought maybe we were looking at a completely different future for this country and for the entire region. A region that would be free of the Iranian threat, in which Israel and Lebanon could make peace, Israel and Syria could make peace, Israel and Saudi Arabia, maybe even Israel and a post-Ayatollah Iran could make peace, and that there would be a restored American Pax Americana that would extend from the Mediterranean to the banks of the Ganges. That was our hope, and now that hope has very largely dissipated. We do not know what's in this memorandum of understanding, but from what we can tell so far, there seems to be there's no relation to the ballistic missiles, to the support for terror, to Iran's commitment to destroy this country and kill the 10 million people in it. It's a genocidal policy. And so, yes, we have, together with the United States, greatly degraded Iran's military capabilities. We've degraded its proxies' abilities. We pushed them back from our borders. But we may find ourselves in not too far into the future facing very similar threats and maybe even more enhanced threats than we have confronted in the past.
So, Ambassador, do you see a risk, as the U.S. is obviously pursuing this diplomatic off-ramp and not continuing offensive operations against Iran, that the U.S. could get drawn back in defensively, having to defend its ally, Israel? Do you really think that could be the future?
It could be, and it has been in the past, too. During the Biden administration, Iran fired twice at Israel hundreds of missiles and drones. And the Biden administration, together, even with our Arab allies, joined in defending and helping to defend Israel's skies. This certainly happened last summer during the 12-day war. It happened now during this most recent war. That will happen again because the United States is committed to our defense. But there may, as you said, may be differences of policy about how Israel defends itself. We have very, very little wiggle room. That's all I can say. No Israeli government, doesn't matter if it's a Netanyahu government or any other government, can maintain its legitimacy as long as it does not fulfill its primary duty, which is defending this country and defending its citizens. Yes, even at the risk of some friction with our ultimate ally, but that is our duty. That is our job.
So let's say best case scenario for this week, a deal is signed and the clock starts on a 60-day negotiating period, Ambassador. What happens if there is no deal on nuclear by the end of that 60 days?
Well, I don't know. I'm not a prophet, but I would wager there'd be another 60-day extension. One of the benefits I can see so far, from what we know, is that in contrast to the 2015 JCPOA of the Obama administration, which gave Iran money up front in the hope that Iran would become, and I'm quoting President Obama here, would become a responsible regional power, which never happened. It appears that the Trump administration is withholding payments to Iran until it conforms to the terms of the treaty. I think that would be a positive development here. But again, it may fall very far short of Israel's basic security needs.
Ambassador, as we mentioned at the beginning, we obviously have heard some sharp words from President Trump regarding Israel in the last 24 hours. I'd like you to just listen to what he said earlier at the G7 summit, and we'll get your response.
Without the United States, there would be no Israel. Without me, there would be no Israel, because no other president was willing to do what I did. I've had a great relationship with Bibi, but now Bibi has to be more responsible with respect to Lebanon.
Without the United States, there would be no Israel. Without me, there would be no Israel. Ambassador, what would Israel realistically to be able to do in terms of its own defense or offensively against Hezbollah if it did not have the backing and weapons from the United States?
Well, again, I'm going to answer you not just as a former ambassador, but as an historian. Israel did not have a strategic alliance with the United States before 1967. We fought the Six-Day War with French arms, not with American arms. And Israel has existed. When I say we have survived, sometimes it's been a close call, but we have survived. Without American armaments, Israel would have to seek armaments elsewhere. But I assure you, the president's going to say that Netanyahu has been irresponsible. But the criticism of Netanyahu in this country is that he has not been sufficiently responsible and that he has not responded with sufficient force against Hezbollah. And that is certainly the criticism of those residents of the north, both of those who are remaining under fire and those who have been displaced. And we're talking about tens of thousands of people who have been displaced. They are very, very critical of the prime minister, to the point that that criticism is now deeply impairing his chances of being reelected in the elections coming up in the fall.
We always appreciate spending some time with you, Ambassador. Thanks for being with us once again on Bloomberg. That's Michael Oren, of course, the former Israeli ambassador to the U.S. We're going to have a lot more on the president's travels to France, his meetings at the G7, and, of course, the status of this peace deal as we work our way toward what we are told will be a signing ceremony in Geneva on Friday. And we're going to play this panel, to the panel, I should say, coming up next. Rick Davis and Jeannie Shanzano are with us. We just talked about a lot with the ambassador that we'll unpack with them coming up. First, we want to take a look at the markets, latest on Wall Street from Charlie Pellet, who's standing by at World Headquarters in New York. Where should we start, Charlie?
Right now, let's start with the Dow Jones Industrial Average. Joe Matthew, we're looking at a record there. Right now, the Dow at 52,140. That is a gain of 468 points. Yes, off our session highs, but still advancing by 0.9%. Big question, are we going to close above or just below 52,000 today? The Dow, by the way, being led higher by JP Morgan Chase, 3M, and Caterpillar. S&P 500 index close to the worst level now, down 22, drop there of 0.3%. NASDAQ is down 168, down 0.6%. But tech is where the real damage is being done today. The NASDAQ 100 index, it is retreating now by 1.4%. All of this with a VIX below 16 and a 10-year at 4.42%. Gold up $15 the ounce, 43.26 now, higher by 0.3%. West Texas Intermediate crude 75.86 a barrel. WTI down 6.1%. Barrel of Brent 78.70, down by 5.4%. Day 3 of SpaceX shares are jumping again, overtaking Amazon as the 5th largest publicly traded company in the world. Only days after its blockbuster debut on Friday, shares were up yesterday. They're up again today. Right now, SpaceX is advancing by 11.2%. Amazon, by the way, down now by 0.1%. Meanwhile, SpaceX formally agreeing to take over Cursor in a deal that values the AI coding startup at $60 billion. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcast. Joe and Kaylee, that's a Bloomberg Business Flash.
All right, Charlie Pellet, thank you very much. Of course, there's some optimism, at least in oil markets, as you see with prices moving lower, that the Strait of Hormuz will reopen and energy will be flowing once again. Is that optimism, though, shared around the prospects of Iran never having a nuclear weapon? As President Trump maintains that is what the memorandum of understanding that the U.S. and Iran will formally sign in ceremony in Switzerland on Friday, Israel seems a little bit more uncertain about that, as we just heard from the former Israeli ambassador to the United States, Michael Oren, talking, Joe, about an existential threat that many, he says, in Tel Aviv and Jerusalem today still feel is present, not just via Iran, but its many proxies as well.
Yeah, you do wonder if the signing of this deal will at last really expose the sunlight between our two governments when it comes to Iran and Lebanon. By that we mean Hezbollah. This is something that is a point of friction that's not going to be going away. It's really tough talk from the president today about Netanyahu and the way that he's comported this whole operation in Lebanon. We want to hear from our panel on some of the comments that we just heard from Michael Oren. Bloomberg Politics contributors Rick Davis and Jeannie Shanzano join us right now. Jeannie is our Democratic analyst, democracy visiting fellow at Harvard Kennedy School's Ash Center. Rick is a Republican strategist and partner at Stone Court Capital. Rick, when you listen to the ambassador and you consider the somber feelings that he described among people in Israel, they're not celebrating the news, at least that which has come out so far today. It does make you wonder if at some point Israel will decide to go it alone against Iran. What's your thought after that conversation?
You know, I'm not sure I'd even describe it as go it your own. I mean, Israel has been fighting for its survival almost since the day they were, created as a state. And Michael Oren mentioned a couple of the conflicts that have been fought over time, any one of which could have been existential to the future of the state of Israel. And the mentality of the people I know in Israel is we're just going to keep fighting, right? They don't anticipate a day where they don't have an enemy, either coming from the south, Egypt from historical, experience, not so much anymore, but like from the north in Syria and Lebanon, Hezbollah. They've been sandwiched between enemies since the day they were consecrated. And so the reality is, I just think there's a mentality that said, of course we're going to keep fighting. I mean, why wouldn't we keep fighting? It's what we do here in Israel. We're really good at it. It's why we've preserved the state we have and the freedoms we have. And look, as the only functioning democracy in that region, as one of our greatest allies around the world, and as a group of people who have led the cultural and economic vitality of the state of Israel that has been shared by the United States, what in the world are we taking sides over Israel with Iran, who's not fulfilled any of those aspirations? So I don't know. This administration picks winners and losers all the time. They don't really stay married long, and we'll see what happens next. But it's a difficult time because I think Israel appreciates everything the United States has done for it, but isn't banking on us being their savior forever. They believe in themselves.
Well, and as we consider that prospect of the U.S. forever being Israel's savior, to use Rick's words, Jeannie, no matter how disappointed the Trump administration may be or how disappointed the Biden administration was with Israel's conduct in Gaza, do you really see any time in the near future that the United States would be willing to turn its back on Israel?
I think if we look at the polling, and this has been one of the starkest changes I think we've seen in polling in a long time, has been the decline in support amongst the American public, and not just on the left, but on the right as well, for Israel. And so I think that is a generational change. I think it's something that we could see going forward. But, if I'm Israel and I'm looking at what's happening today, why wouldn't I be dead set against this? They went into the war and they were very clear why. To ensure that Iran was no longer a nuclear threat, didn't have access to nuclear weapons, and for regime change. And to ensure this existential threat, as the ambassador called it, which is absolutely the right word, is no longer able to threaten them. None of that has happened. And to make things worse, we are all more vulnerable today to a more radical Iran. We are more vulnerable to Iran that now knows it can hold the U.S. and the world economy hostage, and to proxies that are not going to be addressed. So if I'm Israel, I would absolutely be dead set against this MOU. Benjamin Netanyahu politically at home doesn't have the option of standing up straight against Donald Trump at this point. But there is nothing that we know about this yet unseen MOU which suggests that Israel would be anything but dead set against it. And that is because Donald Trump wants to, for the purpose of his own political future and the midterms coming up, get out of this war of choice that he entered and got us into. And he'll do anything to do that, even sell out his closest allies.
Well, you tend not to think that much of this is going to factor into decisions being made in states holding runoff elections today. It is a primary day, and I guess that's unfortunate because some of these folks we're talking about here could be working in the House or the Senate, which may need to vote on something like this. The president did say today that he is open to this agreement going to Congress, which of course has oversight over treaties, in this case, that the president may be signing on Friday, or J.D. Vance in his stead. I do want to ask you both about some of the elections that we're looking at, specifically in Georgia. We went, of course, to Atlanta just a couple of weeks ago to cover the primary there that resolved into runoffs for Senate and for governor. And we're going to find out tonight which Republican will be running against Jon Ossoff, the Democratic senator from Georgia. And we've got a presidential endorsement now all of a sudden. Donald Trump swinging in at the last minute to endorse Representative Mike Collins, which creates a bit of drama here because Republican Governor Brian Kemp is backing Derek Dooley, the former football coach, in that contest. Interesting moment in our bureau today when Bloomberg's David Gura sat down with Raphael Warnock, the other Democratic senator from Georgia, to talk about politics on the ground in this important state. Here's what the senator said.
It's a purple state, so you got to convince all kinds of people to vote for you. I did it 5 times in Georgia in less than 3 years. It's doable. Of course, I'm rooting for my brother, Jon Ossoff, and I think he will do well against whomever they put up. I think Keisha Lance Bottoms will do well in this election.
What's your take on Georgia and this race specifically, Rick Davis? Remember, Congressman Buddy Carter was in that primary, and he got 20%. I don't know where those voters break, but who would you rather have faced Jon Ossoff as our Republican?
Yeah, this is what's so hard. I mean, I think we talked about this earlier in the program. Midterms are hard because they're hard to predict because there's such little turnout, and runoff of a midterm is even less turnout. Only 500,000 people voted already in advance of today's primary, which is incredibly low. And so, look, you got to give advantage to Trump. He stuck his neck out, which means he's got polling that said that Collins is likely to win. He doesn't like to get involved in races that aren't close to being a sure thing, so he probably knows more than I do about it. But Dooley's a minted name in Georgia, and not only has he been endorsed by the governor, but the governor has actively campaigned for him all around the state. And, he's still an incredibly popular governor, much more popular than Donald Trump. So that's a real race to watch. I do think that it's a big issue for Republicans in Georgia as to what the future of Georgia's party is going to look like.
Well, and of course, Governor Brian Kemp once faced a Trump-backed challenger in a primary, and he prevailed in Georgia, to Rick's point, which raises the question once again, Jeannie, of even if the president has his way in the primary and his backed candidate and Mike Collins ultimately wins, or Burt Jones in the gubernatorial race, for that matter, how does that play in the general when voters of all stripes, as the senator was just talking about, in a purple state will be casting ballots? Does the more MAGA, more loyal to the president candidate necessarily have the odds with them?
I don't think so. There was a time not that long ago, Kaylee, we would all talk about Jon Ossoff as one of the most vulnerable members of the Senate up for re-election this year. All of a sudden, his prospects have changed. He has moved up the list of 28 contenders. He's got real buzz. And why? Because, as the senator was just talking about, he's able to speak to voters of all stripes, from progressives to moderates and even conservatives. Why? I think it's because Ossoff has focused like a laser beam on the one issue voters care about, which, sorry, President Trump, is not the 2020 election, as he keeps talking about, but the economy. And that is what this election is going to be about. And that's why I think Raphael Warnock can, say that it almost doesn't matter who wins for Democrats. They'd rather run against, I think, Collins than Dooley. But it almost doesn't matter, because this race is going to be about one thing and one thing alone, and that is the economy. And Republicans are going to have trouble running on that, which is why President Trump is so hell-bent on getting this MOU signed and put behind him. So I think this election in Georgia was one we thought was going to be really up for grabs for Jon Ossoff, and he is looking stronger and stronger than we ever thought before from the Democratic perspective.
All right, Jeannie Shanzano and Rick Davis, Bloomberg Politics contributors, the both of them, and we'll see what results bring this evening or tomorrow morning in Georgia. We also should note, Joe, that it's primary day in D.C. as well, the mayoral race, one to watch, knowing that D.C. is one of the bluest cities in the country. So whoever
100%.
wins this primary basically is going to become the next mayor.
As opposed to the reflecting pool. It was blue when you went down there, and it's very green now with
that algae
blossoms. You see they're pouring nano bubbles into the reflecting pool now to take care of the algae problem. That should fix it.
Yeah, you would need a lot of bubbles, a lot of hydrogen peroxide.
That's what they're
Remember,
dumping in there,
this
too.
is as long as skyscrapers, as the president continually points out. We'll have more ahead here on Bloomberg.
It's 1:40 on Wall Street. We do check markets all day long here at Bloomberg. We've got the Dow holding on to a record. S&P, NASDAQ, they are both declining. NASDAQ 100 as well. It is down now by 1.5%. All the big tech names, they are tumbling. We've got NASDAQ down by 0.7%. S&P lower by 28 for the S&P. That is a drop there of 0.4%. The Dow, meanwhile, up 439, trading above 52,000 for the first time. 52,111 right now, up by 0.9%. The VIX below 16. The SOX is down by 4%, the 10-year, 4.42% for the 2-year, 4.03%. Crude, major story today. West Texas Intermediate crude now down by 6.1%, 75.81 a barrel. Brent 78.70 down by 5.5%. Verizon Communications is launching a simplified wireless service plan, also introducing a new loyalty rewards program. Recapping, S&P 500 index down 0.4%. I'm Charlie Pellet. Joe and Kaylee, that is a Bloomberg Business Flash.
All right, Charlie Pellet, thank you, sir. He'll be back with more on the markets coming up at the top of the hour as the S&P 500 extends its decline to session lows here. We're all old enough to remember S&P 7600 back at the beginning of this month. So don't despair. Some of these declines seem severe, but bring us back only a couple of weeks in some cases. I will say, Kaylee and Charlie's been hitting this. The one thing that is nice to see lower is oil, not to mention interest rates, but crude oil futures in New York and overseas, Brent, all showing a 7 handle now. WTI just under $76 a barrel. And Brent is at about 78, which is a far cry from the peak around $120 that we saw a couple of months ago. So we'll call that a good thing, and presumably gas prices will follow, right?
Yeah, it's just a question of how quickly, but this is the lowest we have seen for oil prices, at least the front month, since going back to when this war started, very early days of March. The question we have for Mike McGlone, who's our senior commodity strategist at Bloomberg Intelligence, is how much further can they go from here? How much of the good news surrounding the Strait of Hormuz and the optimism around it reopening completely by Friday, the president says, is already baked in to this price. So, Mike, how much further could we see this deterioration in oil prices, and how quickly?
Well, that's the key thing, Kaylee. We're subject to the nuances of war and to Mr. Trump. But the bottom line, the 10 on a scale 1 to 10 for crude oils, what does Mr. Trump need, the leader of the world's largest energy producer, a net exporter by midterms? He needs lower energy prices. I still fully expect him to get that, and natural gas has been a great guide. Remember, it did the same thing in 2023. It led the way down. It's down in the year, and I think by the end of the year, crude oil is going to be down in the year, particularly if you see what's happening today continues, a little back up in the stock market. And remember, it is a midterm election year, and stocks usually go down in those kind of years, and that's a key pressure factor for crude oil. But the bottom line for crude oil is I'm much more comfortable now around $75 a barrel. When it got above 100, it breaks stuff, and it brings on more supply from the U.S. Now they're around 75. The key thing to remember, though, is it almost always goes down to a low-price cure, and I think that's going to be closer to 50 by the end of the year.
Wow, that would be something. Remembering we were at $67 a barrel. I actually had to check this morning, Mike, before the war broke out on February 28th. I want to ask you about gas. We're at $4.04 today. Again, before the war, that would have seemed shocking, but we have seen daily declines, a couple pennies a day here, to where we're just now getting back down to about $4. I'll tell you what, I filled up for, I think it was $3.79 a gallon about a week ago in the state of Virginia. So you certainly can get below $4 pretty easily. But you've heard this reference a lot, the old elevator up and stairs down. Is that going to be the case for gas?
Yes, because we're into the driving season. The average gasoline price now is $4.04. If you look at futures, Joe, it should be down closer to $3.80. Actually, futures lead the way a little bit. But as we get through the driving season, I fully expect to head closer to 3 and below 3, potentially towards 2, because that's what it usually does. The key theme is what's going to be different to make it higher this time. And I think if the straits cleared up after we've had that big pump in prices, it usually brings on that more supply and makes prices go lower.
Well, as we consider where all that supply is going to need to go, Mike, it's one thing for supply to meet just the kind of daily demand. But when you see a headline like we saw yesterday that the U.S. Strategic Petroleum Reserve is at the lowest level in nearly half a century, how should we consider the demand that may be inspired by countries such as the U.S., but others as well, looking at China, for example, who want to refill their stockpiles? Is that not a force that could keep prices more elevated?
It's a very bearish factor, Kaylee. Let's remember what the SPR was initially set up in the U.S. by President Ford in 1974 to cover 90 days of net imports. With Canada, the U.S. has a surplus running near 8 million barrels a day of crude oil and liquid fuels right now. We don't need an SPR anymore, except for nuances like this war and maybe hurricanes. Now, China needs an SPR because they're a net importer, but there's some estimates that they got their SPR up to 1.8 billion barrels, which would be 4 to 5 times the U.S. Now, they need it, but they've been selling out some of that because Chinese are the best commodity traders on the planet. They buy low. They filled up that SPR last year when prices are low, and they sell high, like this year when Brent got above 100. That's just what they've been doing for centuries.
Always a fascinating conversation with Mike McGlone, with us live from Miami at Bloomberg Intelligence. Mike, thank you so much. That would be quite a yearly chart. Kaylee, if we get to the end of this year and we were up 100% and end up negative on the year, he's looking at $50 a barrel. Can you imagine after it being well over 100?
Yeah, it would be incredible and something that Republicans probably would be pretty happy about as they look toward their odds of maintaining majorities in November.
A true round trip. We'll find out together if this happens, with big questions about the contents of this deal. We're seeing the markets react today. We could feel differently tomorrow, or maybe by Friday, when there is apparently a signing ceremony set to take place, because we don't know a lot of details. A 14-point memorandum of understanding, we understand, that would reopen the strait, but doesn't do a lot else in terms of informing us at the moment, particularly when it comes to nuclear. That would be part of another 60-day negotiating period to follow. President was asked if he'd send it to Congress. Should this be codified by lawmakers, not just an executive action? This is from earlier today at the G7 in France. Listen to the president.
I never thought about sending it, never even thought about it, but I will. I will send it to Congress. I like the idea. I mean, who wouldn't approve it? Let's let them have a nuclear weapon. The Democrats will say, oh, they should have a nuclear weapon. They'll go crazy. I like the idea. Send it to Congress, please, all right?
So what will happen if he does? Of course, again, we don't know a lot about the contents of this deal, but lawmakers are already preparing to weigh in on this, which is why we wanted to speak with Congresswoman Jennifer McClellan, the Democrat from Virginia's 4th District, joins us now. A member of the House Energy and Commerce Committee, certainly her eye being on gas prices and oil prices, with the hopes of this conflict resolving. Congresswoman, it's great to see you. Welcome back to Bloomberg TV and radio. If what you know of this agreement arrived in Congress for an up or down vote, would you agree with it?
Well, I don't know what it is yet. And right now, the officials from the United States and the officials from Iran say two different things. For example, what is the deal with this $300 billion payment to Iran compared to the $1.7 billion from the Obama nuclear deal that the president ripped to shreds before starting this war in this second term? So I'm not sure what we're voting on yet. But I'm definitely looking very closely to see what we will get out of this war of choice that the president started, because right now I don't see that we're going to be any better off than we were before the war started. But now Iran has proven they can disrupt trade, they can disrupt oil prices, and disrupt world economies by closing the Strait of Hormuz, which was open before this war began.
Well, Congresswoman, as we consider, especially with your perch on the Energy Committee, what besides the unfreezing of assets, like you're referring to, the U.S. may have to offer Iran to extract concessions around things like its nuclear program? Are you comfortable with the notion of relief around sanctions on Iranian oil? Is that actually something that you could get behind the U.S. bartering with?
You know, I would have to look very closely at the entire deal. We had a deal that was acceptable before Trump in the first administration ripped it to shreds, that had the Strait of Hormuz open, that had UN officials coming in for inspections to make sure that Iran was meeting the terms of the deal. And now I don't know what's going to be in this deal. Is it going to include UN inspectors? You know, we still have 60 days to negotiate the nuclear aspects of this deal. Everybody agrees that Iran cannot have a nuclear weapon. They were nowhere near getting one before the president attacked them when his national security intelligence folks said there was no threat to the United States. There was no threat to our service members. There was no evidence that they were anywhere close to a nuclear program. And so I need to see the totality of whatever deal comes out in this 60-day negotiation. And does it put the Middle East on the path to peace? Does it ensure that Iran does not have a nuclear deal? Does it keep the Strait of Hormuz open? And what, at the end of the day, is it going to cost the American people?
It's not the only thing that's going to be coming before Congress soon, presuming that it does. The president, interestingly, there said he hadn't even considered that before he was asked about it. But it appears that the Senate is going to be voting on Jay Clayton's bid to be the next director of national intelligence by the end of this week. And there is a hope among Republican leaders that that will unlock a deal to extend FISA 702, because in that world, Bill Pulte would not be the director of national intelligence, which has brought this entire debate to a screeching halt. Would you be on board with a yes vote if Jay Clayton becomes the next DNI?
I would also like to see some reforms that will close the loopholes that have allowed the federal government to spy on American citizens, which Section 702 was never intended to do. That has been part of the negotiations, and I think we can reach an agreement that would balance our citizens' privacy rights under the Fourth Amendment with us meeting our national security needs. I would like to see that be part of any bill for FISA 702 extension before I sign it. But I will say that Pulte, being the one who implemented it, giving him the keys to spy on anybody, whether it's foreign nationals or American citizens, was a non-starter. Clayton is much less objectionable based on what I'm hearing from the Democrats on the Intelligence Committee. But I also need to see some reforms to close those loopholes that allow the federal government to spy on American citizens in violation of the Fourth Amendment.
But Congresswoman, are you not concerned about what could fall through our intelligence cracks so long as this program remains dark while these reforms are worked on? The FBI Director Kash Patel publicly said today that the FBI thwarted a planned drone and sniper attack on the UFC 250 event at the White House this past weekend. Are we not at greater threat of threats such as that if the intelligence community doesn't have access to what is gathered through the Section 702 programs?
So short term, nothing ends immediately, and I think the fact that they were able to thwart a threat is proof that right now they're still able to get the information that they need to keep us safe. Hopefully, this will be resolved soon. This could have been resolved last week had the president not doubled down on a national intelligence director who was wholly unqualified to do anything but be an attack dog for the president and go after his enemies. We didn't have to let FISA expire. We could have resolved this last week or the week before, but the president refused to do so. And I do believe that we can balance our national security interests and protecting the Fourth Amendment rights of American citizens. As a former member of the Armed Services Committee, I understand the importance of Section 702. I also understand that it is the American way under our Constitution to balance meeting our national security needs with protecting the civil liberties of American citizens. We can and we should do that immediately.
You point out that you were, in fact, on armed services, and as a lawmaker from such an important state when it comes to active duty military and veterans, for that matter. I just wonder, Congresswoman, if you're hearing anything about sailors and airmen coming home who have been on extended deployment from the Caribbean to the Middle East, and in some cases back around the world again. We have ships over there who have been at sea for many months more than they had planned to be. When are these men and women coming back to port in Norfolk to rehab their ships and see their families?
That's a very good question. The Ford has, I believe, come back, but they were out longer than they intended to be, and I know their family members were concerned wondering what the mission was, what exactly the end game for this war was. There were some concerns about the conditions on board, the food that they were being served. I'm very concerned that the needs of our service members and their families are not being cared for. And when you send service members in harm's way, you need to have a clear reason, you need to have a clear strategy, you need to have clear goals. We didn't have that with this war. We had no imminent threat to the United States or our service members or our national security interests. The intelligence community has told us that. This was not about regime change. If it was, we have pretty much the same regime with a younger, more extreme leader. So I don't know why we sent our service members in harm's way. Over 10 have been killed, about 13 were killed, and for what?
Yeah. All right, Congresswoman, thank you so much for joining us. Democratic Congresswoman Jennifer McClellan of Virginia with us on Balance of Power. And we'll be back for more at 5 p.m. Eastern for the late edition right here on Bloomberg TV and radio.
This is Bloomberg Business Week Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Business Week Daily with Carol Masser and Tim Stenivek, live on Bloomberg Radio, television, and Bloomberg Originals.
And a very good afternoon, everybody. Yes, indeed, we are across Bloomberg platforms, radio, TV, YouTube, and Bloomberg Originals. It is Tuesday, June 16th. Carol Masser, Tim Stenivek, live here at Bloomberg headquarters in New York City. A lot going on, and I want to go to a headline and a story that just crossed the Bloomberg. This has to do with the U.S.-Iran deal set to offer Iran broad financial gains specifically to end a war, and that includes the right to sell oil immediately and tap a $300 billion development fund.
Yeah, the U.S. Treasury Department will issue waivers for exports of Iranian crude oil, petrochemical products, and their derivatives immediately after the memorandum is signed. The U.S., too, will lift its naval blockade, and the two countries will work to ensure that traffic in the Strait of Hormuz returns to its pre-war level within 30 days. This latest story out on the Bloomberg terminal just moments ago, Jonathan Tyrone, Daniel Flatley, and Josh Wingrove reporting for Bloomberg News.
We should point out that under its terms, the U.S. Treasury Department will issue waivers for exports of Iranian crude oil, petrochemical products, and their derivatives immediately after the memorandum is signed. You know that the two are officially set to sign an agreement on June 19th, talking about the U.S. and Iran specifically. That is expected to happen in Switzerland. So that then paves the way for 60 days of talks to end this war between the two for good and put strict new limits on Iran's nuclear program. One person familiar with the matter said technical details were still being worked out. As we've reminded you, the devil is always in the details, suggesting precise language could still change. So it's a little bit of a moving agreement still.
Yeah, and just remember how long it took the JCPOA to be negotiated over a decade ago. And this is moving at we think at a different speed. But like you said, Carol, devil's in the details. I think for a lot of people, what happens to our assets and our personnel in the Middle East will, when they leave, will signal that something is finally done.
And we should point out that neither side has released the complete text of the agreement, and U.S. officials have given conflicting accounts of when all of this might happen. So it's on the Bloomberg. We're going to continue to track it and the reporting done by the team here at Bloomberg. In the meantime, we've got a rally that sent stocks to the brink of an all-time highs, faltering on this Tuesday on the eve of the first Fed meeting that will be chaired by Kevin Warsh.
Yeah, we'll have more on that in just a few minutes. That Fed two-day policy meeting getting underway just this morning. I saw Mike McKee in the office. He was heading down to Washington, D.C., but a little stop here at Bloomberg headquarters before he does that. Carol, speaking of stocks that are moving higher,
right?
The rally for SpaceX continues. It overtook a Mag 7 peer in market cap. The company cementing a $60 billion deal.
SpaceX still, the news continues. Plus how the financialization of GPUs, you know, all the AI chips that we keep talking about, may be a nascent risk to the economy and markets. It's a column that caught our attention early on this morning.
I promised we'd have more on the Fed and on the economy. Our Fed and Rates Roundtable, Bloomberg's own rates strategist, Ira Jersey, joining us, along with Greg Peters, the co-chief investment officer over at PGIM Fixed Income.
All right, we mentioned SpaceX. We're going to come back to it. We've got the SpaceX investor that wants to help you get your hands on the hottest private tech companies. The CEO of Power Law Capital Group is stopping by. All right, lots going on this Tuesday. Let's jump on over to Charlie Pellet with a check on the trade. Charlie.
Hey, thank you very much. I got you covered. You mentioned SpaceX up now by another 10%. That's on top of yesterday's surge. And, of course, the day before when it had its IPO, the trading session before, when it was up more than 19%. But to underscore, SpaceX right now up by about 10%. Got to begin with crude oil. Tim and Carol just talking about that West Texas Intermediate, 75.78 a barrel, down 6.2% right now. Barrel of Brent back below 78, back below 79, 78.73 now, lower by 5.5%. The Dow higher up 441, up by about 0.8%. All of this ahead of the Fed meeting tomorrow, the Fed decision, and of course Kevin Warsh's news conference. Yeah, we got it for you live on Bloomberg Television and Radio. S&P trading lower. It is down now by about 0.3%. We've got the NASDAQ Composite Index down 142, drop there of 0.5. The NASDAQ 100 lower now by 1.3%. The SOX, the Philadelphia Stock Exchange Semiconductor Index, lower now by 3.3% with the 10-year 4.42%. Spot gold up $29 the ounce, up by about 0.7%, 43.41 the ounce. And West Texas Intermediate crude again down 6.2%, 75.75 a barrel. With the price of oil moving lower, oil majors down as well. ExxonMobil down 0.3%. Chevron down 0.7. ConocoPhillips lower now by 1.6%. And again, SpaceX, big story as it overtakes Amazon as the 5th largest publicly traded company in the world. SpaceX up 10%. Amazon lower by 0.1%. I'm Charlie Pellet. Carol and Tim, that is a Bloomberg Business Flash.
Which made me want to look at Microsoft because that one is a $2.9 trillion market cap. And right now, SpaceX is still about just shy of $2.8 trillion. So we'll see whether or not it overtakes that one as well.
I'm going to just keep saying this, Carol. I know you're going to get sick of it. But the thing about Microsoft is it has earnings. The thing about Amazon is it has earnings.
Details, Tim.
And when I say earnings, I mean profits. Earnings. We say, SpaceX reports earnings. Well, they're going to report numbers because they might not have earnings.
All right. Remember that little known company, Amazon, that wasn't
they had tiny profits that they were reinvested back into the. Anyway.
Okay.
We're getting ahead of ourselves here.
All right. A reminder that we continue to say this is Elon's world. We're living in it. We have seen shares of SpaceX continue to shoot higher. The stock is up 3 days in a row, about a 60% gain. It did take, as we heard from Charlie, Amazon's market cap. It is homing in on the market cap of Microsoft as well. Some news, the company formally agreeing to take on the AI-powered coding assistant Cursor. It's a deal that values that startup at $60 billion, with Cursor investors to receive SpaceX stock based on the implied equity value of Cursor. We wanted to know why Cursor is important enough for SpaceX to spend billions to buy it, why it needs it.
All right, with us is Bloomberg Intelligence Global Head of Technology Research, Mandy Singh. He joins us here in the Bloomberg Business Week studio. Mandy, it's not surprising to people who've been following this, given that the company had the option to buy Cursor at this value. But remind everybody where Cursor is when it comes to sort of like the codexes and the Claude codes of the world, where it sits within the coding agents for LLMs.
I mean, look, a lot of people thought it's a wrapper for the frontier models, and it doesn't have its own model. What changed with Cursor was they actually trained their own model called Composer. And when you look at, how they're generating revenue, yes, they use Anthropic and OpenAI models, but their own model is far less in terms of token costs versus, using the frontier labs. And that's where it is an asset that everyone wanted to acquire, I would say, and Elon just got ahead and, bid up quite early.
Well, so what exactly are they buying?
So think of Cursor as software that can help you code anything, similar to what Anthropic Claude does as well. But in the case of Cursor, you have the option to call whichever model you want, whether it's Anthropic's or OpenAI's or Cursor's own, and they give you the ability to price it according to the task and, how much you want to spend on a task and not, consume a lot. Like token maxing has been a term that has come up a lot. Why? Because the frontier model tokens are very expensive. You could end up using a Claude model and, consume all the tokens and, be out of budget very quickly. Whereas if you're using a Cursor model, you can do a lot more with that model because the tokens are cheaper. You just have to figure out the appropriate task, whatever you want that coding agent to do, according to the model that you want to use.
Okay. Is this also about SpaceX buying up kind of engineering and data talent?
Absolutely. I mean, and I'm curious to see how many people actually end up staying after the acquisition, because, anytime you see a large company buy an asset like, a Cursor, a high-flying company, there are always people who just can't adjust to the culture and they end up leaving. And so I'll be curious to see the kind of retention. And we know even with XAI, the attrition was quite high. I mean, we had a lot of news flow just around, the leading engineers in XAI leaving. So it would be interesting to see how much retention they have when it comes to the Cursor side.
If a lot leave, is that problematic for SpaceX?
I mean, right now it's all about kind of maintaining your model at the frontier. So look at what Claude has done. 6 months back, they were behind OpenAI. Now they are at the frontier. Why? Because they did something on the training side that OpenAI wasn't able to keep up with, or Google Gemini, for that matter, wasn't able to keep up with. And that's where engineers are very important when it comes to the training side of the equation.
I know you've got to spend, $60 billion here. So I'm thinking, Tim, you got to spend, I guess, to grow into your valuation?
Well, that's the question. The valuation right now, about $2.8 trillion for SpaceX as a company. Carol mentioned it surpassed Amazon. It's creeping up to Microsoft right now. I was kind of joking, but not really, about earnings, because this is a company that, at least in the roadshow, was valued at 100x 2025 sales. When you guys over at Bloomberg Intelligence, sharpening your pencils, getting the Excel documents ready, what does this valuation signify to you?
I mean, this is unprecedented in terms of, the multiple. And I've mentioned about Palantir in the past. To me, it's very similar in terms of the valuation as well as the retail interest. And look, when you have a unique asset like SpaceX is, where they create a new market on their own, there will always be a lot of excitement as long as they are able to, maintain that enthusiasm around the sector. The valuations will hold. But as the moment they start disappointing, that's when, this will come down really hard. And it's very hard to time these things.
If it disappoints too much, right, it's going to come down, and then it's going to have to prove itself. Mandeep, we have to jump. A lot of news going on, but thank you. Big, important story. Mandeep Singh, Bloomberg Intelligence, Global Head of Technology Research, joining us right here in studio. We want to get back to a story that just crossed the Bloomberg. We've kind of laid it out for you. Iran set to receive broad financial incentives as part of its agreement with the United States, including the right to sell oil immediately and tap a $300 billion development fund. And so what we're starting to do, we haven't seen the details, right, of what is in this agreement, but our own reporting team, they have found out.
Nick Wadhams is Bloomberg News National Security Team Leader. He joins us from Washington, D.C. Nick, what did you and the team find in this memoranda of understanding?
Well, what we sort of see for the first time, that we'd seen a lot of broad contours around this deal, but we get it all in one package at once. And what you see here is something that maybe isn't quite what the Trump administration has been messaging over the past several days. So there are immediate financial incentives that Iran gets once it signs this memorandum of understanding, and that's expected to happen on June 19th. And chiefly where that comes is the U.S. lifts all of its waivers on the sale of Russian oil, so they can basically have full access to the market to sell oil that is such a crucial part of their economy. And then from there, it's a whole series of other steps of financial incentives where sanctions will be released eventually. You would have, Iran would get access to its frozen funds that are locked in overseas accounts. And also, very crucially, you would see, a broad sort of re-welcoming of Iran into the global economic community. So, there's this also a $300 billion development fund where the U.S. would sort of help oversee that. So, in a lot of ways, what the U.S. gets in response is essentially, a commitment from Iran not to pursue a nuclear weapon. It's something that will further stoke concerns from a lot of Trump's Republican allies who essentially have expressed a concern that this amounts to a financial giveaway to Iran.
Yeah, and the president has been so critical of the JCPOA, Nick, for many years. And then I'm wondering, the financial element of this aside, the nuclear part of this and the uranium enrichment part of this, how is that different than the JCPOA that came into being during the Obama administration?
Right. So, what President Trump is essentially trying to do here is argue that the JCPOA put time limits on Iran's ability to enrich nuclear material and put various constraints on its program, but didn't ultimately prevent it permanently. So there were certain limits on Iran's enrichment capacity, for example, that came off after a certain number of years. So what he's looking to do is essentially put a permanent stop on that ability. But This memorandum of understanding is not the place where that will happen. So as the memorandum makes clear, it starts the clock ticking on a 60-day process for bigger negotiations that would address a lot of those details. But, the devil is really in the details there. And, it should be fair to the Trump administration. They argue that Iran will not get a lot of these financial incentives until it meets a lot of those benchmarks that the U.S. will put forward. The challenge there, of course, is that none of those agreements have been settled yet. There's no indication that Iran will commit to what the U.S. wants. But in the meantime, it is getting access again to the oil market, which will be a huge, huge financial boon. I mean, the sanctions on Iran had been in place for a long time, but it was able to get around them with some of the oil sales. So that's a big plus for Iran.
Who's in the driver's seat? I asked Nick because if Iran at some point just says, I don't like this, I'm just going to close the Strait of Hormuz again, right? Like they have that power. They've learned, right, in this incident or this war that they can do that and kind of shut down the world. So I feel like it sounds like anything could happen at any time down the road.
Well, I mean, Iran certainly has a better understanding of the degree of the leverage that it has in terms of being able to shut down the strait without a lot of assets, because you don't actually need to attack a lot of those ships. You just need to make shippers understand that it's too risky for them to go through the strait. So it has a lot of leverage there. Should be said on the other side, of course, and one of the reasons why Trump's supporters in Congress, Republicans, are saying, hey, this might not be so bad, is Trump can bomb them again at any time if he wants to. He has shown the willingness to attack Iran before, twice, and his supporters say, listen, if these talks drag on for too long, you've got that 60-day limit, he'll just attack them again. So you do have a situation where both sides do have some leverage. Of course, the issue for President Trump is he really wants this war to go away, especially with the midterms coming up, because it's such an unpopular conflict.
Right.
So he's going to be reluctant to do that bombing campaign again.
It makes me wonder, though, if he's also been on the phone. We know he has, or he's certainly been pretty vocal about Benjamin Netanyahu, because Israel, has its own mission. And we've seen the continued bombing of Lebanon. I mean, if that isn't put to an end, is this all at risk?
Very much so. I mean, the MOU that we have says in the very first paragraph that the two sides agree to end their war, including in Lebanon. Of course, the issue there is that the U.S. isn't at war in Lebanon. It's Israel that's going after Hezbollah across its northern border, but Israel is not a part of the U.S.-Iran agreement. So a lot of that will really hinge on President Trump's ability to get Benjamin Netanyahu to do what he wants. And of course, recent weeks have shown very clearly that President Trump doesn't always get his way there, that Netanyahu has shown a great willingness to go after Hezbollah, even if it makes things complicated for President Trump and upsets Iran. And that's been one reason why, in some ways, this deal has taken so long to come about. So a lot of question marks here that we're going to need to be sorting through in the weeks ahead.
We know geopolitics is tricky. We get it. Hey, Nick, thank you so much. Nick Wadhams. Yep, he's Bloomberg News National Security Team Leader in D.C. I highly recommend you check out our story. It's on the Bloomberg and at Bloomberg.com, just what our team has learned in terms of the agreement between the two nations.
Well, in terms of what's moving markets over the last few months, war certainly has done that. Also, at the center of it all is AI spend, especially when it comes to those semiconductors.
Yeah, this goes to a story that really caught my attention on my morning read-in. It was an eMacroscope column. It's written by Bloomberg's Simon White. First line in the column, the financialization of GPUs is a nascent risk to the economy and market. So let's get to it. Simon's been kind enough to stick around in our London News Bureau over at Bloomberg. It's a little bit later there. He is Bloomberg macro strategist. Simon, thank you so much. I think drove my team crazy saying, I want to do this story this morning. I want to do this story. History doesn't repeat itself, but it often rhymes. And that is true, too, for financial markets. Walk us through your thinking when it comes to GPUs, what we're seeing, the spend, the build out, and what's going on in markets.
Oh, thanks for having me. So these are the latest innovation in finance, which, as you said, there's some early parallels, if you like, to what happened in the early days of the financial crisis. But essentially, we're talking about here the center of the new economy, the AI economy, is these GPUs. So they are much more expensive than CPUs, and that is the kind of the architecture that AI needs to run on. And you need to build these vast data centers, and these cost a lot of money to fund. So we have this new innovation, which is debt-backed by these GPUs. So, the financial markets are doing what it's done before. It did it with mortgages in the years up to, 2008, where it takes something that is essentially illiquid and untradeable and makes it liquid and tradable. So it's very early days. We've seen something in the region of maybe only a few billion of these deals over the last few years, but this year to date so far, there's already been $65 billion of these deals. So relatively small amount, but some of the deals are getting really big sized. So you've got neoclouds, as they're called. So companies like CoreWeave that provide GPU as a service, and they need to basically get the funding to build these massive data centers, and the way they're trying to inveigle investors is to collateralize the debt with the GPUs. So they're basically, the GPUs they've got, they're basically collateralizing the debt. And this is, as I say, the aim to try and draw in investors and make them more comfortable with the risk that they're taking.
Yeah, and this comes we now have initial trading volume strong for NVIDIA's new bonds. Prices have remained near where the $25 billion worth of debt was sold at. This is something we talked about, these new 7-year notes. We talked about it yesterday, but it's trading today.
Simon, you mentioned it worked with mortgage-backed securities up until the financial crisis, and we all saw what happened then. I don't want to say that that's going to happen again. We have no idea, but is that what happens in a cycle when these new products emerge?
Well, there's a great quote from Jim Grant, I think said it. He said, progress in science is cumulative, and in markets and finance, it's cyclical. And so over time, again, we see the same things happening over and over again. So 100%, I agree with you. It's very early days. But given where we've seen what Wall Street tends to do, it takes actually quite a good idea. So it makes a lot of sense. Financialize these very expensive assets. They're expensive to run. They have a lot of downtime. So that really makes the whole thing much more efficient. But unfortunately, Wall Street has a tendency not to be able to hold back. So, we'll see again what actually happens here. But, if you start to have a situation where you've got this debt-backed GPUs backing this debt, as I say, we have a forward curve already. We're about to have a futures market in GPUs. That means you can essentially short GPUs. That'll be on the cards lately. So you get all the parallels that, we took a mortgage. A mortgage used to sit on a bank's balance sheet. There's very little you could do about it, but then they started to package it into these MBS and then repackage them again into CDOs and all the other alphabet soup of things. And it's not impossible over the coming years that we see something similar happening to GPUs, just given the amounts of money involved.
Hey, when we think about asset-backed securities, mortgages had homes, declining in value, as we know. But having said that, GPUs, we often talk about this cycle where, they get better, they get improved, people want to buy the newest, the latest. So those assets that are backing actually are declining in volume. Is that part of the problem?
That's a very key point. Essentially, you've got assets that are kind of rotting, if you like, very fast. So the GPUs, there's Mike Burry, the famous short investor from The Big Short, ironically, in the housing crisis, did a big piece on depreciation of GPUs, and he is basically, his idea is that a lot of the hyperscalers and people that hold vast amounts of the GPUs are not really accounting for their depreciation. So it's a very controversial subject, but regardless, whether it's 3 to 4 years they last or it's 7 to 8 years, they're very fast depreciating assets. So that means that you have to have these very aggressive pay down schedules on the loans. But then you've got an extra risk, if you like, right? Because you've got this, they can very quickly become technologically obsolescent, like a house. It's very difficult to suddenly go, we've got a much better house. All the houses that exist already are obsolescent. Whereas obviously with chips, that's not impossible. Someone comes up with a new way of using them. Or the other side of the thing is the demand. We've already seen some demand. Your previous guest talking about Cursor, pointed out token maxing. Already we're hitting some sort of demand destruction. So all these things really add to the risks of something that's very new, but inherently very risky.
All right, good stuff, and something to certainly throw into the narrative as we continue to cover certainly the AI spend and AI build. Simon, again, thank you so much. Simon White, He is Bloomberg macro strategist joining us from our Bloomberg News London bureau. All right, let's get back to the markets.
Yeah, and we're going to hear from Charlie Pellet in just a second. And when we come back from Charlie, we're going to talk FOMC meeting tomorrow, new Fed chair, all what to watch for. The challenges facing the new Fed chair, Kevin Warsh. But Charlie is standing by in the Bloomberg Business Week studio. He's watching these markets closely. Hey there, Charlie.
Hi, thank you very much. Charlie and Bloomberg, we got you covered. Let's begin with SpaceX because that stock keeps on going. Day 3 of trading, we're up by 10.6%. Dow, look at that, a record 52,100 right now. Will we close above 52K? Right now, we have got the Dow up by about 0.8%. S&P, NASDAQ 100 index, all in the red. 0.3% drop right now on the S&P. NASDAQ down 0.6%. NASDAQ 100 index, all of those big tech names down by 1.4%. Your 10-year, 4.42%. Gold up 0.7%. 43.40 the ounce, while West Texas Intermediate crude 76.02 a barrel, down now by 5.8%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcast. I'm Charlie Pellet. Carol and Tim, that is a Bloomberg Business Flash.
All right, Charlie, thank you so much. 24 hours from now, yes, indeed, we'll be on a plane, but we will also have the first rate decision under the new chair of the Federal Reserve. We're talking about Kevin Warsh. Every word of his press conference will be poured over for signs of how he will lead the Fed, and more importantly, how markets view the most watched central bank and its independence against the backdrop of a president, a White House who is not shy to put pressure on the head of the U.S. Central Bank.
Now let's get to our roundtable. Back with us, we got Greg Peters, Co-Chief Investment Officer at PGIM Fixed Income, on set with us. Bloomberg Intelligence Chief U.S. Interest Rate Strategist Ira Jersey joins us from the Bloomberg Princeton Bureau. Okay, so the backdrop, the macro here, the U.S. economy and rates. What is top of mind for members of the Fed that began meeting today? Greg, I want to start with you.
Well, I think it's inflation, the path of inflation, and what to do about it, quite frankly. It's very simple and very difficult at the same time.
But has that story changed? Has that story changed in recent days as oil prices have come down?
Well, it's not as acute, but you're still well away from their target. There's still inflationary pressures across the system. That's not abating. But it does make it a little easier, all else equal. I mean, let's be fair about that. At the same time, they have work to do. And I think the easing bias that the Fed had just doesn't really hold water here in an environment where you're growing quite steadily and inflation is well above target.
Ira, come on in on that. Same thing in terms of the backdrop. You know, here the Fed kicked off its 2-day meeting this morning. What do you think is top of mind when they are talking about the economy and the economic backdrop?
Well, I think first, Greg's right, that one phrase in the statement is going to be gone, right? So the statement that kind of hints that they might do another rate cut. Otherwise on top of mind is what is the future forecast for inflation, but also this growth story, right? There are members of the FOMC who are going to debate and suggest that growth is very uneven and that there's a lot of people in the lower income part of the income distribution that are not doing as well as some others and who are in the higher income areas. And you have seen that, right? We call it the K-shaped economy, like, uneven economy, whatever you want to call it. So I think there will be kind of a group of hawks and a group of doves. And when we get the minutes from this meeting, I think it's going to be pretty clear that there are these two camps of hawks and doves and not probably a whole lot of neutral in the middle.
What would be a shocker, Ira, for you that we might get from Kevin Warsh? Or do you think his whole goal is to be calm, steady, don't shake things up too much?
Well, I think at this point, he'll be pretty diplomatic overall, and he won't shake things up. He's still going to be getting to know all of the other members of the FOMC and trying to maybe sway them a little bit towards some of the activities that he wants to do, like shrinking the balance sheet or reducing the level of communication. I think the big shocker is if any of those things were to happen at this meeting, or he hinted at it, hints that it's coming soon at the press conference after this meeting. For example, if he announces, hey, we're only going to go back to quarterly press conferences like we had prior to the pandemic, that would be a pretty big surprise at this point, I think.
Yeah, Greg, I see you nodding. Jump on in here. Is there a chance that happens?
Well, there's a chance of it happening. I think Ira's right. The markets will be very surprised. So there's an intense focus on this meeting, and there's a very good chance that nothing's going to happen. Right?
Which is a good thing.
A lot of stuff could happen. Good chance nothing happens.
So I think it's about building credibility first. And so if he comes out really hot out of the chute, talks in a very dovish way, I think the credibility factor crumbles quickly, and that's not a good longer to medium term.
Well, Ira, you have to go in a minute, so we want to bring you in for one more at least. The credibility question, he has to be credible not just with Wall Street, but also with President Trump, who has an expectation that rates will be lower at some point very soon. How does he do it?
Yeah, I'm not sure he can, and I think that that's going to be a big challenge for Kevin Warsh. You know, he did espouse, you know, at his nomination hearing that he is going to be independent, right? He said that he's not a lapdog, right? So he noted that that he's going to do what he thinks is the right thing. And of course, you know, we also have to remember he's a member of the committee, and it's, you know, exceptionally rare that the chair of the committee doesn't know what the vote count, what the whip count is, if you will, when he's going into the meeting. So really, he really is going to be a little bit stuck to do much of anything. Like maybe he can sound a little dovish to placate President Trump and just say like, hey, as long as all, you know, gas prices are up at $3.75, it's going to be hard for us to be cutting interest rates, right? I think in order to placate the president, he's going to have to mention something about inflation as opposed to the growth side of things, because that's going to be what the only way that he's going to be able to keep President Trump happy politically, I think.
Yeah, maybe he can just do a side meeting with Fed Chair Jay Powell, former Fed Chair Jay Powell, who has had to navigate it. Hey, Ira, we know you have to run. Thanks so much. Ira Jersey, he's Bloomberg Intelligence Chief U.S. Interest Rate Strategist. What is the factor of Jay Powell, Greg, being there also?
Well, it's definitely awkward, you know, lurking over, but I think it's to create some stability. You know, it's unclear. This is, you know, not a normal situation, but I don't expect Powell to take, you know, front-footed view and really be out in front. I think it's more in the background, as you know, he's been quite vocal that you know, this is Warsh's, you know, chairmanship. It's his Fed, so to speak, and so I don't think he's looking to disrupt that too much.
Yeah, and he's there until, you know, legally he's out of the woods, or he deems that he is.
Yeah. So that's the, you know, going back to what Ira was saying, trying to please Trump is in direct, you know, contradiction of what the Fed itself and the institution is looking for. So it's a very difficult, albeit intractable, needle to thread, I'd say.
Greg, when you look at the fixed income market, and I'm just thinking about what the growth backdrop is as well. I saw the Fed Bank of Atlanta, the GDP Now index, suggesting GDP will now expand 2.83% in the second quarter versus 3.9% in its previous release. In terms of growth, if the war is indeed over, if energy prices start to come down, does it look like growth is on a better trajectory and possibly even better than this? Or what's the growth backdrop here?
I think the growth backdrop is quite good, in spite of everything that's been going on. There's been a lot of so-called own goals that kind of hurt growth on the margin. But if you look at the fundamental backdrop of the U.S. economy in particular, it is quite solid, right? There's all this attention around the AI build-out. That is something that is, you know, insensitive to interest rates, right? It's, you know, 1% of GDP. You know, the consumer's still spending. It's K-shaped for sure, but by and large, the consumer's in a very good place. The wealth effect is, you know, contributing.
Okay, that's the productivity element. But I'm also curious about the labor market here, because anecdotally speaking, we have all the data. We get all the same data that everybody else gets. Anecdotally, you hear stories about, you know, a position opening up and literally hundreds of resumes. You talk to a hiring manager, hundreds of resumes hitting for that position in a 24, 48-hour period of time.
Yeah, that's largely anecdotal. We have to kind of push the anecdotal to the side. If you look at the broad macro, the labor market looks pretty firm, and it's firming, right? I think the challenge that the Fed has for this easing type of bias that they maybe perhaps want to get to at some point is the strength of the labor market, right? The labor market has seemed to kind of move from a softening, and, you know, you're looking at an unemployment rate likely to go lower, not higher over time. So I think it's a real challenge. If you just look at the numbers, if you look at the data, it's really hard to construct an argument that rates should be lower here, you know, from the Fed.
All right, so what does it all mean for fixed income? I mean, we just were talking, too, about all the debt that's being issued by AI-related firms, NVIDIA doing an issue, but, I mean, it's just billions and billions, and it feels like nonstop. And, you know, it's these firms tapping both debt and equity markets increasingly. I don't know. Do you see any risks, any concerns here? I mean, investors certainly seem willing to snap it up.
For now. So we have a quantum problem, and we're facing this massive crowding out effect and this decision. So not only do you have this tremendous quantum of debt coming through this AI build, you also have the sovereign, the U.S. government, issuing a lot of debt slated to pick up next year. And investors will have to make that decision of where they want to invest those dollars. So everything seems really quite good today. I think what investors are missing is the change in the supply and demand dynamics, as a lot of those investors who have been so comfortable investing in the markets now are getting pulled into their home jurisdictions, whether it's the Gulf states and alike. And so those sorts of funds are not going to be what it once was. So I think the market is focused on the here and now. What they're not properly calibrating, in my view, is what it looks like when the decision tree of AI-related debt and sovereign debt and, they both have to come, right? So it's,
That's fascinating. So there'll just be so much out there for investors to choose. 20 seconds, can we tell what might be the sure thing, the AI debt versus the sovereign debt, just really quickly?
No, I don't think there's a short thing. But
Okay.
I do think there's too much negativity around owning a sovereign versus a corporate. I will say that.
All right, great stuff. You tie it all together. Thank you, thank you. Greg Peters, he's Co-Chief Investment Officer at PGIM Fixed Income, and of course our Bloomberg Intelligence Chief U.S. Interest Rate Strategist, Ira Jersey. When we come back, wouldn't you like to own one of those privately held tech?
It's 2:40 on Wall Street. We do check markets all day long here. Bloomberg, the Dow higher. In fact, at a record. S&P, NASDAQ 100 index, all declining. This ahead of the Federal Reserve's first rate decision under Kevin Warsh. We'll have it for you live. The decision drops at 2 o'clock Wall Street time. And, of course, the news conference, 2:30 p.m. S&P right now down 22, drop there of just about 0.3%. Dow Industrials up 405 on the Dow, gain there of 0.8%. NASDAQ lower by 0.6%. The NASDAQ 100 index down 1.4%. 10-year 4.42% with a 2-year at 4.04%. Gold up 0.6%, 43.38 the ounce. West Texas Intermediate crude down 5.5%, 76.30 on WTI. Bitcoin down 1.1%, 65,748 on Bitcoin. Rivian Automotive shares are tumbling. We've got Rivian shares down now by just about 5%, cutting hundreds of jobs as part of a push to reduce costs while it rolls out a new line of EVs. I'm Charlie Pellet, Carol and Tim. That is a Bloomberg Business Flash.
All right, Charlie, thanks so much. Well, Paralaw Corporation, it's a closed-end fund that owns stakes in Elon Musk's SpaceX and AI firm OpenAI. It recently began publicly trading. The fund coming to market, capitalizing really on retail investors' clamor for exposure to the hottest private tech companies. They all want in. We all want in.
Do we?
I don't know. Maybe not.
The platform behind it is Paralaw Capital Group. It's backed by Acadian Ventures, a San Francisco-based venture secondary firm, $1.36 billion in assets under management. We've got a great voice here to tell us more. Mike Dinsdale is CEO and co-founder at Paralaw. He's former CFO of DocuSign, DoorDash, Gusto. He joins us from San Francisco. Also with us, the Bloomberg reporter who brought Paralaw to our attention, Anthony Hughes, Bloomberg News U.S. Equity Capital Markets reporter. He joins us here in the studio.
All right, welcome, gentlemen. Good to have you here. Mike, let's kick it off. Tell us about Paralaw, why the recent move to go public. And I am curious, why better to invest in a closed-end fund versus, let's say, now investing in SpaceX, now that retail investors, everybody can get exposure that way?
Well, first off, thank you very much for having me. And to just play off the first part when you opened up, the answer is yes. I do think everybody wants to own Paralaw. We are the first venture-backed firm to list a closed-end fund. And to answer your question around why not just buy SpaceX, I think people should buy SpaceX. I think it's a phenomenal company and will continue to grow for decades. But what we offer is other names as well. You mentioned OpenAI. There's names like Kelshi, Databricks, Kraken. And so our thesis has been that we want to provide a product that resonates with the $25 trillion in U.S. retirement accounts that have been locked out of access to privates and the massive wealth creation that's been happening in private companies. We want to unlock that for everyone.
Mike, traditionally, when it comes to those companies that you mentioned, venture capitalists obviously have access to those and the investors who invest in those venture capital firms. Also, wealthy individuals who may be accredited investors, perhaps they have access through their wealth managers to allocation of alternatives that include secondaries or investments in some of those venture firms. Do investors in Paralaw have to be accredited investors, or can anyone buy into this?
No, I mean, that's really what we were trying to solve for, that you're talking about the accredited set. But when you look at the U.S. population, and it's even more globally, about 90% of U.S. households are cut out of access to private companies because they're not accredited. So they don't meet that wealth threshold. And our vision long term is to build products that allow anybody to invest, no matter what their net worth, no matter what their portfolio size is, but to be built into their retirement savings and into those plans and give access to private companies. This is our first fund. We're going to continue to launch subsequent funds to give access to different pockets of technology, but always focused on giving access to private companies, something that we've been building a firm for 16 years to gain access, and we think that it should open up to all.
Yes, Mike, it's Anthony here. I think one of the interesting things about the closed-end funds, and it's not just your fund, there's been several others that have listed recently, and there's been a few around for a few years, but the trading's been quite volatile, I think, around the SpaceX IPO, and I think your fund and others have traded at pretty big premiums or premium to the underlying value of the assets. I guess I just wondered, how do you look upon that? Is that how do you explain those big premiums? And I think a fair degree of volatility as well.
Yeah, I mean, there are a couple of other competitors, and when I look at our competitors, our differentiation is we're venture capitalists. We've been investing in technology companies. I've been the CFO of some that you mentioned. we're different in that we're not just looking at the obvious names, which are the big names that we're all talking about, but what's next as well. And so how do we build portfolios that gives access to the companies that are going to be the big megas over the next 5 years or 10 years? And so we're focused on that and making sure that our portfolios are balanced. Our competitors, in sort of our estimation, we have respect for all, but we're the first institutional venture-backed group to do this, and we think that gives us a real advantage.
And Mike, I think perhaps around $200 million of your portfolio is actually in SpaceX. I mean, now that the company's public, what's your intentions for that holding?
Yeah, I mean, ultimately our value to our shareholders is to provide access to private companies. So as the lockup comes off and we have an opportunity to liquidate that position, we will do so as long as it benefits our shareholders. But ultimately our goal is to reinvest the capital into more private companies because that's the value we provide to our shareholders.
How do you define beneficial to your shareholders? Because a lot can happen between now and when the lockup periods expire.
Sure. I mean, I think you started off by saying everyone can own SpaceX, and certainly they can buy it now in the open market. And so at some point, just the value we're providing goes away. So yes, we're providing a balanced portfolio of other names, but the actual value prop that we have as a firm goes away as we're holding public equities. And so as companies in our portfolio go public, we will look to sell them down over time so we can reinvest and have what we believe will be bigger returns from private companies that they may have heard of or may not. But at the end of the day, our goal is to build a portfolio that increases in value and gives access to private companies, something that we're uniquely positioned to do here in San Francisco.
But Mike, if SpaceX continues to soar, will you be, if it's in the benefit of your shareholders to hold on to it, would you, or your investors, would you hold on to it?
I mean, the answer is absolutely yes. We can hold public equities, and so we would assess that, and if we think that it makes the most sense and it's the best gain, then we would do that. But at the same time, I do think, again, our value is to give access to privates, and so we always look to that first, and then make the right decision based on where we think the value is long term.
So Cursor is getting bought by SpaceX. We have potentially an IPO soon from Anthropic, another one from OpenAI. Potentially more on the horizon. Is the pipeline after all of these IPOs and acquisitions strong enough to maintain a solid portfolio of private assets?
Oh, absolutely. I mean, I think that we all focus on the big megas, which really are the three you just mentioned, SpaceX, OpenAI, and Anthropic. But think about companies like Databricks and Stripe and some of these others that really are hundreds of billions of dollars in market cap today. They will eventually go public. And then when you get down below that, I mean, there's hundreds of companies that we're looking at and tracking and considering for our portfolio. And PowerLaw, to be clear, is what we believe best of the best big tech. And our thesis is around concentration. And so our goal is to have 15 names only in that portfolio. But as we launch subsequent products, we'll focus those on other areas that we think matter, like AI, defense, space, things like this, that are starting to emerge. And there's the next batch of those companies coming that we're tracking, and we'll add those to future funds.
Now, Mike, just back on SpaceX, I mean, what did you think about the debut of SpaceX? Were you surprised about how well it's gone? I mean, it really has, after a really large valuation increase in private markets, it's also managed to attract a big valuation in public markets as well, a higher valuation. I mean, were you surprised by that?
I'm really not. I mean, I've been a big believer in SpaceX for a decade. And I think that Starlink and the unlock that provides to communications globally is really underestimated. I mean, it really is a stair step, and SpaceX as a company is a one of one. So I think it went as well as I expected, and I think it will continue to go up. And it is something that I think people should hold for 10 years. And I think it makes sense. You know, I intend to myself.
How important was it for your company, PowerLaw, to actually list prior to the SpaceX IPO? Was that strategic in terms of the timing?
It was certainly something we were focused on because it made sense for us to list before SpaceX, and they kept bringing in their IPO, which was challenging for us. But yeah, it made sense. And you know, again, like our value prop is to provide access to those companies before they're public, and so we were working hard to make sure that we did go public or list before they went public.
Mike, you mentioned some of the other companies in the portfolio. I'll go through them again. Databricks, Stripe, Deal, Callsheet, Kraken, Tether, Perplexity, Canva, Rippling, Figma, Waymo, among others. How does a new company get into the portfolio? What's sort of what are the rules that exist in an environment where I think a lot of people would argue there's not a lot of transparency?
Yes, I mean, our heritage is a venture firm, and so we have a robust underwriting process, and we're very disciplined about how we evaluate companies. And we try and build a portfolio that has the big megas, which we've talked about, but then also has companies that perhaps people have not heard about, like companies like Saronic or Colossal Bioscience, which you didn't mention, that are doing really interesting things. And so we're always evaluating to have a balance across the big megas, which I think are somewhat obvious, and then going down into the what's next, what's coming up, and making sure we have a portfolio that has companies in it across those different stages, because I think that's where you get outsized returns.
And Mike, I think I mentioned before that a lot of the closed-end funds, including yours, are trading at a premium to their assets. I mean, do you feel like the closed-end fund sector, as it were, could be would be able to does plan to raise further capital in the future? Do you think that will be something that a lot of closed-end funds will do?
I mean, 100% I do. I think there's a structural shift happening with venture overall, and I think we're going to see a lot more of these closed-end fund type structures as we head towards embedding them structurally in retirement accounts and eventually into 401k. So there's just no question there's benefits to invest in privates through this model. Even as an accredited investor, it makes sense to invest in models like PowerLaw, because once we're trading, now you have full liquidity versus in venture. If you look at the trends, we have half the number of public companies that we did 25 years ago. Companies are obviously getting much, much, much larger.